California. Here in the mid, it's gotten colder in the rest of the country. Yeah, a pretty tough one. And you felt, I mean, I don't want to go too deep or make you feel weird, but you also didn't feel good this weekend. I had nothing to do this weekend. Is there something about like mid-January? A lot of these people do like dry January. They're not, going out so much. It's cold, obviously. Just a nothing weekend. I don't know. Is there something to it?
Yeah, I don't know. I think it's weird. I mean, you and I have grown up here our entire lives, and it's still by January, it's cold. It's still freaking dark all the time.
It's very dark.
And I don't know if it kind of wears on you a little bit, but it is what it is. And we're back in it. We had a great week trading-wise last week, though. Good week this week. Yeah. So, yeah, I didn't do much. I had a really low key. It kind of just didn't do a lot, and
the way that I know
highlights were Home Depot, Lowe's, and Costco, which were really
you did get to those places.
I did get to those places.
Well, then it is a good
outlets
weekend.
I want. Oh, it's fantastic. Now I didn't get anything done. It's all stacked up in a bin. I got some new bins too, which are really exciting. This is what my life has become. The highlight is getting the right bins.
So sad.
I know, and realizing that the Home Depot bins are like 3 times as much as the Costco bins. And it's like those guys are just ripping you off for storage. It's ridiculous.
Why? What do you have to store? You and I had a conversation last weekend about how you're really like you are just like my mom. Maybe it's just like people of your.
Thank you. I love Fran.
She's great, and I love her. Yeah. And so you have a lot of positive stuff going for you as well. But she also is obsessed with bins, obsessed with like keeping everything. She's got, and this is, I'm sure a lot of families end up this way, where it's like she's got 5 sets of china, and it's like no one's ever eaten off of this in at least 30 years, but it's like, oh, well, that was your uncle who died. That was his china from his wedding. And so like, we got to keep that. And that was my mom's. And so we got to keep that. And that was someone you've never even heard of. So we got to keep that as well. We had a conversation last week, and this is the same thing that happens with her, where I sit there and I'm like, you don't need any of this stuff. And you're like, yeah, I'm going to give away all this stuff because I don't need this stuff. I've got, all these clothes that I don't use and all of this that I don't use and everything else. And now you're telling me you go the next weekend, you go get bins to store more stuff. What the hell are you doing?
I'm organizing that storing. Again, I've got to get my tools in a certain way. I'm redoing my tool area, so my workshop. So I've got to get the appropriate bins so I can label them and I know where things are. All right? I'm not acquiring. I'm still lightening up, not at the pace you would like. I know you'd like the house empty when I die so you can sell it quickly, but it's not quite there yet. So.
Oh, my gosh.
And my wife will have something to say about that.
Well, I don't think she cares. What did you say to me last week? You have 3 of the same saw. You have three. What is it? 3 puzzle saws or whatever the heck you call them?
Oh, jigsaws.
Yeah, you have 3 of those.
Yeah, I can't. I still have that one in a bin I could have used. You're right. All right, I do have a corded jigsaw that, again, with the advent of batteries and tools, nobody. It's funny. Friday when I left the office, I was riding with one of the contractors, and he's got this great DeWalt bandsaw that you use if you're an electrical contractor for cutting conduit. And I'm like, do you like the conduit saw? He goes, oh, man, I couldn't live without it. I don't know what I did beforehand. I was like, yeah, I know. It looks really good.
Yeah, I got to get one of those. Oh, what do you do, Pete?
I got to get one of those.
What do you do, Pete? Oh, I'm the CEO of an RFED, of an FX provider. Oh.
Well, and I figure I cut about 8 pieces of conduit a year. The saw's about $250, so I'm paying about $30 a cut, which doesn't make a lot of sense. So can't quite justify the saw yet.
There's a lot of it that doesn't make a lot of sense. Hey, I don't want to make it seem like me and your son have like 30 pairs of sneakers for some reason. I don't know the modern.
You choose to hoard different things, and that's the thing.
But I'm trying
boxes of sneakers in a room.
I'm getting rid of those though. I've already bagged those up, and I'm not even going to try to sell them because they'll rip your face off, and I don't even want to deal with that. it's one of those illiquid markets where like it's like, oh, online
No, really?
these online it says these shoes should be $150, and the like teenage kid sitting in front of you is like, I'll give you 45 for them, and it's like,
Right.
well, I got nowhere else to go, or you can do it on your own online, and they take like $30 in fees and like 15%. And it's like awful. So I'm just like, I'm taking these shoes to Salvation Army. Someone can have a nice time. Hopefully they wear them. But of course, the teenage kid is just going to go to Salvation Army and scoop them all up and then sell them for
he's going to do the arm.
$150.
Right.
Yeah, it's craziness, the world we live in. Yeah.
Well done for him. Speaking of ARB.
Yeah. Any ARB?
You want to dive into it?
Any ARB in these markets? I mean, gosh, it's one
big
way.
moves Friday follow throughs. Yeah. Last night everything peaked their head up right on the Sunday opening. Euro was slightly higher. Aussie was higher. Kiwis was higher. Canada was higher, and they really came to town on Kiwi and not Kiwi, but on sterling and euro. Euro comfortably below 102. Sterling really hit hard. Interesting. UK rates are at multi-cycle highs right now. French rates, interest rates, are higher than Greek rates. And they used to always talk about the pigs. Remember Greece and Portugal, Italy, and their rates skyrocketing at some point versus the core European rates. We're seeing just the opposite now. So UK rates at multi-cycle highs, French rates high. U.S. rates, bonds traded lower last night. Notes in 2 years really getting hit in the morning too. So U.S. rates higher again. U.S. stocks tried it higher and then just kind of collapsed to lows right now. We're seeing a little bit of bottoming. Crypto off $5,000. Bitcoin traded a little bit higher Sunday night, 96.5, and we're down below sub 91,000. So there's a lot going on. It's interesting to see UK rates higher, but the currency just getting slammed. U.S. rates higher, and the dollar just taking off. So two completely different stories if you're looking at the interest rate lever. And that's why it's one of a compendium of things.
Well, and it's funny because you and I talked about it. I mean, we've been talking about nonstop the last several weeks. The interest rate differential being a big part of the Forex trade on the way down in interest rates. And of course, nothing is ever as simple as you think it's going to be or the way that you map it out in your head or in your platform in any given day, that it's like, oh, okay, well, if U.S. rates don't fall as fast as Canadian rates, then U.S. dollar will appreciate relative to Canadian dollar because there will be more demand for U.S. dollars at the higher interest rate. And that is the theoretical story and what played out for a big chunk of the end of 2024 there and the start of this year. But there is something brewing here that is very different than that story. Because, yeah, Pete, when you talk about interest rates moving higher in a region like the Euro area and the UK and their currency getting annihilated like it has been the last several trading days, that is more of an economic distress story. And this is what you can't plan for. You can't make an equation for. Like I say, when you and I are talking interest rates 2 weeks ago and the U.S. dollar is punishing all these commodity currencies because of that interest rate differential. And just really quick, I'll go to this dollar CAD. Remember, amid all of this, this is all the U.S. is not going to cut as much. And Canada was cutting, 50, 75 bips at a time to get their interest rates lower because their unemployment has been so high. And interestingly enough, Canadian unemployment was actually not as high as it was expected last week. The Canadian dollar, it's not in a good position, Pete, but it's not falling as much as some of these other currencies. The story is completely changed here, and maybe you can give us a little bit of the nuance, because honestly, this is one of those things that is really hard to quantify. It's hard to describe, whereby you have UK rates, French rates, different Euro area rates that are climbing as their currency is getting killed. And I'll go back to the daily chart, but what is going on here from what you can see? This is a straight shot from 125 down to now testing 121 in 5 trading days.
Yeah, which is a huge move. That's 4% in a week. That's a huge move. And, you'd hear about a 5% devaluation in like a frontier currency, a South American currency. It's like, oh, it's a big devaluation. Well, they basically devalued the currency here 4% in 5 days. So, the market is priced in the idea that the central bank will tolerate, and they may want a lower currency as a way to stimulate activity there. So there's some concerns about where the budget is and whether or not they're going to meet their budget goals with the new Labor government. And I think that uncertainty is playing through directly, that stress. I think you make a good point. The U.S. economy is still relatively robust. We had a huge unemployment number. Now they're talking about, really dialing back rate cuts in 2025. So our higher rates are driven by a different animal than what's driving UK, which is concerned about contraction, slowdown, and the inability for the government to be able to borrow at sustainable rates. So it's interesting. Both cause higher rates, but the drivers of those give you 2 very different outcomes. One is a relatively outperforming currency like the U.S. dollar, or underperforming one like sterling. So we look at rates not in a vacuum, but what is driving the rate behavior, and how does that play into the 2 pairs? So you've got U.S. dollar being driven by higher rates. You've got the sterling being affected by higher rates as a drag on economic performance. So you've got to kind of balance out the storyline, and also don't get too caught up in that. Don't get caught up in the fog of that macro babble. It's good to know context. Context lets you form strategy and take advantage of opportunity. I mean, is this pound cheap? Absolutely. But the one thing from my time trading FX is when you get a move like this, the market itself just becomes more elastic. We know volatility has sprung up dramatically in pounds. I would be very mindful of drawing a line in the sand at 121 or 120 with the idea that they've got to bounce back. I think they're awfully cheap, but I think you've got to weigh the idea, again, of setting those targets of both what you expect to get out of it and where you're going to manage it if you're wrong. And realize that this may be the stone cold low, or you may have the opportunity of buying 118s by the end of the week. And if you go into it with that, you could then set some metrics around what you think is realistic. The good news is you're getting back and forth. I mean, we had 2 big down moves. One about right when London came in, about 1 o'clock Chicago time, 1 in the morning, and another a bounce back, and then another roll over, and we're bouncing back a little bit here. Both of those gave you opportunities for a little bit of two-way action, which is what we're looking for.
Yeah, it's interesting. I couldn't agree with you more. It's so easy to get caught up, even in what we just said the last 5-10 minutes, where it's like, oh, there's all this economic distress now, and there's this environment now where, the U.S. economy seems to be, the numbers as of non-farm last week, the employment numbers, the U.S. numbers seem to continue to confirm a strong U.S. economy with high interest rates in the U.S., which is teaming for a strong U.S. dollar. And now you have a little bit of an unknown with the commodity currencies. You don't have so much of an unknown because they're already starting to kill their interest rates. They're trying to prop up their economy with lower interest rates, and that's the game that they're playing. With some of these developed European economies like the Euro area and the UK, obviously we're looking at the pound market here. We can look at the euro in a second. It's become a little bit of an unknown here, whereby interest rates are moving higher in their debt markets. And you would think, oh, that translates to a higher currency, but there's this struggle between the economy and the interest rate market there that's creating a potential powder keg, like you say, of volatility, hopefully in both directions. But obviously, it's been to the downside here. But even with all of that being said, the worst thing you can do is now get caught up in the news of it and say to yourself, hey, I'm going to abandon the way that I've been trading for the last weeks, the last months, the last years of my life, and get caught up in this story and get short everything, or I can't buy it. I can't trade the way that I usually trade because Frank and Pete said, oh, there's this crazy story, or I read on, Bloomberg or wherever that there's this crazy story developing. The best thing you can do is continue to trade your way with those mechanics that you've always been trading with. And now it's been a tough go. Like if you're trading from that contrarian standpoint, there have not been so many bounces this last week or so. But if you've had your mechanics where you're, taking losses, you're getting in, you're getting out, and doing everything else, then great. If your mechanics have been a longer term trade where you're looking for mean reversion, but you're only buying, a little bit, then hopefully you didn't go, full boat into the first sell-off there. And obviously, if you're, I don't even have to speak the other side of it, because if you're trend following, then it's been a pretty good trade, no matter pretty much what you've been doing the last week or so. But the reason I say that, Pete, is because the news and what you and I have to say is always backward looking. And so the worst thing you can do is now change everything because of what you've seen up until now. Because, we don't know. The bottom could be this morning. It could be 121. For Euro, it could be, this drop below 102. They traded 101.80 and they bounced back a little bit here. But the moral of the story is when you're dealing with an unknown like this now, where it's not just a pure interest rate play. And I can remember, Pete, I'm sure you have stories of this too. I can remember from the Board of Trade, we were trading treasuries, and some of us were trading foreign debt markets, like German debt, like UK debt, like I think it was Italian debt and Japanese
BTP,
debt.
Sure.
Yeah, BTP.
Yeah, that was wild ride.
And one guy was even trading Australian debt versus US debt. And of course, there would be these scenarios where you would be looking at these markets and you'd be saying, man, I'm buying euros here and I'm selling, some kind of euro area interest rate, or I'm buying euros, I'm buying BTPs or something, and nothing is giving here. And it's because it's changed. The last week it has changed here, but that isn't to say that you should change your game forever. Just make sure that you have the mechanics around your game, because volatility, funny enough, is coming out of some of the commodity currency markets. This Aussie not really moving, Canada not really moving, but volatility is very much entering this Eurodollar market.
Yeah, and we're seeing some skew come back out of Canada and Aussie too, where this put skew was so strong to the downside. We're seeing that balance out a little bit. Is that indicative of a bottom? It's coincidental, but
interesting.
You know what? Here's the other thing too, Frankie. This is a normal 2-week start to the year. What I mean by that in the FX world, these 2 weeks we get these. Last year we didn't so much, but typically the first 2 weeks, and this is week 2 of the first full 2 weeks of the year. The first 2 weeks, you tend to get these runs that go really hard one way, turn, go the other way. Now, I don't know if we're in the midst of a turn or not, but we're seeing this very forceful back and forth. Layer on top of that, you've got a new president coming in January 20th. That's a lot of elasticity that's being brought into the marketplace. So and I think you hit on the spot there, don't get caught up that it either paralyzes you or that I don't know what's going on. This is moving so fast. As long as you stay mechanical and make sure that, again, you don't get stuck in the mode of it can't go any lower or can't go any higher. This is going to provide you a lot of opportunity, and that's all we're looking for as directional traders is back and forth. So this is not unusual for this period of time. It's a little bit amplified, but you've got to just accept the opportunity and manage your size and manage your exposure.
Well, and here's your point, Pete. We're back at the daily chart here in euro dollar, and you're looking at one of the first trading days of the year here, where euro dollar dumps all the way down to 102.50, close to 102 even. And then in the next 3 trading days here, by Monday of the next week, that's Thursday of the first week of the year, by Monday of last week, euro dollar is back above 104. Yeah. Now they're slamming it again. It traded all the way down to 101.90 earlier this morning. Right now or 101.80, sorry. It's bounced back 25 pips to now trade back above 102 here. Are we saying that was the low? I have no clue. But there are some good trades to be had in here. The only thing that maybe you should change is widen out that volatility a little bit. But it's so funny to me, Pete, the one thing that you can always count on is the way that volatility acts. And it's not to say that you can predict volatility, but isn't it so funny that volatility, it clusters? That's really one of its biggest attributes. And we're talking about the last 3 months of the year. Holy smokes, look at all this volatility in the commodity currencies. Like Canada is getting absolutely crushed. And getting into the end of the year, Canada gets dollar CAD gets above 144, and we're like, oh my gosh, like, is this the next? Are we on the precipice here of just a totally different trade in dollar CAD? And just like that, the volatility, it doesn't turn off, but it's almost like the rubber band has obviously expanded and snapped. And now it's time for like a new rubber band, and all right, we can't be constantly snapping rubber bands unless there's some crazy, like, Canadian unemployment is like 15%, and it's a crazy economy. There's something really wrong there, and now the volatility has just completely transferred out of the commodity currencies into these whatever you want to call them, developed, the more major pairs. I don't know what you want to call them, but now the volatility is absolutely in this pound and this euro. And don't forget about the bid that we're seeing now in yen. Because of all this fear, you're starting to see this yen act a little bit like its traditional fear market. And what I mean by that is that the dollar yen market has traded from its highs above 158 to now flirting with 157. Those are super high prices, still low prices for yen. But the yen is seeing a little volatility too in its traditional fashion.
And you know what? Dollar yen was never higher last night. So it actually, Friday we had a big rally off of non-farms that was actually sold into.
Yeah, look at that.
And we never got back to those levels at any time, nor did we last night.
Yeah.
So when we talk about a little bit of two-way tape action, and now granted the Bank of Japan came out and drew another one of their imaginary line in the sand, and kind of warned about excessive currency movements, which is almost exclusively at some point ignored and moved through. And
it's like OPEC.
So, So, but what tells me more is the tape action is that we've had a big run up from sub 150 to above almost 160. And now the tape is telling us that there is a little bit of two-way risk back and forth here. And you almost, as a trader, you want to see the stop of the one-way action and a little bit of, we call it incongruity in pricing, because this is moving differently than every other FX pair against the dollar. And that is good in my mind, because that says, okay, that's more of an indicator that maybe we're at an upper band of the dollar yen range than just saying it's high. Because you could have said that at 153, 155, 157, and you would have been stuck. So seeing the market perform a little bit differently when everything else is, well, you would expect dollar yen to be higher because euro's so much lower, sterling's so much lower, but we're not seeing that. So whether it's a flight to quality, whether it's just the fact that it had really run tremendously far and fast post-election, you don't assign so much causality as to price action. And the price action is giving you a little bit of two-way back and forth, which means that, okay, so the longs in dollar yen who've had a nice run here maybe challenged a little bit, which means we get a little bit of play back into this market. And that brings up the question then, is there an interesting extreme in the crosses trade?
Yeah, that's something that we should definitely take a look at tomorrow, because that's a great place to end there, Pete, which is interesting news coming into the trading week here. Obviously, if you're trading FX, there's a lot of stuff moving the markets. But at the end of the day, the price action is really all that you have to follow. If you get held up with all the news, you'll constantly be backward looking. And there might be news, if this, for example, this euro dollar continues its bounce into the U.S. session, the news at the end of the day will be euro sells off and bounces back, and then you'll be backward looking at that. So follow the price action. We'll see how it develops. We'll take a look at the crosses tomorrow. But you've got Tom, Tony, and Vanetta coming up in just a couple minutes. Have a great Monday, everybody. Peace.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
knuckleheads. Happy Monday to you both.
Hello.
Hello.
Hola, Thomas.
Hola.
Thomas, let's get the weekend issues out of the way, okay? I'm still waiting for a $20 Venmo from you. I don't have anything yet.
Yeah, I wasn't sure what that was for again.
On Friday, you told me that I wasn't going to tune into the show on Sunday.
Oh, and did you watch the show on Sunday?
I did. I could tell Victor doesn't know how to tell time. It's 5 o'clock somewhere. Well, it wasn't going to be 5 o'clock anywhere because it wasn't anywhere near 5 o'clock. He was about 5 minutes off. You were wearing your nice white shirt.
And did you watch it to the end?
Okay, don't change. No, I did not watch it to the end. That was not the bet. The bet was I would just not tune in. But that's okay. I don't need your money. I'm good. Thank you. I'm going to give you. I'm going to pay you I'm going to pay you because I forgot about that bet. But yeah, sure. No, you're not. No, you're not. Because I reminded you last night and you said, new phone, who dis? That's what you said.
How about this? You settle it by buying The Office some Gotham bagels.
There you go.
Everyone wins.
I can live with that. They don't open till 8 o'clock.
Yeah, they're too hard to buy.
Yeah, no good.
Too hard to buy.
Yeah, you got to wait till 8 o'clock. We're on doing the show. I don't know what to do.
You call up the schlepper. He's retired. He's not doing anything.
We're having lunch at 8 o'clock at Tasty. You know that.
Yeah.
8 o'clock is lunchtime.
Well, speaking of going out of their way, you went out of your way, Tom, to see a football game. How was it?
It was fun. It was I mean, thank God I'm not a Chargers fan because if I was,
my God, you were a Chargers fan because your son's a Chargers fan. You still got it.
No. I'm saying I went to the game. It was fun. It was a lot of fun. We hung out. We went to the game. It was fun. But Did you
leave early?
No, we stayed to the end. And
your seats looked good. Like when
they were about 30 rows off the field, so they were fine. And it's a nice stadium.
30. That's just fine. The 30 rows, but you really ideally want to be no less than 15.
It's another one of these stadiums where everybody stands up for every play, though. It drives me crazy. Drives me
gotta
nuts.
train for that. You're not built for that.
You gotta train for that.
I am not trained for that. I am not built for that.
More importantly, what was the food situation?
Well, the good part was, so we got there kind of early, and so we got to walk around. And my son, being a little bit of a foodie, he read all the reviews prior to find out where we should eat. And
okay.
We ended up with burgers and barbecue.
Solid choice.
That's a good combo.
Yeah, I mean, I would say the food was in the stadium was significantly better than Soldier Field, but that bar is set pretty low.
It's a real low bar.
Yeah, I mean, of the last 3 stadiums I've been to, Soldier Field, Lambeau, and I think like Ford Field, all those places were bad for food, but the NRG was better. Still not the best, but better.
So was it like a brisket situation?
Yeah,
was it ribs?
Yeah.
Was it
brisket.
A barbecue burger? Like
no.
Elaborate.
Brisket.
Okay.
But you know what? It's an indoor stadium, so it's kind of nice. It's perfect temperature.
You can wear your culottes and stuff like that.
Yeah. You can do whatever you want.
Right.
And
you're an indoor cat. Yeah, that's perfect for you.
Yeah. So, I was there. I probably got there about 1:30 in the afternoon and left at 4:00 in the morning, 4:30 in the morning the next morning. So it was, I wouldn't say it was a long visit, but I got to go to the game with my son, and I got to, and then we went to, we just grabbed some dinner at the bar in the hotel we were staying. So it was nice.
That's a lot of fun. Good for you. Good for you.
Yeah, it was fun. It was fun. So it was a good day. It was actually, again, I like going to different stadiums and stuff like that. There were more Charger fans than I thought there were going to be at that game.
Well, they were probably escaping the fires.
Yeah, I can't tell if Charger fans are. I kind of feel like they're still from San Diego. I'm not sure that they've caught on yet in LA, but
yeah,
we'll see. Yeah, LA is a disaster. I don't know what else you can say. I don't know.
Yeah.
There's no good way around it.
No, there is not.
I don't know how it's going to take a long time to recover.
Yeah. It's a tragedy going on.
Yeah, it's a tragedy on so many different levels. But but at least that was fun. So yeah, I did something a little different this weekend.
That's good.
That's
It's good
sweet.
for you to get out of the house.
Yeah. That was good. It was fun.
Vanetta, did you get out of the house?
Did I get out of the house? I did.
Yeah.
I went hiking in Starved Rock State Park on Saturday. I did like a 5-mile hike. It's on my Instagram. I took pictures of the frozen waterfalls, went down into the canyon, had to hike out, and it was not crowded at all, which is why I love going to the woods in winter. There's no bugs. There's no boob sweat. There's no crowds.
It was cold this weekend.
Boob sweat?
It wasn't that cold. If you're hiking, you get warm. I mean, you put on a coat and suck it up. Come on.
Suck it up, buttercup.
Hold it. There's
All right,
other
yeah.
people out winter hiking?
Yeah, not a lot, but there were other people, lots of dogs in like their little coats. There was like this
Yeah,
little
there are other convicted felons out there hiking. Sure. Yeah, always.
Next time I go, I'll give you guys a call if you want to come with me.
Where is Starved Rock anyway?
It's in Ottawa, Illinois, 78 miles kind of southwest of the city. It's one of my favorite places to ride my motorcycle. The roads are real curvy there. Like in Utica and Ottawa, it's just really nice, beautiful.
I went one time, Tom. You wouldn't think you were in Illinois. I mean, it is kind of cool.
Never.
And it's like a nesting haven for bald eagles. I didn't see any, but like now, because I guess the Illinois River doesn't freeze over, and so the eagles can eat the fish. And so I have seen bald eagles there before, but I wanted to get a picture, but I didn't see any eagles.
Oh, I've never been there. I maybe we'll have to make a road trip, but not in the winter. I'm not a winter hiker.
You're barely a walker.
This is true.
I got
This
the
is definitely
spikes.
true.
I got the spikes on my shoes. I'm good. I
You
can do
do
it.
have micro spikes, which I was impressed by.
Yeah, I can do it.
Yeah. Okay.
But
How about you, Bat? What did you get up to?
We had 2 hockey games, a loss and a tie. Didn't play our best hockey. That was it. And now next weekend, I'm going to Wisconsin.
It's a long weekend, though. We got the next Monday off.
Yep, we do.
So where in Wisconsin? Northwest?
At the University of Wisconsin, right there. So.
Oh, in Madison. I love Madison.
Yep, right in Madison. Gonna be
You know,
fun.
that's one of my favorite farmers markets.
I don't think I'll be going, but
No, they do it around the Capitol. It's really cool. It's one of my favorite farmers markets. And they have this like cheesy bread. I mean, it's Wisconsin, but it's so good.
in
I
the
don't
winter,
think they do that in the winter.
Maybe not in the winter, but
in the winter, I wouldn't think. Yeah,
it's still a good farmers market.
yeah. There ain't much going on in the winter.
Yeah.
Did you guys watch any of the other football games? I love playoff football. Glad that the Packers got smacked down. Fly, Eagles, fly.
I watched the games, but there wasn't really a lot of good games.
Oh, come on! The last game with the Washington. And
That game looked great, but I fell asleep in the second half. So I
And
missed.
even the Broncos hung in there for the first quarter, the first half. I mean,
Yeah, and I thought the
Kind of
Packers.
an epic collapse by the Steelers, too. Like they.
and Lamar Jackson looked like he looked like an MVP quarterback to me, didn't he? To you?
Poking the bear.
Well, next week's going to be the good game. The Bills against the Ravens will be good.
Yeah, Lamar Jackson looks like an MVP quarterback to me. Woof.
Yeah, well, too bad you're going to lose that bet.
Oh, no.
Okay.
Oh, boys. Well, we'll see.
Every once in a
You
while,
haven't-
they got to give it to somebody else. this is the year.
What are your thoughts on the college football championship matchup? Who do you have? Notre Dame, Ohio State, a week from today in Atlanta.
Yeah, I think it's going to be
Ohio State all day.
I don't know what the line is, but I think I like Notre Dame in the points.
Oh.
I am so happy now for Ohio State.
What's the line?
They got the albatross off their back.
I'm betting Marcus Freeman over Ryan Day every day of the week. So I'm going to go with I'm going to take Notre Dame and the points in that game. I got to see if my boy Sheridan is up for a little action.
Oh, if he likes Notre Dame, I'll take you guys both on. It looks like the spread's 7.5. We'll see what game day brings.
Okay. Yeah, that's probably
money line's 355, 280.
That's probably. I thought the game would. I thought they'd be at least 7-point favorites, Ohio State.
Yep.
But
yeah, I would say too.
Yeah, I think it's going to be a good game. I think it's going to be a really good game.
If you could get tickets, would you go?
No, it's Atlanta, right? No.
Yeah.
Yeah. Atlanta. We could stay with.
It's not so hot. They got snow. Have you seen the videos? People are losing their minds in Atlanta because it snowed. It's very cute.
Snow
the
in
videos
Atlanta,
on TikTok are hilarious.
And they got snow in Dallas too. They got snow in a couple places that usually.
Yeah. I love it when Southerners get snow and they take their little salt shakers outside and like, am I doing this right? I don't know, y'all. I'm like, I'm just gonna say a prayer and go to the Waffle House. I don't know about this snow.
I would like to go to that stadium though. I've never been there. It looks really cool. But
yeah, and it's a Monday, so the Chick-fil-A will be open. There's Chick-fil-A in the stadium. Yeah. Which is weird because it's not open on Sundays.
I know, but I don't know. I think it's going to be a good game. I think it's going to be a heavily watched game too because both those teams have huge followings.
You think beyond the Midwest?
Well, the playoffs have been great this year. Yeah, it's interesting what all the new stuff in college football has done is it's really leveled the playing field so that because now, before it was only like Alabama.
Yeah, these two teams wouldn't have made it in because they were outside of that 4 bubble.
No, what I'm saying is though that the playing field's level now because in the past only schools like Alabama could pay players. And now everybody can pay players, so it's all
easy there, Tiger.
Yeah. So it's changed. The whole SEC dominance is over.
I mean, they're offering millions of dollars to these kids.
Yeah, they should. It's big business.
Yep,
it's big business. Sure is. But anyway, it's gonna be a fun game. Yeah, I think both. I think this Notre Dame team is probably the most likable I've ever seen a Notre Dame team. So I kind of like them.
Sure.
Right. When you say most likable of a Notre Dame team, you're kind of saying Notre Dame's just not likable most of the time.
Well, they weren't.
Ohio State's not likable.
They weren't under Brian Kelly, that's for sure. They weren't likable, but I think they're likable under Marcus Freeman. Yeah, I like this team.
Okie dokie.
Okie dokie.
You're covered.
Jokey. No, we're gonna.
It looks like the line started out at like 9.5 and has moved down to about 7.5.
Yeah, that makes sense. I like Notre Dame here, but who knows? Nobody knows.
Yep.
All right.
It's going to be fun.
Fun fact, because I was talking to my parents last night. I have not worked 5 consecutive days in a row, like a full work week.
Oh, Vanetta, please.
Since
nobody has it in 2024.
What?
Nobody has it all of 2024. You give
No, I mean, we work 5 days a week. I'm not talking in person, but I'm saying I haven't had to work 5 days in a row since December 16th.
Well,
because we had a day off last, and the holiday and then all this. So, we're going to see how I feel on Thursday. I don't know. But hey, we got a great show for you no matter how you feel. We hope your resolution was to watch more Tasty Live, because that's an easy resolution. That's a tick in the win column. Hey, at the top of the 8 o'clock hour, we got a little options corner. Options jive, research corner. I'm just going to call it options corner. I like that better. With Kai, what are you going to talk about with Kai? Do you know?
Oh, he's going to tell us
Okay,
what happened
great.
He's going to tell us what happened last week and what we could expect range-wise this week.
Okay. Then 8:40, we got the Skinny on Options abstract application. Okay, which team that Dr. Jim could link himself to? Which team is still in it?
Oh, he'll be all in on Detroit.
Yeah, the Lions,
okay, good.
man. That's it. That's his team.
I mean,
Now
that's all.
on.
You know, that's where he was born
Okay,
and raised.
all right.
Yeah,
Right.
yeah.
Well,
He'll
he's
flow.
going to be in saying, is trading options a zero-sum game? I know we've looked at this in the past, but it's always interesting when we update our research or update our methodologies. And he's going to break all of that down at 8:40. Then at 9 o'clock, we got a market measures, currency and the market. Okay. What does that mean, currency in the market?
Well, we usually don't talk about currencies and the stock market. I mean, it's not a big part of like the tasty picture, but I think today they're going to talk about is there anything that you can, I mean, the US dollar has been out of control. You know, the question, I think they're
Strong,
looking,
you mean, right?
Yeah, strong. I think they're looking at, you know, the US, is there any implications from a strong dollar on the stock market?
Oh, okay. And then we got live from the trade desk. Big boy Scott Sheridan counting down all the top trending tickers over at Tasty Trade. When does Scott depart for warmer climes?
Oh, that's a good question.
Imminent.
Pretty soon, probably.
I mean, the wind chill this morning is -4, so
It didn't feel that bad.
oh, going from your heated garage to our office's parking garage, it didn't seem that shocked.
I had to get out of my car to take the garbage out. So, I mean, I did
And you
have
didn't
to.
run yourself over this time?
I did not. And I didn't feel like it was that cold, but maybe you're right.
It's not maybe. It's the wind chill is -4. I know you don't believe
You know,
in
I
wind
don't
chills.
buy wind chills. Wind chills.
The actual temperature is 11 degrees.
I will tell you right now.
It's 11 degrees.
It was cold this morning.
Yeah.
Yeah, and
Right? What are you fighting about? She's right.
what?
Yeah.
What? Do you want to chime in? What happened, sweetie?
Well, the actual temperature, according to my phone, is 10 degrees.
It's cold.
You're right again, Sosnoff.
But I don't believe in wind chills, so
Okay, well, it's still 10, -4. It's just all cold. It's cold.
Yep.
So anyway, anyway, Scott Sheridan's gonna be in at around 9:30, and that's our run of show. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story.
today's headlines.
Breaking news.
Coming across the wire.
Leading story.
Just in.
Top story.
Our
Jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a magnificent Monday. It's January the 13th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Getting to the first headline of the day, the latest inflation data and the start to first quarter earnings season are going to be the highlights for investors this week. On Wednesday, the Bureau of Labor Statistics will publish their CPI for December. It's forecasted to be up 2.9% from a year earlier. Producer price index will be out on Tuesday. And we're going to kick off the earnings season with some juggernaut financial stocks like JP Morgan Chase, Goldman Sachs, and more. What are you guys going to mostly focus on this week? And it's a full week.
yeah, it's Jan expiration.
Don't be business as usual, Vanetta. You know that.
It's Jan expiration. I talked about this last night. Jan expiration tends to be one of the busiest of the year, just based on all the leaps that are expiring that were set a few years ago, all for January.
Oh, I didn't know that. Okay.
So we tend to be the markets in these kind of weeks. If they're going to be soft, forget about all these like JP Morgan. None of that stuff means anything. What's important this week is early in the week, can the market, hold up after it closed really weak last week, and can the market hang in there for the next 2 days or so? I think at the end of this week, the market will be pretty strong going into expiration Thursday and Friday. So I think it's Monday and Tuesday where the market's got real risk.
What is your plan for earnings? Because it changes kind of.
I mean, if we can get volatility up over 20, then earnings, there might be something to do in some of these earnings stocks. But
yeah, you're there. Volatility's 19 and change right now. 1980 got over 20 this morning. 2020 on the futures.
I think if we can keep it up around 20 before these earnings plays, there might be something to do on some of these earnings. But if not, they're only the implied move in JP Morgan was like 3%. It's not that interesting. Yeah. So it really just depends. If we get some juice pumped in the market this week, maybe it'll be interesting.
You get some implied moves, volatility 8-10%, then you got some action.
Yeah, at 3%, it's not that interesting.
So U.S. stocks took a major plunge on Friday. S&P down I think 1.5%, as investors digested a better than expected jobs report that soured expectations of future rate cuts from the Federal Reserve. Jamal talked about this when he came on Friday for his weekend stocks, but we were looking at maybe 4 or 5 rate cuts on the table. Now some are saying we're lucky if we're going to get one. What do you think the rate cut situation is going to shake out to be this year?
Well, I mean, who knows? We're betting that bonds are going to go higher, so we're betting that there's probably going to be 1 or 2 rate cuts. But if they don't, if the bonds don't rally here, then there's going to be none. Nobody knows. You can't ask a question because it's
yes,
just,
I can. We're a talk show. I can ask
know.
any question
but I'm just
I
saying
want.
it's a stupid. Anybody that asks that question, it's just a stupid question because whatever the bonds
so you're
do,
calling me stupid now?
No, I'm
Matt,
just saying.
Write this down.
Hey, that's my job.
I'm just saying, it's like whatever the bonds do, the rates are going to do. So we'll just see what happens.
No, but do you think the move Friday was overdone? How about that? Is that a stupid question?
No, that's a reasonable. If you think the move Friday was overdone, then you buy bonds here. Could have bought them this morning. Now they're about 10 ticks off their lows.
Well, getting to the next question, stock market investors are getting nervous about this bond market move, and that's only happened twice over 40 years, only about twice since the early 80s. It's weird that the 80s are 40 years ago, because for me, the 80s are 20 years ago, but whatever. Anyway, but the 80s were 40 years ago. Oh, my God. But it's only been twice since the early 80s that the 10-year yield jumped simultaneously by about as much as the Fed has cut rates, and it has a lot to do with rising inflation expectations. And it looks like the options market has been getting in there, betting for the Treasury 10-year yield to hit 5% in the near term. What are you doing in bonds?
We're long 10 years.
Okay.
So I bought them right here on Friday. So you can, actually, I take that back. We bought them
a tick or two lower.
2 ticks lower.
A tick.
Yeah, 107.12. They're 107.14. I haven't sold any yet.
Okay. What number do you want it to be?
Want it to be?
A lot higher. A lot higher than where they are right now.
Okay.
For 114.
All right, duly noted. Hey, towering $1 after solid jobs data leaves its peers in the currency market struggling. The dollar began the week on a strong note, leaving its peers languishing near multi-year lows after a blowout U.S. jobs report that underlined the outperformance of the world's largest economy versus the rest of the world. Australian dollar struggled to break away from its weakest level. The Asian session, there were some numbers that did come in overnight about Asian, I think, productivity that were decent. But let's talk currencies here. Let's talk euro. Let's talk yen.
The yen's actually bucking the trend a little bit higher.
The yen's up big this morning. The euro's down big this morning. It's kind of weird, but that's the way it is today.
The British pound is in the tank. The dollar's strong.
So what are you doing? How are you capitalizing on this Monday morning move?
We're long yen.
Same as it ever was.
We're long yen, short. We're long yen, long British pound, long euro. So they're kind of a wash. They're all a wash this morning.
Okay. See what
We haven't had any two-sided action really there at all.
Nope.
Shifting gears to commodities, oil prices extended gains for a third session on Monday, with Brent rising above $81 a barrel to its highest level in more than 4 months, as wider U.S. sanctions are expected to affect Russian crude exports to top buyers like China and India. What are you doing in oil?
Nothing, but we're watching it. It was strong. It opened last night up about $1.25. It's up about $1.30 right now. So it's been it really hasn't moved all night.
It was about 60 cents higher than this. It was about $1 lower than this. It's mid-range, but on the high end of its range. I mean, it's had a 2-week rally here of biblical proportions, about $8,000 or $70.
It's a huge rally.
In other commodity news, gold is held a 4-day rally, with traders seeking refuge in the haven asset as risk-off sentiment swept the markets over fresh uncertainty over the Fed's rate path. Okay.
Yeah, it's given something back today, about $28 worth.
Okay.
Yeah, you are correct. Gold down around $25 or so. It's just about 1%, taking back the gains from Friday last night.
What are you guys doing in gold?
I'm short some strangles, but that's it.
IB rank of 65 is pretty good. It's been expanding. I'm in gold too. It's not real great. I'm in GLD. It's a hard trade for me to.
You're the world's worst commodity trader, so that's.
I am the world's worst commodity trader. I'm keeping that up. 100%.
Strong in 2025.
Yeah, 2025 is strong. It's correct.
NASDAQ filed a proposal with the SEC to increase the position and exercise limits for options on the iShares Bitcoin Trust, that's IBIT, to 250,000 contracts from 25,000. The proposal aims to expand trading capacity for the largest spot Bitcoin ETF's options market at a crucial time as institutional investors seek more ways to trade Bitcoin. I really just wanted a way to talk about Bitcoin to start the week. But one, what do you think about this story? And then we can talk about Bitcoin overall.
Well, first of all, 25,000 contracts is too small a limit to start with for these high frequency firms, because they could get to 25,000 contracts like by just making markets nowadays. You can get to 25,000 contracts too fast. So they need to raise the limits. That was a dumb limit they put. But as far as Bitcoin, I think Bitcoin's in trouble. I mean, I know it was down.
Oh, why?
I know it's down about 4,000 this morning, 3,500 right now. But I think it trades a lot lower, because I think that there's a lot of different sectors that have been bid up for no apparent reason. And I think they're rich.
Rich relative to where they've been, right? I mean, you're not saying that Bitcoin goes away.
No, I don't think Bitcoin goes away at all. But I mean, why can't it go? I mean, because, I would say if you polled people, it would be about 90% of everybody would say it's going to 120. And I think it's going to
nobody can be short it really unless you're trading the future.
Yeah, I know. I don't even have, I'm long it. But I think it's going to about 85,000, at least the near
term. But your position is as small as it's been.
Yeah.
Okay.
But I'm long.
Can we check on Coinbase?
Coinbase is down too. This morning it's down about $10.
Yeah, it's a 248. Tom's correct. Close around 258. It's 248. 100% correct. So
are you gonna scoopy here? You got to buy those dips, homie.
I'm not buying any dip. I'm short strangles in Coinbase. I'll be rolling down calls this morning.
When you did
44 is pretty good. Yep.
Yeah. All right.
Earnings February 20th.
Coinbase is the best way to trade. Coinbase is by far the best way to trade Bitcoin. I mean, IBIT is, compared to Coinbase, IBIT sucks. So, and you got to be careful in IBIT too. They have a massive dividend. It's insane. So
I didn't know that.
Yeah, it's huge. So I would just trade Coinbase is so much better.
Okay. Heard it here first, kids. The FDIC has given a fresh deadline of February 10th to BlackRock to resolve an issue regarding oversight into the asset manager's investments in FDIC-regulated banking organizations. The FDIC may open an investigation into BlackRock and demand more information from the company if they fail to make sufficient progress towards resolving the issues. I'm not sure what this is all about, but it sounded important, so do with that what you will. I don't super care about BlackRock and if they get in trouble, but
Yeah, I don't care
I'm with
about
you.
I don't care about BlackRock.
but I did want to mention though, but all the financial sector companies will start with their earnings this week. So if you are inclined to do something in the financial sector, they are in play this week because just that's when they start our earnings. So we're gonna deal with that. Hey, Constellation Energy, CEG, the U.S. nuclear power provider, on Friday agreed to buy a privately held natural gas and geothermal company called Calpine for $16.4 billion, and it is one of the biggest acquisitions in the U.S. power industry history.
I don't know anything about Calpine.
CEG. I mean, you trade natural gas.
I do, but not Constellation Energy, and I don't know anything about Calpine.
Well, Constellation is nuclear, not natural gas. So.
I know. I'm just saying.
It closed around 305. It looks like it's down around $2, maybe $3. It has earnings February 25th. I look at February options. They're wide side, not 50, 60 cents wide.
Yeah,
it would be a defined risk trade.
I don't trade Constellation Energy. It's really rare.
Yeah. Okay. Hey, keeping it moving here. The UK is looking to build a homegrown challenger to OpenAI and to drastically increase the UK's national computing infrastructure. Keir Starmer, his administration, is committed to increasing sovereign or public sector computer capacity in the UK by 20-fold by 2030.
Good. I'm glad somebody's moving that direction in the UK. It's been dead for so long there.
All right. Nope. There's a nice way to free. You could be like, great. I'm excited. This would be innovative. This is okay.
Said nobody ever about the UK market. So yes, this would be nice.
Wow. Wow.
How
do we send you back to Texas?
I mean,
They said no take
I
backs.
mentioned this on Friday. We're publicly traded in an index that was down, 10+% this past year in the UK when every other stock index in the US is up. It's ridiculous.
Okay. All right. Keeping it moving. Federal antitrust regulators on Friday added weight to portions of Elon Musk's lawsuit seeking to prevent OpenAI from restructuring itself into a fully for-profit company. It looks like the Federal Trade Commission and the Department of Justice's Antitrust Division did not directly support Musk's claims that OpenAI and Microsoft have colluded in an anti-competitive de facto merger, but they did urge the court to be skeptical about some of the defenses made by OpenAI's legal team. What do you think about OpenAI pushing for being a for-profit company, pushing for, monetizing all of their billions and trillions of dollars?
I mean, I don't know why they can't do that.
Well, because as Musk is saying that it's sort of a de facto merger, there's kind of like a back end merger between OpenAI and Microsoft that never had to go through any official channels. And then now they can then flip a switch and make it go from nonprofit to profit without doing all the other rigmarole that other traditional companies would have to go through with a.
And he's mad because he only owns
he got cut out of the deal.
He only owns a small piece of it. Like, I don't really get it. Yeah,
Yes.
I'm sorry. No, I couldn't care less.
What about Microsoft?
I couldn't care less about Microsoft.
What do you care about this morning? What can
Microsoft down $2, maybe $1.50. Earnings coming January 29th next week.
Oh, okay. All right, that's something.
Yep.
Well, speaking of AI, a company called Hippocratic AI notched a valuation of $1.64 billion after its latest fundraising round. The company has said that it raised $141 million in Series B funding, bringing its total raised to $278 million, and it has now a valuation of $1.64 billion. It was co-founded by a bunch of healthcare professionals and physicians, and it provides healthcare AI insights.
Interesting that their logo is "Do No Harm."
That's what the Hippocratic Oath is.
Do no harm.
Do you not know what the Hippocratic Oath is?
Yeah, I do. But do no harm.
No, he doesn't.
No, he doesn't.
No way. No way.
Do
I didn't know
no
what it was.
harm.
I'm man enough to admit it.
That's literally the Hippocratic Oath that all physicians take is the main purpose of being is do no harm to the patient.
I know, but why would you say do no harm?
Because it's AI and AI will kill you. I don't know.
I'm just saying it doesn't make any sense.
You really don't see the logical chain from the actual Hippocratic Oath and then that just being used.
This is what happens when he goes out on the weekend.
Do no harm as part of your no, doesn't make any sense to me. Sorry.
That's the literal Hippocratic Oath. I don't think you understand the words that are coming out of my mouth.
Do no harm. No.
So what do you want their slogan to be? Hurt so good?
No, I don't want their slogan. I don't want their slogan to be. I don't want them to have any slogan.
So good.
The Hippocratic AI is fine.
Baby, make it hurt so good. Sometimes love feel like good. You know it. It hurts so good.
Never mind.
I'm going to keep it moving. Tesla is launching a refreshed version of the Model Y. On Friday, they announced a revamped version of the popular Model Y in China as the U.S. electric car giant looks to fend off challenges from Chinese rivals. The Model Y will start at $35,935 with deliveries set to begin in March. Let's check in on Tesla.
After a sideways day with contracting volatility on Friday, you're going to get a little bit of movement to the downside today, down around $10 or $11, down near recent or even below recent lows, trading 383, 384, closed at 394.74. A lot of fours in there.
Okay, Tom, what do you hate about this story?
I don't hate anything about this story. I just want Tesla to be lower because I'm shorted.
Okay, there we go. See, this is working.
No, about that, but okay.
Bat, do you have a Tesla position?
I do have a Tesla position. Worked out really nice on Friday. Been okay for 2025. Was definitely a struggle in 2024. I have some strangles on there too. I was more neutral, so I'll have a little bit of long delta. I'll be rolling down calls probably.
I don't know if you have seen his latest press tour, but it's something. Meta CEO Mark Zuckerberg slammed Apple's recent innovation efforts like its Vision Pro headset in a podcast interview with Joe Rogan. He said that Apple hasn't invented anything great in roughly 2 decades since Steve Jobs created the iPhone. Shots fired.
I mean, he's not wrong.
Zuckerberg, I will tell you why he's wrong in a second. Zuckerberg also said that if Apple stopped applying its random rules, Meta's profit would double. He also said there was too much feminine energy in the workforce. I'm not making that up. That is a direct quote. And that his company and more companies need more masculine energy.
He's a piece of garbage. Come on, let's call it the way it is.
As a woman who works for a company where it's just a sausage fest, we do not need more masculine energy.
And he's not a piece of garbage for what he said. He's just a piece of garbage the way he's been acting over the last, umpteen years, and now flipping his cards this year. He's just, anyway the wind blows, for him to be profitable is what he wants. He's a piece of garbage, in my opinion.
My question for you, Tom, did you hear any of these snippets? You sort of wrote about this in the Cherry Bomb, but I just wanted you to elaborate on your thoughts on this matter.
Yeah, I'm gonna elaborate. I'm gonna back up what Bat just said. He's a piece of garbage. I can't stand them. I've gone 180. I talked about this last night with Victor. I'm off the Zuckerberg train forever.
You were a Facebook apologist for a really long time, and it was weird.
I tried to be supportive because I thought he was different, but he's not. He's part of the problem.
Isn't it the worst when a man disappoints you?
It feels. It's horrible.
And also, the one thing I would like to point out about like Apple not inventing anything, I would say probably the greatest standout, and it's literally put Intel in a coffin, is Apple's invention of Apple Silicon, and that's Apple making its own chips. People don't talk about that. That was a huge deal for Apple. I mean, I know I'm an Apple fangirl, but it put Intel in the ground because previously Apple partnered with Intel on the chips for their iMacs and for their MacBooks. Once they went on to their Apple Silicon, that was a completely revolutionary thing that they.
I'm talking about forward-facing technology. I'm not talking about that.
But it's in all of their Mac Minis, their MacBooks, their MacBook Airs.
I'm talking about forward-facing technology.
That is forward-facing. That's why you buy a MacBook Air.
Because they're making their own chips? No, that's
because they're fast. They're faster.
No,
because they're faster, and you're a video editor. You're a graphic.
For innovation.
No, it is innovation. Get out of here.
I'm disappointing again.
No, but that's what. All right, well, let's look at Meta and let's look at Apple as stocks. What can we do between the two?
I'm not looking at Meta anymore because I'm pulling a Tom.
Okay.
Apple's trading $2.34, down around $2. I'm going to assume, if I was going to assume that Meta is lower also, Meta would be lower at $6.12, down around $3.
Tom, how about for you? What's your Meta Apple position?
I'm short a strangle in Apple, and in Meta, I have absolutely nothing.
Okay.
Meta earnings in January, same thing with Apple, the 30th and the 29th, respectfully, Apple and Meta.
A company called Mobileye. You guys don't really trade them a ton. MBLY. You ain't got no alibi. The stock dropped 28% last week as investors were unimpressed by the company's autonomous driving presentation at CES. After bottoming out in mid-September, the stock had trended higher, but then it just got annihilated last week, losing like a third of its value. Cool.
Yeah.
We don't trade. You're right. We don't trade Mobileye very often.
Yes, but it's newsworthy that they lost 30% because of a bad demonstration at a Las Vegas tech show.
Yeah, the stock was $22 at one point. I'm talking about 2-3 days ago. It's under. It's flirting with 15 right now. 15.20 this morning, down around another 40 cents.
Yeah, that's news.
Yeah, that's news.
All right, that's news. Sure. You're going to hate this. Wayfair, which is just W, is exiting Germany. Jawohl. And they plan to cut as many, as 730 jobs or 3% of its global workforce. The online home goods company wants to reprioritize investments. Okay.
Wayfair, $43 and change, down around 50 cents or so, but stock has not gone anywhere as of late. It's been steadily marching lower.
I went to that Wayfair store up by UBAT, like in Skokie or whatever. It's nice.
They did a great job.
Yeah.
I walked in there. Did you walk in there like with a mission or just walk in there to browse?
I was with my parents, and so my dad was like, I'm going to sit down in this coffee shop. Y'all come find me when you're done.
Unless you're looking for something that they have, I find it very hard to shop in there.
I mean, I bought some. I mean, your girl is going to persevere. Your girl is going to shop.
Okay, you would love it, Sadloff. A lot of purple in there.
I have not been there, and if I can avoid that for the rest of my life, I'll try hard.
It's nice. Disney, Fox, and Warner Brothers Discovery have called off plans to launch their sports streaming service, Venu. Venu was first announced in February, and it was intended to combine the live sports assets of Fox, Warner Brothers Discovery, and the Disney-owned ESPN. But as we now know, Disney is now making a deal with Fubo. Not sure if you're trading Disney at all, or Fubo, or if you care.
Disney 108 and change, looks unchanged, maybe down 15, 20 cents, but it too has been sliding as of late. Nowhere near its lows around $90 at 108. Nowhere near its highs at 120. Sorry.
Here's something interesting. After years and years languishing on the market, Michael Jordan's Highland Park mansion finally sold, but the new owner says he is selling shares at $1 million for co-ownership, and it will give buyers a week of access to the property each year, including an option to host events for an extra fee. If you want to live like a basketball champion and you couldn't put up the, $45 million for it? $1 million and a limited number of shares. The exact number has not been specified.
He only paid $9 million for it.
I don't know what he paid for.
Yeah, I love the idea.
Yeah, he paid $9 million. So
I love it.
How many $1 million shares is he going to sell? 52 of them?
It doesn't say. It does.
The buyer was Michael Jordan's charity, probably, or something like that. Probably did it. Now they're doing this pretty good.
I don't know.
Are you and the guys on the trade desk going to chip in for this? Did you ever get to go to this estate?
No, I never did.
I went there, but I never got past the front door.
Scott went there.
Like the gates. They had the gates.
Yeah, with the 23 on them.
Scott went inside.
Yeah. Well, Scott bought his Range Rover, so
that's why he went in to pay him.
Yeah, okay. Interesting. Hey, finally in sports, the Yankees fans who grabbed Mookie Betts at the World Series have officially been banned from every single MLB stadium.
Good. They should be.
We are finally in the find out portion of this effort, because I got so upset because people were cheering these guys. They were going on podcasts. And I was like, man, this sucks. I want justice for Steve Bartman, because Steve Bartman, that was unintentional. And this guy had to go into witness protection. And these two jamokes are getting celebrated. But now finally the two New York Yankees fans who grabbed Mookie Betts' wrist while he made a catch at the wall during Game 4 of the World Series have been banned indefinitely from all MLB stadiums.
That's great. Good. They should be.
I don't know how you enforce this, though.
Oh, they got a don't fly rule.
How? But how do you know?
No. How do you enforce this, Sanavi? It's unforceable.
They're average-looking white guys. How do you enforce this?
I have no idea.
All right. But I mean, still, it's something. So I will take it.
It's symbolic.
Finally today, speaking of sports, I have a new sport for you. Obviously, football is dominating the conversation here in America, and the NFL is trying to play more games in Germany and London and Mexico, and we are exporting our culture. So much, in fact, there is now a version of American football, but it's played on a hockey rink. What? Watch this.
Der Ball beim Quarterback, das ist der lange Pass nach außen und der ist gefangen und jetzt geht's in Richtung Endzone. Das sieht gut aus. Erik Stehfest, Touchdown! Touchdown für die Ossis! Stehfest!
So they don't have skates on, but they're just running on ice. I love German announcers.
I don't know how I feel about that.
Yeah.
Okay. All right. It's something. Hey, woo! I did it. He's your problem.
You did great. We're gonna take a quick 90-second break. I'm gonna come back with Casual Tom right after this. We'll be back in 90 seconds. Option job.
I don't know how I feel about that either, by the way.
Well,
peace out, brothers. Yeah. Screw everything.
stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit of confirm and send. Before we do, let's take a quick look at the market. Even the S&Ps down a handsome 35 ticks, but they're off of their lows by about 20 handles, and they're off of their highs by almost 35 handles, a skosh more. Even the S&P is weak for most of the night. NASDAQ down almost 1%. One of the larger movers with the Russell down 1%. That's 22 handles for the Russell, 190 for the NASDAQ. Dow only down $15, basically unchanged on the Dow 30. Volatility up 58 cents. You're looking at about 80 cents off of its highs and about the same to its lows. Bonds turned green, Sadnoff, 111.09. They're up 2 ticks. Mid-range for their session. Everything seems to be a little bit mid-range right now, Sadnoff. Bitcoin, though, that's near its butt, down $3,700, 91.4. The low was $1,000 lower than that. Oil, on the other hand, some commodities are a little bit higher. Oil up $1.43, about 50, 60 cents off of its highs. And gold down 27. Silver doing the same as gold, but silver is down much larger on a percentage basis, almost 3%, 88, almost 88 cents. That's a big move. Nat gas over 4 during our session that we've been open right here for, I think, for the first time since I've been able to quote it, but over 4 in nat gas. That's all I got, Sadnoff. Most of the chip stocks are lower with a little bit of a ban on some, or some legislation on some chips. That's all I got. NVIDIA down 10.
Actually, net gas was a lot higher last night, but it's 7:55. That's Central Time.
I meant during our session here at 8 o'clock. I don't think I've quoted over $4 in some time.
7:55 Central Time. We're in Chicago. Let's do it. Confirm and send. Monday, January 13th. Unbelievable. Time is flying. Let's go to the slides, John.
Can you get a situation where implied volatility expands in some strikes, but not others? Assume they are all in the same expiration cycle.
I mean, I've never. I'm going to give you an answer. I don't think I've ever looked at this with a fine-tooth comb the way you might be wanting to do this. I mean, on a percentage basis, I'm sure out of the money options move more than at the money options at time, and vice versa when volatility contracts. So for me, yeah, they can move at a bigger proportion, but no, I think they're all going to move. If volatility expands, it expands everywhere.
Yeah, I mean, you can get situations where if it's not the same expiration cycle, like something out in time can move differently than near term if they have news coming or binary event. But if it's the same expiration cycle, nah. When one moves, they all move.
Yeah,
they're
totally
not going to be. No, you can't play a per strike game. I mean, something can get bid up, like a certain strike can get bid up, and then all of a sudden that'll move the other strikes. But you're picking pennies here. They all move together.
Yep.
Let's go next slide. I am short a very deep in the money covered call. Is there any good reason to roll this for a debit, or should I just wait to be assigned?
Roll it for a debit, a deep in the money call. Rolling for a debit can only mean that there was probably a dividend that was paid to you. A covered call is a bullish strategy. You've got a deep in the money call. You've got nothing on, relatively speaking, but risk. If it's deep in the money, the way you're saying here, meaning the play is over, you maximize your return. I think the bigger question here is not whether I should roll for a debit. Bigger question here is, should I keep that trade on? Should I roll that call up for a debit to a different strike, or credit, hopefully, to a different strike near the money or just out of the money? I would probably say yes, you should do that if you're still bullish on the stock. If you go the same strike for a debit, that's odd.
Yeah, but even if it was a small credit, my deep in the money call, 98% of the time, we're out of that trade. So I wouldn't necessarily.
Or adjusting it to something else with some delta to it, right? Because you want to have a delta.
Yeah. I'm not going to wait. I'm not going to wait to be assigned. I'm just going to close the trade and take my profits. If I do close the trade, then I'm just going to turn around and sell an out of the money put. I'm not going to keep that position on. So, is there any good reason to roll this for a debit? No, there's no good reason. You either want to take the trade off, take your profits, or take the trade off and sell a naked put. Let's go next slide.
Good.
What percentage of your trades are long premium?
What percentage are long premium? I would say very few to. I mean, I don't want to say zero, but it's low.
Yeah. This number is going to be really low. Like we're not premium buyers, so it's not going to be zero, but it's going to be very low. Like it's way less than 5%.
Yeah.
So it's in the very negligible range.
Right.
Definitely less than 5%, 2.5%, whatever it is. But yeah, not a lot.
Yeah.
Let's go to the next slide. So how do option assignments work? Are they random? Are they based on how long someone has been in the position? Are there other criteria used?
It's a wheel, right? I mean, it really just a spin of the wheel. Your name pops up, and you don't even know how many contracts you're going to get if you have more than one.
Yeah, it is not a highly sophisticated, it's not something that's measured by
and
how
it has nothing to do with us, right? I mean, it has nothing
to do with Tasty. It's all done at through the Options Clearing Corp, and they deliver the assignments to the clearing firm. They distribute them on a wheel basis to various customers that have those positions on. It's nobody gets to look at it or understands what they are. You don't even know if they're good or bad. Like, like there's no way of knowing. So
It has nothing to do with how long you've been in position. It has nothing to do with some other criteria. It's just purely a random wheel. It's the fairest way to do it. And, sometimes you get hit, sometimes you don't. I really don't know. Yeah, I mean, there's nothing you can do about it. It's completely a random distribution. And they just spread the wealth around. That's all it is. Next slide. This person writes, I have $300K in a portfolio. I'm investing 1/3 in tasty strategies and 2/3 remains in passive investing. How should I evaluate my performance? Gains and losses against the $300K or against the $100K?
I think in its totality is the only way to do it. I mean, you can separate it and say this did better than that, or this underperformed, or this didn't do good, but it really is the totality. Now, please remember, if you're doing tasty strategies and volatility expands and you're selling premium, and we don't go anywhere or we stay inside an expected move for the year, you're going to do great in that strategy. But it's because the market cooperated with you. And if the other strategy, if you're, passive investing, I'm assuming to the long side, if we have another 25 or 25 or 30% move to the upside, that's going to do great. So it really has to be the totality of the portfolio. But I think you're going to find the leverage on the 1/3 of the strategy that you do tasty style. You might morph those into using in your 2/3, meaning, if you're looking at a passive stock position, you're going to use a lot of buying power in that. The better ways to use your buying power.
If you have a $300,000 portfolio and you're doing 1/3 tasty strategies, 2/3 in passive investing, you should evaluate your performance based on $300,000 salary, $300,000.
Sure, the totality,
portfolio.
right?
Yeah. We don't break things out and separate it. I mean, the performance is the performance on the entirety of the portfolio. So it's on 300,000. We don't say, oh, I made 20% on 1/3 of my portfolio, but on the balance I made 6%. We don't do that. It's just on the entire portfolio. Let's go next slide. And the last one, is there ever a situation you would go to 100% cash?
Yeah, when I'm directionally wrong, and I've never been able to do it fast enough. So I'm going to say no. I don't think I've ever been 100% cash in my adult life since I've learned about trading.
Yeah, that's a really tough question because I don't think I've ever been 100% in cash either. I know I've never been 100% cash in over 40 years. So I just don't think that's ever been the case. I always have positions on, always, all over the place. I'm going to say I have never been 100% in cash, and hopefully I never will be. Is there ever a situation you go 100% in cash? The answer is no, I don't think so. We're always playing the game.
Very good. Hey, listen, let's take a quick 90-second break. Even the S&P sold off about 5 or 6 handles. They're down 43. We'll be back in 90 seconds. We got more Tasty Live sound off with a little bit of an option jive. Immediately following these messages from our sponsors.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funica. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little...
He's all tracksuited up.
Right?
I was waiting for somebody to say something. And if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
today so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will
You
it
can do
ruin
whatever
it?
you want with it. Yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He
Where
brought
is
you in chili. Nobody was allowed to touch it. Now
It's in the
been sitting
refrigerator.
out for hours.
Now I got to talk about the chili. Here's my comment about the chili. You were right. Not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was
you can
off.
chop him up a little finer.
And then maybe pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. I really do. This is my favorite segment by far.
I made a little video. We have
Oh,
been
no.
blessed
Is this going to embarrass
by
me?
the holiday spirit here
Oh, no.
at Tasty Live. So you're welcome. Here's
Have
your
we
gift.
seen this?
Watch this. No, you've not.
I didn't proofread this. Oh, God.
You want me to get in first? You want to get in first?
Saz, get in here, you big stud. It's my bad arm. Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm
No,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's Option Jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with an Option Jive and my man Kai. Good morning.
Good morning. How are you guys?
Hello,
Doing
Kai.
well,
All
thank you
good.
for asking.
Did you survive through the snow, Tom?
Through the snow? Yes, I survived. My
The 1 inch that we had.
Yeah,
My-
the first 1 inch snow that needs to be shoveled.
That's right.
My 1 inch snow. Yes, my shoveling team was out there in full force. I have no control over them. They either show up or they don't show up, but all I know is I have to pay them regardless.
You don't even have a very long driveway. Very short.
Who, me?
Yeah.
They don't shovel my driveway.
Oh, okay.
But yeah. So no, they only shovel the sidewalk in front of my house, and they do it really fast. They come. There's about 4 guys jump out of a truck. They do it in about 30 seconds, and they jump back in the truck. It literally takes them 30 seconds.
That's $55.
I think they raised the price on me. I'm not sure what it is, but
everything is more expensive. Inflation right now.
Yeah, thanks, Joe Biden.
I get free car wash, so I can't complain.
That's from a
You
different
get
team.
free car wash
Because of my snow shoveling,
because of your relationship. You get free car washes.
not free car washes. I get a free car wash.
Worth it. Well worth it then. Got it. Just the economy wash, nothing premium, no Armor All. Got it.
No.
What kind of bundle is that? Snow shovel.
Just a regular
car
wash. Yes. I got the best car wash in a whole damn city. These guys they're great. They're fast. They're amazing.
I don't even know. Fast car wash is a good
And the guy
thing.
lives in Glencoe, Tony.
No way. Too funny.
Yeah, he's
Cash business.
Cash business. He lives in Glencoe.
Yep. Nice. All right, what do you got for us, Kai?
Ooh. Ready for something?
I'm ready. Yeah, a little research.
All right, let's take a look at what happened last week. Yeah, a little research. All right, so for indices last week, we had a pretty ugly week. Everything down close or more than 2%, which is considered pretty big. The average movement for all these indices is less than 2%, so these are considered pretty big. So next slide, we're taking a look at the expected move from the beginning of last week and the beginning of this week. Definitely last week was larger than expected move. The SPX weekly movement expectation was only $78, so 1.3%. Sorry, I forgot to put the actual move is 1.9%. And this week, because the IV is much higher, I believe the IV is even higher than Friday close. So the Friday close is 19.5, so the expected move is over $100, which means in percentage is close to 1.8%. So let's see if this week is going to be smaller than that or not.
It's a pretty big. It's the biggest expected move we've had in a long time.
Right, 1.8% is quite a big. We haven't seen more than 20 handle VIX for months.
Yeah,
since the election, 2 months. All right, so next one is, although the market went down pretty significantly in the past week, the 45-day expected move is still cover whatever the trading range right now. So we're actually still inside the 45 expect move, slightly on the lower side, but definitely not in the extreme terms yet. So I would say in the past couple of months or even a year, selling premium in 45 days and managing 21 DT was a pretty good experience. I saw a lot of people posting their comments in the YouTube and Twitter. They had pretty positive experience. What do you say, Tom and Tony?
It felt like I would have guessed we closed outside of that 1 week expected move, but I guess we didn't.
Oh, the election or the August 5th. Only they're too big, like a weekly move in the past.
Yeah, I find these ranges to be a little misleading because the problem with it is you can't. The statistical chance of landing inside is far greater than the pain you have to suffer when it gets to one of those levels. So it's not it's not really realistic, unfortunately. That's my issue with these kind of ranges and these spheres, is because the quicker you, like, if you look at this and you look at where the tape action was about 2 months ago or even a month ago, there was 2 times when you would have had to adjust those positions. So letting them go to where they are today is not that realistic. That's all.
Is it because of a lot of people start trading 0 DT in the shorter term? They don't even start with a 45 DT. So the volatility, you definitely experience much higher volatility if you trade shorter duration. And also a lot of people trade Bitcoin related with the extremely high implied volatility and implied volatility.
Yeah, totally.
Cool. All right, next one is the major assets IVR. So the past 2 weeks, we have increasing IV and IVR, except the euro is start to stabilize. 62% IVR. Everything IVR actually went up and also natural gas is keep at the 60%. Everything else went up pretty quickly, especially the S&P bonds and crude oil. And we're going to talk about crude oil price too, because crude oil price went between 70 and 78, like within 2 weeks.
Yeah, good catch here, Kai. Volatility, which has been kind of on the low end of its range for quite some time, really started to percolate last week. I think Friday it came in ever so slightly, but you're right. Everything's been going higher, which is nice if you're looking for new positions.
Exactly. All the IVRs here, except the Bitcoin, is close or above 50%, which is great opportunity if you can choose the right strikes.
Yep.
Yeah. So some big movers last week. The first one is definitely. Can we take a look at the next slide? So the crude oil. So crude oil jumped from 70 to 78 within 2.5 weeks. So in the past 3 weeks, we had like a straight 3 weeks upside move from crude oil. The futures up 11% in 3 weeks. First week's almost 5%, and then 3.5% last week's more than 2%. I believe this morning I saw the futures that's up 1.8% or something, 1.7%. Is it?
You're talking about the crude oil futures?
Yeah, crude oil futures.
Yeah, they were, but they've sold off a little bit. Now it's just
1% now.
1%.
Only 1%? Okay, wow.
Crude oil was $1 higher, though, so you were right.
Okay, so yeah, crude oil definitely has been hovering around $70 for months, and now it's jumped all the way up to $80. This is one of the big movers last week.
Yeah, for sure. I think crude oil warrants a position these days.
You guys trade crude oil recently?
No, I'm not in yet. Soon.
Ivy rank was so low for so long in there, it really didn't warrant a position, but now it does, I think.
Yeah, I think you're right. I think for the first time in a long time, you can start to do something. I mean, to me, when crude oil's going up like that, you got to be really careful. You can get you're at the Ivy rank up to 40. We could do something in there. Maybe a little bit of a skewed strangle, because for the first time it's showing a little tiny bit of.
Sure, even a defined risk trade, so enough give you some leverage to hang in the trade.
No, I'm okay with undefined risk. I think it's time for a little strangle. It's
going to have a lot of call skew too, so you might want to do a little bit of a ratio spread or something like that too to the upside.
Yeah.
Are you afraid of the one-sided move, like a very strong?
Yeah, Tom's scared.
Yeah, not really. I just like.
Yeah, not.
I haven't traded crude oil in about a month, so I'm going to put my first position on.
Cool. Maybe wait for Wednesday or Friday. We probably will have viewers calling.
So we'll see. Mm-hmm. Okay, we're working.
Yeah, cool. Yeah. So next one is the is Euro. So Euro didn't have an extremely large move last week, but overall the trend is still going down. The last week we actually reaching almost the lowest point in 20 years. So we already surpassed the lows in 2017s and 2015s. So the only lows then lower than Fridays or Thursday is 2022. So we're getting very close to 20-year lows right now for Euro.
Yeah, it's amazing. I can't believe it's almost parity. I think you should, at parity, I don't know why I never say this, but at parity, I kind of feel like I should do a swap and buy some euros. How much risk do you have, really?
Yeah, right.
Like
yeah, right now, so
I don't know. Don't you think it's a good risk reward? I mean, sure, it can go back to 95 or 96, but don't you think it's a good risk reward at parity?
You asking back?
I do.
I think it's a good time to travel to Europe.
Yeah. I mean, I'm already long euro, but if it gets to parity, I think I'm gonna do something stupid.
Agreed there, but they gouge you on the flights. I don't know if you've looked at any flights anyplace. Flights are just out of this world. And UAL stock and AAL are also out of this world. Those two are making new highs.
You mean
yes, exactly.
They gouge you on flights to where? What does that have to do
anywhere?
with
To anywhere. I wasn't just going to Europe. I mean, to anywhere. flights are extremely expensive, as are the two, airline stocks too.
Yeah, just some reference. Right now, the €1 equals $1.02, and the 2022, the lowest point is 0.96. So extremely close right now.
Yep.
Yeah. All right. Next one is the bond. So bonds, again, similar to euro, we're not at the historical lows right now, but we pretty much at the 15 years, very close to the 15-year lows. The lowest point is also at 2022, which is for TLT is 83.58. Right now we're at 85.45. It's less than 2% to the 15-year low. Different term futures probably have different price, but TLT for the combined ETF, we're definitely getting very, very close to the low. So probably it's a good time if you already long a lot of equity. This probably could be a good time to diversify a portfolio long some TLT, long some bond products.
Yeah, we sold some 85 puts on Friday in there, and we bought some stock. So I'm definitely on board with your thinking there. That is definitely an interesting low. We also looked last night, we talked about FXI, which is another one that's at 28.70, where it's unchanged this morning, but at 28.70, that's another stock. Chinese market's on its low. So if you're looking for stuff.
Okay. Interestingly enough, the IVR for TLT is okay. It's 50%. It's not as high as we expect. Is at this level, right? We expect a 70 or whatever.
Well, when bonds go down, nobody gets too excited about bonds when they go down. So when they're on their lows, there's not a lot of vol excitement.
That makes sense.
Yeah, they're an upside. So vol expands to the upside in there.
Okay. All right. So next one, we take a look at the weekly top and the bottom performers. So I only include the liquidity with 3 stars and above on Tasty Trade platform. So the number one is Walgreens. It's up 19%. One of the reasons we had the earnings, I believe, on Friday, it was up 28% post earnings. And you're right, Tony. Airlines up 8%, 10% last week. CVS up 5%. eBay was up 4%. And some interesting data from 2024. Some of these actually made to the top list in the annual performance. So the Walgreens last year was down. Is it like a second worst performer last year? It's down 64% in 2024. And UAL, all the airlines performed really well. UAL is the top 3 performer. It's up almost 140%. So at the bottom, the bottom part, the number one, definitely the PCG, down 16%. And the PLTR, SMCI, WBD, and AMD. So the AI chip makers down pretty significantly last week. And also PLTR down 13% was the top performer last year. The number one performer up 340%, but start to pull back last week a little bit, 13%.
Okay.
Nice work, Ty.
No, not done yet. And we have earnings.
I know, but that was nice work.
Okay. So earnings, we were getting into the earnings season. And last week, although we didn't talk about any earnings, but we have 2 big movers, Delta and the Walgreens. They both up big, almost 10%, 28%. And this week, and next week, so next slide, not next week, this week. So next slide, this week we have a lot of financial institutions, especially the banks. Can we go to the next slide? So we have Citibank, JP Morgan, Wells Fargo, and BlackRock on Wednesday morning. On Thursday morning, we have even more, TSMC. We have Bank of America, other banks, and Infosys. Pretty much a lot of financial institutions this week. So this is pretty much the new start of the earnings season, starting with the banks. Used to be AA, Alcoa.
It's so much better with the banks, to be honest with you. I think it's signals the season a little bit better too, and we'll see how the Russell does with some of these bank stocks showing their earnings very early.
Cool.
All right, my friend. Good job out of you. We're going to take a quick 90-second break and come back. Even the S&P's down 46. We got the opening bell next. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell. The opening bell is imminent, Sadnov, in less than a minute here. So I'm going to let the market open before I start looking at things. The two weakest of the group, but they're all pretty weak. NASDAQ and Russell, followed by the E-mini S&Ps. And then the Dow is down 62, basically unchanged when everything else is down around 1%. We'll see what this market does. Volatility up 68 cents to 1980, Sadnov, signaling a little bit of legs to this move. Volatility up around 3.5% to 4%, near the higher end of its range. What do you think, Tomas? Thomas?
Yeah.
What do you think here? The market holds this down move?
We closed a little
You said
under.
the two weakest days of the week are going to be Monday and Tuesday.
I do, and we closed a little underwater on. What the hell, Moderna? What happened there?
mRNA down $8.60, Sadnov. Yeah, big move in Moderna.
That's a big move for a $40 stock.
Yes, it is. A 20% move to the downside. Ooch.
Ooch is right. And UNH up $14.
Company lowers its 2025 sales forecast by $1 billion, Sosnoff. $1 billion. They were just off a little bit of a rounding error.
Yeah, I guess. All right, let's see what we got here.
Tesla down 13, Nvidia down 4, Coin down 16, Apple down 4. You got some movers to the downside, Sadnov. That is for sure. Let's take a look at what some of those are. You're looking at MSTR down 22 or 21, Coin, which I just told you, down 16, Tesla down 13, Meta down 12, Lilly, which has been a leader a little bit to the upside, down 7, TSM, which has earnings later this week on the 16th, as Kai just mentioned, is down 6. Reddit down almost 6, $5.80. Let's see what buckers we have, Sadnov. Humana, UNH up 12 and 14. Lulu up 4. JP Morgan, which has earnings this week, up $1. ADGO up small.
You're going to have some buckers out there. And don't mind that. I just, yeah, this is not a good opening for.
Volatility is expanding, taking away some of the delta.
Yeah, for sure.
Mm-hmm.
I am in the process of moving down a couple of stocks.
Oh, are you?
I'm really surprised about Moderna. I'm not sure. I didn't have that one on my bingo card. Like,
you didn't have that one on your bingo card?
I don't think anybody else did, because I've been leaning a little bit long. I've been leaning a little bit long in there, and very intentionally, just because I kind of felt like,
well, the stock has trended lower, and you're kind of trying to be a little bit of a contrarian.
Yeah, another stock that surprised me with its weakness is MU. This is a stock that it looked like it was unstoppable at 105 or 110, and now it is back to 95. Like, it dropped so freaking fast. IB Rank's nothing special in there either.
No, it's not.
But easy to move around in, though.
Whoa.
Our deltas are really flat here. Well,
that's a good thing. That means you had a little bit of short delta coming in. You pick up a little bit of long delta as the market moves lower.
I don't have a lot of choices, though, in Moderna, unfortunately.
Moderna is going to be one that you can't defend. So
nope.
No, if you can't defend a 20-point move,
nope.
a 20% move on a stock,
you cannot. Worst stocks for us today are Moderna, MU, surprisingly, and that's about it.
MU out of nowhere.
MU out of nowhere, but that's a stock that's just ugh. I need bonds to rally for sure. Let's see, what else do we got?
Bonds are actually down 2 ticks. They've been hanging out in a pretty tight range this morning so far.
Yeah. All right, what do you think here so far? I mean, I know nothing's happened.
Nothing really has happened. We've stayed a pretty tight range. I mean, a lot of these stocks are off of their lows. Volatility is off of its highs. I think you got a little bit of a tug of war going on here, Sadnov. I mean, can we just close right down here if volatility doesn't move this morning? I mean, I think you got to sell a little bit of premium going into this, Sadnov. Maybe the ETFs are on board. I don't have any positions in SPY, which now has an IB rank of 36. It was it was in the teens or lower not too long ago. I think it might be time to do a little bit of premium selling in the Qs and SPY. I think that they be coming into play now. That's going to be my go-to. Maybe for Tuesday, for option trades today, so I don't know if you find your winning trade.
I don't hate that play, by the way. I don't hate that play at all. I mean, I got a lot of
down moving gold has helped people. At least that's helped me a little bit in GLD. Almost getting me positive for the year.
I have a little red on my screen this morning because of the vol expansion.
Totally, and a contraction in one stock, Tesla. I don't know if you've looked at that. Volatility IV rank of 73 in there has come down nicely.
Let's take a look at Tesla.
As the stock goes lower, volatility is going to go lower in those high flyers.
It's funny that you said that in Tesla because Tesla's my biggest winner this morning, and Tesla's
my best performer for 2025. It hurt me in 2024, especially at the end of the year. It was doing so good at the beginning of the year, and then kind of took it all back at the end of the year.
Yeah, Tesla's my biggest winner this morning, which is super weird because I thought that was going to be a loser. I don't know. I got a bunch of different fires to kind of put out this morning, but I'm not that anxious.
Okie dokie. We'll sit with the Delta then.
Yeah.
You made a few adjustments. You traded a lot prior to the market too, mostly futures, obviously futures and futures options, because that's the only thing that's open. You adjusted a lot of trades today.
The only futures trade that I put on that's an opening trade was I sold a strangle in crude oil. That's it. Other than that, I didn't do anything else. I'm taking a look to see if there's anything weirdish out there, and I'm going to say not really, not yet.
And weirdish is really just taking a look at your P&L, right? Even the S&P is down 50.
Yeah, the after the close on Friday, this is not, and I repeat, this is not a good look. Because we closed underwater, so that's what kept making me nervous about this move.
Closed
this morning.
Underwater, that usually signifies some sort of like footing underneath it. Maybe the futures have to catch up to. Maybe the market has to catch up to where the futures are, or vice versa, right?
Something like that.
Kind of signifies a reversal in the market.
Yeah, something like that.
Mm-hmm. Got it. Well, the day is still young, Sosnoff.
No question. Anyway. All right, what else you got? Anything? Look at Apple down $6. Apple.
I got Mr. Dr. Jim. Nothing says Monday like him. Do you want to throw him in the mix?
Apple has really fallen from grace. Wasn't that stock like 248 just like 2 days ago?
Yeah, Apple, if you remember, as the market was going lower, Apple was going kind of higher, and then the market got its footing underneath it. Apple started going lower. Now with the market going lower, Apple's going lower. Apple down $6 and change. You are right, Sadnoff. It was approaching 260. It's now 230. At the end of December, it was 260, 230 right now. IV rank of 62 is quite good in Apple, and it has earnings coming January 30th.
Yeah, no, stock is heavy.
Yes.
Apple's heavy. AMD's been heavy. Oof. Yeah. Anyway, I'm going through all stocks. Bob and Baidu up. Chinese market's up a little bit.
They took a little bit on the chin on Friday, right?
Yeah. All right, I'm good.
Let's take a quick 90-second break and come back. We got more Tasty Live. Sounds like we got Tasty Live. More of this coming up. Nothing says Monday like this, man. The Skinny on Options, abstract applications with Dr. Jim next.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. But you know what? Enough out of you. Nothing in the world says Monday like this, man. Dr. Jim is in the house. The Skinny on Options, Abstract Applications. How are you, Dr. Jim?
Man, I'm well. I mean, I've been better. I'm working on this nasty cough, so I'm going to need Tom to carry me this morning. So my expectations for the show are not very high. But guys, did you guys see my Notre Dame Fighting Irish the other night?
Oh, God.
Like, they're doing it, man. Like, they're doing it. I've been telling you guys for weeks. And weeks. And here we are going to the national championship. Going for the natty, gentlemen.
I'm actually
going for the natty.
I'm actually all in on Notre Dame. I'm with you. So that's the bad thing.
So wait. First of all, the fact that you say Notre makes you on the outside of the inner circle. So that's going to be a problem. Okay. But then second of all, can we continue this conversation? The people need to know that you are all in. You couldn't be more all in on Mike Evans, first ballot Hall of Famer. These are your exact words, correct?
Yeah.
He's not getting in on any ballot, and you're putting him in on the first ballot. He's a good player. He's a great player. But Tom, are we just handing out Hall of Fame inductees to just whoever wants them now?
Hold it. We're talking about Mike Evans, right?
We're talking about Mike Evans.
Doesn't he have 10 years of 1,000 yards? Isn't he?
It doesn't matter.
You're out of your mind.
He has been solid forever.
Okay, exactly. No, stop. Tony, I'm bringing you in now. I'm tapping you in. That's exactly right. He's been solid. Are we giving Hall of Fame to solid players now?
Have you looked at
let's toss one. Let's toss a little honorable mention to Jay Fiedler. He was solid his whole career.
No. Okay, listen. I can't deal with you because you're so bad at sports and things. But Mike Evans, first ballot Hall of Famer, 100%.
Tony, please help me out here, man. Please inject a little bit of reason into this discussion. He's definitely not first ballot, and he's likely not any ballot.
You're out of your mind. But
Tony, where are you at on this?
I think he gets in. I think he's first ballot. I agree.
Do you think this is crazy? All right, John, I can't do it today, man. I can't. Like I'm the cough is taking me down, and then I got these two jabronis coming at me with first ballot Hall of Famers. I can't do it.
He at least gets a participation award first ballot.
I mean, you want to go through all the receivers in the National Football League that are first ballot Hall of Famers? I mean,
you're putting him up there with like Lynn Swann. You're putting him up there with like Andre Rison.
Yeah.
Like, come on, man.
Yeah.
This is crazy.
Andre Rison's best game ever was in like the Peach Bowl when he was playing Michigan State. But I loved Andre Rison.
You weren't ready for an Andre Rison reference this morning, were you?
I wasn't, but I do love Andre Rison. So you happen to get me.
Andre Rison, I mean, that brings me back to the 80s, man.
Brings me back to
my sources say, Dr. Jim, my timely sources say you know absolutely nothing about sports.
Yeah. And by the way, Andre Rison brings me back to, you remember Left Eye?
I don't. No, Left Eye.
Well, then you don't know Andre Rison.
I think this could be the turning point for Sadnov. This could be the first time he's right in 2025.
Hey, Left Eye.
Call of Mike Evans.
Left Eye was his girlfriend that burnt down his house.
Left Eye Lopez.
I remember hearing.
All I can say is if you got a girlfriend named Left Eye, you're a badass. Okay.
Yeah. You're first.
You're a first ballot Hall of Famer if you got a girlfriend named Left Eye.
We can all agree on that. We can all agree on that.
Left Eye burnt down his house because he didn't come home in time.
So do you guys think? I mean, my Lions. We're gonna roll the Commanders, right? We're gonna. It's time for a little payback from 1991, I believe. Correct.
I don't think the Lions. Well, who did the Lions play? They play the Commanders.
Yeah.
Yeah, I mean the NFC.
Oh, it's gonna be.
The NFC is easy compared to the AFC because the AFC's got the goods this year. But the Lions probably squeaked by the Commanders, but then they get killed by Philly.
Yeah, I don't know, man. I don't know. Anyway, I'm excited about my Notre Dame Fighting Irish. Did you guys know I went to Notre Dame High School? So I can't sing the fight song right now, but if you gave me a little bit of practice.
Crap.
Oh, it counts worth everything. Are you kidding me? I mean, I'm Notre Dame. It's in my blood, man. I bleed Irish. I bleed,
I'm gonna tell you who bleeds. When I bought my first condo in Chicago, Corinne and I lived next door to a couple. They were 7-year domers. They went to undergrad and they went to law school at Notre Dame. So both of them 7 years. Their entire house, their entire condo was everything they had was Notre Dame. That's 7 years there. They were both Irish. Every single thing in their house, their dogs, their kids, their walls, everything was Notre Dame. I had to go to so many games with those guys. That's people that bleed Notre Dame. Like that was my first, because growing up, I didn't know a single kid that ever went to Notre Dame. But that was my first time, was living next door to these two and going to the games and seeing every single thing in their house, their silverware, their cups, everything was Notre Dame. Everything. Cars, tailgating, everything.
They've got to be pretty excited now because this will be, they haven't won. It's been the 90s, right? Was it the 90s when they won last time? It's been a while.
I don't know. I don't know if they've been in it. They lost to Georgia, was it? They got killed, or I think it was Georgia a couple years ago.
Tony, can you look that up for us? When's the last time?
They were in the national championship, and they got run over.
1988 was the last.
88? Yeah. Tom, that's like 40 years, man.
Well, first of all, I love Marcus Freeman. I think he's absolutely great. And if you ever want...
He's going to be the next coach of the Bears.
If you want a feel-good video, just Google the time when they announced him as the head coach of Notre Dame. Have you seen that a million times?
I don't know if I've seen that. No.
Google it. And then it's the coolest thing. John, if you could pull it up, it's the freaking greatest. when Brian Kelly left and they announced him as the head coach, it's great.
Talk about a switch of extremes in terms of like personality, going from Brian Kelly to Marcus Freeman. That's quite a change.
Yeah, John, if you pull up that video, it's fantastic. I love it.
Are we gonna watch? You want to watch it now on the show?
No, let's go. We can do your piece. But I'm trying to get you fired up. I want you to see what it's like.
I thought if I wanted to feel good and get fired up, I could just watch Mike Evans highlights. I'm assuming I'm going to walk out of that feeling pretty slightly
if you're a
above
Tampa
average,
Bay
is
fan,
what
you
I'm
could.
guessing.
Why don't you ask Tom Brady if he's a first ballot Hall of Famer?
You want Tom Brady's not? Come on, dude.
He's not a first ballot guy either.
Well, he's not a first ballot broadcaster. I'll give you this. Mike Evans is to receivers like Tom Brady is to broadcasters. That's the perfect comparison.
Oh my God,
that's the perfect comparison, right? Like you're talking about Mike Evans like he's the Greg Olson of broadcasters. He's not.
Oh my God, I can't handle. I can't.
11 years with over 1,000 yards.
11 years with over 1,000 yards. That's a first ballot Hall of Famer.
Everything's watered down, man. In this world that we live in, you wrote about it this morning in the Cherry Bomb. You're talking about your boy Bezos. You're talking about your boy Musk.
11 years with 1,000 yards, plus he won a Super Bowl. Okay? You're crazy. You have no clue.
Doesn't mean anything. None of it means anything anymore, man. They're just handing him out on the street corner. Right? Just handing. Let's do some finance, John. I can't take these guys too much.
Let's do some finance. The Dow is trying to save the market here. The Dow up 100.
Dow up 100, man. Look at those boomers. Tom, those are your people. Tony, those are your people.
Those are my people.
Whenever you need something done, you contact your neighborhood boomer. We all know that's true. You can't count on Gen Z. You can't count on Gen X. You can barely count on millennials. But, man, you need something done, man, your boomers are going to get it done for you. No doubt. So is trading options a zero-sum game? Gentlemen, we've talked about this a million times before, but I felt like this morning it was time to do it again, because it's a very, very important concept. So, John, hit us here on the very, very first slide. All right, so if you trade long enough, you're certain to hear the term zero-sum game thrown around in reference to active trading, which simply means that the two sides of a transaction cancel out, and trading itself might prove to be a net zero result. So that begs the natural question, is that what trading options is, a zero-sum game? Interestingly, the answer isn't so simple. So, gentlemen, we've heard this a million times. What's really fascinating about the zero-sum game situation and the question is it really isn't that simple. Because on the one hand, the answer is yes, and on the other hand, the answer is no. Like, it's not clear-cut like Mike Evans' Hall of Fame would be, which is clearly a no. This is going to have a yes versus no, a yin versus yang. So, John, hit us here on the very next slide. Okay. On the contract level, yes, options are a zero-sum game. So whenever you're talking about a singular contract, a call or a put, it doesn't matter. You have two sides to the contract. You have the short side, you have the long side, right? Well, whatever one side gains, the other side loses. And whatever one side loses, the other side gains. It is equal and offsetting. So at the contract level, options are indeed a zero-sum game. They have to be by definition. Gentlemen, as an active trader yourself, does this give you pause for concern that it's a zero-sum game at the contract level?
No, I mean, that's like saying, I think a better way of saying if options are a zero-sum game is it's almost better to look at it as all options go to parity at expiration. So if all options go to parity at expiration, then all longs have, if they expire out of the money, have to have a net loss on that strike, and all sellers have to have a gain, or vice versa if they're in the money. Now you don't know the price, so that's the real problem here, and why zero-sum game is absolutely true, but everything goes to parity at expiration. I think it's a better way of saying it. But yeah, no, it doesn't bother me.
Okay. Tom, does this give you pause for concern?
No, it does not.
Does this discourage you and dissuade you from thinking that one day you, Tom Sosnoff, are going to make it as an active trader? Because your football analysis, I would not be pursuing that as a long-term career. Just as some friendly advice.
Dr. Jim, you're completely wrong about this one. I try to be on your side because I need.
You don't even know where I'm going. Oh, you talking?
No. I meant with the football analogy. I'm so sorry.
Oh no, I'm 100% right on Mike Evans. I don't want to talk about that anymore. We got to move on to something else. That's a slam dunk.
All right.
Okay, so Tom, you're not okay. So you're not discouraged. That's good. All right, well let's go to the next slide there, John. This might dissuade you a bit further though. So let's suppose. So Tony, I really like your kind of moving to parity. That's a very interesting way to look at this. I didn't go that angle this morning, but that is 100% right. But now let's start talking about a strategy. So now let's move on from the contract level. Let's move on from even the parity discussion. Let's talk about the strategies that we use. Now we could go over a number of different strategies, but I only went through one very simple strategy here on the show. Let's say you had a vertical spread. Just a very simple $1 wide vertical spread, just for example purposes only. We don't typically do $1 wides anymore because it's not really going to make a lot of sense. But from an understanding of where I'm trying to go this morning, I think it works pretty well. Let's say you have a $1 wide vertical that you collected 1/3 the width of the strikes on. So it's $1 wide, you collect 33 cents, you're risking 67 cents. Okay. The way the probabilities are generally going to work out is you're going to have about a 67% win percentage on that position and a 33% loss percentage on that position. Okay. If those numbers hold true and they're in your favor, right? I mean, the probabilities are on your side. If those numbers hold true, you can do the math. You're going to win 67% of the time, but you're only going to win 33 cents. You're going to lose 33% of the time. You're going to lose 67 cents. You're going to net out to zero. So now it's getting worse, gentlemen. Not only is it a zero-sum game at the contract level, but it looks like it's a zero-sum game at the strategy level. Gentlemen, are you concerned yet? Are we going to make it?
We're going to make it. We're going to make it, Dr. Jim. I'm not too concerned yet.
I mean, Mike Evans ain't going to make it, but are we going to make it? Are we going to get there?
Are we going to make it?
Yes, we're going to get there. Yes.
You think we're going to get there? Okay.
Yes.
So how do we get there, gentlemen? Where do you think I'm going next? I'm curious to see if you guys can figure this one out.
Where do I think you're going to go next? I think you're going to say it's because we pick our spots, because that's assuming a couple different things. That is assuming that you're just doing it all the time, not when it's not when the volatility contraction is in your favor. And number two, you're also going to say that this is 100%. What you're looking at here is binary, and you're probably going to say that in reality, it's the results aren't always binary.
Okay. All right. That's fascinating because I actually agree with both of those things, and I'm not going to go in either of those directions here this morning. There's actually a third. There's a third pathway through the forest. So, John, we're ready for the crescendo here this morning. Mike Evans, not a Hall of Famer, but here we have something we can use. Our empirical findings have shown us over and over again the probabilities they won't play out as expected, Tom. They'll actually be better. So even if theoretically you go into a spread with a 67% win rate, what's going to end up happening, and I mean, the guys, and I mean, they've shown this on the research team so many times. I mean, this is our network. This is the whole network, basically, right? You're not going to win 67% of the time. You're going to win 68 or 69 or 70. It's going to be a slight uptick over theoretical. And so you actually do end up with a net gain over time. Now, how is this happening? Why is this the case? Well, I mean, the easiest way to understand this is the difference between implied volatility and realized volatility. And on average, implied volatility is greater than realized volatility, which simply means that the implied volatility that the option pricing models are using to determine option prices is greater than the realized volatility on average that actually materializes for whatever time segment you might be looking at, the next 45 days, the next 60 days, whatever. And because of that, you end up with a little extra juice at the end. You end up with just a little extra something, just that little, additional just push over the top that Mike Evans really needs to get him into the Hall of Fame, but he's not going to get there because he's a Hall of Fame B. He's a Hall of Fame B player. That's all I can say. So there you go.
Yeah,
he'll get you 1,000 yards, but can he get you 1,400? No, he can't. It's not in his skill set.
I kind of like my answer better, but sure, I'll give you that.
No. Actually, I was actually impressed. I did not expect you to be able to come up with that this morning. But that was nice. I mean, you talked about, picking our spots. That's 100% right. I mean, if you wait for volatility to expand, you have the odds of contraction just slightly more in your favor. Now, again, you have to remember, I mean, this is basically the Al Pacino speech from Any Given Sunday, right? It's a game of inches. It's all about inches. We're talking about just slight little margins here. We're not talking about major differences, major discrepancies. We're talking about you just want a little bit there and a little bit over here. And then, in the end, it can add up to something pretty significant. But
You're right,
the important thing is, go ahead.
You're right, Dr. Jim. Evans never had a 1,400 yards. He had 1,524 yards in 2018.
See, there you go. He can't even get you 1,400. He's got to go all the way to 1,500. See, he's a show-off. He's a show-off. He's not getting in on the first ballot. Maybe he sneaks in. How many ballots do they have? I know in baseball you go for 10 or 15 years. What's the statute of limitations in football? Do you guys know?
I do not.
I don't know either.
You mean how many times can you apply?
How many? Yeah, in baseball they keep you on for however many years and then you just kind of roll off. What is it for football?
I think it's 5, but I'm not sure.
5? Okay. So he's going to have 5 cracks? Yeah, maybe 4 or 5. He's not getting in on 1. But anyway, it's implied volatility and realized volatility. Gentlemen, I mean, can we come together this morning? Just kind of, come around the campfire, sing Kumbaya, and basically say this is the foundation of our network. Can we say that?
Absolutely.
Tom, can we say that?
Sure.
Okay. All right. Beautiful. Let's get him a few takeaways. And let's see if I can get some cough syrup. A common quip in the world of options is that active trading is a fool's errand, Tom, because it's a zero-sum game, which by definition is true at the contract level, as the gains and losses between the longs and the shorts must be equal and offsetting. But over time, it is not the case because implied volatility has been greater than realized volatility on average. And there you go. If you're brand new to the Tasty Network, welcome aboard. This is the main thing that we do. And whatever Tom does.
Good job out of you, Dr. Jim. Sandra, would you like to hear your video?
I would.
I'd like to hear it. Let's do it.
All right, let's roll tape, please. My men in James in production, please.
On your focus
sound
and your ability to lock in all week long this week, okay? It was awesome to see, awesome to be a part of. It shows who you are, your DNA, your mental toughness, your physical toughness, the way you compete, the way you care about each other. Okay, that's what this team run is going to be about. Competing, getting after it with mental and physical toughness, and being the best in the country at what we do. So we ready to do that? Yes, sir. All right, so what I'm going to do now, okay, because you're brand new head football coach.
I can't believe I've never seen that.
Yeah, that's not actually the footage, Sadnov. That was dubbed in for when Sadnov walks into the office in the morning. What we have to do. That's not the speech.
What's funny is that those kids will run through a wall for that guy. They will run through a wall.
I'll tell you what, that type of scenario, it's so infrequent in sports these days, even at the college level. Honestly, that's the type of feeling you get from the Lions with Dan Campbell. It's no, I'm serious. Do you disagree with me?
Oh my God.
Look, don't let your Bears, I know the Bears let you down. I know they haven't won a game in 4.5 years. It's going to be okay, man. But when you watch these post-game speeches from Dan Campbell, it's man, he's built something special. Real special, Tom.
Hey, can you just tell me, I forgot the last time the Lions won a Super Bowl. When was that?
I think it's time for market measures. It's time for market measures.
We're going to take a quick 90-second break and come back. We got a market measure next. I'll save you. Voice isn't there. We'll be back in 90 seconds. Let's take you live.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even know who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure, sponsored by the SIBO. Even the S&Ps, off, they're down 34, kind of mid-range for the day. They've caught a little bit of a bid. The Dow is actually up. It's been the strongest of the group, remains to be the strongest of the group, up 130, and the NASDAQ still down 200 and change. That's a 1% move when even the S&Ps have pared their move down by about 50%.
Yeah, UNH, which has been a PIG pig and made me roll down my call spreads in there, has come all the way back to where I'm mad.
UNH traded for 540, 542 is the high for today. You are correct, Sadnov. UNH with a big move. Markets are kind of wide in UNH.
Yeah,
also,
I'm trying I have an offer in right now to roll up put spread in there, and it is awfully hard to get filled.
Yep.
You can give up a few pennies to the street. I'm going to give up a few more because I can't get filled. And you would think on a day when the stock's up like $20 that you're going to get some fills, but I wouldn't trade UNH unless you have to.
Agreed.
Anyway, let's see. Public service announcements. We have a show coming up in 2 weekends, and you don't want to miss it, along with the shows that come up afterwards. There are a bunch of digital collectibles. Dr. Jim, who was just on, at least he's not going to be talking about sports. He's going to really be focusing on beginning option stuff, so we know he knows that. And Nikki, Mike, and Katie doing one, and then Ryan Grace doing one next weekend. So I would say you want to sign up for this digital collectible. There's we put a lot of time and a lot of money into these three. The first one's on January 25th. It is it's a week from this coming Saturday, or about 2 weeks from now, at 10 a.m. in the morning. And Ryan did an amazing job, and we're cleaning it up right now. We'll mint it that morning, and it'll be a digital collectible, an NFT. You can own it, and you don't have to pay for it. It's free. You'll own it forever. It'll sit on a private blockchain. You'll be able to transfer it to your digital wallet in a couple of months, and it's going to be a great piece. Really heavy, but packed with Bitcoin and crypto information. Ryan did it live in Chicago, so I saw the piece. It's great.
That was the test pancake.
Test pancake.
Sure.
Came out great.
Yep.
And then Dr. Jim is next up. And Dr. Jim's will be on February 22nd. And then Mikey, Nick, and Katie will be in March, at the end of March, on March 29th. Mike, his friends, and his whiteboard. But if you would like to come see Dr. Jim live in Chicago, there is going to be a very small show. We call this our coffee shop series. And Dr. Jim on Monday night, February 3rd, will be giving his talk and to a small audience. It'll be intimate. There'll be, haven't decided on the special guest yet, but somebody will be there, a little special guest to do some questions at the end. And so Dr. Jim, Monday, February 3rd, there are only a handful of seats left. That's all I can tell you. We only hold 50 people. So I think last time I checked, there was about 47 or 46 gone. So there's only about 3 or 4 seats left. So, and then there's a wait list. So most people from the wait list will eventually get in, I hope. But if you have a chance and you want to come and you're in Chicago, please sign up. Otherwise, it'll be gone. All right. And it's free and everything like that.
Sure.
All right. That's all we got on the horizon. We haven't announced our 2025 road schedule yet. We will in either later in February.
Okie dokie.
It's a fun one, too.
Yep.
All right. Let's do it. We got a segment today called Currency Gains, Market Pains. Our research team is really not good with trying for poetic licenses and rhymes and stuff like that. So I apologize in advance for currency gains and market pains. I'm not exactly even sure what that means.
except I think there's been this age-old kind of theory. Go to the next slide, John. We never cover currencies either at our during our market measures. So this is a fun. But here is the thing that they were going for. Traditionally, traders believe that a strong currency would have a negative impact on the stock market, which is obviously has not really been the case because the US dollar has been super strong and the stock market's just off of record highs. So the correlation between the US stock market and US currency has not been inversely or positively correlated. It's basically it hasn't been much of anything. Over time, it's really been no correlation. That's why we look at currency plays as being very indifferent. I like currency plays because they're just a different type of trade to have on. So far, they haven't worked if you've been short dollars, and I've pretty much been short dollars, which means I'm long the currencies.
Yes.
So what we're trying to say here is that if the U.S. dollar's value is rising, the stock market is generally expected to trend downward, and that hasn't been the case until the last 3 days. But let's see. Let's see what's really happened over the last X number of years. Let's go next slide. I don't know how many years they're doing here total. So first, a little macro background. A strong dollar combined with high interest rates could potentially slow economic growth. Concerns about the slowdown can lead to reduced investor confidence, reduced competitiveness of companies with global exposure. Sure, because everything costs more in the U.S. A strong dollar means that foreign revenues translate into fewer dollars, which can reduce overall reported earnings, and the investment yield shift. Capital may be attracted to the bond markets or to other high-yield investment vehicles instead of equities due to the high yields available in the debt market. All these things are reasons why, reasons to invest in anything but the underlying stock, hence lower stock prices. Strong dollar, lower stock price. That's always what's been thought. Let's go next slide. I've always treated these as two very independent, non-correlated assets. But currently, the U.S. dollar is at its strongest point of the last 2 decades. It's nearing its highest level against the yen. It's reached its second highest level against the euro, surpassed only by levels in September of last year. But as you can see, the euro's basically close to 100, and the yen is wherever the yen is now, 64, 63. I'm long it, but I'm not looking at it right this second.
You're not looking at it because you're in denial. It's 64, Sadnov.
I'm in denial.
It's actually up small.
Yeah, I'm in denial of both. I'm in denial of all currencies. Yes. Let's go next slide. So here's some relevant facts. Interest rates. Not only is the dollar strong, but the U.S. Treasury yield has reached its highest level since 2007, higher than in most developed countries. And we put it up on the screen for it. U.S. interest rates this is the 10-year, 4.57, and then down the road you can see all the other ones. The UK is very similar, but the other countries are all much lower. With Japan has been in that 1% range for forever. Let's go next slide. We call this international exposure, this slide. So foreign revenues make up 28% of the S&P 500's total revenues. More than 3,000 U.S. companies engage in foreign production, including 99 of the nation's 100 largest industrial corporations. America's largest public companies generate 41% of their revenue outside of the U.S., and many large-scale multinational corporations have more than half their sales outside the U.S. For example, Intel generates 78% of its sales internationally, while Coca-Cola is 68%. Do you know what Tasty is?
Ooh, I do not know.
So traders trading from all around the world and using Tasty Trade generate around 22% of our revenue.
Wow.
Maybe 23%, something like that. But it's a bigger number than I thought.
Yeah, me too.
Let's go to the next slide. So given this logical framework, we wanted to analyze whether the market supports the theory
that a strong dollar negatively impacts stocks. So to explore this, we track the US dollar index, USDX, which is calculated based on the exchange rates between the US dollar and a basket of 6 major currencies. And you can see we put the weightings to the side.
Sadov, if that question was given to you prior to this year, I would have said, yeah, for sure, a strong dollar is bad for the market. Would you agree?
Yes, I would have agreed, but not prior to this year, prior to the last couple of years.
Right.
Yeah.
Yeah, right.
Yep, absolutely. Let's go to the next slide. So we look at this. Here's the long-term correlation between the S&P, this is long-term, and the US dollar, which is negative 0.17. So that is a nothing correlation. Now, we've known this at Tasty, we've known this because we've talked about the positions in currencies being non-correlated. So this is not like a surprise to us, but negative 0.17 is no correlation at all. That's the S&P to the US dollar rolling 3-month correlation. Let's go to the next slide. So now we're going to examine the 5 strongest and 5 weakest years for the dollar to determine whether its value significantly impacts the stock market in extreme environments, going all the way back to 1990. It's a pretty extensive study. Let's go to the next slide. So in the strongest years for the dollar, the daily correlation with market performance is weak. Contrary to theory, the market is more likely to see positive returns with a strong dollar than it is negative returns. Like look at, 97, 2005, 2014, 1992, and you can even argue 2000, it's nothing. But I guess my point here is that the correlation in all these cases is negligible. It's almost nothing. So you're talking about a nothing correlation, dollar up, stock market up.
Right.
Let's go to the next slide. In the weakest years for the dollar, the correlation is slightly stronger, but still weak to moderate. Combined with the previous analysis, there's no strong pattern between dollar value and stock market performance over the long term. Stock market just goes up all the time. S&P's up, whatever. But the US dollar down, US dollar down, US dollar down, US dollar down, US dollar down in all those examples, and the stock market's up it's up in 2 of those cases. And the correlation is still 0.2 or 0.3. It's nothing. But yeah, that's what I need this year is the US dollar down 16% and the stock market unchanged. Make that happen, please.
I'm going to do my best for you. I'll do you, but at least for a day or two. Give you a chance.
Let's go to the next slide. So the takeaways from this. Traditional beliefs that the US dollar's value should negatively impact the overall market is outdated because we have looked at the best 5 years and the worst 5 years for the US dollar, and the correlation is negligible. And the stock market's returns are also mixed and completely random. So, however, the evidence shows a weak correlation between them over the long term, and that is correct. There's a very weak correlation between the US dollar and stock market returns, and those returns are so random that there's no possible takeaway that we could say that if the US dollar actually starts to sell off, that that currencies are going to go significantly higher. I'm sorry, the stock market's going to go higher or lower.
Right. Can't make an assumption one way or the other, correct?
Yes, exactly.
But let's take a quick 90-second break. Even the S&P's kind of laying flat here, down around $40. We'll take a quick 90-second break and come back. Oh, joy, the moment I've been waiting for, your friend and mine, Mr. Scott Sheridan, Tasty Trade World Headquarters, right after this messages.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't
worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right? Yeah,
you're a camper guy.
You're a camper.
Hold on. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Can you put that leg up again?
No. Do not.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
No. Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. Well, with this man.
That's unbelievable. Unbelievable. You're just going to rent a car.
Because I'm leaving. Tasty Trade World Headquarters, your friend of mine. From the Scott Sheridan Studios, Mr. Scott Sheridan, I have one question for you, Scott. How was your weekend?
Well, we're not going to get into that.
I've had better. Let's say that. How was your weekend? I do have a question for you too, actually, before I ask you about your weekend.
Sure.
A source told me, I need you to confirm or deny this story.
Okay.
So a source told me that the two of you were flying, I think, from Dallas a while ago, a long time ago. And there was open spots in first class. So you said to this source, unnamed, you're going to work your magic and get upgraded to first class. So this person, who will remain nameless, looks at you and says, it's two dudes behind the counter. And you
This
said,
is 25 years ago.
don't worry about it. I got this. And you came back with a first class ticket.
It's 25 years
100%.
ago.
Is it a true story?
Even me.
Not you. I didn't say you.
True story. It wasn't 25 years ago.
It was like 25
10
years ago.
More than 10. But it's a true story.
True
see,
story.
See, I knew my source wouldn't lie.
No, it's a true story. I've heard the story 100 times. But it's like literally 25 years ago.
What's
You
your
heard the story. You lived it.
What's your magic working over the guys?
Oh, they love me.
Yeah, for sure.
Spanish women and homosexual men. I am in.
Really?
I am in.
Nice.
At the airlines. 100%.
Do you speak Spanish?
100%.
No, he doesn't even speak English.
Oof.
I speak their language of love.
Oof. Okay.
Like Ohio State or Notre Dame.
Do I?
Yeah.
I've got Ohio State plus 500. They're laying like 4 something. Here it comes. I'm in on that bet.
Oh, what?
I've got Ohio State
Yeah.
plus 500
Yeah, you made that bet a long time ago.
before the playoffs started.
Yeah.
I want Ohio State. Do you want Notre Dame?
Yeah.
Put a number on it. Get back to me.
What's the line?
I'm on Scott's side here too. I would like to open this action.
Put any number you want on it. Any number.
I want 100.
Done. Here, the line right now.
Oh! Can I get half?
Yeah, you can have 50. You think I'm not gonna let you in on that?
Does that mean I got to give you half of Frankie's action?
No, does he have it too? Hold on.
Oh, you could have your 50. You could have your 50.
100.
Oh, I didn't know if we
Wait,
filled
why
you
is
up. I mean, I don't know.
DraftKings not? Why is DraftKings not showing me? Tony. Oh, here we go. College football championship.
DraftKings is
Here.
7.5.
It's 8.5 on DraftKings.
8.5. Fine.
7.5. I just looked.
I'm looking
he's
at
on
it.
DraftKings right now.
I'm looking at it.
Well, then it moved.
Didn't move.
I think it's always been like
It's 8.5. You try to take advantage of the elderly? That's not good.
Yeah, right. You try to take advantage of the elderly?
Come on. They frown on that in Florida.
Yeah.
Right? And you're a Floridian now. You can't take advantage of
You are unbelievable.
8.5 for 100, or you got 50-50? You got 100?
100 with you. He can have as much as he wants.
Well, wait a minute. Is
Oh my God.
Is it my action or 100 with me?
How much do you want, Tony?
Okay, I'm telling you, I looked this morning. It was 7.5. It says 8.5. I even told you, Sad, that it opened at 9.5 and went down.
All right.
I just made the bet at 8.5. Stop yapping. Are you in or you out? It doesn't matter. They're going to crush them. They could win.
I'll do whatever game day is. If you want to wait till
No,
game
just
day,
do
I'll
it now.
whatever.
We're doing now. Oh my God.
Oh my God.
8.5. You got it.
Seriously, you are like, what happened to you?
Oh, he's become an
I
old man.
said 8.5.
As you would say,
fair.
grow a pair. All right, just make the bet.
I said 8.5. I'll do whatever.
No,
you
you're
want.
like game
I'll
day
take
because game day might be 7.5. If it's 9, you're gonna say I'm out. Okay, I know you.
Yeah, I know you.
I know you. I know your type.
Wow, Scott, man. I know I got on you a little bit on Friday, but I didn't think you would hold a grudge through the weekend.
Yeah, I did. Kind of. It's tough. It was a tough weekend.
100.
Okay, 100, 8.5. All right. Now, more
Wait a minute,
important.
do I get my $20 from
Yeah,
Friday?
you'll get your $20. I can't listen to you.
What do you
Yeah,
think?
okay, all right.
I didn't take anybody. He just bet that he wouldn't. I bet him he wouldn't watch the show last night.
But who wouldn't watch?
Nothing. It's no big deal.
Okay. More importantly,
Yeah.
2 pizza reviews.
2 pizza reviews.
Yeah. I know it's local, but one's actually from New York.
Okay.
Okay, so Pizza Amici. Let's start there.
Never been there.
You can't get it.
Me either. They say it's great.
Okay, so here's
Pizza
the
Amici?
thing. Pizza Amici.
Where is it?
Pizza Amici. Pizza.
Yeah.
It's on Grand, like 1500 West on Grand.
No, never been there.
Tiny little spot.
Never been there.
It just opened like a month ago.
Okay.
Chris Grace said Kevin walked over at like 5 o'clock one day to get a reservation. They said we're booked for the night. It's a tiny. The whole restaurant's smaller than the studio.
Okay. So what is your point?
We ordered to pick up.
Yeah, how
So I
was
had
it?
2 hours to pick up. Now, in fairness to a pizza spot, you got to eat it there, and it's crazy super thin pizza.
Yeah.
Good, but go there, don't pick it up. It was good, very good.
Okay.
But go there. But I would still go to Dicey's over this. The other is Prince Street Pizza.
It's open now?
No, not open. Okay. But, okay, so let me finish. So we go for brunch to Trivoli. Got in, it was great. Didn't have a reservation, walked in, they're like, we'll take you.
Yeah.
Great. So we go to brunch, the four of us. And then Lila looks at me and says, Dad, we got to go get a slice. And the six is like, how are you getting a slice? We just had brunch. I said, yeah, it's always room for a slice. So we drive over there. It's soft opening.
Yeah.
So we go in, jam. Now, have you ever been to the one on Prince Street in New York?
Yes.
Okay, so you walk in, there's like a little area. You can't sit. It's the same thing here.
Yeah, yeah.
Okay, so they're training. So they said you got to go through the whole process. So we asked for 2 slices. They said you go to point of sale. So I put my credit card out.
Yeah.
And they said, no. Just pretend you're paying because they're practicing, but it's free. It's on us. I said, oh, okay, thanks a lot. So I pulled out $5. I put it on the table, like, as a thank you. Manager reaches over, grabs the $5 and says, thanks for the coffee. I said, it was kind of for them, but okay, solid. We got to get it for lunch. That will travel.
Okay.
All right, there we go.
That's
Tony,
a big thing.
All right.
Tony, how was your weekend?
My weekend was very good, very good.
Hockey?
Yeah, we had if you go 3 games, we had a loss, a win, and a tie. But
Ooh.
I think the tie was my son cost us the tie.
Oof. Because he missed a goal or he let one up.
No, he got a 5-minute major. So we were
Like father, like son.
we were up 2-0 with 3.5 minutes to go, and we tied 2-2.
So in this league, is there any extra time, or a tie is just a tie? They need the ice to get off.
No, we tie. You get off the ice. You're done. Playoffs, they'll go to a shootout.
Playoffs to go to a shootout.
Yeah.
Oof. What life lesson do you teach them? What did he do, first of all? Was it worthy of a 5-minute major? Because that sounds like a pretty severe penalty for a 13-year-old.
5-minute major. I'll take a bet. I'm gonna buy slashing.
No, hit him from behind.
Boarding?
It was roughing, and then a check after the play was over. Cross check after the play was over.
Love a little cross check. It's the best thing about hockey is cross checking when the ref's not looking.
Okay, so as a loving parent, you're not saying it was a bad call.
Oh no, it was warranted.
Okay. All right. Well, see, the good thing about you is you call it the way you see it. So at least you're not protecting your son.
Cross check is always like
the parents. It was a very rough crowd. The parents on the other side, we didn't say anything. I call it the way I see it. We didn't say it. Parents on the other side were very rough to the kids.
Oof. So somewhat deserving. He was defending the team.
Oof. You should have.
Is Vinny the muscle on the team?
Let's hope not.
There's 2 Italians. He's the weaker of the 2. Vinny's the weaker of the 2. Okay. Vinny's more offensive. The other kid, defense. He gets in a little bit more trouble.
All right, fair enough.
Francesi.
Vinny Francesi? 2 Vinnies?
No, Francesi is the other kid who plays defense who gets a little bit more trouble.
All right, fair enough.
I mean, I'm not disrespecting Italians, but I guess there's a few Italian hockey players.
How many?
Some of them make dinner for the team.
I don't know.
I don't know. I wasn't sure.
He's got some basketball players. Right?
Couple.
Yeah. Couple.
All right.
I mean,
just as many Jewish.
Italians aren't known for
hockey.
Athleticism.
Oh my God.
After downhill skiing, they kind of fall apart.
Oof. And here it comes. And downhill skiing's not really a sport, so we'll leave it at that. Yes, it is a sport.
No, downhill skiing is a sport.
Yeah, it is a sport. That's a crazy sport. You got to have a couple screws loose to be a downhill skier. Okay.
Yeah.
More importantly, did you see the final episode of Land Man?
I did not. My wife doesn't let me see it in real time because she says I get too excited about it.
Oh, then don't watch this
So
one.
she has to.
Yeah,
She has to piss on my. She has to piss on my bush. You know, like that she's in charge. You know what I mean?
Well, we figured she's in charge. Let her watch, and then she can edit it because there's a couple scenes that probably you should not be watching. We'll leave it at that. She just tell Chris to clean it up a little before you watch it, or have you watch it by yourself when she's
Or
leaving.
we'll delete certain scenes for you not to see.
Yeah, or just have her leave the house for like an hour or two. We'll
All right, I'm in. I can't wait.
Okay,
It'll be good.
So are the Bears ending up with Ron Rivera?
Oh my God, let's hope not.
It's going to be a classic Bears move because
he stinks.
He's a Bear. He's an 85 Bear.
I know, but he stinks. He's been out of business.
I understand, but it's the Bears.
Who cares? He's not the right pick.
Okay, I hope not. All right, hope not, but we'll see. All right, should we get to some business?
Sure.
Dude, that was good. Tom doesn't really care. What happened?
Tom doesn't care.
No, I
Tom
care.
doesn't care
He doesn't
about
care.
anything today. Like
But
Tom is
he looks
has been casual
good.
Tom all day.
No, he looks good. So I'm guessing you were very well rested. You did not go out on Saturday or Sunday.
I went to Houston.
Wait a minute, he went to
Oh, you
Texas.
went to Houston. Yeah, tell me about it. How was it?
It was fun.
It's a nice stadium.
Yeah.
Looks like a beautiful stadium.
Yeah, it's in,
Is that a retractable dome?
I don't know.
But it's a dome, right?
It's indoors, yeah.
That's a dome.
Yeah, I know,
were you there?
Yeah, but I don't know if it's retractable. It was closed.
Good seats?
Yeah.
I watched a little bit of it.
Crappy game.
Crappy. Ixnay on LAA.
Oh, God, they were horrible.
Did he throw 4 interceptions?
Yeah.
Oof.
One wasn't his fault, but the other 3 were.
Oof.
He stinks.
He stunk. He did stink.
Oof.
And, yeah, I mean.
Where was dinner? Oh, that's a problem because it was a late game.
Yeah, dinner
What'd
was
you do? Oh, that's a tweener. Oh,
Yeah.
so you had to eat. Oh, that's bad.
We ate at the stadium.
You ate at the stadium, and then you're disappointed.
And then we ate at the hotel.
Ah, that's a bad combo. So you didn't want to go out because you had something to eat, and then you're like, we got to get something to eat. So you just ate at the whatever restaurant at the hotel, which...
Paul had researched the best food in the stadium, so we went and got it. Was like...
And how was it?
Oh, you would have liked it. It's chopped brisket.
See?
It was actually pretty good.
SMRT.
And
Wait a
then some
minute,
other
you had
stuff.
chopped brisket and you liked it?
See?
It's the only thing they had. There was no
But
other
you
choice.
liked it.
Oh, speaking of things that he liked, we never talked about the Chinese food, which you said was very good.
It was really good.
Oh, see? My Chinese recommendation.
Yeah, it was really good.
There you go.
I'll give you that.
Your
That was
Chinese
really good.
recommendation was first rate.
Yeah, that was really good.
Yeah. Okay, keep going. So you have brisket. What else? You just didn't have brisket. You have something else. For
Burgers.
Couple burgers. Nice.
Yeah, we went afterwards. We just sat at the bar.
Did you do that pregame or halftime?
It's like, no, before the game, pregame.
So then you're nice and sick while you're sitting watching the game. And you're going, I can't believe I just ate all that.
I can't believe people are standing up on every other play. I couldn't see. There's like giant guys. Problem in Texas, everybody's freaking huge.
Do the Chargers fans travel?
They traveled pretty good, better than I thought. We were surrounded by Chargers fans, actually. And everyone was nice.
Cole get tickets. Does he know anybody or he just went online?
I just went online.
Nice.
But we were on the Chargers side of the field. But
And is he safe?
Is he what?
Is he safe with the fire?
Yeah, he's safe.
Because apparently you said it's not going to happen. And then all of a sudden I saw the winds are changing. And
Yeah, I know.
Things are moving.
I mean, they're safe, but the air quality sucks. I mean, they're less than a mile.
I mean, a mile you would think would be like a day. Like I don't know, how fast is this thing moving?
Yeah, but they're like in downtown Santa Monica. It's like, I don't even know. It's crazy, I know.
Okay. I mean, this is horrible. I mean, it's so sad watching what's happening. And I don't know. It doesn't.
I don't know either. He doesn't know.
It seems like the response could have and should have been better.
I don't know.
It's really sad. So shouts out to anybody.
He had to go to a hotel one night in Manhattan because they couldn't breathe.
Yeah, shouts out to anybody in LA. What I heard was the big concern. I mean, first of all, you look at this, and 10 years to clean this up and rebuild
Oh my God.
it?
It's gonna.
And then I heard that the concern now is the water, like everything going into the water system and the drinking water. I think it's all boiled now anyway.
I mean, it is going to be. It's apocalyptic. It is.
I mean, you look at the when they're broadcasting, it looks like a bomb went off, just torched everything.
That Pacific Coast Highway drive was so nice, and now it's going to be unbelievable.
But how many? And a lot of these people don't have insurance because they couldn't get insurance, so they're done. It's like, what do you do? And there's no insurance company that's going to go and insure people for fire unless you want to pay, $8 bazillion a year.
Most people couldn't even get fire insurance to start with.
Right. That's what I'm saying. A lot of these people didn't have fire insurance.
Yeah, and whoever did write the insurance doesn't have enough money to cover it.
Right.
That's the other problem.
That's the other problem.
If you could find somebody to even write it, you couldn't even. They're not even going to be able to pay it.
And then
it's going to be a cluster screw.
It's going to be, the really wealthy they'll just eat it, but everybody else, it's going to be a disaster.
And the looters.
I don't know what this is going to do for home values in LA. I think it's going to send them higher because there's no places to live.
Well, it'll send them higher in the other areas.
Oh my God! It's going to be gouging now on rentals.
Oh, it already is. It already is. Have you been reading about this? It already is.
Yeah, it's good. 100%. It's going to be higher, and then you're going to have land speculators coming in. Buying the property value at a discount to what was there.
Correct.
But
I don't know how much of a discount it's going to trade.
Yeah, but the problem will be like if you're in Florida and you're in the zones where you've had the hurricanes and the floodings, it's just going to happen again. These things are going to keep happening. So you're going to have another fire in LA. It hasn't rained in 8 months. And what are you going to do?
Yeah, but Florida, we can afford to lose. LA, that's the hard
Tony, not you.
Yeah, not you.
No, I get that.
So
Florida. Who cares? But
sorry,
LA
is
nice,
right?
I love LA.
Oof.
It sucks.
Yeah, it sucks.
Yeah,
sucks. Shouts out to everybody. All right, let's get to some business. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you. Number 15, RGTI at a 44. For everybody else, NVIDIA at a 22. Tesla at a 72. Apple at a 57. MSTR at a 38. AMD at a 66. PLTR at an 84. IBIT at a 70. Meta at a 63. Coin at a 30. mRNA at a 75, Amazon at a 69, TQQQ at a 52, AVGO at a 43, MU at a 33, and number 15 for Tom, RGTI at a 44. Rounding out the next 10, Intel at an 81, Microsoft at a 57, Google with an L at a 63, SoFi at a 64, GLD at a 60, TLT at a 54, SMCI at a 40. So when they move the game, do you think there's the LA, right? That game tonight is in Arizona.
That sucks for the Rams.
Do you have to pay? Do you think the owners just say you can, you do it for me, I'll do it for you? You think they have to pay them for the stadium?
I have no idea.
Because that would be crazy if all of a sudden, what would you charge somebody to go say we're having a game? The NFL might just say if the commissioner comes in and just says you're just doing it.
I heard tickets are $0.
Really?
Yeah, they're nothing.
Really?
Sorry, I'm not there yet. I would have gone.
Yeah, sure. Why not?
For sure.
Yeah.
Right, because who's going to go?
Right.
LA.
Everybody already had their plans or whatever.
Correct.
Yeah.
A big loss for LA for hospitality. I don't know what a game.
Mention the home crowd.
And the home crowd.
The first home game lost was Tampa Bay last night. It's the first home team that lost.
I saw in the Washington game. I guess this kind of makes sense because not a lot of rookie quarterbacks make it to the playoffs, but it was the first time in NFL history that a rookie quarterback threw a touchdown to a rookie receiver in the playoffs.
Right.
In the playoffs.
Jaden Daniels is really good. It's really good. The kids can play.
Bo Nix is good. They were good quarterbacks.
Bo Nix can play. Yeah, all the rookie quarterbacks are good.
All the rookie quarterbacks. Who's great coming out this year? Anybody?
Sanders.
Oh, yeah.
Cam Ward, they say. I didn't like his game that much. Sanders I like.
The Bears are perfectly situated at 10th. Go Bears. Tony.
Go Bears.
You're off the
client. Trade their number one pick for Mike Tomlin.
Who's this?
I want them, the Bears, to trade the number one pick and take Mike Tomlin.
Do you ever trade a pick for a coach?
Oh, they do. That's how.
Didn't Gruden? Gruden, they gave a lot of. They did, I think, picks when he went to Tampa.
I thought the Broncos did too to get Sean Payton, but maybe they didn't. I don't remember.
He must be a good coach.
Yeah,
he must be a really good coach.
Yeah, and he wanted to coach in Chicago. He's from here.
He's from here.
They didn't want him
because the Bears, the owners of the Bears, are just the worst. The worst. Tony, I'm with you. I'm done with the Bears.
Thank you. About time you got on board.
Until the season starts, and then I'm going to be suffering through it again.
So I'm sitting there.
Of course, we all are. We all are. The only thing I can tell you is that they're going to screw up this coaching thing.
100%.
So I'm sitting at the game, and there's a guy sitting in front of me who's a Texan fan, and a guy sitting to my right who's a Charger fan, right? And this person who's ready goes, "Who are you rooting for?" I go, "I'm a Bears fan." He goes, "Oh, sorry." Sorry.
It's the right answer.
We don't mean to pile on.
Right. It is like it is the right answer.
Yeah. He just said sorry.
You do get a good sympathy play. I will give you that.
Yeah, the guy they didn't say anything about
and we're well deserving of sympathy. We will take it all. Anybody writes anyway.
Yeah.
Woof. Enough. And by the way, weak lunch selection today too.
I like that place.
Do you?
Oh yeah, it's one of my favorites.
It's airport food.
You're crazy.
It's airport food.
I like it.
If you're lucky.
I like it. I totally disagree.
Tony? Forenza?
Italian sandwiches.
Sandwiches? It's a piece of focaccia with one piece of... Tom likes it. It's one piece of chicken. Like, it's one little piece of chicken shoved between two pieces of bread. I'm like, what? No? Right.
I'm with you. I like it.
You like it?
Yeah, I think it's really good.
Oof.
Yeah, I think
I got to give Sandolph a win. I've been beating him up all day.
All right. You haven't even said, speaking of winning, you haven't even said Spoos.
Even the S&P's only down 20.
Yeah. There we
go. Thank you, Scott Sheridan.
There you go. See? I'm good for something. Not really. Here comes Tom. You're not good for anything.
I want to apologize to the thousands of professional hockey players of Italian descent.
You found the Esposito brothers?
Are not those of Tasty Live.
Yeah, the Espositos. They were good.
Yeah, you found the Esposito brothers.
Who else?
I want to apologize to the thousands of hockey players of Italian descent.
You said this already.
You already said it, Grandpa.
Right.
You're repeating yourself.
You could apologize also for everybody in the state of Florida. What else are we apologizing for?
I'm just apologizing for Tom in general. That's what I'd like to do. Just a blanket statement. I apologize for Tom in general.
Smooth move.
Thank you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
On Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
And welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. And are you wearing your daughter's sweater?
Oh, no. This is mine. This is mine. I know Liz saw a video of my daughter and I this past weekend at a 16th birthday party. It might have looked similar, but it was bigger stripes, bigger sweater, a little bit different. But that's funny. You're right.
Hey, zero judgment. I wear everything of Annabelle's and she wears everything of mine. That's what the nice thing about having a 16-year-old who's your exact size.
I'm still recovering from the surprise 16th birthday party, but I'm
not
getting
your daughter's. It was somebody else's.
Yes. Someone else's surprise and a surprise 16th birthday party. And it was stressful because they invited the entire sophomore class and we weren't sure how many people were going to come, but we had a good turnout. It was a lot of fun and nothing happened. Like I was honestly, it was at this really pretty bar bowling alley where they have pool, shuffleboard, 6 bowling lanes. It's not like a regular bowling alley. It's more of a cool hangout. And so they rented this whole place and the bar was serving all mocktails. And my biggest fear was that these kids were all going to sneak in like little alcohol bottles and dump them into the mocktails. None of that happened. Everyone was really good. I was actually shocked we had no problems.
Unless they were good at it.
No, I was there. I was in the middle of the party. I was in the middle of the dance floor.
My God, that's so funny. Well, we're glad to see you back and recovered from the 16th birthday party. You know what is not recovered?
How was your weekend?
You know what is not recovered? This market. I was surprised. I thought for sure we'd get a little bit of an update this week. Not yet. Although when I woke up this morning, SPOOs were down 50, so I'll take 30 anytime.
You know what, Liz? Today was the first day I jumped back. Okay, we were in the platform. We see SPOOs down 29. Isn't bad because on the open they were down 50. And today was the first day I jumped back into the morning 0 DTE SPX trade. I thought I'm going to start getting back in. And I did your style where I just sold a put spread instead of both sides because I thought we might be up on the day by the end of the day today. We're not.
And you're out. I'm out. That's good. Yeah, very, very good.
But my first day back into the 0 DTE morning SPX trade, I think I'm going to try to do it. But again, it's kind of like at your own discretion, depending on what the market's doing, you can kind of make
these are levels of engagement. If you want to do it, great. I mean, you can't say what's right or wrong. There is a lot of red on the screen, but look at this little, I just want to see what the percentage was. The Dow is up under 0.5%.
I know. So the Dow is up. And
what's holding up the Dow?
I don't know.
Can I ask the gods of Frank the Great what's holding up the Dow? Frank the Great's on our YouTube chat. We want to give everybody on the YouTube chat a big thank you, big thumbs up for watching us. He is amazing. He can answer all your questions, and he's very quick on the trigger. For the longest time, I actually thought he was Tony Batista until we realized we lifted the veil and found out it was Frank the Great on our YouTube chat.
Right, because the way he was answering, we thought.
Yes, I was like, Tony is like staring at the screen and answering people like this. It's crazy.
So funny. So, yes, shout out to our YouTube people. Shout out to our people on X. If you have any comments, questions, photos of your weekend, whatever, you can post them on X. Just include the hashtag LIZJNY. We'll be taking a look at those. I'm actually going to be glancing at my phone throughout the show because my son is currently skiing, and this is his first time skiing since he broke his arm. Right. Yeah. So the last time he was skiing, I got the phone call from the medical station at the ski resort. He broke his arm. He is skiing now. I could actually get to him. He's only about 2.5 hours away. So if he breaks something, I'm on call.
I'm gonna take a poll, and the poll is just gonna be you because I don't even know how else we can get people to answer this. But he's bringing his girlfriend up there skiing, correct?
Mm-hmm.
Okay. Do you think
they're at Bittersweet? Bittersweet, which is like up in Michigan. I don't know.
That's wonderful. But my question is, she's never skied before, right?
No, I think she has, but just in like the Ohio hills.
Oh, okay. Because I have a theory that you cannot go with a significant other to learn two things: golf or skiing. You have to learn it on your own. I think that I would be throwing clubs and you can't teach someone how to ski. You have to kind of like learn on your own or with an instructor.
I'm laughing. You're getting the balloons. Laughing.
Yes.
Yeah. So she knows, and she's probably going to be better than him because, like, I grew up just skiing in Wisconsin, kind of like Tony's son. So I grew up skiing in Wisconsin, and I'm fine on the hills. I think she grew up skiing. I don't know what they have in Ohio or Northern Ohio or whatever. I'm not sure. But she grew up kind of like local skiing, and I think she'll be okay. He never really skied. And so his first real time was up in Maine, and that's where the broken arm happened. He wasn't ready for that. He wasn't ready for those hills of Maine.
They're pretty tricky. So do you think that so answer my question, significant others, can they teach people how to ski?
No, but you know, and I know, even your kids, you sent them to ski school. You didn't even teach your kids. You sent them to ski school.
I don't think you can teach anyone you love how to ski or golf.
I tried to take Logan out once, and I just said, like, point your skis like this and go down the hill.
We would, so my kids are actually like really good skiers, but we took them when they were 5. So, actually she was 3 and he was 4 when they first got on skis, and they are fearless at that age. They don't care. And then when they fall, they get right back up. Get right back up. So funny.
I just go down slow. I'm just like, make the little V and go down slow.
You're a V'er?
Yeah.
No.
Yeah. Just go down slow. I'm not a cold weather person. I'm not a skier. I'm not a fan of skiing. I'm not a fan of cold weather. I think they are crazy for going. It's very cold. It says with the wind chill up there, it feels like -2.
Oh God, that just reminds me when we used to take the kids, because we used to go to Boyne, Wisconsin. Every time we would go, it would be like -20, and we'd be out there bundled up, and the wind would be so strong. Little Annabelle, when she was 3, got blown uphill one time because she was so little. I was like, she's going up the hill. I don't know how to stop it.
That's so funny. So yeah, I'm not a cold weather person. And every day I ask myself, why do I live here? Because I can't take the cold weather. Really can't. You've got to stop. You've got to, are those your pop-ups coming in? Your team's, or are those mine? Are you seeing teams?
Those are yours, Jenny Andrews. Don't blame me. Don't blame me, because those are yours.
I just did an update on my computer, and now I'm getting lots of teams message popping up.
Fun fact, I'm sure this is wonderful chat, but I'm pretty sure the one who isn't sharing gets the team's messages, because I was getting them on Friday. Because once you're sharing, you don't get them. So just a little FYI. Okay. Now that being said, Jenny, let's take a look. Let's take a look under the hood. Let's take a look at markets. Today's an odd day. They're off their lows. Lows were 50s. We're in the 30s right now. Yeah. Do you want to? I know on Friday we did the Jajun trade, and because we said the rules are, there are no rules. I did the Jajun trade after we got off, and it worked for me. And I'm not trying to say that.
I did it too, and it worked. So I'm finally my SPX has finally turned around. We started the year off hot, then kind of went to, not so hot, but I've got my SPX P&L turned around. Sure, throw it in.
I already did. I didn't even ask you. I just put it in. I put it in for 260. Yeah. We'll see if we get filled. Spoos around 34 right now. We should get filled. I'm going to see if we got hit on anything. All symbols. Filled on Josh.
Okay,
I will. So that's just today. I want to make sure we got filled and everything. So we got filled for 260. I'm going to put it in for 310. Post position 310. Jajun trade in. That is just a wrapped around the at the money debit spread.
It's like the lows on Friday, I think, were during our show. We kind of rallied after.
Yeah. No, I agree.
If we would have left our Jajun trade, it would have been okay. But we're following those rules as far as closing at the end of our show if it doesn't work out.
Yeah. Those are our rules.
Something I want to talk about. There's, as far as Tasty Live events coming up, Dr. Jim has an event coming up, and I love Dr. Jim. Liz loved Dr. Jim. Oh, great. You've got this up here. Dive into the markets with live insights and laughs.
Okay,
well,
so
that's
if you want to go to the new show, you go to you go to events. You go to tastylive.com, and there he is, and then you go to events. And so here's the Ryan Grace, and then
sign up for that. That's the free digital collectible that you can sign up for with
and
Ryan.
so he already had his little pop-up event. Not little, but I say little because it's only 50 people. And then Dr. Jim is going to have a pop-up event, which I believe, sign up, because I think Tom was saying there's only 4 spots left. And it's it's a very intimate, very coffee-like chat on Monday, February 3rd.
Okay, so can we tell the story about when Dr. Jim came in to interview?
Sure. I don't know what story you're going to tell.
Okay, well, I remember. Now, I love Dr. Jim. And here's what I'll say about Tom. He's a great like finder of talent, and he's great at determining who to hire, because these 2 guys, we were in the old studio, and at the lunch table, 2 guys came in to interview for 1 spot, and it was Dr. Jim and another guy. Yes. And we both said, like, we both picked the other guy.
Well, we weren't asked.
No, but we gave our opinion. We weren't asked, but we gave our opinion.
We were never part of that process. We were never asked. But yes.
But we met them both, and we both picked the other guy. And man, were we wrong, because Dr. Jim has been great, and I love Dr. Jim. But I still remember when the 2 guys came in, and we both said if we had to choose, we would have picked the other guy.
I mean, I don't remember that per se, but I know there were 2 people. But that was when we were given a shot on the spot. So that's why he has an amazing ability to pick fantastic talent. So we walked in, we thought it was Tom's house. Remember, it was the 52 West Huron. It was a brownstone, up a bunch of steps. We're walking in, and I was like, is this his house? Like, it was an old music recording studio, but we got the job that day.
And the weirdest thing was, it was like, I don't know how many months before we went to this party. It was like a psychic party or whatever. And we had so many people there, 14 girls. And of the 14 girls, she told the 2 of us, and do you remember what she said?
And an older man's going to change your life.
Yeah. It said, pretty soon an older man's going to change your life, to the 2 of us. Then we walk in, we see Tom, and we're like.
I mean, I remember walking out and be like, this lady's, because you got it first. I walk out, I was like, it's like a fortune cookie. I got Jenny's. Like,
it was crazy, though.
It was pretty funny. Pretty funny. Pretty funny. Okay.
So anyway, if you have time to come to Chicago for Dr. Jim's chat, which, I mean, he's amazing. He's amazing. You can sign up, and Liz said, I guess only a few spots left.
There's only a few spots left. And I tried to get down to Ryan Grace's. I was going to bring my son, but we were in St. Louis that day. So it was very challenging to get a 18-year-old to drive from St. Louis, then come here and be like, and we're going to drive another hour and then another hour. He's like, no. So he's like, we'll watch the digital collectible.
The nice thing about these is you could also sign up for the digital collectible. So this will be out on digital collectible after the fact, and you could sign up for that. So
I'm signed up on both. I'm signed up for both. All right, let's pop into the platform, Jenny. I want to take a look, because today we've got a lot of red on our screen. So we've got a lot of red all across the board, right? You've got 6E down, bonds down again. But this bond move is bonkers, by the way.
I know. Okay, so the one thing I'm really relieved and happy that we don't have, which I thought we had, because I forgot we took it off, Moderna. We've had Moderna. We've had short puts in Moderna. We've had Moderna positions, and I thought that we still had the short puts in Moderna. So I was pleasantly surprised because I still have Moderna, but I was pleasantly surprised when I logged into this account and saw we don't have Moderna anymore.
That is a gift from the gods, because Moderna was something that we did have short puts on.
Take a look at that Moderna move. I know you've got IBIT lit up, but take a look at the move down 22%.
Yeah, look at that.
Yes.
And
there have been that, because it was so low and near the bottom of its range, there have been a lot of people in Moderna. There's been decent rank. People have been selling puts in here. I don't know what the news was, but not good.
Here, hold on. I can tell you what the news was. Wait, no, not there. Up here. I'm gonna go to. Well, how do I?
You were right.
Oh, I was right. For some odd reason I was having. There we go.
There you go. There's the news.
Uh,
Verinicot's 2025 sales forecast by $1 billion on weak vaccine demand.
Okay, there you go.
You know what I was trying to find? I was going to post this picture because today I was cleaning and I threw out, like, every time I find masks in my house, I throw them away. So I was throwing away all my old masks, and I was looking for the picture of my kids. And I bet they went in my phone and deleted them, or went into the cloud or whatever and deleted them, because do you remember when we traveled in 2020? I think it was November of 2020. And they had masks, they had shields, they had gloves, like they had everything at the airport. I made them go like that, and they wanted to kill me.
Yes, I do remember that.
And I was looking for that picture. I was going to post it like TBT or TBM, Throwback Monday, and it's gone. The picture's gone.
Huh. Well, I know with the update, they're just harder to find. I don't know where they are, but I think Tony Batista might be able to help you. I do know that. Because he was looking for pictures for like 4 hours the last dinner we were at. So I think he finally figured it out. But I don't know. That is kind of crazy. Jenny, the only reason I was going to IBIT, because I know you trade IBIT. I did not know this, but I heard Tom and Tony talking about this morning. They said this is a bad thing to trade because it's got a massive dividend. They said if you want to trade it, you should trade Coinbase instead as a proxy for
I did hear them say that. But I don't think here's what I will say. Coinbase isn't like a 1-for-1 to Bitcoin, but this is. I know they said this has a huge dividend,
but it doesn't say it right here.
I mean, I heard them say it, but I would say for people to like do your research on IBIT. I've been selling puts in there instead of having my Bitcoin position, and I haven't been disappointed really with IBIT.
So I thought it had drag. I thought the drag, I didn't know it. That's the reason I brought it up. That was the first I heard of it. I thought IBIT had a drag.
No, I think it was the other product that had the drag. And I don't know if I even remember what it is. Do you remember?
No, MBT. No, I don't remember.
It was a product before IBIT, which I thought had a drag. Yeah, really so I don't know. When we're in tomorrow, I'll talk to them. I don't know why Tom was so crabby about it. I mean, there's also
I think it's just facts. I mean, no, but I gotta tell you, it's a lot easier. It's a lot easier to when you have a lot of money to trade a $244 product versus a $50 product, right? So from that perspective, I get the proxy for him for Bitcoin. 244 is still less than a Bitcoin. Bitcoin's $90,000.
Like he could afford Bitcoin. He could afford.
Yeah, I do think BITO has the drag. BITO. Thank you very much, Theta Trader.
Thank you. So BITO has the drag. I didn't think IBIT did. And having a big dividend, what does it matter? Like if you're selling puts in there, how does it affect you? I don't think it does.
I don't know. I thought they just seemed to say avoid it. So you should probably, when we get in there tomorrow, just ask why. But they were like, avoid IBIT.
Because in my mind, and like my son's in this too, in my mind, it gives people a way to sell naked puts in something that's affordable. If you can't afford to sell puts in Coinbase, or because I'd much rather sell naked options than spreads. And if I could find a way to sell naked options instead of spreads, I don't know. I've been selling puts in IBIT, and only very rarely I've had short calls in there, but I don't know.
I just, like I said, because I know you've been trading this as a proxy, so I just wanted to give you the warning. We're going to be in Chicago tomorrow. You could take it to the tape and ask them why they say avoid that.
I heard them, and in my mind, I wasn't like, oh my gosh, let me go close my IBIT position.
No, whenever they say something faded, I kind of wanted to get into it because they said don't trade it.
I just don't know what having a big dividend means for selling puts. I don't think it affects it. Not that I know of.
I don't know. Well, you can look a little farther into that if you'd like. But are you surprised?
That's another thing. Can you go ahead?
No, go ahead.
I was going to say that NVDY. Can you go into the NVDY, which is like the NVIDIA covered call, which I think might be, if you take a look at something like this, it doesn't move much. I feel like you can go to the chart. I feel like it doesn't move that much.
I mean, that's a decent range for a $30 product. So, I mean, it was 32 to 21, so it lost a third of its value.
But I guess you've got that constant like covered call premium, which I feel like is almost similar to something that would pay a big dividend, where you've got this covered call fund, where I felt like as long as my son's been in this, it doesn't move that much. I don't know.
Yeah, I mean,
something similar.
Well, I mean, 33% is a lot from June.
Oh, and NV. Okay, so 32 to
22. Yeah, I mean, it lost a third of its value.
33 to 22, and then Nvidia. How did that move from the same time frame?
Let's take a look. So we'll go June to right now. Okay, so and look at this, June to right now, it's up.
No, well, it's at 131.
Well, I mean, it's not down here. It didn't lose a third of its value.
Right. So yeah. So that's the and that's another thing to look into, because they say that's just like a Nvidia covered call fund where they're just like selling covered calls against it.
NVDY. Trust yield max Nvidia options. Okay, I didn't know if maybe it was an inverse, because it looks inverse.
But you know what's happening? You know what is happening?
Jenny, it looks inverse.
No, but you know what's happening with his, so I don't have it, but he does, just because he wanted NVIDIA and this was a lower price product. You know what is happening with his? Now he has so many, he keeps getting more and more shares. So, you know, when you have something and you reinvest the dividend and you keep getting more and more shares. So he has this, it hasn't moved too much. I mean, I guess it looks like it has moved, lost a third, but he keeps getting more and more and more and more and more shares.
Yeah, I mean, I do get that when you reinvest. I would just look into what this is.
I don't know.
Because if he wants to be in NVIDIA, it almost looks like it's the opposite. I don't know though.
I'm not. We'll have to put our research team on this, comparing like this to if you were actually in NVIDIA and like selling your own covered calls.
Yeah. Oh, but it's so much more expensive. NVIDIA is so much more expensive than a $21 stock.
That's why he got into this, because he has a little account and he wanted to get in NVIDIA, and I felt like this was a safer way for him to do it.
Yeah.
Cheaper way for him to do it.
This is true. Okay. I wanted to take a look at some of our bigger losers today. We usually try to focus on the positive, accentuate the positive, eliminate the negative. I get it. But what you have to keep an eye on this. So we, XLI is a winner, but is there anything that's really big? Not too much. I know the MBTX is defined risk. That's it. So it's all a bunch of little stuff that's adding up. We're getting a little bit of green on the screen, because when we logged in this morning, there was no green, but now there is.
I know there's a little. Do we have anything in the euro that there was a great market measure today? I don't know if you saw the market measure. Okay, so we do. We sold that put spread last week. So there was a really good market measure today about the dollar and a strong dollar and the correlation to like the strong dollar weak market. Basically, the takeaway was you really can't expect a correlation. They went back in history and looked at times of a strong dollar and what was the correlation of, do we have a weak market when there's a strong dollar? And I think the takeaway was, no, you can't really assume that there's going to be a correlation. But go back and watch it. It was a really good market measure.
Oh, I will. I do like that. Who was it? Just the boys, or did somebody come on and do it with them?
Kai came on.
Oh, I will watch. Yeah. I like that.
So what's good?
Shameless self-promotion then. Why don't we do this? I want to show people, because it should be up already. If you go to tastylive.com, refresh, you can go to on-demand market measures. This is what Jenny is referring to. And it was the currency in the market. That's today's, right? Yes, there you go. And so if somebody wanted to, they can just go in and rewatch it just as easy as that. tastylive.com on demand.
You don't even have to watch it. You can click on the slides too. Like you can click on those slides and someone can go through the slides. Liz, when we find slides, we like to go to the takeaways. Like, okay, what are the takeaways?
That's what I was just going to do, is go straight to the takeaways.
Straight to the takeaways. Go ahead.
No, go ahead.
Traditional beliefs suggest that the dollar's value should negatively impact the overall market. However, the evidence shows a weak correlation between them over the long term. So a weak correlation, meaning you can't expect that they're correlated.
I love it.
See, go to the slide 10. See if that slide 10 had any takeaways too.
Nope. I mean, it does, but
let's see.
I'm telling you, I think we need to do a whole show on the okay, hopefully the super producer John is listening to us. I want to do a show on the takeaways of the week.
Let's get, here, we can talk to Kai. We can talk to Kai tomorrow and just say, like, every Friday, we just want the takeaway slide.
Just the takeaways for market measures and options jive.
We want slide 1 and the last slide. We want the first slide and the last slide. What's the title?
Well, the first slide is just the name, so we get that.
Yeah, so we know what the study is. We want the first and the last.
Yeah, let's do it. So we're gonna try to do that every Friday. Good job, I like it.
Nice, Liz, nice.
Okay, so then let's go back into the market, but that was in 6E, which is pretty interesting. Now we are keeping an eye on the Jajun trade. We're exactly where we were. 33.5 is where we put it on. It's no pain, no gain right now. We're not getting anything. Oh, up 20, up 10, but still, it's no pain, no gain. We're just going to kind of keep an eye on that for the week. I know a couple other people have gotten filled in the chat because they said that I think they might have gotten in a couple minutes before us. So they're already filled. But then somebody in the chat, and I think this was good for you, Jenny. So this is why I want to do this. And I'm sorry, it's already like scrolled through and I'm kind of doing 3 things at once. But somebody said to use NVDL instead of NVDY.
Oh, okay. Yeah,
I don't know.
So what was that? What was that called?
So NVDL, it just looks more like the NVIDIA chart.
Right, it does. It does. And that makes sense. Okay, and it's only $62.
Yeah, so
I don't know. If you go in here and sell a put in here, how much is that?
Let's take a look. I'm just going to go random put, okay? I'm going to go expected move.
Yeah.
$4,000. Nope.
Cash secured. It's cash secured. And is it cash secured in NVDY too? Will you look at that?
But he's just buying it, right?
He's just buying it. He just has some of it. I'm just curious if this is cash secured too. Wonder if they all are.
Yeah.
I mean,
no, I mean, it's not.
No.
It's not. I mean, it's giving you very little margin. It's like, we'll give you 10%.
But NVDL, no, it did look more like the NVIDIA chart. So I appreciate that. And that's what's so great about having the community, having the YouTube chat, having the people, our viewers on X, like we all help each other. And I'm going to write this down. I'm writing this down, NVDL. But I will say he has built up so many. And I would love our research team to do a little piece on the different they have so many different products for the same underlying. To do a piece on it.
There's so many different products now. I wanted to do this because this is topical. Jenny, take a look at this. Look at these oil moves. So oil and gas have been bonkers lately. I mean, this was Friday, and then here's again today. It's up another 3% today. Look at how high this oil is.
Mm-hmm.
Now you've been watching Landman. So what can we assume? What can we assume for the oil?
I mean, I think according to Landman, I think the average price is in the 70s, so it's nothing crazy. Maybe we sell a strangle.
So take a look at this. I mean, and you can see that
maybe not average price, like best case scenario for them, somewhere in the 70s.
Is that where they want it or where it usually is?
I think that's where it's like. Again, this is a TV show, but I'm pretty sure that it was same price in the 70s is where everything seems to work.
Okay,
for
so
everybody.
we're in the 70s. So
that's what I'm saying. Maybe we sell a strangle.
And down to here, you got a 35 rank in here. I want to see if all those other ones are up too. Like all, XOM is up. But take a look. This thing's been beaten down like crazy.
Well, and go to BP. I only ask because Tim Knight was bearish on BP. And I think Liz and I both put in bearish BP trades one day when Tim Knight was bearish on BP.
Yes, we did. Look at this, though. Look at this. Look at this slop all the way down. That is kind of crazy. And then, I mean, I was only listening to this because I'm out, but natural gas was one of my biggest winners from last year. Look at this. So
it hit 4 today.
It hit 4. Its high was what, 440 something? 430.
Isn't that crazy?
That's nuts. That is nuts.
Don't you remember natural gas being in the 8 handle at some point in time?
I think you're talking UNG.
Oh, maybe.
Yeah, you're thinking UNG. Natural gas, in my memory, has never been in the 8 handle. UNG has, though, because UNG would get. Well, let's see what that thing's doing right now. Yeah.
Well,
UNG,
this is hard.
Sure.
This is hard to guess because this is constantly like reverse split.
Yeah.
But go to $ natural gas and see how far are we from like all-time highs of natural gas.
So take a look at here. We're keep in mind the high was 4.4. Okay.
Right.
Oh.
Yeah.
It blipped, but it's usually right around here. I mean, it did have one heyday of, but we're pretty far back right now. What year am I in? We're in 2014.
When it hit 10? Where were you? What year were you when it hit 10?
Let's go. I mean, it was a blip in time for 10. Right here. What year is this? 2022. So this is pandemic.
Well, 2020 was pandemic.
Yeah, no, but I mean, that's a residual from it when people started moving again. Do you know what I mean? Like when you get out of the pandemic, people started traveling.
So it's so easy for us, and we love trading natural gas when it's at like 2 or 3. It's a challenge to trade, even up at 4.5. It's tough.
It was one of my biggest winners, but it's because I'm kind of going with natural gas would come down. Would you ever want to? And I don't know that I want to do this, but I want to see the opposite side if you're going to do a broken wing butterfly. So I'm going to go
to the upside.
Yeah, I'm going to try. Oh, what?
Do they not have strikes because they didn't think it would get so high?
I don't know.
No. You're in the dollar sign, MJ.
Thank you. I was like, what the heck? Okay. So 15-day natural gas to the top. I'm going to put the short here. Buy 1, sell 2, buy 1. This is an 80-cent collection. You're risking, or 90-cent collection. You're risking $4.20 if it does come up this high. Otherwise, you keep your $80. It's not bad.
No, it's not.
It's not bad. You're risking, the risk is little, but can it go through there? Sure.
I just got something pop up on my screen. I'm going to ask you, and then maybe our production will chime in. It says, allow JMF Connect to find devices.
What?
I don't know what that is. I don't know what that is. I'm just going to hit don't allow, and I'll have to talk to the team tomorrow.
Is JMF an acronym? Allow. When JMF asks you anything, you say yes.
I gotta talk to Lester tomorrow. Poor Lester. I'm always at his desk.
I'm going to put this in for a 9-cent credit. If we get filled, great. We're gonna take $1, risk $4.10.
Sure. It was so funny, Liz. Yesterday I was talking to someone, and she's like 20-something, and she was complaining that her mom doesn't know how to use a printer, and she has to print everything for her mom. And I was like, look, your mom could figure out how to use a printer, but because other people do it for her, she just keeps pretending she doesn't know. Just like our team over at Tasty, they do everything for us. All technological happenings aren't done by us; it's done by our team.
Oh yeah, for sure.
All support.
My tech. Well, and my husband's my tech team here, so he's ooh these days. So.
Oh my gosh, I'm in trouble. I've got my husband's 3 weeks in Germany, 3 out of the next 5 weeks in Germany. So I have no tech support. No tech support.
My husband's a tech support for our whole neighborhood. Everyone calls him for absolutely everything, which is awesome.
That's funny.
Keeps him on his toes. All right, we're in for natural gas. We haven't got filled on anything else but the Jajun trade yet today. We've kind of kept it tight, so we're not losing too much. Now, we are leaning bullish, clearly, and I think, bullish by chance, not by choice these days. But we've kind of kept it kind of tight. We're not getting hurt too bad on anything.
No, and we had a lot of diagonals. I have a question for you because this came up. I don't know if you were listening to Confirm and Send this morning, and the question was, what percentage of your portfolio is I don't know how they termed it, but basically long options instead of short, or I don't know exactly how they termed it, but basically what percentage of your portfolio is long theta instead of short, instead of getting positive theta, getting negative theta, or long positions, long options instead of short options. And they said, barely any, maybe 5%, very little. And I just wanted to clarify that when we do those diagonals, those are positive theta trades. Like when we do calendars and we do diagonals, they're positive theta trades. So they wouldn't fall in that category of being long options. Like if someone said, do you have more long option positions or short option positions, those diagonals would count as a positive theta position. They wouldn't count. I'm just going to show the diagonal. I just went to IWM. So I'm going to sell the 225 and the 25 day, and then I'm going to go to the regular and buy here. So to Jenny's point, where's our theta? Well, that's negative. So you've got to be careful. You always have to be careful. And you'll see when we put these on, I'm always cautious at making sure we're not paying too much extrinsic value. And you always want it to be a positive theta trade.
Well, we've been doing them
shorter term. That's why we'll do it. That's why we'll do it much narrower.
I wanted to see if shorter term, if they're so 8-day, I'll go 14-day. That's still negative. A lot of times they're negative. Well,
so that's where I think you've got to be careful. You want to try to keep your trades positive theta, definitely not negative. If it's nothing, if it's like a debit spread is nothing, right? The debt wrapped around the money debit spread, it's a zero theta. And if we set these up in zero theta, okay, but we prefer to have positive theta trades. I mean, the calendars are all positive theta, and you could adjust the diagonal to get it to be positive theta.
Well, and I wasn't listening to discussion, so I apologize if this is what it was about. But it's interesting when you say percentage of your account. This diagonal in general used $300, okay? But if you're going to sell one put, it's going to use maybe 2,000.
Right.
So that is an interesting question when they say what percentage. Are they saying what percentage of capital, or what percentage does that one diagonal net out your positive theta too? Do you know what I mean?
Well, and I don't know if I think it was more like positions, like what percent of your positions, but I don't consider those. Would you consider those long option positions versus short option positions?
The diagonals?
Yeah.
No, because there's the short component. I don't consider those long when there's a short component. Just going out and buying calls or buying puts or doing, kind of what I just glanced at Lobo does. Tim Knight does buy options. That's what he does. He buys options.
Right, he does.
Jenny, now, I know this came back to bite us last time. Do you want me to take less on this Jajun trade?
Oh, sure. Take $35. Sure. Go ahead.
I'm going to take it down to 3 because we should have gotten filled a while ago, and I don't know why we aren't.
Well, and we saw that on Friday where we thought we had moved at least 6 handles and we weren't getting filled. It's like you need more of a move these days because these $5 wide spreads are all trading for about the same price.
I'm taking 285.
No, I think 3. Let it sit at 3.
I know these are like famous last words because now we're going back down. Now we're not up at all.
Well, we still have, it's only 1037.
I know. Well, at least we're not, I was going to say at least we're not down. Now we're down. But that was that's all we're looking for is that little pop. And I know a lot of other people have gotten out and I don't know why we're not. But I will tell you, it is first come, first serve, I believe. Maybe they got in before us. You know what I mean?
Oh, I see what you're saying.
Yeah.
I think there are a lot of people playing, though. There's lots of volume that I don't think. Do you feel like the market's still slow because of holidays and because kids are still home or not?
No, I think we're back. I think this is going to be pretty.
Yeah, because most kids are back. I just have my college kids still home.
Yeah, you have the college kids still home. Okay, so I do want to get into Twitter. We have not done this yet. So let's pop into Twitter real quick, if that's okay. I'm going to go to Twitter. I'm going to go top down. There's Bob on Fire. We love you, Bob.
And we're about to get busy with earnings season starting. Now.
Oh, look at this. Okay, so we've got 2 great things here. So bullish ELF and NBDX. Okay, so let's go to those.
Let me write that one down too. Get my little piece of paper.
Yeah, okay. So, sorry. I didn't mean to do that. So bullish ELF. And that seemed to be a lower price too. So ELF, somebody wanted to be bullish ELF.
And this is that makeup.
Yeah, that is. So ELF makeup, if you want to be bullish ELF, they have earnings going through.
And here's where exactly, like you see 25-day, if you look at the expected move, 25-day is $23, 39-day is $23. So you stick with the 25-day, even if the markets aren't quite as liquid.
Oh, I was gonna go before earnings. I was gonna try to see if they were bullish. I wanted to do a quick diagonal because we were just talking about it. So I'm gonna go 11-day, 15-day.
Okay.
So you got a $10 wide. You're paying $4.94 for it. No.
And that, but you could see that was not that. These are now that we'll keep an eye on this. Like that was just almost, there's almost no theta involved in it, almost none. When you're just looking for a direction, it's very directional. You're just looking for a move.
Yes, you are just looking for a move. And when you are looking in those, a lot of times I do like the shorter term because they're less capital and you're looking for a quick move. But if you wanted to be bullish ELF, which I don't mind. I was just going to say, let's go down here. I want to see how much capital is for a put. $4,000. So you'd have to do something else.
Oh, Yeah, that's a lot of margin.
It's a lot of margin.
You could just sell a put spread. You can sell put spread to buy a call spread. I still have been doing those, and I have them this week. And most of my short put spreads that expire this Friday, so we'll see how the week goes, are still not in the money. Even with like coins moved down this week, my put spreads are still out of the money.
Wow.
Yeah, so I have not minded those. If you want to be bullish in something, I've not minded those at all. Like buy a call spread, sell a put spread, pay for it, because if it doesn't go up, well, you're not out anything unless it has a big move down.
No, that's true. But sometimes if you're bullish, you want to make money. I don't know. That's what I'm saying. I like the buy a call spread financed by a put spread to catch a wave, not as an initial trade.
Right. I know. Just here, it's like, okay, $91, take it off at 50%, you're going to make $45.
Right, but it can go all the way down to 120, where if you use that $90 to buy something, then you're out if it goes down.
If it goes down too far, yeah, you're out on the put spread and you're out on the both.
No, you don't make anything if it goes between 128 and 120. You make.
Oh, I see what you're saying. You've got some room to still make money.
Yeah, so right. I love that concept. I like that concept, and I like the diagonal concept. If I've got a directional assumption that I think is going to happen pretty quickly, or I'm trying to catch a wave, because catching a wave with those are good.
And if someone's if someone's bullish in ELF, it kind of depends on your account size too, right? We saw that put held up a lot of margin, but if they like this product, like if you want to get,
let's if somebody's bullish on ELF, let's go 125, 120. It's pre-earnings, getting 190. Okay,
yeah,
I'm gonna ship it.
Agreed. I like to collect more.
And then NVD, what was the symbol? NVDX?
NVDX.
Okay, NVDX. Oh, $13. I just want to type this in slow so we can
take a look at that chart. NVDX.
So this is, 2 times long ETF. Okay?
Okay. And take a look at the chart.
There's so many ETFs. Yeah, this looks more normal. I think you're in an inverse, Jenny.
This one doesn't.
No, because this went from 22. This looks like yours.
Yeah, this looks like the other one. Yeah, but this looks like the other one that I'm in.
Yeah, this looks like NVDY.
Where that NVDL looked more like the NVIDIA chart.
Right.
Yeah. I think we're going to get hit. I think we're going to get hit on our $3 offer in SPX.
I know. I'm trying not to look at it. I'm not looking at it.
I've got hope in Jajun. All right. Well, thank you, Theta Busters, for coming in with that. Mikey, disagree with you.
I love it.
Disagree with you, Liz. Back in the day when the Polish warrior was single, skiing with the girl, learning to ski was the best. You help her, have to ski behind her, keep her warm on the ski lift. Like you could have met me in the lounge by the fireplace.
I don't know, but Mikey, this might be my favorite gift you've ever sent, because this is awesome. Look at this.
I feel like that looks like our friend Colleen's kids when they were little.
It's so funny. I love it, Mikey. Well, Mikey, you were better than I would have expected. I love it, Mikey. Okay, now happy Monday, ladies. With the market so red the last few sessions, don't forget to look at shorting some. Okay, VXM. We were about 20 overnight and sitting at 1955 at the moment. So a nice scalping vehicle.
Jajun for the win. It might have been a smaller win, but we'll take it. Jajun. What do I get?
Yes. Hold on. I'm going to pop out here. We have this. We got filled for $40.
Okay.
We probably could have gotten 50 because it went down. I choked and took $10 under. But it's
right,
okay.
I gotta push that out. I gotta get to work. All symbols. So that's all we have for today. So
yeah,
far.
that is all we have for today. We are working ELF. I'll take it down by. Oh, look at how wide those markets are, because we're not in the.
I know KBH has earnings today.
Oh, and I'll pop in to look at Bob's list too. So this week we've got the banks on Tuesday. So I know the CPI numbers are on Wednesday as well. But so KBH has earnings today. Banks are tomorrow. Let's take a look at KB Homes.
I think. All right. Let's say. Can you look at the chart? Because I have not traded KBH in a long time.
Woo!
Okay. Let's talk about this, Liz.
But look at this. Wait, I just want to show you this, Jenny. And I know we're fast, 63, but it's always been lower than that.
So we have, what about like all the home building that's going to have to happen in California? They're going to be building homes all over the place.
I know, but okay, this is going to sound worse than it is. I don't think they're going to be KB homes. Like those are $1 million homes that went down in LA. Millions of dollar homes.
Yeah, I don't know. I don't know.
Not millions of them, multiple of millions for each home.
Right. So you don't think they're using KBH? There's not going to be a KBH neighborhood.
KB homes are the cookie cutter homes, right? Like
I don't really know. Okay, but let's talk about this. We can't pick direction, right? We can't say for earnings is so hard. It's so hard to be like, oh, we're gonna put on a bullish trade for KBH, and we're gonna put on a bearish trade for JP Morgan, and we're gonna put on a bullish trade for this. Like it's very hard to pick direction. And I feel like last earnings season, we just did short-term bullish diagonals across the board, and we just keep them one direction. I don't know this earnings season. Are you going to lean more bullish or more bearish with your earnings trades?
I don't know. Well, so this is a great discussion because you're right. And it worked out fabulously because we got hurt on some diagonals, but not too crazy. And when you made money, you made money. So we didn't like it where the risk reward scenario wasn't there. We wanted to make more money than we would have lost in each of the short-term diagonals, and it worked. Sometimes I avoid earnings season altogether because the risk reward isn't there.
But if we could get diagonals cheap enough, we would do them because we were willing to give up a couple $100 on some of them because when you would win on them, you would make much more. So
now, this one doesn't seem to set up because there's $5 wide strikes. You're paying $5.18.
What about if you did? Oh, and there's no weekly. There are no weekly.
No, that's what I'm saying. There's no weekly. This one doesn't set up. So KB Homes, as much as you say we want to trade it, it doesn't necessarily make sense. Take a look at this. So it's trading 63.19. You've got the 60, 65. So even the 60 is decently far away. It's less than a 30 delta.
Yeah, there aren't weeklies, and this is probably why we haven't traded KBH in a long time. There are no weeklies, and you know me, I like weeklies. I've become more of a weekly trader.
Yeah, that's crazy.
Yeah. All right, so we're gonna have to pass on KBH and think about the stance for this season's earnings. Are we gonna be all bullish, all bearish? It's hard to pick. It's hard to cherry pick. You're better off like picking a direction and sticking with it.
So some of the people in the chat said this looks like Tom as a kid. Which I thought was pretty funny. No, I agree. So for me, it's easier for me for earnings to lean bullish. Now, I don't necessarily know that I'm going to be bullish I know I put my predictions in, then those seem to be slightly bullish. But from that perspective, I don't know that I'm going to continue that throughout this year. Now, January is notoriously a bullish month, but notoriously means nothing. It can also be bearish.
We'll see. I'm probably leaning more bullish for earnings, but and I know we've seen this before. If the market is a little more bearish, it doesn't matter what the news is, everything seems to trend that way. Or when the market's more bullish, doesn't matter what the news is, everything just trends that way. We've lived through these earnings seasons where they all seem to move in the same direction.
And you're right. That is true when that happens. So I mean, but we're only having a blip in the radar right now. So here, I'm just going to go to ES just because. So ES, let's take a look at this. So I mean, this is nothing of a down move.
No, and my portfolio is still long deltas. No.
Yeah, this is nothing of a down move, so it's kind of crazy. So I want to ask you, Jenny, is there, and I actually don't know this, and shame on me, I'm just going to say this out loud. I think that my life changed a lot when I can say that I don't know things. Is there an election? Is there a inauguration trade?
Is there a trade for it?
Yeah, like is there an inauguration trade? Hold on, I'm just going to.
Didn't you say there was some crypto trade? But again, that would already.
But that was supposed to be before. That was AMAT. Remember the foil hat? And I don't think that's up. Let's take a look at AMAT.
Oh, AMAT, and then you gave a date where like crypto's either going to be Bitcoin's either going to be like 70,000 or 120,000 by this day.
No, they said next year. And that was a
next
headline.
year.
That was
Next year.
a headline. I think it was like, I was like, are you kidding me with this headline? For the next year, it's either going to be 75,000 or it was going to be, so $25,000 up or $25,000 down. I was like, well, that's not even making a prediction.
I'm sure the expected move is much more than that. If you go to Bitcoin and you look out at the end of the year, if you go to those Bitcoin options and look at the end of the year, the expected move is...
How do you go to the Bitcoin options for the...
Well, it only goes out to March.
I know, that's what I'm saying. I don't know where you're looking at it.
So it only goes out to March. So the expected move between now and March is 18,000.
Yeah.
So that's just between now and March.
So that's what I'm saying, but it could go,
It could be in the 70s by March.
Well, Jenny, that's what I'm saying. I don't know why you're putting words in my mouth. It was a headline that I read. I was like, that's how bad predictors are. You know what I think Bitcoin's going to be? Between $50,000 and $300,000 in the next year. It's the same concept.
I mean, with the implied volatility, it's much more than that predictor.
Yeah, it's kind of crazy. But so that's,
I don't know.
Banana makes fun of these guys. Like, how do I get that job? It's like opening it up and being like, I believe that Archer is going to be between 6 and 12. You're just like, of course it's going to be.
when we say this all the time, like, we can't predict things to save our lives, right? We can never, if we try to pick direction, we're usually wrong. That's why, thank God, we have options to help offset everyone's personal, thought on direction.
Well, and that's why I kind of went to DJT thinking, would this be, it's already up, it's up 12% today. Would this be an inauguration trade?
Everyone knows it's happening, so I don't think so. I don't really think there's an inauguration trade. Do you?
No, that's what I said. Shame on me. I'm asking. I don't know.
I don't think, shame on you for not knowing. I don't think there's an inauguration trade. I don't really think so.
I don't either. I was just saying DJT.
I'm not in I traded some DJT last year. I have not been in it yet in 2025.
Hey, there is some massive call skew here. That's the 40. I'm going to go to the 11-day just because. So let's take a look. I'm going to go we'll say it's 40. So I'm going to go 35 is the put is 170 and we'll go 44.5 is $3. There's huge call skew.
Big call skew. Big call skew.
Yeah, really big call skew.
Well, what are you going to do?
No, I don't. I mean, I actually don't know. I was just, fishing here, saying that it's the only thing that I could think of that might be an inauguration trade. Total side note, Jenny, SPX. I want to go in here real quick.
We haven't moved. Spoos have been around down 30, between 30, 35 our whole show.
I know. So that's what I was going to say is I'm glad we took off our Jajun trade because we took it off when they were down 28.
I know.
So that's all you're looking for. That Jajun trade, it's pretty interesting to me. I'm not going to get greedy because this is what I've traded myself into a pickle in SPX, usually after the close. I'm going to do it one time a day and walk away. I'm not going to try to be like, now I'm up, now I'm down, now I'm up, now I'm down.
I agree. I am going to, that's my New Year's resolution too in SPX. Once I'm up on the day in SPX, I'm done on the day in SPX. I'm not going to keep, because we would be up and then we'd keep trading. And then, until what end to the point where, well, now we're not up anymore. So once I'm up on the day in SPX, then I'm done for the day. But will you keep putting trades on until you're up on the day?
Probably.
Yeah.
Probably. I mean, hi, my name is Liz and I am an overtrader. So yes, I probably will.
So I had 2 trades this morning. Now I'm done for the day.
Yeah. I think that sounds about right.
And today, do you want to hear my trade this morning? If you go to SPX,
I can't stop you. Let's hear it.
Okay, this was my morning trade. So if you go to the 0 DTE, I sold a $10 wide for $1.50.
What was it?
Well, you just have to find a $10. Now it's going to be higher, right?
So $1.50.
So I sold a $10 wide for $1.50.
Oops, hold on, right away. Okay.
Then sold a $10 wide for $1.50. Then went to SPY and bought a 0 DT call for $1.50. So I sold the put spread. I'm a big fan of selling put spreads to buy calls or call spreads. So I sold the put spread and then I went to the 0 DT and bought a call for $1.50. And that was my morning trade.
That's not bad. Did you take $50 out of it, or how much did you take?
300. About. Maybe it was a little less. I put in a GTC to take the put spread off for 50%, and then I took like 200 out of the call.
It's good.
But you need a move. That was a 20-point SPOO move.
You need a move. Mm-hmm. With that, you do need a move. You do need a move.
But that's my trade of the year now. Selling put spreads to buy calls, or selling put spreads to buy call spreads, whatever. And then
that's almost the same. That's almost the same thing as in the 0 DTE. It's almost like riding a wave because it's instant gratification. So that's what I was talking about with the put spreads to buy a call. I don't know that I'm going to do it in a down move with something that's got it trending down. But if you think it's going to pop, that's almost right. That's a good way to play it.
And I didn't want to spend $250 on a call spread in SPX because I didn't want to spend. I always have Tony from Mexico in my mind, death by debit. I didn't want to pay a debit, but I didn't mind using my credit from the put spread to buy something. But the only thing I could buy cheap enough was in SPY 0 DTE.
Yeah, no, I get it. Makes sense.
Mm-hmm.
And it's a 1-for-1 proxy. It's not like you're going in and buying. Because at one point in our lives, Jenny, and I don't know if you remember this, we were like, we got this. We're going to sell a put spread in this and buy a call in. Like we would say, I'm going to use my Tesla put spread to buy a call in NVIDIA.
They were our hybrid trades, and we would even set up Jade Lizards like that. Like we're going to sell a call spread in Home Depot, and we're going to sell a put in Lowe's, and that's going to be our Jade Lizard. And it was like 2 different products.
Yeah, and that did not work well.
No.
Well, our premise behind it was solid because they weren't giving us anything from that call spread anyway. So a Jade Lizard in margin does not give you the margin relief from that call spread. So if you had a $5 wide call spread, it's holding up $5 anyway. So it didn't matter what product it was in.
Yeah, it didn't make sense. They didn't make sense. We tried it. We've tried a lot of trades over the last 14 years that have not worked.
We are slinking down again.
I know. What's TLT doing? I mean, I'm looking over at bonds. So we've got bonds down. Where's TLT today? 85. We've seen this before. 85, right?
We don't have a TLT position, do we?
No, we took it off when we put on the ZB spread.
Oh yeah.
Mm-hmm.
This freaking ZB. This thing's killing me.
I thought you got out of it. I thought you were getting out of it.
No, I was going to give it one more day, Jenny, and I did not get out of it. So I'm super pissed, but whatever. What are you going to do?
I mean, I'm not out of mine. I just keep adding to it, really, until I have no money left. I'm going to keep adding to it.
All right, Jenny. Well, we are almost out of time for the day. We didn't do a lot today. We buckled down. I'm going to make sure we got to everybody.
We never got filled on ELF, I don't think, did we?
No, but ELF has wide markets, Jenny. So if you take a look at it, here, I'll go back to our ELF. It's got wide markets. We're now 30 cents away from where it was. So
ELF bullish. Just trade then trade the monthly. If you can't get filled on these weeklies.
Yeah, but I was going to say, take a look at this 2-star liquidity. You don't even have an M next to your shares, but I get why somebody wants to be bullish. I might do something else, right?
How much is the diagonal?
We looked at the diagonal. You were paying 50%. So I'm actually going to cancel this order and go in. If somebody wanted to be bullish ELF, you could, to your point, just go in and sell this because this has these have quite a bit of open interest.
Right. You've got, and they're tighter markets. And then it's your trade. It's your trade and you're in it and that's your earnings trade.
I mean, we could just do 130.
I hate to I don't love going through earnings, and earnings aren't for a while, right? I don't know.
I don't either. I agree. If you want to look at an earnings setup diagonal, you could do that too.
Oh, why don't you just throw in an earnings setup calendar?
To the upside?
Yeah.
Yeah. Now that's the ticket. Okay, I'm going to go 140.
Don't go all the way to the expected move. Just keep
No, I went 140 just because I know they'll have it here. It's 575.
Forget it, ELF.
Yeah. I mean, I know we're probably going to
if someone really wants ELF, if someone's like, I want ELF, if I said to you, Liz, I really want ELF in my portfolio, well, I would just sell at the money puts until I got put the stock.
100%. That's what I'm doing in Royal Caribbean because I'm getting on a cruise.
Oh, good idea.
Yep, I sell them at the money. I actually didn't sell the at the money. I've got the 220s right here, which is still pretty far away.
Has Royal Caribbean, how much of a fall has that had since the beginning of the year?
Not much. I mean, since the beginning, yes. So 250 down to 230, which is a decent fall. I just started selling puts like right here. I just got back into it. I mean, I'm not trying to be like, I only do it when I'm getting close to a cruise. I'm not a huge Royal Caribbean fan as a stock, to be honest with you. But I just do it because we're a couple of months out where I want to keep selling until I get put the stock.
I can't remember. You're getting on a Royal Caribbean cruise. I'm getting on a Disney cruise. I don't think I get anything from Disney for having the stock.
You don't? I've already looked.
Yeah.
Because I was looking at shareholders. I was like, we go there all the time. I wonder if you get anything off when you're a shareholder if you go buy something.
And I got out of my Disney. What time is it? Are we out of time?
Yeah, we're done.
Oh, yeah. Okay. All right, everybody. Have a good day. Liz, have a wonderful day. Everyone out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow from the studio.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mike Butler, and of course Ryan Grace with me for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies Mike and Ryan. Ryan, congrats on the Bills. Josh Allen is just an absolute pure thoroughbred of a stud. It must feel good.
Yeah, looking good, feels good. Baltimore up next. It should be a good game.
See, the Bills got screwed with their route.
Yeah.
I mean, you got to go through both the big names.
But why not? Just
basically, if you go through these teams, you've righted the wrongs of the last couple of years.
Oh yeah. I mean, this would be quite the run.
It's been some good football on these
Yeah.
past couple of days over the weekend. All the games were entertaining, to say the least.
Yeah.
Yes, for sure.
We got another one tonight.
Yeah.
Rams, Minnesota.
Rams, Vikings, yeah.
Where we at? Where's the money at? How are we doing?
I think the Rams are going to win.
You think so?
I think there's too many issues with Minnesota. I think they showed that last game where
Darnold has
was
just
just
been like
I'm reverted back to Darnold.
Yeah.
And Jefferson isn't really he hasn't had consistent games where he's just going nuts.
Well, I think that's a reflection of Darnold kind of being mid.
And now you've got Puka. And they're winning games with Puka going nuts and Kupp is doing nothing. What happens if Kupp does stuff and Puka goes nuts? They're not losing that game.
Yeah. I don't know. Stafford's just such a boss. I mean, if for him, he's been in the league for what, 12 years?
Yeah.
11 years. He's just been awesome always.
I think the Rams take it.
It's hard to go against him. If they have the ball with 2 minutes to go and need a touchdown, I mean, that's auto.
Yeah.
I think Stafford's bringing them there. So we'll see. But yes, very good football.
Yeah.
All weekend long.
Best line I'm seeing is Rams 2.5, laying 105.
Okay.
There you go.
See, 2.5 though. That's a goofy line. You don't like.
I think it was 3 yesterday afternoon.
I would like to have that.
Sounds like a double defense, double kicker kind of.
No. Don't give me that. Well,
good luck to everyone in their bets.
Yes, good luck to everybody in their bets. Add that to our degeneracy card. We have, trading. We have meme coins. We have sports betting. It's everything.
The meme coin performance is not looking good today. It's another week of who's lost the least.
Yes.
That's the winner.
Which is what is the premise of bag battles, right?
Yeah, best loser, right?
It's to be the best loser.
Yeah.
So, we're going to have Ryan walk us through his fundamental analysis today.
Yes.
Yeah, of just kind of helping us through the weeds of the meme coins. We'll see if we can find some good stuff. Just a quick little market update, and we'll get into what we got today. E-minis down 44. We're near the lower end of where we're trading today. 58.09 was our low of the day. It's been a pretty decent-sized sell-off. We've closed the gap back in November. We had the election bid. We've kind of come all the way back to where we were trading right around then. So we've taken out a couple months of price action here. So a little bit of a sell-off over the last couple weeks. We'll see if we bounce from here. NASDAQ down 275. You got the Dow up 61 and the Russell down 25. So the Russell and the NASDAQ really the weakest of the group. The Dow bucking the trend. UNH is a stock that when I was looking at the Dow components is up significantly and has had a nice little bounce back from the 480-ish handle up to 540 here is helping lift the Dow and keep it positive for the day. And then some of the other oil names like XOM is having a nice day as well. So that's why the Dow is kind of overperforming relative to everything else. Oil, and getting back into the oil names, oil up to $78.96 right now, $2.39 to the upside, about 20 or 30 cents off the high of the session. It's had a big move over the last couple trading days. Volatility futures up about 50 cents, 1961. We did get into the 20 handle, which was a little bit of a spooky situation. It's come in a little bit there throughout the session here with a little bit of chop back and forth in the market. Market was only down 16, 17 at one point. Got down 50 at one point. We've kind of been bouncing into those two ranges here. Bonds down 7 ticks. They cannot get out of their own way. Bonds have continued to just get killed day after day. Rates continuing to stay high and go even higher. Gold down $33, silver down a full $1. Gold and silver both taking it on the chin after what was a nice about a week and a half of move higher. And then, of course, Bitcoin, 91,000. I think we got into 89 overnight. 89.2, the low of the overnight session. What does this spook you? Are you done? Are you ready to capitulate? Are you out?
Faith will be tested if you
Faith
saw the newsletter.
will be tested. Yes, that's right. Thanks for the shout out there. No, I don't think anything's structurally changed. I mean, what you're seeing in risk assets here is obviously happening in the crypto markets with a higher degree of volatility. My read on this is, well, first of all, you're at all-time highs. Just weeks ago, we were at 108,000 in Bitcoin, and we were at new all-time highs in the S&P. And then very quickly, as you know, you can get that kind of pop in volatility. What causes that pop in volatility? Usually in hindsight, we try to explain it away. So I suppose that maybe the U.S. economy is a little bit stronger. Inflation is reaccelerating at a faster pace or is a little bit stickier than people anticipated in terms of what forward interest rate expectations were. Maybe that's enough to cause people to take short-term profits, and then volatility starts to grow on itself. I think when you look at kind of positioning in the market, there's a couple great outlets that track dealer positioning, but you really want to understand, am I in a negative gamma or positive gamma environment, at least as it pertains to dealer positioning?
Are you talking relative to Bitcoin?
Relative to the S&P,
okay.
Largely. And you'll see in some of the slides here, we'll kind of connect all these dots. But if you're in a very negative gamma environment, as we currently are, you're just going to see a lot more volatility. You're going to see that move sold into on the downside instead of bid. So you start to see, you're down 1.5%, now you're down 2.5% as that hedging activity occurs. And the same thing on the upside. So your realized vol as a function of positioning in the market is going to be, well, more volatile. And you're seeing that in all risk assets. To your point, bonds continue to get hammered here as we reprice in on the long end. Not so much sticky inflation, but I think a normalization of the interest rate curve to me signals that there's a little bit stronger growth that's expected here in the U.S. as well. I don't think long-term that's a negative thing for crypto, but we are seeing a correction in the market to start the year. That said, and maybe just coincidentally, when you look at the first month of every post-halving cycle, or I should say the first month of the start of that year, so the first January post-halving, you've had these big pullbacks prior to resuming blast-off mode. So you have this consolidation that's ongoing right now, 90 to call it 110 in Bitcoin. You're going to flirt with both ends of the range there. We bounced off of it. We've been slammed back down to it. We'll see whether or not this holds. I don't think that, and who knows how volatility evolves in the short term, but do you retrace all of the post-election move based on what's likely to occur going forward as a result of that election? When you think about regulatory environment, when you think about just some of the things that could be coming from the ETF perspective, there's a lot of positive catalysts in the market still, I think, for 2025. So a couple weeks in here, I'm not getting shaken out, but do you see more downside price action? Maybe. Where does that take you to? I mean, do you retrace the entire move post-election? You've seen a bit of that in the equity market. That takes you down to 75. For now, we're holding at 92. And honestly, we're right. Not that I'd be dishonest on the show, guys, but, to put context around this, I suppose, we are pretty much where we were when we did this show 2 weeks ago.
Yeah.
We're, expected moves are the same, vol's the same, price is pretty much the same, slightly higher maybe than where we were 2 weeks ago. So long-winded rant, no, I'm not shaken. I think, again, still structurally bullish here. We'll work through all those slides.
Yeah, and I love that you mentioned, because it's so short term, the market and the sentiment and stuff like that is all so in terms of the general public is so short term. If I texted any of my friends, they would think Bitcoin is crashing. And that the market is crashing as well. The market's down 5-7% in the last month, or about 10% maybe. And that is a crash because of what we're seeing right this second. And when you look at volatility, and I know we've talked about Bitcoin volatility, and you give us the price ranges for. Do you give us for the next 30 days? Is it 30?
We'll look at this on a 1 week basis. So that 1 week, one standard deviation.
Okay, so you've been giving us the 1 week, which is right in line with what we've been seeing. It's not like we are, we're realizing 200% implied volatility on a 60% implied volatility asset. We're getting 60% implied volatility on a weekly basis. So it's nothing. It's not outside of what the market is telling you could happen.
Exactly.
Is the point I was trying to make. And same thing in the E-minis. Like, yeah, we're down 0.5% today. The VIX is at 20. I mean, you should expect 1% in either direction every single day with a VIX at 20. So it's par for the course, is, I guess, what I was trying to get at.
Yeah, it's the short-term perception meme where it's like Bitcoin hits 100 a year ago. Everyone's got the celebration glasses.
Yeah.
It's like Bitcoin drops to 100 from 110 and everyone's on their deathbed. Like, that's what it is.
Yes.
But I think it's the multiple down days that are still within the expected move, I think gets people spooked.
Yes.
But yeah, I agree with Ryan. I think when you're trading a product like this, or if you're investing in this long term, like this is what you sign up for.
Yeah.
You're signing up for the swings in the short term to potentially get those returns in the long term. Mm-hmm. So that's the nature of high volatility products.
Yeah.
But yeah, definitely an interesting opportunity to get in here if you've been waiting for an opportunity. Like, we're near the lows of the last couple months, like we've said.
Yeah. Can still go lower, of course.
Yeah.
But that's the look I like to take when I'm getting long NVIDIA into 15, 20 point down move. Sure, it can go lower, but I was trying to get long it a month ago at $20 higher. So why wouldn't I be a buyer here?
Yeah, I think if you have a longer term time horizon here and you're dollar cost averaging in, you're looking for these 10% down moves to add a little bit. Mm-hmm. I don't think you're adding a little bit every single day when it swings around 1, 2, 5% maybe. But we know that this can go down 20, 30%. That would be entirely normal given its volatility in a bull market. Yeah. So you could go to 75, let's say, on your way to 150. What do you do at each one of those price points is what really matters. Were you adding? And then alternatively, were you taking profits at the top end of that range? Or if you're bearish on this, which I don't think when you look at it from the trend perspective, this is not in a bearish trend. But if you're looking to trade that range, you're looking to trade on the other side of it, you have a contrarian view possibly, you should be waiting until you're at the top end of that range and selling. And down here, maybe it goes lower. But if you had a big short position on, maybe you're covering a little bit of it in the same way that you might be adding if you're dollar cost averaging in. My view for 25 hasn't changed. I think there's still some time to play out when we look at the broader cycle here. But given how quickly this can become very volatile, it does scare people.
Yeah. Yeah. Beautiful. Good for our IBIT trading.
Apparently Tom poo-pooed it this morning, according to Sunflower on the YouTube chat.
Oh, no. Our trade? That's a major shock.
Trade? Yeah.
I'm really shocked by that.
Yeah.
Are you guys going to close it out now?
No. If anything, I'm going to do more content.
Yeah, if anything, it's like a blessing.
No, I'm joking.
Like, it was like, we got kissed by the gods with that.
Yeah.
I mean, that is...
It's like the anti, what's his name?
It's like inverse Kramer.
Yeah, inverse Kramer.
That's it.
Yeah, we do need... I'm excited for the markets in turmoil segments to start coming back. I think this market action is about ready. I'm actually shocked it hasn't come yet.
We're close.
I think today is definitely or maybe even tomorrow if there's one more push to the downside. I think this market's in turmoil.
I think the beginning of that is when you turn on CNBC and they have the VIX is a fear gauge for the market.
Yes.
Like when they have that banner, that's when you know that we're entering that period.
Yeah, and then everybody on the shows talks about how they trimmed over the last month. We've been trimming. We were ready for this one.
You always got to be trimming.
Always trimming. Always trimming.
ABT, always be trimming.
Yeah.
Yeah, I think, what this comes down to for me, and it's always the case when you get these very quick volatility expansions, is whether this is just a short-term period, an episode of volatility, or whether it's a larger trend in volatility. Have you seen some sort of regime shift where you're no longer trading between, call it 15 and 20 vol, which is relatively normal, and you're now 20 to 30 plus vol, much different market, clearly harder to buy dips in the market when it's trading at 30 vol, but I don't see any signs yet, put it that way, that this is anything more than a short-lived period of volatility coming out of last week, and you had a larger expiration. Get through this monthly and kind of see where we are, but I don't see it as any anything today that is giving you a signal where you really need to be more worried about an environment that should push stocks much lower. And that's one where things are really slowing down, right? Okay, we were somewhat mispriced in terms of rate expectations, but like I would much rather be in this environment than one where growth and inflation are just absolutely collapsing, companies are missing their earnings, and things look terrible from an economic perspective. That's not good for Bitcoin or risk assets. So I think
or
we're
anything.
fine
Yeah,
here.
That's not good for anything. I do have a question for you because I know there's a lot of talk, and obviously it is a part of markets where January there's a lot of leap options, longer duration stuff that comes off the table that is just a natural part of markets. When you January is a more actively traded month than June or July. It's the end of the year. It's leap options, stuff like that. Does the Bitcoin derivative space have that sort of dynamic to it where there's a little bit more liquidity centered around January and like these quarterly expirations? Is that how the trading is that same dynamic present in the Bitcoin space?
That's a great question. I would, presumably it is. So? I haven't followed, given a lot of these derivatives markets are outside the U.S. We're talking about options. Haven't looked at that closely, but we should look at, where's open interest, what do volumes look like around some of these levels. But I haven't looked at it that closely. I would think so, though, in the same way that, we know there's seasonality that exists with Bitcoin price action or performance. I think with positioning, if we just compared January versus, say, the summer, you'd probably see more activity right now. I would think, at least.
I guess if we used IBIT or looked at IBIT, but it's not, we haven't had like a full year of that. And that liquidity is off the charts. So
yeah, there's definitely pockets of big liquidity, but you're seeing pretty sustained high levels of liquidity and activity in this product.
Yeah. When I'm also just looking back over the last year at open interest and volume across CME products, which I don't know if that's the best representation of the global marketplace at this stage, but it's been relatively stable for the last year. You saw a huge pop in November around the election. Other than that, we're kind of there really isn't that much seasonality in terms of volume and open interest on a month-to-month basis. This has been growing. I think it's still early stage for these products as well.
Okay.
Yeah, IBIT has traded more shares than SPY and Qs combined almost today.
It trades. I know like that. Water. I know that we get the Tom poo-pooing it because of the nickel-wide markets. The spreads do trade in pennies, but they are a tough fill, and I think that's just a reflection of volatility as well as just the activity in there. I don't, just because I have to pay up or down a penny or two doesn't steer me away from something, but. There is certainly a lot of liquidity going into these products, and I can even put up
I would look at the closest proxy to this in that sense, if that makes any sense, would be GLD, would be my closest analog, right? Okay, so IBIT options are 5 cents wide. Would you consider GLD options illiquid? They're 5 cents wide.
Yeah. No big deal. I added the volume bar on here. You can see, obviously, volumes have been just through the roof in IBIT. From a share perspective, the options, I'm sure, are just as big, if not bigger, from a notional value perspective.
Yeah, you have some strikes that have 50,000 open contracts. So that's a substantial level of activity, especially for a product that just released options in the last year. But yeah, we're streaming on YouTube. We got plenty of people in there. Give us your trade ideas, questions, your meme coin enthusiasts. Let us know what you're looking at.
Smash the like button.
Smash the like button.
Subscribe.
tastycrypto.com to get the newsletter.
Yeah.
And you've got your everything you wanted. What was the title? Everything you wanted to know but never asked.
Everything you wanted to know about crypto, but were afraid to ask.
We're afraid to ask.
Yes.
There you go. That's coming out.
Digital collectible.
Digital collectible. Is it this week or next weekend? I think the 20.
I believe it's the 25th. There we go. Yeah.
25th.
Dropping the 25th.
Yeah, so go sign up for that and get that too.
Thank you, guys.
Yeah,
How was the live event? Was a smash?
It was awesome. Yeah. So Sunday night last weekend, I figured, okay, no one's coming out. It's cold
You
out.
underrate yourself, right?
I
You
guess
are
so.
a star.
Well, that's very nice of you to say. I'm not quite sure that's true, but it could be true in our world. So I appreciate that. But yeah, I figured, look, it'd be fun. It's always great to catch up with people and put faces to names that I email with and whatnot. And so it was a fantastic event, but I didn't think anybody was going to come out. And yeah, we had a great turnout. Edward was there, Tom was there. I was talking for about an hour, just walking through kind of why Bitcoin, why crypto, why that's interesting to me, going through the market as well. And that was, I guess, warm up for the live event that we did, that we recorded. It'll be a digital collectible available on the 25th. And it's an hour-long presentation. There's a whole slideshow and just walking through what is crypto, why is this an interesting investment, how does it fit within a portfolio, how do you trade it, how do you access the markets, and much more.
Sweet.
Awesome. Sign up if you haven't already.
Yeah, I'll put a link in the YouTube chat.
tastylive.com/events.
Indeed.
Yes.
Indeed. All right, should we pop over the slides?
Yeah, let's
walk
do
through
it.
some metrics, and then we'll get to the YouTube chat.
Yeah.
Sweet.
Little Bitcoin update here. What do you got for us, Rye?
Yeah, it's been a couple weeks, but like we said, not much has changed really over that period of time. Obviously, there's a lot of volatility in between, but we're basically where we were 2 weeks ago to start the month. So on a daily basis, momentum has been bearish. We can see over the last week, overnight really here, big down move. On a 1 month basis, just about everything's in the red year to date now, but that trend is still bullish. We haven't seen that break down. Clearly, that's going to take a little bit longer when we look at weekly and monthly timeframes. But those are your bigger signals. They're more important. I think it helps to, get through the noise a little bit when you look at the longer term time frame. So on a 3 month basis, Bitcoin's still up 40%. It has slipped a little bit here, but no real change when we look at volume or volatility for signals. It's not like all of a sudden some information came out, the market sold off immediately by 10% and volatility spiked by 50%. That's not what we're seeing. It doesn't mean that it can't happen, but this is in line with how we've been trading and what we're seeing across other markets too. This is not specific to crypto in any way. It's not the S&P just continuing to chug higher and crypto is trading off on its own kind of systemic risks like we saw, say, post FTX. Again, this is a pretty normal move in the grand scheme of things, and we'll see that when we look at the expected moves. But nothing to really take away from this. Vol is pretty much the same. Continuation of some of the profit taking, and I would argue the consolidation within a broader range that's at higher levels versus where we were this time last year. That's the other thing that's kind of fun.
Yeah.
Where were we in January of 2024? Where are we today? And is that thesis still playing out? What's changed? There will be a point in time where absolutely you want to have taken some profits, booked those gains. I'm not so much saying go short, and I probably would never have a position going forward where I don't have any crypto. But is there a scenario where you don't have to go short, but stable coins are a position and you can generate yield off of those, off of treasuries? There will be a point where you want to book some of those gains. I think that we still have some time. We're going to monitor the market, but I think that that's probably more of a late 25, 26 story from the cycle perspective. But who knows? Anything can happen. Just looking at this today with the information that we have, I don't think much has changed. You could argue that there could be some selling pressure from the U.S. government, possibly. On the other side of that, you have the FTX distributions. Now, as I understand it, the FTX distributions that will occur are not being paid in crypto. So that's not crypto that will be sold. It's dollars that are being returned to those customers. Now, are those customers going to sit in dollars? They're going to buy crypto. I don't know.
Yeah.
But I wouldn't necessarily look at that as a negative when you see some of these headlines around FTX distributions. There's a lot of FUD, as we like to see. MicroStrategy is still buying. Like some of those things that maybe make a difference. You've had big ETF outflows at points in time. But again, I'm saying all this because not much has really changed here 2 weeks in to start 2025.
It's part of the cycle. I mean, you get these sort of like FUD drops, and it's all at once. I feel like that's like a normal part of the Bitcoin space. It all kind of comes at one point.
I mean, there could easily be a point where everything that we look at to try to understand what side of the trade we want to be on and position here, it tells us to go short or to get out of the market, risk off, something's changed. We have to recognize when that occurs. I don't see that today. And did we, lose out if we were buying at 95 and you're at 92, or you were bullish at 100 because you think it's going to go higher over time and now it's back at 90? Sure, in the short term, obviously, we're down 7% over the last week. Yeah. But I don't see anything that's changed where now I should be worried about, is there a larger 25 to 30 to 50% move coming? We know it trades like that, but we're not seeing any signs of that at the moment.
And really, I think we can even go a step back further and just think of the time frame we're in. Like, people that were invested in Bitcoin and even just the broader markets for 2024 could very easily be just taking profits in the new year and reconsolidating their own personal funds, which can translate into the markets that we're seeing now. Like this I think is really you could add another check mark to this. Could be just consolidation around these levels for these reasons.
The way that I'm trading it too is to look at what simply is more volatile. Where could there be a relative value trade against Bitcoin as the benchmark, which is also selling off? And we'll, I suppose, point that out on the next slide. But is there a larger opportunity, perceived opportunity, I suppose, to buy something like ETH or Solana, another, call it mega cap or major in the space, versus some of these memes that are just vol trades that can go up 200% and can go down 80% in like a couple of days?
Doesn't seem like that, because I've been looking at those now. We've been talking about the divergence in value of those two in terms of a percentage basis. And it seems like ETH and Solana have about a 3x beta to the downside and about a half x beta to the upside. So, it doesn't say. I don't know where you're going with this, Ryan. When's this catch-up trade coming? I'm ready.
Absolutely agree with you. I do think in 25 you see that bid in ETH. Maybe it's ETF flows. Yeah. Maybe it's that the ETH can be staked and those rewards can be passed on in the form of a dividend. Maybe it's just that more people find out about it and it needs to see a little bit of price action first that pulls people in. A lot is happening though when you look at development, you look at the growth of the ecosystem. So I'm very bullish there. But to your point, it's been very frustrating. I think we're probably at or near a new multi-year low.
3,000 right now.
Well, and I'm thinking in the Bitcoin or the ETH Bitcoin ratio, I think that's continuing to push lower, to your point about when are we going to see this catch-up trade. I think that happens in 2025. It's, 2 weeks in. So I think, let's see. I would argue, let's see really what happens post-Trump inauguration on the regulatory side of things. I think we ultimately need new laws. We need some form of legislation that's passed by Congress. But let's see what Trump tries to get done. He's talked a big game. Doesn't necessarily mean that he's going to follow through there. But there could be some real regulatory tailwinds that I think propel Ethereum in the kind of intermediate term. So we'll see, but those are the catalysts that I would keep an eye on. But it's been tough. I mean, Bitcoin market cap dominance here, as you can see, it's been at 58%. It's been stuck there. It's higher over the last month. And if you just look at this from a momentum perspective as well, it's pretty bullish. ETH BTC, it could get more bearish, but it's pretty bearish. Not really seeing any pockets of outperformance. Maybe if I then look at, trading Sol versus ETH, and you can do the same thing with some other alts against Sol. There have been some pockets of strength against Solana, but maybe you want some Solana over ETH. I want to own all of them. My largest position still is Bitcoin, but you maybe make adjustments within that as the cycle plays out. Dogecoin also still looks very interesting to me in terms of just you want that vol component in your portfolio that's positively correlated. This will do well if we continue to see this crypto bull market play out.
is what's underneath the surface, like the meme coin space? What's the liquidity like there? Is that still, because I think maybe not the last time, but the time before, the segment before that we had you on, we were talking about like Solana and just the record number of transactions and the transactions versus Ethereum and the fees that were generated. Are we seeing that stay high, or is it kind of tailing off into the downside move or increasing into the downside move?
No, I mean, when you look at the price action here, this is all I would characterize one big momentum trade. But when you look at objectively what's happening on these chains in terms of users, activity, use cases, et cetera, you're seeing a lot of growth there. You're seeing growth across networks like Solana, but also in other areas of Ethereum. Take Base, for example, more users, so much development activity that's occurring. You look at this kind of AI agent theme and what chains those tokens are primarily on. It's Solana, it's Base. So you're seeing the fundamental story play out and the growth there. But you don't always see that correlated one for one on a daily basis with the price action, obviously. But in terms of users and those metrics you want to follow, up and to the right. So absolutely growing and adoption continues at pace.
You would think that's a good sign. That's
definitely
value on chain that is, a liquidity on both sides. I'm sure there's, like when the market as a whole is going down, I'm sure there's a lot of liquidity that's selling out into those moves. And then, when you have bids to the upside, I'm sure they're buying as well.
Yeah. And really, especially when you look at something like Ethereum versus Bitcoin, or trying to find a bullish stance in a general, if you're generally bullish for crypto, it's never a fun feeling to like try and buy the dip when nobody's talking about something. Like we were just talking about United Airlines randomly, and we're like, remember when everyone thought like that was going to go out of business and nobody was flying it, and now United Airlines is up 100% in 3 weeks. It's like, not saying that that's going to happen in Ethereum right away, but like if you're generally bullish in the space, it's definitely an opportunity and an interesting thing to bring up. If you're uncomfortable getting long Bitcoin at the level it's at now, even with the recent sell-off. Beautiful. Should we chug along here?
Yeah, if we keep going here, we've got a quick look at volatility. As I mentioned, not much has changed here. We've been stuck right around 60% implied vol for Bitcoin. Realized vol on a 30-day basis has been around 40%, 45% maybe. So you still have a slight premium in there when we look at implied volatilities, but nothing that jumps off the page. IV ranks are basically unchanged from where we were.
Which means this move is within what was expected.
Absolutely.
This is, so again, it's just putting it into context. When you look at something that has 60 or 70% implied volatility, it's telling you that you can see 10, 20% moves in a span of time.
The market is, in a sense, pricing this in and assigning a probability of almost 70% that you stay within that range. That range is dynamic, as everybody knows, so it's going to change. But you are, at the bottom of where we started in terms of the range at the beginning of the month. We've trended a little bit lower here over the last couple of weeks. Your expected move, though, is about the same against the spot price. So we're looking at about a $7,500 move, a little bit above that. Gives you a range right now of 84,000 on the downside, 99,000 on the upside. My approach has been, again, to identify what's the longer term trend that you're trading within. I'm bullish. I think the trend is bullish right now. We probably have, or at least we've had historically, multi-year cycles in this on both the bull side and the bear side. And so if this is a bullish market right now, I want to be aware of the volatility. I want to be aware of whether anything changes or not. And then within that trend, if I'm dollar cost averaging in and also trying to manage some risk on the upside, I'm going to buy a little bit at the bottom of the range, knowing that the range can change. I'm going to sell out a little bit at the top of the range, again, as long as nothing else has changed. Volatility hasn't changed. There hasn't been a significant price breakout in price one way or the other. I want to take a little bit off the table, rinse and repeat. And that's maybe looking at that against my core position. There might also just be some stuff that I hold that I want to hold for years. But if I'm trading around it, that's how I'm using those expected moves.
Lovely.
So that said, a couple more quick slides here, and then we can go wherever you guys want. But just looking at relative performance over the last month, It's just a vol trade. Bitcoin as the benchmark. Bitcoin market cap dominance at that multi-year high. Bitcoin's down the least. ETH, Solana, Doge. Doge is a lot more volatile, as everybody knows. It's down the most, and when it goes up, usually goes up by the most. If we take a look at the next slide, some cross-asset correlations, immediate, week-to-week correlation between the S&P 500 and Bitcoin has come down a bit, but it's still pretty positively correlated. Strong positive correlation, almost twice what we see on longer-term timeframes when we look at the correlation right now between the S&P and Bitcoin over the last month. The one thing that I want to point out, though, is that immediate term, very short-term correlation here, inverse correlation with S&P 500 volatility. I think, again, if you are just in this like short-lived period of vol in the equity market, we probably see Bitcoin bounce here and move, back towards the mid-top of the range. If what we're seeing in the VIX here starts to turn into more of a trend and you have this multi-week, maybe month-to-month period where you have elevated vol, I think you could see a lot more downside as a result when we look at what's going on in Bitcoin and crypto assets, especially in some of these meme and kind of AI-related areas that were bid up quite a bit. So that's the thing that I'm going to keep an eye on short term is just what happens with the VIX and the range that it's been in. Does it start to turn into more of a trend? Other than that, not seeing much of a change here, though the one thing I will point out is a little bit of a strengthening correlation with the dollar, even though the dollar is going up. And one way that I might think about this, and I don't think it's not perfect in that sense, but a lot of times we look at something like, say, crude oil or other commodities, we'll put Bitcoin into that bucket, gold, for example, and look at a stronger dollar as a negative for that asset's price. In this case, because of what Bitcoin represents as a store of value and how it's digital and global in that sense, you could actually see positive price performance in the face of a strengthening dollar if there's a bid in Bitcoin because other countries' currencies and the citizens of those countries are seeing a significant decrease in purchasing power. It's definitely then Bitcoin's a store of value to those people and to other people in markets around the world when their currency is being decimated against US dollar strength. On the surface, you would think US dollar strength is just a negative for Bitcoin. Not necessarily when we look at it that way.
Because you're saying it because once they convert it from their currency into Bitcoin, the next step is either holding Bitcoin or holding dollars, and so that's sort of like a.
Well, I would look at it as if I'm a global investor and my domestic currency is weakening against the dollar. I want dollar assets.
Yeah.
Bitcoin is a great permissionless digital dollar asset that's globally available, so you could see flows into that. We're U.S.-centric, so we focus on the Fed. The focus today has been on, well, the Fed's not going to cut rates as quickly. Oh, that's bad for Bitcoin. Bitcoin sells off. Stocks sell off. But Chinese stimulus, other central bank actions around the world could be, we'll all move in the same direction, but it's kind of like they might be stimulating a little bit more in the meantime. It's not just one thing.
All right, that's an interesting angle.
Yeah, there's actually I remember we looked at the Fed watch tool, just looking at the interest rate implications or the probabilities related to them, but
they're like off the table now.
Yeah, right? 97% that we stay at 4.2545 for January's. For March, 80% chance we stay. For May, 70% chance we stay. And then in June, that's when you get to the 50-50 of maybe a 25 basis point cut. So things have certainly changed, and the market has reacted towards that.
So that's a quick crypto market update for you guys and for everyone. Again, I think the theme here is that week to week, since the start of the year, not much has changed. We're going to keep an eye on this price action. Obviously, you're going to keep an eye on volatility. I'm in the camp that this is short-lived. I think what you are seeing with the broader economy is a positive for crypto. It's certainly a positive for altcoins. Look at the alternative being things are crashing. People are losing their jobs. They don't have excess capacity or capital for investing in some of these assets. These things that are 100% vol are going straight down. I just don't see that when we look at where we are with the economy right now. So be less worried about that short-term noise and, the repricing of interest rates and the volatility that's materialized in the market. I think you look past that.
Yeah.
Can't go up forever, Ryan.
It can't.
True.
I
we
mean,
can.
But I think we have a little more time.
Yeah.
Hey, I think we can go up at some point. It's just,
We can V-bottom though. And we have.
We have many times, but two-sided action is good. That's how you find prices.
Yeah. Another way to think about it too is like, when was the last time we had a sustained 25 to 35 VIX? It was when we were all wearing masks and we were in our little apartments chained to our chairs. Like things have certainly changed. There's macroeconomic things that are happening now, but like Ryan's saying, I think it's until the VIX really pops and sustains, I think we're kind of in this consolidation period.
Yeah, absolutely. And the last time, I'm looking at when were we in a VIX trend above 30? I mean, you go back to
COVID,
2022. Yeah, like we didn't get out of that period until about 23.
Yeah, I think that I will say I think the Trump presidency will give us volatility in both directions, which will be interesting. For all markets, I think that'll be a welcome event.
Are you saying that just because you just never know when he's going to say when there's a microphone near him?
Yeah, I think there's just going to be we're going to be back in that. I mean, you remember when we would have these press conferences after the close, and we'd be sitting there trading the futures, and he would say something, and they'd go up, 2 or 3%, and then down 2 or 3%. I mean, we were getting some real volatility. I think that's, in the future for us.
Yeah,
which is good for trading. That it's going to be opportunities.
Completely agree. I think you see premium in the options market for sure when you have a heightened degree of uncertainty in the market, right? We know that based on historical performance and what we've probably seen up to date is that Trump loves the threat of tariffs. Now, how much weight is behind that? We don't know. We've obviously had tariffs in place and continue to have tariffs in place, but we know that that's one component. We know that he's seemingly obsessed with the stock market. He has specific Bitcoin prices that he's referenced. Previously, he had a bit of a spat with Jerome Powell and was a fan of lower interest rates. On the surface, it seems like maybe those things are all bullish. Is there a broader slowdown in the economy that we have to be aware of? Possibly. I mean, again, anything could happen, but it does seem like this volatility is more of just an episode than it is more of a trend at this stage.
Let's get to our bag battle slide, because I want to give a shout out to Shelly, who puts all these beautiful images together, and to the ladies in general who are lapping us losers.
Yes.
In our bag battles, which is being down the least is the positive here.
Zadie McGarrigus.
Yes.
Has entered.
Shelly and Katie
Yeah, we've got quite the crew here. And I suppose for anybody that's just catching up, we've put $100, 100 USDC stablecoin on either Solana or Base for the most part into what's essentially a random token that we've all picked each week. I think we should look at maybe changing it up a little bit going forward. But for now, we've all had one shot. And we've missed. We've
all missed. When we look at our returns here, I am the biggest bag holder of the bunch, which is the loser, the Shelly and Katie at the top of the list here. Ryan, you're right in the middle there. It's I'm a little disappointed in you, Ryan. After watching your fart coin play, and the fact that just because we are on the show, I know you have other things that you like to mess around with, but that was quite the, you caught one right at the beginning of this.
We've caught a couple. I think what makes this hard is we're dealing with things that can go up or down 50% in a day.
Yes.
Up sometimes hundreds of percentage points in a day. And so if you look at this now, it's at this level. It could be an entirely different level, up or down in another hour.
Yeah.
And when we just
another 10 minutes
pick the performance week over week, it's tough.
Yes.
But door to door, we haven't done so well here.
We're gonna do. Yeah, we're gonna play around with maybe shorter term stuff if we can once we get the.
So we're rebalancing. I'm assuming. Are you switching it up, guys?
I was hoping you would point us in a direction, like give me, you know, because Shelly was like, we had our water cooler talk this morning, Shelly and I, and she was giving you props on some of your prowess in the meme coin space, and so I was hoping that I would get, some tips and pointers.
Okay. Yeah, let's talk about that then. How do you find these things, I guess, is the question, right? Okay. High level, I think it's really important to be aware of, and it's tough because this is 24/7. It's global, it's the internet, and it's going in all these different directions, and there's just a shitload of noise. So what's real, what isn't? How do you trade this stuff?
Mm-hmm.
You have to be aware of the larger themes first. And you kind of also have to have some recognition of when, there's capital flow from one theme to another. Because I don't think that you're really seeing new money come in here like you are with the ETFs.
Switching hands.
Sloshes around from one idea, one narrative, one theme to the other. It's not like Michael Saylor's got $100 million that he's deploying in some AI agent token.
How do you know that?
Well, possible. But we don't see that in this space in the same way that you see it in Bitcoin, for example. Instead, you quite often see somebody that becomes a whale for one reason or another. Sometimes it's just luck. Other times it's fantastic skill, but this is extremely difficult.
Yeah.
But sometimes it's just someone that becomes a whale and one starts to pump other tokens and capital flows into that. Either created or destroyed in that sense. So it's being aware of those themes. So then what are the themes and how are you aware of the themes? Well, as you guys know, early on the theme was memes, any token that could just pop up through pump.fun on Solana and boom, millionaires overnight.
Yeah.
That has shifted more towards
paper millionaires.
Well, AI agents, yes. Yes, exactly, right?
Everybody thinks like everybody's just like logging on to pump.fun and it's you just walk away a millionaire. I think Vinny thinks that's like what's happening. Yeah. you have to extract that money. Like that
the data shows that there aren't that many.
It's got to be very few.
We'll put it that way. But it's identifying those themes. And what you've seen is now that capital has kind of moved towards AI agents and what's happening there. And then as you start to dig into what those themes represent or the ways that you can invest in it, it becomes a little bit easier then to identify just where the momentum trades are. Mm-hmm. And that's really all this is. So back to identifying the themes. Here's a couple of the ways that I look at it, and then beyond that, how do you find the individual tokens? The absolute best place for alpha in this space is going to be in these kind of clubhouses or rooms, Telegram groups, Discord channels that you might not have any access to. Mm-hmm. Anyways, sometimes you've got to be in the club, so to speak. I hold this NFT. Other people that hold this NFT have been in this space for a long time, might know something. And so there's information. I think there's alpha that can be generated
and
as
just
a result.
Liquidity. They can all act together.
Yes.
It's a liquidity move.
So there's that component to it. But beyond that, there's Twitter.
Yeah.
And I think that's the best place for anybody to start. You can get into the weeds and you can go on Discord and Telegram and you can meet people and contribute and add value, and then you can take something away from that as a result. You have to cultivate those relationships. You have to participate in that sense. You have to do the same thing on Twitter. But I think Twitter for many is probably more accessible.
Yeah.
And now on Twitter, you do have these AI agents. AI XBT is a really interesting AI agent that's combing through tons of data, across different sources, and is providing a perspective on certain coins, its own autonomous perspective. It's almost like if you were engaging with ChatGPT, but ChatGPT was specialized to be the best, let's say, crypto market analyst there was across all available data sources that it has. So you might just be able to ride the tail of some of these mentions in some sense. Or, I saw that, this bot has highlighted this token, and not only has it highlighted the token, but it's giving me some contextual information as well about the development team, about on-chain data, and it's spitting all of this out. So that's a place to start. But really, it's just being part of the conversation, or even a voyeur in that sense when it comes to what's happening on X. You're searching for different symbols, or you hear about a token over here. What is the conversation around that might lead you to other things? Mm-hmm. In addition to that, I think just looking at the data is helpful. If we're talking largely about momentum-based trades, this is silly to say, but it's just pick the one that's going up the most.
Yeah.
If your trade is, I'm trying to make money between now and the end of the week,
or the end of the hour.
Yes.
It's
right. There's nothing more to it than that.
Yeah, because these are small for the most part. They're very, very small cap.
Yeah, we can sub 5 million in some cases.
Yes, and so $1,000 on a $1 million coin or $10 million coin is significant, and when that momentum and liquidity comes in, it moves quickly to higher prices, and it could be gone in the a snap of the finger. But
so I think it's looking at some of the data sources that we've talked about before. It's CoinMarketCap, it's other areas of the market. More recently, when it relates to, or as it relates to AI agents, one of my buddies pointed me to something called cookie.fun. Now, I know it's like, what the hell is that? This is a dashboard for all of these AI agents. It tracks them. So in the same way that we've used CoinMarketCap, we've talked about Token Terminal, we've monitored fundamentals around other projects. This is going to show you mind share across social channels, primarily X. How many mentions? What's the conversation like around this? Is it bullish? Is it bearish? You can read into that as much as you want. How real is any of it? I don't know. But these are some of the metrics that you can start to look at to gain an understanding of all the noise. Where's the signal? So cookie.fun is one way to look at these agents. Sometimes something just goes up because it's brand new, but it only lasts for hours or days. So it's definitely more of an art here, but I think it's just trying to pay attention to what's happening in the space, and starting with Twitter, curating a group of people that you follow, or bots even nowadays, that are analyzing the space and offering an opinion, and then kind of sorting through that. Probably also want to take multiple positions, where versus what we're doing, it's like one shot, we lost. How do you spread that capital around, where if any one of these goes down a little bit, you're still putting dinner on the table, but if they go up, you could get a 50x.
You should be putting dinner money into me.
Correct.
Okay,
Exactly.
for everybody out there, please eat instead of meme coining, okay? But I get your reference.
100%. Yeah.
Yes.
So that's kind of the way that I trade it. It's largely for fun. Again, portfolio is mostly Bitcoin, ETH, and Solana. But with some of this stuff, how do you pick the right ones? Just be aware of the conversation. What's everybody talking about? And it's it's a little bit of a game of hot potato. Greater fool theory. Mm-hmm. This stuff is very early stage, very interesting ideas that, while they might be real in terms of the tech and are somewhat real today, those ideas are bid up to multi-billion-dollar valuations seemingly within a week, just given how quickly this mechanism can allocate capital on the internet, which is just wild to see. And then that takes me to one more point I want to make about what this is, because I think that's really helpful for people to understand. Yes, it is cartoon characters and memes and internet culture and the financialization of that.
Yes.
But it's also a very interesting mechanism for capital formation. So in addition to the memes and some of these random things and these platforms that basically allow anybody with some familiarity of this to just launch a token, to launch an agent, etc. In addition to that, you're seeing capital form around ideas that I think are very meaningful. So you have research projects around curing specific diseases, or to some extent drug development, that are ongoing. And you're going to see more of this happen over time, where you have these DAOs, or decentralized autonomous organizations, that have maybe a real world purpose, but it's tokenized, and people want to participate in it, not just because they're speculating with their capital. There is a degree of speculation, obviously, but because they believe in it. In the same way that you have people that are almost fanatics about companies, you can have people that believe in causes, and because those causes have, in a sense, been tokenized, you can participate that way. So that's what this is capital formation. And that's why it's also hard to stay on top of, because this thing that started as a meme, but was so interesting to people and it exploded, now has $1 billion valuation and is worth something, can go out and hire a development team to actually execute on a roadmap.
Yeah.
Right? There might be something tangible there. A lot of it might just be absolute vaporware.
Yeah.
But that's what's happening on chain.
It's crazy. You can basically, the speed at which you can actually create something, because it's actually, I mean, Doge is probably the simplest, easiest one to kind of put into that context, because it was a meme. It was a nothing coin, and it's, it has no capped supply. It should be nothing. Like, anybody can make that, and now it's kind of like created a world, so to speak, in itself.
Absolutely.
It is a brand. It is a, it's mentioned on TV. Like, it is a thing now that was created just by liquidity of people that supported it.
This is value on the internet. It's a value layer. It's alive. It's almost organic in that sense. And it's very hard then to predict how does it evolve. But we know that the path forward is an evolution of the technology, and of more so the application of the technology. That's what's just fascinating to observe, is just how quickly use cases kind of pop up, whether they're short-lived or not. That's continuous.
I think the investment in certain research in curing certain diseases is very interesting.
Good thing.
Yeah. And it's an interesting way to participate without having to go through a third party, like some bigger charity firm or something like that. It's 12 o'clock. We've run out of time. There's some questions in the YouTube chat. I need to check out the IBIT thing, but short answer, I chose IBIT. It's a $50 stock. It's a clean exposure to Bitcoin. Coinbase is not a clean exposure to Bitcoin.
Yeah.
Simple as that.
Yeah. Next week, we're going to try and dive into the Tasty Crypto app and do some stuff, some DeFi stuff. Maybe we'll take whatever is left of our bags and we could merge them together into a super bag.
Well, we could do that. We do have to pick something new, unless we're playing for a bounce in some of these others. It's quite possible too.
What do you think, Mike? You got anything new?
We can announce it on Twitter or something.
Yes.
I still believe in Chill Guy. And I was looking at some of these coins, and they're all down like 30% in the last 7 days. Like almost all of them. So we need the Chill Guy to pop off.
We need another $100 to double down.
Hey, we'll find some more somewhere.
Yeah, that's
please, sir. I guess someone's putting behind me. That's hilarious. A lot of people noticing that. That's just classic Tasty. We're out of time. Thanks for tuning in. If you got any questions, you can shoot us a note on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan's at Ryan Fred Grace. And you can go follow Tasty Crypto as well. I've got the Tasty Crypto live bash event pinned to the top of the YouTube chat. We also have the tastycrypto.com newsletter in the YouTube chat. Sign up for that for free. You can just go to tastycrypto.com and you'll see it on the homepage if you scroll down a little bit. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
We are back. It's still Monday, January 13th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to kick off what could be a pretty important macro week. We finally have our first full trading week of the year here. No holidays or planned days off, at least that I'm aware of. Ilya, CPI is coming up later this week. Of course, we have big shifts in Fed funds futures to talk about. Perhaps importantly, as we turn to the slides, today's a day where the U.S. 30-year real yield hits its highest level since 2008. Oil prices are spiking up. It's been too much for the precious metals to bear, which are succumbing to the weight of those yields and ultimately the U.S. dollar. Stocks are off their lows, but perhaps concentration risk is at play. We come to this year where NVIDIA is 16% of the NASDAQ, so its weakness here at the start of 2025 is certainly hurting the situation. But Ilya, on Friday when you and I spoke, we did an NFP review. We didn't have a chance to talk about the macro week ahead, so we'll start things off there on this Monday. The macro calendar this week isn't exactly light. There are a number of things that we should be paying attention to. I flagged CPI on Wednesday. Let's talk about this a little bit here because CPI has fallen off the board in terms of an important indicator, at least in recent months. It feels like the market wasn't pricing in the same level of risk if you look to the options market that it was, say, in 2022 or 2023, or even at the start of 2024. But inflation fears are back in focus now. Is this the most important report of the week, or is it just another piece of the puzzle that the broad suite of data this week will help us understand about the direction of the U.S. economy?
Well, I think it's both. So I think there's, of course, an assortment of releases. But that this is the tentpole one of that assortment, I think there's no doubt in my mind. I think speculative interest is almost certainly focused on it. Obviously, when you look at something like a PPI number leading in, that's less significant. Still important, still a piece of the puzzle, but less significant in the sense that you're probably not going to get directional conviction on that number. You're probably going to wait for the big CPI number to get some real movement. But retail sales later in the week, that matters. That's important. We saw the way that the markets responded to those consumer confidence numbers, to ISM last week, to NFP, of course, and there was a pattern there. There was a very clear, okay, now we don't want yields to go any higher kind of perspective from risk sentiment. Obviously, we saw markets much more, and when we say markets, I should say equities. We saw equities much more resilient to high rates and rising rates and changes in policy expectations, especially in the fourth quarter last year. They really only topped out in December, but of course the markets were already moving toward higher rates, moving toward reflation, moving toward diluting Fed rate cut odds from mid-September. There was a good 2.5 months there where yields were already starting to do their shift and really did the bulk of their shift from mid-September through November. By the time the Fed met in November, much of the adjustment was already there. This is sort of the latter part of it. The meat had already occurred, and equities were very resilient through that period. In fact, NASDAQ was belatedly setting new highs. But we see now that the vibe has changed as the calendar has turned. ISM was hot, markets didn't like it. NFP was hot, markets didn't like it. U of M was hot, markets didn't like it. So if we get CPI and retail sales hot this week, we can only presume the markets will not like it. But one does have to start to think, with only one cut being baked into Fed funds futures and basically nothing for next year, or at least down to about a 50-50 shot, and the Fed saying 50 this year, 50 next, might be getting a little stretched here. Where ultimately the point of failure is for yields, who knows? But if we get these hot numbers this week, maybe that gets us through some sort of a crescendo. Let's see.
The worst of both worlds, I think, would be hot retail sales and hot inflation. Perhaps you could categorize the best of both worlds as seeing like lower, a little bit, in line inflation, if not lower than retail sales. When we think about the ex-auto and gas prices are going to be shooting up here the next few weeks, folks, when you look at how oil prices and gasoline futures have moved. And so retail sales, you want to strip out the gasoline expenditures component, because if people are just spending more to fill up their tank, are retail sales really going up? No, people are spending more of their money just to get to and from work, drop the kids off at school, et cetera, et cetera. It's not exactly a productive use of the money.
Right.
So there's a lot to consider right now this week. I think perhaps what's getting overlooked, though, at least on the U.S. side, I pay attention to what comes out later on January 17th. We talk about those building permit figures, the housing starts. We're beginning to see signs within the housing sector that while construction employment is holding up, we're seeing builders begin to take steps to manage their inventory a little bit more, break ground a little bit less as the fourth quarter went on, to start new projects. And if you start to see construction or manufacturing, the two of them, roll over a little bit more considerably, that's going to be a problem for the broader economy. So building permits, housing starts, I'm paying attention to that. We haven't talked about the Chinese data, though. Chinese GDP is expected to tick up to 5% from 4.6 in the recent figure. Is that enough to ward off these concerns that we're entering a Chinese deflationary spiral, that we're stuck in one at least?
Not even remotely. The situation in China is terribly anemic. The GDP numbers here are going to be probably lagged. We saw quite a bit of a pickup in exports toward the end of last year. In fact, we just got the December set of figures, and there was a 10.7% jump in exports there. We saw that being foreshadowed in the PMIs when we were looking at those numbers for September, November. And already by December, they started to fade back away. The conversation in all of those releases was about how there's a run on various inventory stocks in China, mainly from U.S. importers trying to front run the tariffs and attempting to say, you know what, let's stock up as much as we can before it becomes more expensive. So this is likely to have given China a strong end of the year GDP number, or at least stronger. But the overall dynamics remain the same. There's no demand. And China keeps on inflicting this pain on itself with a bait and switch approach to signaling fiscal expansion. They keep saying they're going to do it. They keep creating speculation around events that maybe will bring the announcement and then flub those events. And so there's this every 6 weeks now for a few cycles, this dynamic where they go fiscal stimulus and the markets go, hey, and nothing happens. And so this kind of crying wolf over and over again, this is perhaps undermining the ability of Chinese markets to eventually get to a point where the investing audience says, you know what, it's time to bottom fish, because never mind that there's good news, there's not. But at least the stock of bad news may be exhausted for now. Let's see if we can bargain hunt a little. Markets front run reversals. They don't wait. But if China continues to create this bait and switch dynamic, it'll be very difficult to get markets to believe that the stock of bad news is out, because every time you promise fiscal stimulus, then don't deliver, you're creating negative event risk for yourself. And your audio's gone.
Sorry about that. If you're talking about non-Chinese data, you're going to have to think about some of the non-equity market futures, copper, oil, Australian dollar over the next few days. But this is a week where really all futures are going to be in play. perhaps even commodities, soft ag. We had the WASDE report on Friday, of course, but with China in the news this week, soybeans should be on the move. Energy, of course, going to be in focus. Metals, because of the rate story around inflation. So there's a little bit of everything for everyone. Today, we start off this week with stocks continuing to react negatively, at least they were reacting negatively, to some of the news from Friday, where it seemed like good news was actually bad news when it came to the non-farm payrolls report. The unemployment rate ticks down. The household employment survey shows workers reporting more jobs than what non-farm payrolls indicated. So the unemployment rate is actually coming down for a good reason. Wage growth is still firm, but it's slowing a little bit. But that's not really the story. It was that the U of Michigan Consumer Sentiment Report comes out with this huge jump in inflation expectations. Consumers clearly starting to think a little bit more about the tariffs coming down the pipeline. Today, we see real yields at the long end of the curve at their highest level since the global financial crisis in the 30-year. So the market is clearly clammed up right now. I mentioned concentration risk here because coming into 2025, and one of the risks that you and I discussed, Ilya, for this year in our December 23rd episode of Futures Power Hour, the big names are the big names right now. NVIDIA this year is 16% of the NASDAQ coming into 2025 at its peak. So obviously when you're having the pullback that you've seen over the past 4 days, it's going to be difficult sledding here in the short term. My question is, however, why should traders be looking at this time being different? Why not buy the dip like in 2023 or 2024? Whereas I think you're of the mindset this almost feels like a replay of January 2022 to a T.
Yeah. I mean, when you look at what's going on here, you can't be on autopilot. You have to look at this and say, well, just because it's bounced every other time doesn't mean it's going to bounce now. And if it does, then that's the time to buy it. But until it does, and until that's confirmed, there's nothing to say. And obviously, when I look at this, I'm not looking at the individual names. I'm looking at NASDAQ. And what I see here is NQ futures taking out those swing bottoms from December, issuing a lower close through them. Now, we did not take out the absolute lows, the wick lows, and we may hold there today. And if we do, then okay, maybe we get a little bit of a bounce. We did, as you're showing here, take out those lows on the S&P and seem to have completed what is a pretty ominous looking head and shoulders. It's a little bit cocked over to the side, but the spirit of the pattern is there. And if you look at it on, let's say, a weekly chart or even a monthly, you can very clearly discern where that head and shoulders is. And that opens you down to below 5,500 if you did if you did the extrapolated measured move. So you have to be very careful here. Very careful about assuming that something has bottomed only because it's gone down a lot or it's hit an interim level of support. I could see a bounce here. I think we've done a lot of damage. I think the market is, having made that break in the S&P, possibly going to try and find a way to retest. But that means maybe a move back to 5,800, maybe a move back to 59, even 6,000. What it doesn't mean is there's a buying opportunity in my mind. If you do get that bounce, unless you clear 6,000 with a very convincing move, that's the kind of bounce that allows you to sell at a better level.
Just looking at the continuous contract here, it's a slightly different setup than what you see in ESH5. Nevertheless, left shoulder, head, right shoulder being carved out. We can just flip back and forth as we carve out that right shoulder, the evening star candlestick pattern, a 3-candle topic stick pattern against the underside of the uptrend from the August and November swing lows.
Textbook.
It's not great. It's not a great setup. But when you go back to the continuous, if we want to use the swing low on we'll call it November 19th, the low that you have here on December 20th, a swing low right around January 2nd, somewhere in that area. That does give you a measured move, as we wrote about last week on the tastylive Traders blog, potentially in the 5,600s, maybe even lower, depending upon where you draw your neckline. And obviously you're not trading the continuous, you're trading ESH5. So if you're looking at 58.65 or 59.15, you're going to get a slightly different target. But either way, this is the line in the sand. This is where bulls need to put up or shut up. This is the week that it'd have to be done on a technical basis. There hasn't been a huge spike in vol along the way. We can slash on over to the spot VIX. It's currently sitting at 19.54 right now. And note that while we do gap higher over 20 to start the week, we have come in. We're, off nearly 2 sticks over the course of the day. So that's not a nothing move in volatility. And if that continues to play out over the course of the session, it sets up a really interesting move through the middle of the week where CPI, if it doesn't come out and it's not world ending, it comes in line or a touch softer, why would volatility stick around? These fears around the Fed potentially not being able to cut, or dare I say having to hike, which I really think is the market's fear here, right?
Yeah.
That the Fed is going to have to reverse course. That would be the problem. So this is a tough spot. I would point out that the last few years, as we've looked at in the inflation trajectory dashboard that we share every few weeks, the November, December, January, February time period, there's been this kink in the data where even if you get a consistent month-over-month run rate of about 0.2%, which is wholly consistent with inflation moving back towards a 2% goal over the course of a year, you'd still see year-over-year price pressures go up this particular year in December, January, February. That's why when we look at calendar right now, if we were to go back for a quick second here, you can see that the month-over-month rate is 0.3%, but that still means the year-over-year is going to be bumping up even higher from the previous reading right now. So do Fed officials look into that year-over-year? Probably not so much. They're probably going to look through that and look at the month-over-month. So if the month-over-months on the PCE, the core PCE, headline inflation, core inflation are 0.2, 0.3, and not just 0.3. It's not like a 0.3445 reading. And so it's not getting rounded up to 0.4 just by the sake of the 100th decimal point. You know what? The market can continue to relax. Does that mean it's clear skies? I don't think so. We've shared the seasonality charts for the start of the year. The past 10 and 20 years, January's been in great conflict where 10-year period it's up, 20-year period it's down, and vice versa for both the S&P and the NASDAQ. And over the past 10 and 20 years, the market basically trades flat through the Ides of March 15th. And that's when the rally starts to happen. Q1 has been pretty jagged. So if you're a bull here, what do you like? Nothing. A lot of patience still, waiting on hands, waiting for the opportunity. It may come at 5,500 or 5,600. And if we start to see a head and shoulders break, I'd be happy to buy out of the money puts down in those target areas. But for now, we're dancing along a neckline. We've seen a 5% correction in a number of key names, including NVIDIA. And for most asset managers, buying NVIDIA on every 5% dip has been the single best long-term asset allocation strategy in recent years post-pandemic. So you have to think there are going to be some dip buyers here initially. They just need a reason to put it in. I don't know if we have it this week yet. We'll see what inflation brings on Wednesday.
And indeed, when you sort of think about that March timeline, we were talking about China moments ago. The National People's Congress is March 5th. And the conversation around that, Reuters has some reporting from quote unquote people familiar. Who knows what that means? But they have an idea out there that what China is going to do is they're going to increase their deficit target from 3% to 4%. That 1%, mind you, is 1% of the world's second largest economy. So it's a lot of money. And what we're talking about then would be the signaling that they're prepared to do a big splash fiscal stimulus. Will they? Who knows? What that stimulus looks like, will it really be feeding more demand into the economy? And can they even swing that? Unclear. One of the biggest issues for China is that while there was an inflationary upswing in a lot of the other global economies, obviously the US, Europe, Japan, Australia, you name it, Canada, almost everywhere. In China, that didn't happen. But while we worry a lot about what that inflationary spike has done to the level of prices, to affordability. One positive thing that it did was for 2 years, debt loads got inflated down. And so a lot of what was spent in COVID years actually was helped along in terms of managing debt, because that inflation helped for 2 years running with a reduction in debt to GDP ratios everywhere but China, where actually debt to GDP ratios rose. They rose last year, they rose the year before, and the problem might be that China doesn't have fiscal room, lest they engineer the ire of markets to really go for a big fiscal stimulus. But if there was going to be some sort of a turning point, March, you get the first big quarterly Fed meeting with updated forecasts. You maybe get a more expansive fiscal stance from China. That kind of gives you a view to some sort of an inflection point. But until then, there's a lot of time, and things can take a lot of incoming before then.
Think about Japan's lost decades. Japan's population peaked in 2000. That's when the population technically peaked in 2008. Their birth rates start declining in 2000. You know, if you have a shrinking population, it's very difficult to grow the pie of aggregate demand. And that's kind of what China is starting to face down the pipeline. It's the same problem that South Korea faces, that Germany's facing, Italy's facing, right? A number of Western developed countries are facing right now because of those declining birth rates. And China's falling into the same malaise that, we've seen. Yeah, we've seen how it's played out with Japan, so it becomes a huge, significant problem. The Dow Jones here, I've seen some people on Twitter say like, oh, look, the Dow's up, so that means everything's going to be up today. The Dow is obviously a crummy index. We don't really talk about it. I certainly don't trade it. UNH today, the largest component of the Dow, alongside, I guess, ridiculous name of replacing Intel's out now, so thank God for that. But I suppose if you're removing dead weight like Intel, then the Dow's probably going to go up. Either way, UNH up 4.73% today, so the Dow Jones, it is bottoming here, perhaps. I wouldn't say that myself. It's an area where the market, in these very thin futures contracts, 86,000 contracts traded, nowhere in the neighborhood of ES, for example. You can see this pivot zone around here. You'd have to see a bit more recovery before you see any sort of hope. Is the breadth an issue for you right now in this market? I frequently look at the 20-day or 200-day moving average for breadth. Less than 50% of stocks right now in the S&P are above their 200-day moving average. That's the lowest it's been since November 2023. Perhaps this market has already gone through a bit of a correction beneath the surface, and we're just due for chop here at the start of the year.
That might be. I mean, as you look at where we've landed now, if you had any pretensions about looking for a buying opportunity in all of this and thought this is not really a top, this is your last gasp. There was a lot of damage done last week and a lot of key technical levels taken out. I mean, that same head and shoulders that we just saw on ES, we're looking at it here on the Dow. It's a little bit differently appointed, but the spirit of the pattern is there. And you broke key levels last week. Now, maybe you have a ledge to cling your fingers on here for a few days. But if CPI comes in hot, that's it. You've probably lost that ledge. If CPI comes in line and then retail sales comes in hot, probably lost it again. So the interesting situation here now is what happens and to what extent might the markets give you a fake out over the next day or two? Because over this last week, obviously there was lots of pain that was delivered to equities. The event risk this week is, in my mind, clearly CPI first and foremost, given how the Fed outlook has dominated markets as a catalyst. So in front of that report, you are likely, I think, and I talked about this on the last call with Vic and Tom yesterday, you're likely to get some corrective action, or at least to have some room for corrective action as the markets get back to neutral and say, okay, we extended last week. Are we going to front run CPI? No, we're going to probably take any tactical short-term exposure that's worked and scale it down some and de-risk because we don't want to give up that money.
Right.
And let CPI occur. And if you get a new kicker, la-di-da, we'll go again. So there's likely, in my mind, room for a bit of an upswing here today, tomorrow. But to get lulled into buying that bottom in front of the event risk that might make that pop look like nothing more than a short-term correction, that feels like a recipe for disaster. So I would say you need to get serious technical ground recovered here, and you probably need to get to the other side of event risk to make sure that that's real.
So one of my favorite market bottoming indicators is the number of stocks trading above their 20-day moving average, the 1-month moving average. Historically speaking, when you get below 8% on a daily close, you're typically looking at a short-term bottom in stocks. The last time that we saw that reading on a closing basis, you have to go back to Thursday, December 19th, which if you got long on Thursday, December 19th, you had a little bump here for a few days. Granted, it didn't hold. Before that, the prior reading where you see the number of stocks at 8% or lower in their 20-day moving average comes in April. This is not the continuous, so it would probably be better served to look at it from that point of view. And I think I have it marked off here on the chart, April 25th, right? So that was a pretty fortuitous point. What I'm getting at is maybe this is a flush, right? Maybe that's what the market's about to do here. Maybe it's flushing out, because I have seen this work out a number of times where blindly, okay, well, when the market's this exhausted, you're probably near a near-term low. It's worked out for me so many times in the past that I'm waiting for this to occur. Maybe it's this week. Maybe we get this big pin bar, right? I would love a candlestick on the weekly chart where we trade lower by like 50 or 100 ES points, and then we recover back to like 5,900. That would be awesome. We get a flush out. We get the number of stocks below the 20-day. You get that big pin bar. It's a head and shoulders pattern that fails to break out with that failed neckline. You get your exhaustion signals, CPIs in the rearview mirror. You have something to work with. But it's not for a move necessarily back to 6,200. It's for a move back into, say, the 1-month moving average. Because I would point out that ever since we broke down in mid-December, we've had 2 attempts to get through the 1-month moving average. The first one was greeted by that evening star candlestick pattern, which is a topping pattern. The second one here, we couldn't really bear the close through, and we've been trending lower against it. So give us that on the upside before we get really pulled up. Let's start to see the slope of some of these moving averages change. There's nothing really here to work with just yet. Ilya, what do you make of the fact that the market has now erased all of its gains since the election? That seems to be something that piques my interest as well. ES and Q, RTY, they're all below their November 7th trading lows. Is that a sign that maybe this is the end of the Trump bump? Or should dip buyers, again, look to that as a reason why maybe there's a rush of capital coming in? People who missed it are now going to take a swing at it.
I mean, this is essentially one of the many lenses through which you can basically see what is the same sort of bottom line, which is the markets were clearly resilient despite rising rates already into late September, October, and by early to mid-November, most of the adjustment was already there. So, and obviously we've continued to move in that direction, but with very different consequences when it comes to equities. So, looking at the election's impact there, it was a kicker of sorts, where you got a clear outcome. You had a clear kind of overlay of overall policy direction. So if the markets were saying, okay, what the Fed is doing is inflationary, and now you have maybe a disruption in labor markets through deportations, maybe a bunch of tariffs, which are just a tax on imports, a sales tax on imports, effectively. And so that's inflation too. Both of those things are inflation. All right, well, that's just more in the same direction. It seems like all of that at the start of this year has started to buckle markets and to overwhelm the idea that when we saw this in some of the comments made in the December FOMC minutes, where some of the policymakers noted that in surveys of businesses, there was both concern around tariffs and deportations, but also optimism around deregulation and tax cuts. And there was a kind of balance there. Well, clearly the markets are saying that they care more about the risk and care more about the rates than they do about the positive sides of that story. And it's because the positive sides of that story would also be inflationary. They would be good inflationary in the sense that they would boost growth. But the markets don't want more growth at this juncture, clearly. The NFP number was more growth. The ISM number was more growth. And the markets are saying, hey, okay, that's a good amount of growth. You're overheating the pot now. And with that, you look at what sort of the Trump trade was and what it is. I don't think it's that the markets are becoming pessimistic and the thing is fading. No. I think they've just concluded that all of the elements of the Trump trade are inflation. And whereas last year that was fine because the onus was not on what that means for rates, but on what that means for growth. And clearly, in the response to ISM, in the response to NFP, in the response to U of M, the markets have a different lens on things at this point. So all those things that looked like, oh, good, this will ramp up the economy, all of those things now mean, yeah, okay, they'll ramp up the economy, which will ramp up inflation, which we don't want.
Yeah, I'm not surprised that the inflation pass-through was coming to light. When we've heard all the talk, we know the data. If you apply a blanket tariff across the board, it's going to raise the cost of goods right now. Just there's no two ways around it.
No.
If it's a negotiating tactic and ultimately the tariffs don't come, then the market is overpricing a risk that never materializes, which means it's going to bounce back. Ilya, one thing before we turn to bonds here and we start to zip through the rest of the sections here today, I would point out that one of my, again, preferred things to look at when we talk about market positioning is how far we are away from the 1 month moving average. A number of times I've referenced, S&P is more than 3% away from its 1 month moving average. It's probably a little bit too extended because when we look back historically in the bull market, when we've gotten more than 3% away, you usually have a setback for a week or so. The same thing applies on the other end, right? And I would point out here that ever since we started to break down, when we've been more than 3% away from the 1 month moving average on the downside, it's been an area where the market's bounced. It hasn't been the low, obviously, because today we just plumbed new yearly lows. But we were more than 3% away on December 20th. We were just about 3% away on January 2nd. And this morning at the lows, we were 3% away. So this feels like a market that's kind of slinking, right? We got to the 3%. Maybe we pull back to the 1 month. If we do, and we start to fail there, I would be expecting another attempt down to new yearly lows. But if we can get through the 1 month on this rebound, that's where you start to approach things differently. The characteristics of a trending market right now are in place, but it's trending to the downside. So with that said, Russell, as we wind this out and go to bonds, we talked about the bear flag on Friday. We never get the recovery through the swing lows that we had last October. We closed down below 2,200. We see today it is a bit of a pin bar, but bear flag just breaking out. Do you feel confident until you're back through like 2230 or 2250? No. So if you're looking at this market, is this a place to sell puts? No, rather you would wait for an opportunity to get a rally to perhaps sell a call spread. This is just not good risk to reward right now, but this could be, part of a multi-stage breakdown. And this is the time of the year when the markets tend to be choppy. So bonds here today,
I took my short off there today. I had 4 days to expiration. It was
excellent
a great run. Lovely. I took it off. I've not put it back on yet. Thank you. But I'm looking to put it back on. I just think maybe we have run ourselves into a little bit of a stall here for a few days. And then CPI gives us the next kicker. I want to get back short. I just think maybe I'm going to get a better spot to do it.
Bonds are continuing to struggle down here. We saw a little bit of life earlier in the day, but it's not really lasting all that much. Again, some lower wicks that are coming into play, but any semblance of confidence, I'd say no. When we looked at this from just going up the Fibonacci scale for the moving averages, trying to find and identify the characteristics of the market. In ZN and in ZB, you've seen, in ZB at least, one close above the 1 week moving average since the middle of December. So would you have to see more than one to feel confident in a bounce? Yes, I would think so. This is clearly very negative momentum right now. You mentioned
the stair step is very clear here. Until you break the stair step, you're asking for trouble.
Right, and the continuous ZN contract, the move off of the October 23 lows, we'll have to go back to the weekly chart here. I mean, this is clearly broken. If there's a place for it to bottom, last April lows kind of make sense because last April lows are at a time when the market has effectively eliminated any Fed cuts over the remainder of 2024, and that's when you start pricing in the 0.3% chance of a hike by the end of last year. That obviously never materializes. May 1st.
And this is where the data starts to cool. Yeah.
Right. May 1st, the Fed comes around and says, don't worry about it. We're not hiking rates again. And so the data starts to cool. The Fed says they're not hiking rates. Oil breaks because Iran, Israel cools off. So the market measures of inflation back off. It was kind of the perfect storm for a bond rally or a notes rally. We're at those lows again, and we're at such a significant low point in pricing for Fed funds expectations. You know, one has to ask, how much further is this market going to break down from here? Because you are now entering the world where any further erosion in the SR3s and the SOFRs, you're talking about hikes coming into purview.
Yeah.
That seems like it's out of bounds for where we should be thinking about the economy right now.
Agreed. I mean, I think the Fed has very clearly signaled that they have an easing bias. I think they have signaled very clearly that they did a kind of big shot readjustment last year. And when you read the December minutes, you get the sense that, okay, they feel like there's been a significant amount of restriction that's been taken away, and now they can move very gradually. So we're looking at one cut, maybe two. They're going to be spaced out. So maybe you're looking at December and January, or June and January. Maybe you're looking at June and December. Maybe you're looking at June and November. But somewhere toward the middle and somewhere toward the end of the year, you're going to get something like a 50 basis point move. That seems to be the thinking at the Fed. And obviously, these things are not perfectly precise. Maybe it's June or July or May, depending on what happens. But somewhere in those meetings clustered around mid-year and clustered around the end of the year, the Fed is looking at cuts. If you're looking at what the market is pricing in currently, you have 26 basis points for this year. That's one cut. You have 19 basis points for next year. That's most of one cut. That's 50 basis points through the end of 2026. Very different from what the Fed envisions. Now, while the data has been hot, you do have to ask yourself at some point, as you're painting here, if you get to something like 17, 18, 15 basis points for this year, have you at this point told the Fed they have to stop? And if you're telling the Fed they have to stop, is this one of those things where the markets, as usual, overcook and overshoot in a speculative direction? We saw this last year. The Fed ended up being wrong by only 25 basis points when it talked about last year in December 2023. The markets ended up being wrong by a whole lot more, depending on when you look at them. If you look at them at the beginning of the year, they were wrong by 2 in a dovish direction. If you look at them 6 months later, they were wrong by 3 in a hawkish direction. So it's going to start to look like the markets are on that different time scale than the Fed is. The Fed is much more gradualist than speculative forces. So that would be the point at which I think markets start to look and say, okay, hang on a minute now. Is the Fed really going to change course fully? Are they going to start talking about hikes? It's not out of the question, obviously, but the bar is going to be high and the markets are going to want to stress test that idea. So if you were going to look for a bottom in bonds, if you were going to look for a top in the US dollar against things like the euro, things like the pound, getting into this kind of territory is where you'd look. But as ever, you need the price action to comply. And until it complies, there's really nothing to do about that except sit there, look, and go, well, I'm certainly not chasing bonds lower. Now let's see where I might buy them. I'm certainly not chasing the dollar higher. Now let me see where I might sell.
It's hard to say where the bottom is, in part because this is, unless the Fed cuts or recession arises, the market is, more or less doing what I would expect it to do in the reflation Trump wins scenario, in part because it's kind of what happened in 2016. Dollar is up, yields are up, stocks are up until Trump came out in January 2017 and complained that the dollar was too strong. But then the weakness in the dollar kind of helped pave the way for risk assets to rally. So why is volatility down in 2017? Currency is getting weaker. It's supporting earnings. The market is adjusting to this new reality. Back in September, one of the guys who I like to follow on Twitter, who's a bond trader, goes by @FullCarry at Bradford. He tweeted out, I don't have a definitive answer why Trump is negative for USTs, but it all started in 2016 and being reinforced this election cycle with his tariff plan and market reaction to the Biden-Trump debate in June. And I said, I'll take a swing. The base case scenario for the election are GOP trifecta or Dem presiding over gridlock in the former, escalating deficits and debts coupled with tariffs raise structural inflation, more UST supply is needed, plus Fed's terminal rate would be higher than currently priced. This was back in September. So now the market's done all this, right? The Fed's terminal rate is priced higher than where it was back in September. We have priced in the tariffs. Bonds and notes have done what they should do in the event of all this playing out. The question is, how far has that gone? Are we priced in yet? Has this event run its course? Because if we're talking about a world where the Fed is thinking about rate hikes again, that is such an exceptionally high bar. The market is uniformly always wrong about the direction of Fed cuts or hikes. I'm going to pull it up later for overtime, but we'll look at the market consensus for interest rates versus the Fed's actual path of rates. And you'll see that the market always prices in more rate cuts than actually materialize or more hikes than actually materialize. The bar is really high for the Fed to turn course because it doesn't want to admit it's wrong. And if it admits it's wrong, that means it has no idea where the economy is. And that means assets across the board are potentially mispriced because the future path forward for interest rates and borrowing costs is unknown. It's a 2022 all over again. And that obviously takes down equities and could be a problem, just like it was in 2022 for metals. Everyone thinks about inflation and gold and silver being these inflation hedges. Maybe I would digress or disagree with that. But we think about the way that metals have been performing. I say deja vu, not just like 2022, but because of what we saw just a few weeks ago. A few weeks ago, back in November, gold and silver were holding up and the dollar and yields were running up. And then Trump gets elected and all of a sudden it's too heavy a burden for gold and silver to shoulder, right? The albatross breaks the neck, higher yield, stronger dollar pushes weakness into those precious metals. We had a run up here in gold and silver last week, even as the dollar charged higher, even as yields turned higher, and it looked like everything was fine there. Friday came around, gold tries to break out, can't quite break that downtrend. Silver prices, as we discussed, that was a really ugly wick. Today, we're back on our feet. So I don't have a silver position on. I've been waiting, watching, trying to get one on. You were talking about how the risk to reward was in getting long on Friday wasn't great, and you'd prefer a full pullback towards 2650. So with today's price action and still relatively benign volatility, are you concerned about operating on the long side here still, or hey, you know what? I'd like to buy back in at 2650, so a little bit of weakness is welcomed.
I think you look at this and you get the rejection at the top of the triangle, and you can't get cavalier about that. I mean, yes, you're coming into that former support, current support, former resistance at the range where you had that consolidation from, let's call it mid-December. There's that big wick low and gap. You fill that gap, and then you sit around basically for the tail end of last year and digest it. We're retesting the top of that digestion as support here. Maybe this is where you hold. But for now, what you have is a series of lower highs. I think you need to get over that in order to start to look like something is compelling and really starting to form in earnest. Because with yields powering higher here and sentiment coming off, it's really difficult to want to be a buyer of something that yields nothing and responds negatively to risk aversion. Things are not looking great if you're looking at just sort of the fundamental and the structural backdrop. Now, if stocks find a way to bounce this week, because let's say you get a CPI number that isn't awful, you get a retail sales number that's broadly in line, nothing goes terribly, which is to say nothing looks overheated, then you get into a situation where you say, all right, if nothing is overheated, maybe this is where bonds start to bottom a little, yields come off a little, risk returns a bit. And if that happens, yeah, you could get silver higher. But you could just as easily get hot numbers that don't do that. And so if you have to make a bet, I think you let the bet occur where the market tells you it's made up its mind. Now you're in the square middle, right basically on the axis of what is a triangle that may be a top, maybe not a top, maybe a descending triangle if you consider it with that gray line there as the neckline, and that would be a bearish setup most of the time. Sometimes it's a top, sometimes it's continuation, but a descending triangle is typically something with negative implications. Maybe what you're really setting up here is a move through the 2600 level. Now, I'm a little long here, in fairness. Not silver, but gold. And I'm looking at this and thinking, okay, let's see. Because there were elements for gold specifically, not silver, where Chinese reserve buying made other things irrelevant. And so once we saw, I think, in November's numbers, and we haven't gotten the December ones yet, we then have a situation where they've restarted buying. Maybe that's the saving grace for gold here. But I wouldn't put anything new on. And your sound is gone.
Sorry, I'm sneezing. I don't want to interrupt you. So we have copper on here still. It's the only metals position that I have, which, the pin bar on Friday wasn't nice, but we're holding up. So until we get a break of the 1 week moving average, I'm going to keep this on short put spread against the 405, 410. 4054. So that continues to work nicely. Ilya, crude oil today, that's surging $78.87 a barrel. So much for drill, baby, drill. You can't drill, baby, drill here in America right now. It's just not how our system is set up. were very productive, as it were. But is this a place to fade the move is the question, because we've now rounded into effectively the highs that you have back in April, those that you have in July. The difference being that those are sparked by geopolitical concerns. So short-term catalysts that ultimately lose their vigor. Ilya, I am not going to try to stand in front of this just yet. I'm liking that volatility is bumping up here a little bit, though. And I think it goes to stand to reason, or at least underscores why when oil is trending higher but vol is low, don't try to fade the move by selling calls. Because if the market goes up quickly and vol expands, as the oil-vol price relationship typically plays out, then you get double tapped. So I was looking at this through short MCL or buying an out-of-the-money put. I didn't put anything on. I'm grateful for that because this is broken out. Some ideas are better left on the cutting room floor. Other than that, natural gas here is down by 2.41% after surging up to a high of $4.369 earlier, now back down to $3.894. Westwater got me in this last week, so I'm grateful for that. We still have, it's actually in the NGH5 contract. There's still 43 days left to expiration. This being a triangle breakout that just hit the highest levels effectively since June and is now backing off. I'm content with letting this play out as the bottoming moves along, though. Quickly, do you see anything in energy that piques your interest yet? Do you want to fade oil here, or do you need to see the momentum break and different volatility levels before you get something on?
I need to see it start to respond to these highs. I mean, obviously, it's hanging out near significant levels here from mid last year. We're going to have to figure out what happens here. I want to be short. I don't think that crude has miles to rally. But until it actually stalls somewhere and shows some weakness, I'm going to sit on the sidelines and let it do its thing.
Gas prices probably going up about 20 cents from where they were. If you think about how the market dynamics move over the next month, they should be up 20 to 30 cents or so nationwide. Gas, actually, notice here, gas futures are not moving up as much as oil is, which is a pretty good thing, I think. And again, speaks to the market dynamics. If this was a demand thing, gas futures would be doing better. Today's all about the king dollar and the yen again. Interestingly enough, this morning, not so much as the day's gone on, because we have seen stocks attempt to reverse a significant portion of their losses. We were looking at a Japanese yen and a US dollar that were the only two currencies that had turned positive on the day. Ilya, it's a 38.3 IVR. If we're going into another correction type of market, why not hedge our risks with a long out-of-the-money yen call?
I have a little bit of long yen exposure. I have it in spot just to keep my sizes down because 6J is a little large for me. It's getting close to something that is confirming. I think the other one to look at is the Canadian dollar. Both of them not really coming off the way that, let's say, the euro or the pound are. And both of them, I think, give you opportunities. If I was going to look for a place to do this in the futures in a comfortable way, I might look at MCD, which is the micro CAD USD
not
future.
McDonald's.
Not McDonald's, yes, slash MCD. If you can see this range here, you get a very clear sign of where the trigger is. Now, I bought a bit already. It's a low margin requirement type of instrument, so you can just outright buy the micro future, which is what I've done just on risk reward grounds. If you're wrong fast, and if you're right, then you have lots of room to go. So the risk reward is good. Something like 6J, I think, gives you opportunities for verticals if you want to do that in a risk-defined way and go in small. Or you can look at spot to manage sizing, which is what I've done, because you got to be careful here with that one. It's very yields sensitive, and then obviously going the wrong way.
What's next on the calendar for tomorrow? You mentioned the PPI report, Producer Price Index. This time around, it's the appetizer for CPI as opposed to the dessert. Maybe that makes it a little bit more market moving. We do have Fed speeches over the course of the day, just two of them, but New York Fed Williams president is speaking, and he is one of the more important policymakers. Likewise, API crude oil stock change later on in the session. As we do at the end of every one of these episodes, we do a brief bit of education. We head over to tastylive.com, top banner, Learn Beginner Futures, where we can find this great coursework put together by the fine folks on the Tasty Live research team. For traders of options, the notion of an expiration date is already a familiar concept. But if you've only traded stocks in the past, this concept's probably new to you. When thinking about futures expiration and the associated expiration date, the most critical thing to remember is that the life of a futures contract isn't infinite. Each futures contract has a known expiration date, and you need to close that position prior to expiration. When we talk about the futures market, the vast majority of futures contracts aren't even held to expiration. In fact, 98% of them are rolled off or closed prior to that date. So if you're trading gold or oil, you're not going to need to worry about it ending up in your driveway and explaining that to your spouse. But when you talk about the methodology for looking at these various tickers, it's easier for traders to see tickers that have the year and the expiration date attached to it. So for example, if you're trading ESH5, you are trading the S&P 500 expiring in March, H in 2025. You need to know those things, Ilya, because you never want to be caught holding the bag or having a futures contract actually go into your pocket and all of a sudden you're long the underlying here. So just remember, when you are trading futures, make sure you close that position or roll it before the expiration date. Here at Tasty, we look at 45 days in, 21 days out. So that way you move out of your position before you roll over the decay curve. You can learn more about the decay curve on tastylive.com, top banner, Learn Beginner Futures, or any of the options content. Or, of course, to learn more, click the link here on the bottom of the slide. It will take you there directly. Ilya, we'll be back later on today with more overtime. You, me, and Dylan Radigan after his foray into celebrity on CNBC. We'll ask him about that. Of course, we have a big macro week ahead of us, so you and I will be discussing the markets numerous of times here over the trading days ahead. So be sure to come back. Until then, though, Dr. Jim Schultz is here with From Theory to Practice. Stick around after the break. For Ilya Spivak, I've been Chris Vecchio. See you soon.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Forbes called us best online for options trading with stockbrokers.com. We're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Understand I got a plan for us. I bet you didn't know.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we're trying to do. I'm so glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube if it is real time. If it is Monday, January 13th, maybe? Yeah, maybe around those parts. Monday, January 13th, 2025, right around 2 o'clock Eastern time, then you can join your brethren that are also watching the show. You can celebrate if you're a bear, maybe commiserate if you are a bull, and it is a good time had by most. And you can also ask me questions, and I will get to the questions right around the halfway mark of the show. We do a little Q&A. I typically get into the portfolio first, and then we get into the questions and wherever you guys want to go in the second half of the show. So thank you guys so much, because we really could not do any of this without you guys. So guys, I need to know, because I'm taking a lot of heat. I'm taking a lot of heat from people that are supposed to be my friends, people that are supposed to be my coworkers, people whose opinions I used to value and respect. Let me know in the chat. Is Mike Evans a Hall of Famer? Now, the correct answer is clearly no, but I need to know from you guys who's got my back, who's on my side, because we have established that Mike Evans is the Frank Gore of wide receivers. Frank Gore ain't getting in. Mike Evans ain't getting in. I'm sorry. I don't make the rules. But let me know in the chat where you guys are at from a Mike Evans standpoint, continuing on the skinny on options abstract applications from this morning. But guys, the market, this is not good. Josh, go ahead and bring us in here to the market, man. This is, man, I don't know, guys. This is not good at all. Okay, EMA S&P's down 10. It was a little more dicey, or even dicier a little while ago. EMA S&P's down 10. Risk-free instrument down 140, which is also sometimes referred to as the NASDAQ Futures Index. Extremely high-risk product. You got the Boomers up 230. Then you've got the Russell 2000 Futures Index down 6. And, yeah, it was pretty weak earlier. The market has recovered a good bit in just the last little bit. Wow, look at gold. Man, somebody check on Peter Schiff. Somebody check on the Shifties out there. There's only a couple of them, so you should be able to locate the entire group. Gold down 38. Wow, that's really – what's silver doing today? Where are my Hunt brothers at? Silver's got to be getting just absolutely slammed. Wow, silver down $1.09. Man, that's a big move for silver. Silver down over 3%, almost 3.5% on the day. And then you've got gold down, looks like almost 1.5% on the day. Wow, the metal's getting smoked today. You've got the British pound is down. You got the euro down. You got volatility. Market's so weak. Volatility's even down. Volatility futures down 47 cents, which is a little bit more unusual, because typically on a weak market we would see volatility up. The VIX was higher earlier this morning. I think it maybe was even over 21 at one point, but we'll take a look at that here in just a second. The Bitcoin bros, whew, man, check on your local Bitcoin bro too. Down $1,800, down to 92,000. I was assured by the internet that not only A, is Mike Evans a future Hall of Famer, which is clearly false, but also B, that once Bitcoin got to 100,000, the next tick was 150. Man, I don't know. They missed it on Mike Evans. They're missing it on Bitcoin. Man, I don't know if we can trust the internet anymore, guys. I think it might be over. I think the internet had its run. But let's take a look at the VIX here. The old VIX. Yeah, you got the VIX down 20 cents now, but we were higher earlier. We were up over 21, I believe. Let me move my little box here. Yeah, look at that. Wow. You got the VIX. If we just kind of zoom in, wow, we were up to almost 22. We were actually at 22 earlier this morning. You got 2204 is your high tick. And now the VIX is all the way down to 1935. You know, it's interesting though, because the market is weak, right? I mean, you still have EMA S&P's down 8 or 10 or whatever, NASDAQ down 140. You still have a weak market, but volatility's down. Volatility's come in a little bit. That's really interesting, and it actually speaks to the larger point of high volatility in the marketplace, a high VIX, high volatility futures, etc. It's really hard to sustain those levels, because unless you have continued kind of fresh demand for options, specifically, you know, calls and puts, and, you know, primarily puts in terms of, you know, the skew to the downside, and, you know, passively long investors kind of hedging their long stock exposure, the VIX is going to collapse under its own weight. Like, it's going to crumble under its own weight, because unless there is this continued new demand for options, then the VIX is going to drift lower, which is where it naturally wants to live. This is why whenever you look at a VIX chart, as long as you zoom out, like if we zoom out right here, you can see it clearly wants to live on, let me even zoom out even more. It clearly wants to live in these lower regions. Now, low can be a relative term. Sometimes low is 10, if you're going back to like 2017. Sometimes low is 15, right? Sometimes low is 17. 17 is probably not usually that low. But generally, 15 or lower, this is where the VIX wants to be. This is where the VIX wants to live. So when you see these volatility spikes like this one that we know doesn't count, that's imaginary, so pretend that's not there. But then even like this one and like this one, you see the same pattern playing out over and over and over again. This is the foundation of what we're trying to do here. This is kind of what I talked about this morning with Tom and Tony on the skinny and options abstract applications. We talked about implied volatility, realized volatility, kind of this whole zero-sum game aspect of, trading options and selling premium over time, how it's not a zero-sum game because implied volatility tends to overstate realized volatility. And another part of this, which Tom actually astutely observed and brought into the discussion, when volatility spikes, that's the best time to sell volatility because you do put the contraction a bit more in your favor, which again, this is not my opinion, right? This is not subjective conjecture. This is an objective fact from the standpoint of empirical findings where the volatility wants to go lower after expansions. Now, we never know exactly when to do that. Like even as objective as this might be, and even as strong as the empirical findings might present themselves to be, you never know exactly when the top is going to be in volatility, right? And if I ever figure out when that is, I'm not telling y'all. Like I'm just taking my Mike Evans jersey and I'm going to Fiji and I'm just going to trade that information all by my lonesome. And that's going to be that. And so the VIX down to 19, it's collapsing under its own weight. So even though the market is down, the VIX is down too, because it's going to need some continued demand to keep up a VIX 20, 21, 22. So, all right, let's go ahead. Let's go through a couple of positions in the portfolio. And then I want to see where you guys are at. Man, I see you guys already in the chat. I see Chris Close is in the house. I see Giddell's in the house. Man, Jason's in the house. Man, I see some new people in the house. Wow, we're attracting some new folks to the show, it appears, or at least some lurkers that are now finally in the chat. I appreciate you guys because you guys know, man, the algorithm loves the chat. So you could put a whole bunch of nonsense in the chat, and the algorithm would love it. Like you could put, like, I don't know, hypothetically, Mike Evans, first ballot Hall of Famer. That's total nonsense. But put it in the YouTube chat because the algorithm loves it. We know it's not true. We know it's false information, but it doesn't matter, right? The internet's built on misinformation. So toss it in the chat and help your boy out to get this stream out to more people. But I see Massey Topher's in the house, Sam L. Jr. Mack in the house, Jason Doss in the house, man, Bruce in the house, David Gallimore, Ordenu's in the house. Don, I know I missed some people, but I see you guys. I'm going to get to you guys here in just a second. All right, what I want to do, though, so first and foremost, let's talk about MES because this is really interesting because now we have the market down. It was obviously down, significantly more earlier. If I bring up the chart, actually, you can see right here. I mean, we had ES down to, wow, they were all the way down to 58.09. So they were 50 points lower. Wow, I didn't realize it was that much. That's pretty significant. Wow, ES was down to 58.09, cracking through the 5,800 level. Man, that would scare the children. That would even scare your neighborhood internet trading wizard Furu that never loses. Even they're going to get spooked when you get ES under 5,800. So you better watch out. Got NASDAQ how low was the NASDAQ? NASDAQ was down to 694. Wow, now it's 880. And so, man, this is not good, guys. This is not good. But if we look at our MES position, this is really interesting because now we have the spread is fully in the money. You can see it right here by the yellow boxes that are inside the Tasty Trade platform. I'm fully in the money on the spread, but I'm still too far away from expiration to really be able to extract anywhere near max value from that. I'm not going to be able to get anything close to maximum value from this whole strategy until we get into the final week, essentially, before expiration, maybe even the final days before expiration. Now, because I have a slightly wider spread than I might otherwise have, 50 points wide in MES is a reasonably wide spread. It's not crazy wide. It's not Bomb Nosnoff wide, but it's reasonable. It's respectable. We might be able to eke out closer to max value, maybe on like the front end of expiration week or maybe like with like 8 or 9 or 10 days to go in the cycle. But I don't really necessarily expect that, and I'm not going to hang my head on that. But it's interesting to note that, all right, now ES or MES in this case has moved down below the short put strike. Now, remember, this is where all of your risk is in the trade. So when you put on a put ratio spread, the same thing would apply to a call ratio spread. It would just be, you're dealing with short calls instead of short puts, and you'd be above the market, not below the market. But when you have a put ratio spread on 1x2, 1x3, same principle would apply. The risk in the trade is below the short put strike. So if the market goes below the short put strike, that's where you've got to be, all right, let's get our ducks in a row. Let's dot the I's, let's cross the T's. Let's kind of make sure that we know what we've signed up for, and we have a contingency plan ready to go in the event that the market keeps going lower, the market sits still, the market goes back up. Just understand where you're at. Like, where am I at on the learning curve? Like, where am I at, in terms of, the pathway forward through the forest? So when it comes to this ratio spread, the thing that's very helpful to remember when it comes to any ratio spread, and this one in particular, is where is my break-even point? And so right here, you can see that I've got my 58.70 strike, which I'll put in Diet Strawberry. We sold the spread for 84 points to begin with, and you have to remember that the width of the spread is 50 points. So when I go to calculate my break-even point, I have to take my short strike, which is 58.70. I have to subtract what I sold the strategy for, which is 84 points. And then I have to subtract another 50 because that's the width of the spread, because that spread is going to stay fully in the money. So that, that spread essentially helps to soften the blow of any continued down moves in the market. That's what makes a ratio spread so special, that embedded vertical spread that's kind of right in the middle of it. But if I go ahead and do this calculation, man, I don't know, guys. I don't know, Jacob Perlman, can we do this? Can we do this a little bit sick? Can we do this, with Dr. Jim operating at about 75%? Which, 75% of a Dr. Jim is that's about the best you can hope for on any given day. But that's 134. So 58.70 minus 134. Let me get out my fingers and my toes. That's like what? It's 57.36 maybe? Let's put a squiggly line because I'm not 100% sure, but 57.36. So my break-even point on this trade, that's another 100 points lower. So when you pierce through the short strike, you might be thinking, all right, this is not good, this is bad, like this could get really nasty. And all those things are true to some degree, but you have to understand where you're at, in terms of the journey. It's like, man, we need another huge swoosh down in the market for this to happen. Now, can that swoosh down happen? Of course. Is that swoosh down coming? Maybe. Because, man, you guys thought we were out of the woods because we survived NFP on Friday? Like, you thought the game was over? The game hasn't even started. Tomorrow morning at 8:30 Eastern time, we have the most important PPI print of my entire lifetime. 43 years, I've never seen a more important PPI print. Never in all of my trading days and all of my years on this earth. And then Wednesday, we got CPI, guys. These are DEFCON level 9 prints. These are end of the world prints. You got PPI, CPI, not to mention you're not supposed to have PPI before CPI. Like, that's how you know this thing's off. That's how you know this thing is not feng shui. That's like going in on a Monday and doing back. Nobody does that. You got to do chest on Monday. You do back on Monday? That's like leading with PPI. That's like a bicep, tricep superset. You lead with tries? Nobody leads with tries. What are you doing? Like, it's totally wrong. It's totally backwards. Nothing's right about that. So this is not good, guys. This is not good. But somehow we gotta try to make our way through. I'd say the delta is very low that we do make it through. But for MES, in the interim, we sit tight, we do nothing, understanding that we're still pretty far away from our break-even point. Okay, so that's MES. I want to talk about that because it's interesting now that it's fully in the money. MNQ, this is another one. This is our other futures options position that I think is kind of a sit-tight scenario because we haven't even been tested yet, even with all the weakness in the NASDAQ. Obviously it got down to 694 earlier this morning. That may or may not have happened while I was obtaining a pretty nasty quad pump. But right now we sit tight and we do nothing, and we just wait and see if MNQ can stay here, maybe even matriculate the ball higher a little bit. That would be good. That'd be positive for us in terms of this position. So MNQ, we're going to sit tight and do nothing. You could, if you really wanted to get a little fancy with this, and kind of follow a Tony Batista pathway through the floor, which, that never ends in disaster. You could sell a call here, potentially, if you want to neutralize your bias. if you wanted to go in here like, all right, my short put is not tested, but it's picking up some delta, I'm a little bit more bullish than I would like to be. You could always step in and you could sell a call, maybe up around these parts. You look at your, you've got your put deltas at 44. If you wanted to totally neutralize it, you could sell the 44 delta call, of course. That would be a 21-1. I don't really love that move because I feel like the whipsaw risk is very significant, very substantial, especially since it feels like to me. Now, again, this is just my feeling of what's happening in the world around me. And I do brand myself as a bit of a Renaissance man because, I know that Mike Evans is not getting in the Hall of Fame. I just know that. That's pretty obvious. I shouldn't necessarily pat myself on the back for that. But when it comes to, understanding the PPI and the CPI that are coming on down the chutes, I feel like everybody's expecting these to be hot. I feel like everybody's expecting these to be, Armageddon-esque, right? And they very well may be. Again, we're DEFCON level 10 type of stuff here. But if they're not, if they come in a little bit cool, if they come in a little bit softer than expectations, man, this thing could rip. This thing could absolutely rip. The NASDAQ could jump 500, 600, 700 points in a day, no problem. And so I personally don't love selling the 21-1. I don't even really love selling any of the calls right here. But if you wanted to neutralize your bias, maybe you step in and sell like a 30 delta call in MNQ. And then you've got a lot more premium to work with, which is obviously the benefit. There's always a gimme alongside every gotcha. But here, I'm not going to do it because I like just kind of, sticking with the flag that I planted in the ground. Let's sit tight. There's no reason to do anything just yet. But I do know that some traders like to adjust a bit more aggressively. And I don't think it's a better or worse scenario. I think it's more of a gimmies and gotchas type of thing. And what style are you as a trader? What really fits you as as an active participant in the markets? I think that's what you need to figure out. I don't necessarily think there's a right or wrong answer here. And so that's just a couple of things to think about. So that's MNQ and MES. All right, let's talk about. Ooh, wow, we only have a couple minutes to go until we get to the halfway mark. Man, that's crazy. It goes so fast. You guys have no idea. And so let's see here. What if we do? Well, I've got Bank of America. Excuse me. I've got Bank of America and SPUX. These are our two stock positions. So if you've been following the show, we do a little stock discourse, a little stock discussion every Friday. We missed last Friday because the market was going crazy, and I wanted to devote a bit more time to market commentary and y'all's questions. But we'll get back on the horse, this Friday. And this Friday, I think we're going to talk about, how do you invest in non-dividend bank stocks? What do you think about? What's kind of the modus operandi? What are you going after when it comes to a non-dividend paying stock? Now, this is very much an informal discussion. We're not breaking out textbooks. I'm not working through discounted cash flow models and stuff like that. This is just kind of like a fireside chat. We're all just sitting around, their slides on, our windbreaker pants on, and just having a little discussion. So Bank of America, SPUX. I'm going to have more windbreakers. It's been a minute. It's been at least a week, I think. So Bank of America, SPUX, and then we'll do something on Friday with some non-dividend bank stocks. But dividends are a big reason why why investors do buy stocks. So that's why I kind of wanted to lead with that. But Bank of America and Starbucks, we sit tight, we do nothing, because that's what you do when you buy stock. You sit tight, you do nothing, and you just go live your life. You may have no idea what's going on in the market. You may be completely clueless as to what's going on with your individual stocks, but that's not necessarily a bad thing. If you're just riding the positive drift over time, you're going to collect your 8, 9, 10, 11% on average per year, and you're happy with that. You're a music teacher, or you're a construction worker, or you're something that has nothing to do with the markets, and you have no interest. Now, if you're here and it wasn't a misclick, that somehow you're still here. But if you're here on purpose, intentionally, then that's probably not going to be you. You're going to want to, learn some skills and find some ways to, be better equipped to deal with the different things that come your way in the market. And so that's why, just straight, plain vanilla stock ownership is not normally our cup of tea. But we're just kind of, we're splashing around a little bit to kind of see what transpires. So that's Bank of America, that's SPUX. And then let's talk about man, there's really nothing else to talk about. AppLovin is getting crushed. Where's Anka? Is Anka here today? This was an Anka special. I think she took it off for a winner somehow, though. I don't even know how that even happens. That's crazy. That's super crazy. But let's see. Is Anka here today? I'm scanning for Anka real quick. No, I don't think so. All right, she's hiding. She's hiding in the bushes. That's good. I probably would do the same thing. So AppLovin getting crushed. We sit tight, we do nothing. And then NVIDIA, which again is pronounced NVIDIA. 39 days to go. You've got the stock is, this thing's been getting hammered lately. We sit tight, we do nothing. This is what it is with defined risk, guys. it's a pretty simple game. I mean, simple is a relative term, right? I mean, there's a lot of hurdles you have to, a lot of informational hurdles you have to jump over to get to a certain point where you feel comfortable, putting on vertical spreads and doing defined risk strategies. And I understand that, and I recognize that, and that's why I'm doing the beginner trader thing in Chicago on February 4th. Like, I can't wait. We got the pop up on February 3rd in the evening, and then the actual event on February 4th. It's going to be all about, like, how do you get your first trade on? Like, you don't really know anything. You maybe know a little bit about stocks. You maybe have a little bit going on with your retirement, whatever, but you want to know more, and you kind of want to bring yourself up to speed quickly. That's exactly what we're going to try to do. That's exactly what I'm going to try to do for you guys in about an hour or maybe 2.5 to 3 hours. We'll have to see how the wind blows us that day. But either way, I'm going to get you guys to some level of self-sufficiency. That is going to be my objective for that day. But with defined risk, oftentimes it's just a sit and stew scenario. There's not really a lot that you can do from an adjustment standpoint. There's not really a lot that you can do from like a, taking a bunch of risk off the table standpoint. Because if I go to roll, well, you can see we've already rolled the NVIDIA trade once. If I go to roll it again right now, though, it's absolutely going to be a debit because it's too far in the money. So you can see if I roll this thing out to March, that's a 25-cent debit. And we don't typically like to roll for debits because that's adding risk to the trade. Now, if it's like a penny or a nickel or something, like, okay, that's fine. That's basically a wash. Like, that's entirely up to you. But, it's a slippery slope. You start rolling for a dime. You start rolling for 15 cents. It's like, man, 10 cents here, 20 cents there, 80 cents there. Before you know it, you're talking about real money, right? And so it's like, probably not something I want to do a ton of. And so just kind of be aware of that. So, all right. So that is just a quick little note about NVIDIA. And I guess App 11 too. We sit tight. We do nothing. We got Rocket Lab. We got Uber, XBI. But we can do all that stuff tomorrow. If there is a tomorrow. I mean, PPI in the morning at 8:30. I said the Delta that we have a show tomorrow because there's a market is only like 10 or 15. And so let's hope. Let's hope beyond hope that I will see you guys tomorrow. But let me get into you guys. Where are you guys at? Excuse me for my cough. This thing is lingering, man. This thing is absolutely lingering. Kind of like Mike Evans. He just kind of lingers. He's just kind of around. Is he great? Nah, but he's just there. He gets you a couple catches. Might luck himself into a touchdown here or there, but that's pretty much all you got. So anyway, where are we at? Theta Trader's in the house. What's going on there, Theta Trader? Dr. Jim, your reminder for shares. Oh, yes. To look at, CCI is a REIT. That's a real estate investment trust, I believe, which invests in cell tower and digital fiber infrastructure, paying a 7% dividend with a price level at 52-week lows. CCI. Crown Castle. Yeah, that's right. This is your black market crown supplier. Like, you're trying to, woo me over with all this fancy talk about cell towers and fiber optics and all that kind of stuff. But I know that this is your black market crown dealer for your back alley root canals. But I'll tell you what, man, a 7% dividend. I mean, I like it. I like it a lot. It's only an $85 stock. I'm going to pass. I'm only going to pass. So I like it. I would normally do this. I'm only going to pass because I need to be somewhat mindful of how many of these long stock positions I am carrying, because I've only got 30 grand in the account. I don't want to burn up all my capital on this stuff that's just going to sit in the stock drawer, like, Bank of America, like Starbucks, whatever. I mean, we've already, chewed up what? I mean, it's, we've got 2,200 in Bank of America in terms of the capital we need to hold the position. And then 4,600. So we got about $7,000 in capital. That's like 30%. No, hold on. That's like 20%, 22% of the account. I don't really want to go over 25 in terms of using the capital for these share positions. And so for now, Data Trader, I'm not going to do anything with that. But it's a great option. It's a great option. And for those of you out there looking for a good dividend paying stock, there you go. Now, I don't know if this is a dividend champion or if this is a dividend aristocrat. I'm not sure which list this belongs on. In fact, I'm actually curious now. Because if you go into Tasty Trade, you go into the watch lists. We got Tom's watch list. We got Bat's watch list. Still no Dr. Jim watch list. Oh, look, there's a Mike Evans watch list. So at least he's got that going for him. But if I go in there, I go to dividends. You've got dividend aristocrats and dividend champions. Where is CCL? Is it on one of these lists? I would think it is. Okay, so it's not an aristocrat, according to the powers that be inside of Tasty Trade. So is it a champion? It's a great question. Let's find out. Wow, it's not a champion either. How about that, Theta Trader? I don't know. So your CCL, I don't know, man. It's not an aristocrat or a champion. That gives that's some pause for concern, I think. Whatever champions and aristocrats. We've talked about this before. I'm not exactly sure what the difference would be in this context, or really any context. But yeah, I'm going to pass. from a capital standpoint, but it could be a really, really good option for those of you out there that are looking for a dividend payer that can help support your neighborhood black market is what I meant to say. Dentist, street dentist, like theta traders. David Gilmore's in the house. Dr. Jim, can you tell about change in delta based only on the passage of time in regard to far out of the money puts? Assume no price or vol change, only time moving forward. Well, I wouldn't be able to eyeball it, but what you actually just described would be the charm of the option. So there is, there's like there's first level Greeks, which is all the ones that we know pretty well. And we use them all the time. Your deltas, your thetas, your vegas, your rows, for all my row scalpers out there that might be watching the show, et cetera, right? Well, the second level Greeks, the most common one that we use often is gamma, but there's other second level Greeks like VAMA is a second level Greek. That's going to be volatility of volatility. But then charm is another second level Greek. That's going to be essentially the decay of delta. Or, decay assumes delta is going down. Delta can also go up. Delta can strengthen. So it's essentially just the delta change with the passage of time. That is what charm measures. So that is the mathematical representation of your comment there, David. Can I eyeball it? No, I can't. I can't just look at, I can't just, you give me a delta, you give me a stock, and then you tell me 3 days have gone by. What is the new delta? I have no idea. Now, if I knew the charm on day one, then yeah, you could figure it out fairly easily because that's what charm actually measures. And I've been pushing Tom. I've been pushing, Tony. I've been trying to just lay into and lean into the Sosnoff estate, the Batista estate, all the powers that be, all the elites. Let's get charm on the platform. But man, us peasants and plebes, they don't normally listen to us. That's why we're peasants and plebes, and they're the elites. And so I don't know that we're going to get charm on the platform anytime soon, but I hope we do, man. It would be really, really nice. It'd be really, really nice. Because charm is a big part of what we do. You don't really notice it or recognize it because it's kind of operating behind the scenes. And it's not as important as your front level Greeks. It's not as important as those first level guys. Those guys are way more important. But understanding as kind of background information, if not even more than that, what is the charm of an out of the money option? What is the charm of an in the money option? What are the charms of at the money options? Some general characteristics, help us all the time. For example, when you sell an option that's further out of the money, it's going to have a stronger charm. So it's going to place greater pressure on that delta to decay more rapidly, all other things being equal, which is what you kind of put in your comment. And so that tells me that if I sell a further out of the money option, I could reach my profit objective more quickly because it's going to be a bit more efficient from, day now to day whenever I take the trade off, a week from now, 2 weeks from now, whatever it might be. And so if you're on the fence between selling a nearer out of the money option and a further out of the money option, maybe consider the further out of the money option. Now, of course, every gimme has a gotcha, right? So the gimme, stronger charm, the gotcha, lower credit, right? The gotcha, lower profit potential. And so you've always got to pay the piper somewhere. You've always got to toss a little something into the change bucket for the Sosnoff estate. That's just going to happen. There's nothing you can do about it. But just understanding these things, I think, is at least a little bit helpful. So sorry I couldn't. I kind of answered your question, David, but maybe in sort of a not really kind of way. And so Orgenu in the house. Greetings from Italy, Dr. Jim. Could you show how to make a credit spread of the VIX? Thank you very much. No, I can't. And I can't simply because I don't trade the volatility products. It's been a long, long time since I've traded the actual volatility products. So VIX /VX. VXX is another one that used to be. Is it still around? VXX. This is going to be another kind of volatility product. You've got UVXY. These are levered volatility products. So if you want to play volatility in a leveraged way, which I would be very careful doing because, these funds have the daily reset that kind of chews up the price over time. It can be very difficult to make money in these products, in my opinion. I would make sure you know what you're doing. And I really kind of don't. And so I've stayed away from those for the time being. Now, maybe in some future project, I'll decide to pull it off the shelf and kind of learn more about that, but I haven't yet. And so, but when it comes to, VIX, since I don't trade these too much there, Orgenu, I'm not really your guy. I think, if I'm not mistaken, Mike and Nick and Katie, the options trading concepts live crew, they do a lot more with volatility products. So I would actually reach out to Mike or Nick or Katie and ask them about doing something like this, either showing you via email or doing it on their show or whatever. They're going to be able to give you a lot more insight than I can give you. Like I'm barely going to be able to give you kind of a beginner's guide to, the volatility products. I mean, I just prefer to have volatility exposure kind of indirectly through the equity options, through the futures options, and I'm still playing volatility, but I like to do it more indirectly that way because I know that with the volatility products, VIX, specifically, you have to be aware, keenly aware of the asymmetric nature of this product. Right, where again we just saw it on the chart just a minute ago, where it's going to slowly kind of bleed lower over time, and then boom, it just skyrockets 50% or 80% or whatever, which is very doable, but you just got to be careful. Case in point, and you didn't say this, you said you wanted to do a spread in here, which I think is really, really smart. You want to be really careful if you want to be bearish on volatility because you want to play the volatility contraction, which is exactly what we do. I mean, that's what we do indirectly through equity options all the time. I would not be in VIX or /VX, kind of selling naked bearish exposure, like selling, a naked call or selling, /VX, just outright naked. I think you could get really, really crushed very quickly, because that's one of the things that, that's what we're signing up for, right? As premium sellers, we are okay with that. We are okay with, all right, I know I'm going to have high probability. I know I'm going to have modest winners. And because of those two things, I have to be willing to accept some pretty sizable losers. But still, I think you're kind of voluntarily walking into a really, really potentially nasty situation if you get in here and you're not doing spreads. And so I just wanted to kind of maybe give you a little bit of value, even though I can't really. I mean, if I went in February, you've got, it's going to set up essentially similar to an option, a regular equity option. You've got VIX at 19.25. There's your at the money level right there, 19.20. I mean, would I treat this any differently than any other spread? Like if I wanted to be bearish, would I just sell a 20.23 maybe? I mean, I'm not going to do it again because I feel like there are some things happening here that I'm not fully and keenly aware of. Case in point, this is a $3 wide spread. Like you guys are going to see the limits of my knowledge here very quickly. $3 wide spread, right? I want to collect at least $1. That rule is still going to be the case. That's still going to be what I'm looking for, just to justify the risk and return for that specific spread. Okay, the credit on this spread, excuse me, is only 49 cents. So it's only 49 cents. So I'm not even halfway there. I'm not even halfway to where I want to be. So right away, I'm like, all right, this is not interesting to me. Like this is not something that I'm going to want to do. And so, from a spread standpoint, there's clearly some things happening here that I'm not privy to. And so I'm just going to have to pass or again you. But hopefully they gave you a little something to help you out. So Don 721's in the house. Don 721, what's going on there, Don? Following up on this morning's discussion, is managing early another reason for why trading doesn't have to be a zero-sum game? So yes. So there's a number of reasons why over time trading is not going to be a zero-sum game. And a lot of them funnel back to the benefits that we're able to extract as premium sellers, the benefits that we're able to extract as, being on the short side of the option contract. The reason why this morning, yes, I think early management matters. I think, selling when implied volatility rank is elevated matters, which is what Tom kind of mentioned earlier. Those are great reasons. I think they're absolutely paramount to what it is that we're doing, but I didn't include them this morning because the reason that I decided to go with this morning, just to kind of simplify the process, the implied volatility and the realized volatility, that is the reason why, in the end, the option sellers are going to be ahead of the option buyers because the option sellers are going to have that tailwind. What I went over this morning, the implied volatility being greater than the realized volatility on average, they have that tailwind that's working for them. Right? The option buyers, that is a headwind that is always working against them. Right? Now, of course, you have some option buyers. You got your Johnny Pools 47. You got your Johnny Pools 48. There's a lot of them on the internet. They all kind of work together, maybe in the same type of city or town or whatever. And they're striking it huge. They're striking gold. They're buying options. They're getting 10,000% returns. They're doing this. They're doing that, and boom, they're like, man, I'm making all kinds of money. Of course, anybody can get lucky. right? Anybody can, have a string of consecutive wins and, a nice quarter, nice year, whatever. But can you do it over your career? That's what I want to know. Now, maybe some people can do it. Maybe it's a talent or a skill that I just can't personally access, which would not be too hard to believe, of course. But when it comes to the implied volatility, realized volatility, I just feel like that's a hurdle that's very difficult for the option buyers to jump over. And so that's why that's what I went with this morning in terms of describing the lack of it being a zero-sum game over time. But yes, down 721, I do think the early management is going to be another thing that's going to, again, we're just slowly kind of moving it in our favor. We're just slowly kind of stacking up wins, right? Nothing amazing, nothing incredible, nothing that's Hall of Fame worthy, but maybe I'll get you 10,000-yard seasons, right? Is that amazing? Not really. It's B minus. It's Frank Gore. Right? I've been around for a while, so if longevity is one of the characteristics, okay, maybe I should be considered. But being average or slightly above average for a long time, it's not that impressive. It's a similar type of thing with what we're trying to do, except we're trying to be a little bit more Hall of Fame worthy. So hopefully that helps a little bit. So Emmett Morrison's in the house. Grumpy Mike, what's going on? I see you there. Emmett Morrison, good day, Dr. Jim. The only question I have for you is how much do the Irish beat OSU by next Monday? Go Irish. First of all, I got to learn the roster. So once I learn the roster of this season's Irish, I'll let you know. So I gotta be able to kind of see who they're working with first, and then I will let you know. But it's gonna be some positive integer. I can assure you of that. So go Irish. My Irish are looking good. Paul says, "Good afternoon to all. What's going on there, Paul? I appreciate you, my friend. Thank you for being here and just being a part of what we do, man. It really matters. It helps so much. All of you guys that are watching, 600 people watching. That's crazy. I can't believe that. 600 people watch this. Absolutely bonkers. And so thank you guys so much. It really means the absolute world to me. Sergio's in the house. Hello, Dr. Jim. Hope all is well. I think my mails may be ending up in your spam folder. No, not necessarily. I fall behind. And nobody is spammed. Nobody's blocked. Nothing like that. It's just I get my head above water and then I fall back below. And so that's a kind of a natural ebb and flow. And plus this nasty cough has kind of made it difficult for me to have a ton of motivation to get caught up, to be perfectly frank, to be Frankie Walsh with you all. And so I should get caught up here really soon. But I appreciate your patience, Sergio. I try to be quick with that stuff, but lately I haven't been as quick as I would like to be. And that's 100% on me. That's 100% on me. Like Baker Mayfield, he took ownership of his fumble last night. I'm taking ownership of my inability to be more responsive on the email front. But I appreciate y'all's patience very much on that. And so Bruce is in the house. Bruce says, "Hey, Dr. Jim, can you talk about your plans with your short put in MNQ? You got tested overnight." Oh, was it overnight? I didn't know. Or this morning I was getting a nasty quad pump. Overnight I was dreaming about a nasty quad pump, which is almost as good. And so I wasn't there to see the testing. But Bruce says, "If needed, will you roll out to the June contract or look to take an assignment of the contract possibly?" Okay, so great questions. So right now, I'm just going to sit tight because it's bounced back. Had it not bounced back, the first thing I would be looking to do. So right now, you've got 39 days to go. So a couple of things. If we were, if I was tested right now that I'm not tested anymore, I'm going to sit tight. Like I'm just going to take advantage of the fact that I quote unquote missed it. And, we don't have to necessarily do anything right now because I really like the patience. I like kind of doing nothing whenever I have a chance to do nothing. So we're going to do nothing. We're going to let it cook and just see what happens, especially since I do feel like personally from PPI and CPI, I think that we're probably going to have some type of rally off of those numbers because I think everybody's expecting them to squash them on these numbers. I think regardless of what the numbers are, hot, cold, in the middle, I think we're going to rally off of these numbers. Now, if I'm wrong, then maybe it gets really nasty and there really is no show on Tuesday or Wednesday because there is no market. And we are, in an episode of The Leftovers, that show from, 4 or 5 years ago that might still be running. I think it got canceled after maybe half a season. But either way, I'm going to sit tight on MNQ. The first thing I would be looking to do, though, if it gets tested, is maybe add a short call. So we add a short call and we neutralize the directional bias. I like to wait to do that. I could do that now, and it would be a bit more advantageous. I'd get more credit and all that kind of stuff. But I like to wait because I think there's a reasonable chance that we rally and I don't even need that short call. Also, I will be looking to roll out on time. Now, I have 39 days to go in this strategy, so I don't really have to do it. I don't feel a ton of pressure to do that right away because there's still so much time in this current cycle that I'm not necessarily going to be, chomping at the bit to roll this thing out to, the next cycle. And so for now, we're going to sit tight. and just kind of let this thing kind of, play out. But obviously, I mean, stick with me for the next, couple of days, next couple of weeks. Whenever something relevant happens in this position, I will bring it up on the show. And that's one of the things I'm trying to do with the show is kind of, if you watch on a regular basis, there's no broken links in the chain, and you kind of see everything as it's happening. NASDAQ now only down 100. So the rally is actually happening now, Bruce. So we are in a good spot. So let's see here. Who's next? Scramble everything. Hey, Dr. Jim, your Notre Dame Irish secondary might get torched. NDD going to hold up. Oh, yeah. No, they're going to hold up. Don't you worry about the secondary. Again, I can't tell you who's on the secondary, but, man, we're a team. Like, there's no I in team. Like, it's all about the team, right? So don't you worry about us. We're going to be totally fine. And so Topher's in the house, says, Dr. Jim, thoughts on the wheel strategy? Yes. So this is where you have a short put, you let it go in the money. Well, you don't let it go in the money, but if it goes in the money, you take the shares and then you sell calls against it, and you just kind of, keep going. And if the stock rallies, it gets assigned and it goes away, and then you start over again with a short put. I love it, actually. I love it. I think it is a better strategy than just pure long stock. Do I think it's the best strategy from an option selling standpoint and from an actively, an active derivatives trader standpoint? No, I do not. But I think that it's a good strategy as an alternative to just long stock ownership. I think it's going to give you more opportunities. I think it's going to give you a lot more flexibility. And I actually think it's going to give you potentially better returns in the end. It definitely gives you less risk. Because if I'm selling a put that's out of the money as opposed to buying stock, that is by definition a lower risk position. And so that's nice, just kind of, right there at trade entry. But I think over and above that, I think you have the potential for more returns and potentially a higher ceiling. And so I love the wheel strategy, especially for somebody that might be brand new, trying to transition from, a stock-only portfolio to wanting to have some exposure in derivatives, wanting to kind of include some options and some futures and things like that. So I love it. I love it there, Topher. So Theta Trader says, Grumpy, I missed the specific one you must have looked at. Oh, here we go. So that's an inside conversation that I'm on the outside of. And so Sam L's in the house. What's going on there, Sam L? Dr. Jim in the house. Best show to start the week. Another red, as you predicted, Doc. Yes, correct. I'm not sure if I've done all these predictions, but I will certainly take credit for all of them. And so thank you there, Sam L. I appreciate you for reminding everyone of that. I did correctly predict this, according to Sam L. And so you can take it up with him if that happens to be incorrect. But thank you there, Sam L. I appreciate you very much. And so Junior Max says, morning from Australia, testing my block status from the lost comment. Yeah, apparently your block got lost in the shuffle. Pun intended. So you live to see another day, so you should count your lucky stars on that front. Jason Dawson in the house. Happy Monday, Dr. Jim. What's going on there, Jason? Thank you so much, my friend, for being here. It really, truly means so much to me, man. Thank you so much. If I can ever help in any way, please let me know. I'm happy to do it. Let's see. Grumpy Mike. He said he deleted his comment because he didn't want to distract me from something important. Now, this whole show is just one distraction. That's what we do. And so, but I appreciate you there, Grumpy Mike. Chris Close in the house. Good afternoon, Dr. J. Can you talk about why someone would want to buy CONL or CONY, and if there are good dividend opportunities on them? Same with MSTY and MSTX. What are these stocks? I only have like 20 seconds to go. Yeah, a coin option. So is this a Bitcoin? Oh wait, are these the premium selling ETFs? I don't know. I have to remind me of that, Chris Close, and try to do it a little earlier in the show. We can dig into these a bit more, but I have to run now because Jamal's coming up, and I don't want to spill over too much in his time. But what is MSTY? It sounds like a monster thing. An MSTR income strategy. Yeah, I would be careful with that stuff. I would read the fine print when it comes to that stuff, because you all know how I feel about options for income. So now they're putting it right there. They're putting it right there in the name. They're putting it right there in the name. It's crazy. It's crazy. It's not the same thing. It's not the same thing at all. But man, I got to run. I appreciate you guys so much. Thank you guys for being here. We could not do this without you guys. So it really means the world to me. If I can ever help you guys in any way, please shoot me an email. I will get caught up here very soon. I am jschultz at tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I appreciate you guys so much. But we have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. and up to $4,000. At Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
I'll tell you what, equities are down. Rates are up. Is there anything else? No. That's mostly how things have been going for the last week or so. So we're going to talk about those and a few other things that we're noticing. You can see Bitcoin moving around. You can see oil doing its thing. But we'll get a handle on what's going on in this market, as it seems as though everybody's waiting on something. So welcome to the most dangerous show on the tastylive network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. The man across from me, none other than Josh Fabian, my guest today. Josh, how you doing?
I'm not talking unless you agree to change it to Beastie Boys.
No, I'm not. No, we're not changing. How you gonna come on my show and change the music? Seriously, it's been the roots from day one. Guns are drawn. You know why? Because guns are drawn on you. That's right. Right now.
You're quoting something. I don't know what it is.
No, I'm not actually.
Well, it should be in something.
How was your weekend, dude?
It was fine. It was quiet. Watched a lot of football. You know.
I didn't watch many of those NFL games.
You said you were busy at basketball.
Yeah. My kid had basketball tournaments. You know, we're starting to travel basketball, so we had tournaments yesterday. I mean, I don't remember the game Saturday. I don't know. I don't know. I really wasn't. I'll be honest with you. I'm really not as interested in the NFL playoffs quite yet. Yeah. Maybe next week. Maybe when I'll definitely probably watch that Bills and
Ravens.
Yeah, because I mean that's essentially the game for the MVP. Even though I think Lamar has 40 touchdowns and 4 interceptions.
Yeah, he's had a good year.
They said that's the lowest interception count for anybody who's ever had 40 touchdowns. It's pretty damn good.
He's had a good year.
And Josh Allen is great too, for sure. Yeah. So even though I think the MVP is sold up, it's still going to be the battle for the MVP.
Are they supposed? I thought you weren't supposed to take playoffs into consideration.
I don't think they do, but we all know they kind of do. I think the award is going to Lamar. I think it is.
He deserves it.
Yeah, I think it is. Because the other day when they came out with All-Pro selections, he was the All-Pro quarterback, and I think that kind of usually if you're quarterback, you're gonna. Yeah. But we'll see.
You know who else was All-Pro?
Who?
I was All-Pro.
You were All-Pro. That's right. That's right. You were All-Pro for your league.
Going in the Hall of Fame with Mike Evans.
I mean, don't. The only real football game I watched was on Friday. I watched the Ohio State and Texas. Not Texas. Was it Texas? It was Texas. Was it Texas? Yeah. I watched Ohio State and Texas. No, was it? I'm blanking already. Yeah, it was Texas. I watched that game.
Yeah.
That's pretty much it.
It was Texas, right? Who did Notre Dame play?
Notre Dame played Penn State.
Yeah.
Okay. Ohio State and Texas.
Yeah, I'm getting a little footballed out, but I know that in 2 months I will be jonesing in the worst way for football. So it's like I forced myself to watch it now. It's like, listen.
So are you going to watch the Pro Bowl stuff?
No, the Pro Bowl's so stupid. Dumbest thing ever.
Yeah, you're not jonesing that hard for it.
No. I mean, they changed the format. It's actually kind of entertaining now. They do all those different events, but Jason Kelce makes it fun, or at least he did last year. But no,
I didn't watch any of that stuff, and I don't know if I will this year. I don't know. Yeah, and I'm not watching college basketball quite yet.
I'm not there yet.
I usually wait till the end of January or February.
Yeah.
They're making it a little harder by combining some of these games, like some games that are interesting.
Yeah.
I did watch Duke on Saturday.
Yeah, I missed that one. I wish I'd seen that. Yeah.
Yeah, I mean, Cooper Flagg is the bomb, dude, and I just like the way
he's gonna be one and done, isn't he?
Yeah, I mean, for sure. I mean, he should be. I mean, he's. I mean, if you can put up 43 in a game, and again, it's not like they were playing Carolina or anybody, but they were still playing another couple of college kids, and he's 18. He just turned 18.
Yeah.
By the way, he was just 17 when he started. He just turned 18 like a month ago.
I was always for leave school early if you can get paid, because you can always go to school. But God forbid you blow your knee out or something in college. But now with the NIL money, I don't know. For some of these guys, it may be worth it to stick around in college for another year.
I should send you this video. I just saw it a little earlier on Instagram with Penny Hardaway talking about how hard it is to recruit guys nowadays. And not only recruit guys, but keep your own guys. You basically have to re-recruit your guys every single season because of the money that they're getting and the potential chances to move around. And
I don't know anybody on Illinois' team this year. I mean, pretty much, I think it almost all changed from last season. It's because of that. I'm not a big fan.
I feel like they're at the forefront of getting a lot of European guys. Like the one guard he had last year.
Yeah, they do get.
I think they got another dude
because they can't recruit from Chicago for reasons that I don't understand. They've never been able to.
I know, it's kind of weird.
Anyhow,
let's pull up the platform here. Grumpy Mike, what's up, man? How you doing? You didn't watch any football? You watched zero football.
Not the Weekend in the Garage.
Trying to start a 3-year project started in 1976.
I've got a few of those, Mike. I've got a few of those projects.
Grumpy Mike. Rob, what's up, man? You know what's funny, Rob? Josh and I were in here literally before the show talking about bonds, talking about ZN and ZH. Rob, I'll say this. I do not blame you for wanting to pick up some long delta and ZN. I personally am not doing it myself. I've tried it a couple of times. It's a really tough environment, and that's exactly kind of where we're going here, where we're talking about what's going on with markets for the last couple of days to start the year.
Yeah,
we've it's been choppy, and things, of course, took a drastic turn to the downside on Friday with the jobs report. I'm pretty sure. You know what's funny? And again, I continue to say this. I don't care if you are an SMA person or if you are an EMA person. Either way, I bet I'm an SMA person. Like day to day, we're talking about simple moving averages. I am seeing equity markets at least ES, right around the 100-day moving average for SMA. I don't know what the EMA looks like, but I bet it's not too far. And it just so happens, I feel like these things always coincide with major events that are coming.
Yes.
We were sitting around the 50-day prior to the jobs report. Obviously, we dropped big. We closed right above the 100-day. Now we've been dancing around that 100-day all day long. And again, we got a big data point coming out tomorrow, and PPI is first, which again is a little bit weird.
Yeah.
But
but I lean a little more S&M.
I'm sorry, what?
Than SMA.
What was that?
Are we talking about? Are we not talking about the same thing?
No,
we're not talking about the same thing. My bad. That's my bad. Strike that from the record. Oh, that's embarrassing. We have been chopping around a lot, and and we've been. And it was funny because we were talking pre-show. Like neither one of us really wants to do much of anything right now. We both kind of have this feeling like if this downtrend continues, there's going to be some velocity to it all of a sudden. It can't just keep creeping down. That's not how markets pull back. It's usually pretty vicious. So we're kind of waiting on that to happen. And then 2 seconds later, I'm like, I might buy this.
Yeah, I know. I mean, there's some pretty, and to preface that, Josh is getting at, like, we both tend to kind of lean long delta, right? Especially when you see a market like this, that it's, you don't know, but potentially at some point you do get this snapback probably. And so the idea is to try and pick up long deltas here and there along the way, not throwing all your chips in, taking some time. I wouldn't throw all my chips in here when I see a VIX at 18 in a market that's really nervous about where rates are right now. When you see rates, again, 10-year yield is at 4.79, so let's call it 4.8%, okay? 10-year yield has been on the rise, and it's for a while now. It's back to, I think, last year, April highs. Right? Or it's actually exceeding a little bit of that now when you look at the chart. And I mean, this is going back to like almost 2022 levels that we've been seeing more recently. Markets are getting nervous. Yeah, you guys know all of this stuff, right? For those who pay attention to market day in and day out, there's nervousness about the Fed have made a policy mistake. Does it look like it's starting to look like 50 basis point cut in the beginning was a mistake? I go back to at the time, and you could look at all the tape.
Oh, I won $20 off. I won $20 off.
I mean, you did.
You don't get even if you were right that it was too much, you don't get your $20 back. Let's be clear on that. You're lucky scoop shot.
And at the time, to be fair, I didn't. It wasn't so much 25. I didn't think they were going to cut.
Yeah,
we were like they are going to.
Yeah.
Not only did they cut, the 50 was crazy.
I didn't expect
all
50,
of us off guard. Yeah. So, but things have changed. Of course, we had an election. Then there's more talk about tariffs, and is that going to affect inflation? So that's
Are we
all
going to invade Greenland?
playing. That's all playing in here, and so that's why we got a VIX that's sitting at 18. It was up to I should say
Cash was up over 21.
Actually, cash was over 21 at one point in the day. It's pulled back some as obviously markets have jumped up. I mean, to be fair, we've had like about a 50 handle range.
Yeah. We have
62 handle range today. Yes.
And I think the expected move for the week's like 100.
Yes, it is. As a matter of fact, let's take a look at that. So all of that being said, how do you trade this environment? And I will preface this by saying I do have long deltas. Like I have long deltas in SPYs and Qs and IWM and diamonds via calendar call spreads. My long exposure is out in February. I'm kind of glad that it is because at least I still have a solid 30 days to make good on that right now. I mean, I didn't expect this type of chop, but this type of chop sucks right now if you're trying to be long deltas. So
it's a tough market. I've been going through the 52-week new low list because I'm looking for things that may have already pulled back significantly. To your point, would you like having long delta? So where's the opportunity? And I look at that 52-week low. There's nothing. I'm looking at it right now. There's nothing all that interesting on there. Microsoft hit a new 52-week low
today. Really interesting.
No,
92.8 points for the week, by the way.
That can't be right.
Yeah, I don't know. Microsoft's been really kind of quiet over the last several months.
Yeah, this is wrong because I'm looking at the chart right now. But point being, I'm looking for things that are beaten up, and that's where I want to start allocating my money.
Yeah, I didn't have a new 52-week low. Not possible. I don't know.
Yeah.
Yeah, this is
unless it's starting from Jan 1.
Maybe I'm not.
Got to be that.
I don't know. Still kind of weird. So yeah, like we said, I mean, equities have been weak. Obviously, because every plateau we get with 10-year yields or any yields, but mostly 10-year yields, I feel like it's the easiest one to follow. Yeah. 4.5, it started to freak out. 4.7, it freaked out. Now we're closing in on 4.8.
We hit 5. It's gonna get ugly.
What do I think of SPY vertical spread, 601 call, 600? I mean,
that was for Dr. Jim.
Yeah, for Dr. Jim. He's asked me what I think of Jim's. He's basically trying to get me to shit on Jim's trade. No, I'm just kidding. I was for Dr. Jim.
That was for Dr. Jim. Don't answer that.
I won't answer it. I won't answer it. I won't answer it.
You address us properly.
Yeah. I won't answer on. So again, we do have the CPI tomorrow, which
no PPI tomorrow.
PPI tomorrow. Sorry.
Is that backwards? Did we decide it? Is that
no? I mean that's the way it's the way.
Is it normally PPI then CPI?
No. Most times it's CPI first.
That's what I.
Why they're doing it like that? I don't know.
But you made the point earlier that you get to these inflection points and there's some big data coming, and I don't think this time is any different. I think that this market is very much weight. I mean, you saw the reaction to the jobs number. Clearly, the macroeconomic situation is back in play. I thought for a while there, from roughly the election on till the end of the year, nobody really cared about that much. Attention is being paid to that now again, and then you're also going to combine that with going into earnings season. So you're going to have these massive potential points of volatility with the macro reports, and then all these micro potential points of volatility as well with earnings. And tomorrow or Wednesday, you'll have J.P. Morgan, Wells, Goldman Sachs, and Citi all announced. And J.P. Morgan, people pay attention to what Jamie Dimon has to say. So Wednesday has the potential between that and CPI to be a really active day.
Very much so. And by the way, we'd be remiss in not mentioning, I feel like there's been a bid to banks more recently.
Yeah.
When you look at them, J.P. Morgan, Citi, the like, there's been a bid to the banks more recently. And I mean, it gets back to the old adage, I suppose, that, banks do well in high interest rate environments. Funny thing is like you could look back at times throughout the past year where interest rates went up big and the whole market dropped, including banks. It's not like they were. So it's funny how those things
work. The spread, I think. I don't know what the spread, the 10 and 30 spread off the top of my head, but that helps them as well. If that widens, loaning longer term and borrowing shorter term. Yeah, those have done well. And then there's all this speculation that with the new administration, you're going to see a lot more M&A activity, and those guys get involved in the underwriting, like the Goldmans for, not so much, I guess JP Morgan, but Goldman more so.
One of the things I look at a lot throughout the day that I like, I always talk about things that I pay attention to what I'm seeing. I like to look at the heat map on FinViz, and that tells you a lot of things right now. When you look at it, you can see that that tech is down. You can see that.
Are you sharing that right now? I don't think you're sharing.
No, I'm not. No, I'm just bringing it up, but I wasn't going to make them share. But actually, could we flip over to my the NDI region and the website? If we could do that, that would be great, because then these guys can see what I'm talking about. On this FinViz heat map, you can typically see what's going on, and I like looking at it on a day like today, because it feels like everything is down, but everything wasn't down. Like the tech was down, sure. There's some tech areas, especially the big tech names. But then you see industrials that are up. You see energy as up. You talk about oil. You see Ryan. Could we pull that up on the website, the NDI region of interest? You could see that healthcare is up. You could see that there's financial names that are up. So that's kind of an interesting tell right there. And we've seen that.
Actually quite a bit of green in there.
Yeah. Oil names, right? Yeah, so it's not like everything is down. Names like, again, you talk about like the industrials, like Caterpillar and not industrial. Well, that's farm, but just still like certain industries are more green than others. So it's not everything that is struggling here. And particularly financials and healthcare, I've noticed that trend in a couple of sessions. So my point being, it's not a situation where markets are completely struggling and VIX should be 20 plus. I would be picking up, again, if I wasn't already long, I'd be picking up long deltas here. I'd probably be selling put spreads and things like SPYs and Qs, et cetera. Obviously 45 plus days out to withstand any of the movements to the downside. But that's kind of the trades that I'd be looking at doing. Am I interested in getting long bonds here? Dude, I got it. That's been a tough trade. I've tried it a couple of times. We can go back to the.
I am interested in it. Just it's a tough trade.
Yeah.
Yeah. And I mean, if you can carry the futures contract, to me, that's how I would want to do that. But it's, they're not inexpensive. And when you start talking about, doing it from an it's just a tough trade I find it to be a very tough trade when you're doing it as a spread.
I find it a tough trade because the narrative is hard to figure out. It changes quite frequently.
Yeah.
That's the hard part. I don't mind carrying a MES contract at times because I know the narrative. For the most part.
Yeah.
Bonds, it just really moves. It shifts a whole lot, and that makes me a little bit nervous.
I like those micros, those like 10Y, but they don't trade. Those were to me.
Yeah, the smalls micros.
Yeah.
Well, but you still have the regular 10Y.
No, I was talking about the regular 10Y.
Oh, those. Oh, yeah.
I mean, 10Y is done.
10Y is probably the one you could really trade. Yeah, I mean that's about the only one you could trade.
Yeah.
But I mean, what would you do? You mean tell me you get short yields here? I mean,
it's a tough.
I think that's what's going to happen.
I think exactly. I mean, but that's the way I trade.
See, that's the hard part about it. I mean, I think yields are. How do I want to say this? I think. Yields trade so much, the future trades so far from where we actually are.
Yes.
That makes sense?
It can, yeah.
Yeah, it can.
Absolutely.
And so that's the hard part about trading these. I want to trade my opinion, but my opinion doesn't necessarily match up with where.
Your opinion is today and not where they're trading the futures, which are reflecting some point out in time.
It's difficult.
Yeah, I agree.
What about TLT options? Very good one. I mean, TLT options are definitely a possibility. But to be fair, it depends on it depends on your patience level.
TLT it crawls.
Yeah, it crawls. It's very liquid, which is great. You can get in and out easy. We always are looking for that type of thing. But I think for me personally, to Josh's point, I'd rather just be in the future and ZN. I don't mind doing spreads. You hate doing spreads. I don't mind doing like call spreads or put spreads in ZN and ZB. I think that's really the good way to play. I like playing those, but TLT options are great. I mean, TLT options, again, it does crawl. It's a little hard, and that's the difficult part about it. But if there's ever a time to trade it, it's probably this week.
Yeah,
honestly.
Yeah,
it's probably this week. I mean, this thing has really been beaten up. I mean, it really has been. But the TLT is one of the most liquid things in the market. And then, of course, you can go the second order stuff and go HYG and things like that. these are high yield bonds, but nevertheless, it's just interesting. We started out the year in a semi tough trading environment, but there's a lot of opportunity, I feel, right now.
I agree with you. I know Tom, we touched on this on Friday, and I know Tom touched on it again this morning. You get a lot of Jan expiration, a lot of leaps expiring, and I think he said historically it's like 70% up that expiration. And so he was thinking the end of the week might be a little bit more bullish if history holds. So I do think that the beginning of the year, despite it being difficult, I'll be very curious to see what happens when, expiration is in 4 days, right?
Expiration in 4 days.
Friday,
and for those who are kind of new to the game, just so you know, like January options expiration is usually the largest because it's around the longest, right? I mean, if you look right now, there's obviously Jan 26 that's sitting out there, and so is Jan 27. And so people have a lot of time to express an opinion in those expirations.
Yeah, so I'll be curious how the market responds to, because you're going to have the PPI, CPI, the banks will have started their earnings, and then you'll get to that expiration. And I think at that point on Friday, I think a lot of this noise that's kind of throwing us a little bit will settle down a bit, and we might have better ideas to, what's going on where. But right now, it's just a tough trade everywhere. We're talking about Bitcoin, Ethereum, like crypto is, it's like you can't get clarity anywhere. You get mixed signals in a lot of different places. Oil.
Do you think, how much of this do you think is sort of new administration coming in? I mean, the inauguration's on the 20th, right?
Yeah.
Do you think it's any of that, or you just still really think it's just?
I think we're past that.
You think it's really just about the yields and?
I think it's about understanding what policies they're going to pursue. They've talked about a million different things, which that's politics, right?
Yep.
But what are you going to actually go after in your first 100 days? What are the priorities going to be? What are the tariffs going to be? I think that's probably the one thing that's hanging over this market most in terms of politics is what tariffs are going to be imposed, how big are they going to be, and what will it mean for future earnings? If we're going to start hitting people with tariffs, expect retaliatory tariffs. What are margins going to look like? Right now, fourth quarter earnings are supposed to come in really strong. It's supposed to be the strongest since fourth quarter of 2021, which take that with a grain of salt because it was comparing against, a time when we were all locked in our basement. So fourth quarter earnings, if they are good and, and it turns out, let's say for argument's sake, the CPI and PPI come in and they're relatively benign. Like, okay, well now you're starting to get a picture of, okay, things are still good. Inflation's not too bad. But if you get a strong print this week and then you start hearing about tariffs next week, and it's like, all right, well, back off the gas a little bit. Maybe things aren't quite so rosy.
That could take us down if we get that type of scenario for sure.
I don't have the patience to wait to put on my positions until like middle of next week. I can barely get through the next hour.
Looking at a couple of other things here and adjacent, you mentioned Ether and Bitcoin. It is kind of interesting. They were supposed to be a little bit Teflon, especially with the new administration coming in, but it's been a little weak recently in the crypto land. I don't really follow the stories enough to pay much attention. I know on OTCL, the boys had Ryan on today. If you guys are watching that, I'm sure you got more of a tell. I just
the fall in it is just pretty.
And I don't really trade these as much neither. I do own crypto. I do own Bitcoin and Ether in an account that I never look at and never pay attention to. I mean, it's just kind of how I view it, but I don't really trade in and out of them a whole lot. I have in the past. I just haven't in the past probably, 6 to 9 months really.
You know what's interesting? DJT is up 20% today.
Yeah, I've seen that popping up on a lot of different things.
I'm convinced he's going to sell that to Elon. I'm 100% convinced Elon's going to buy
his son. He already had to divest his shares.
And they're going to sell to Elon.
Yeah,
I'm absolutely convinced that that's going to happen.
Yeah, this thing's been on the move. I've seen it pop up in a lot of different things, but again, I don't have any options in here.
I'm not trading. It's not liquid.
No,
or I don't know what it looks like today, but last time I looked at it, it was not liquid.
So no, it's not. Yeah, it's kind of wide. It's kind of wide. And again, we got to mention the dollar too. Again, it's been the same thing. It's been equity's kind of weak. You got vol up, and you got and vol up. You take that with a grain of salt, but it's elevated. And then the dollar's been up. I mean, it's been relentless more recently. It's at if you look at Dixie, it's around 110. That's
and that's interesting because you know that is a priority for the administration, incoming administration, is a weaker dollar.
Yeah.
So
is it? I thought it was a stronger dollar. I thought everything they do.
He wants weaker so that it balances the trade.
Yeah, well, it's not happening that way.
No, which is interesting.
The dollar was high in the dollar was elevated in his first administration too, the first time around.
Was it? I don't really remember. I know he wants the trade imbalance is gone. You do that with a weaker dollar, so that your exports will go up. But it is kind of interesting. The strength of the dollar has been unrelenting. I mean, look at that thing. That is a crazy move.
No, Sean, we're saying yes, it is liquid. Sure, it has 37 million in volume, but like as far as these options, the options are kind of wide. 580 at 6, bro. Like the options are wide. That's what we're getting at when we say
and they get worse. That's actually,
worse,
relatively speaking, not too bad, but they got really ugly.
These things trade a little bit by appointment. I mean, look at this, 20 cents wide on the downside. That's not what you want to see. You don't want to see 230 at 250. So that's what we're talking about, options wise. That doesn't mean there's not opportunity. Again, once upon a time, I used to love to trade stuff like this. Not anymore, though. I just. Once
upon a time, I used to be able to eat whatever the hell I wanted, and there were no consequences.
You got to adjust. You got to adjust. There's no doubt about it.
Now I'm steadily infusing myself with caffeine all day just to stay awake.
So I don't know. What's your ideal scenario here for the rest of the week?
Ideal, I'd like to see a significund pullback. I want to see them sort of pull the floor out.
I thought that was going to happen today, honestly.
Is that the expression, pull the floor out from underneath them?
You just made it one.
That doesn't sound right.
No, you don't necessarily
pull the carpet out.
Pull the rug from
the rug. That's the one I'm looking for.
Yeah.
Yes, I'd like to see that happen. Actually, I'd like to see,
Okay, but what does that mean?
That means I can get
100 handles.
No, I'd like to see a little more than that.
Because here's the thing. Look at where we are.
Yeah.
And again, I use SMA, but I don't know what
we're talking. Moving averages, right? Just to be clear this time.
We're talking moving averages, SMA. Where what are you looking at to clear out 5,700? Another 100 handles, or you know what I mean? Like today, I mean, we got down to 57.73. I thought this was going to be the day, kind of like what we did in August, right? August was jobs report. We were down. Monday we were down. Tuesday we got lower, and then started to climb back up. And I was kind of, maybe that's tomorrow. I don't know.
5,700 is what I'm looking for.
Maybe that happens in the next 2 days. Maybe we do see that, and then it clears it out, and then we start to resume the bounce back up. Who knows?
5,700, I'd start jumping. I'm going to start getting active. We'll see.
Yeah, we'll definitely see. It's that. I think it's that kind of market, and I think we need that before we can move forward. Or some positive news from these inflation reports.
Yeah, if they come in weaker than expected, I think you'll see the exact. I think the market this is it. We'll turn around.
Agent Per looking for 56.20. My guy, you woke up and chose violence today, huh? That's really, you woke up and chose violence today. Yeah, I mean, I think that's about the size of it, man. Look, there's really not much change in the last couple of days as far as trading goes, and I think we're all kind of figuring out, where and when to sort of dip our toes in. Again, if you don't have anything on the table, I think, especially from the short vol standpoint, selling some out of the money put spreads, this is a good time for that. And when you see you see SPX, when you see SPY at 30 IVR. Things are a little nervous at this point in time. Even if you did just one, you could do it with the idea that you did it here, and who knows what happens if things go lower. You don't have to do anything else, but
you just do it small.
Yeah, do it small. I think it's the easiest way to go.
Yeah.
Anything to add to the people before you go? Any words of wisdom? Anything? An all-pro football player, Josh Fabian, has anything to add? The floor is yours.
I got nothing.
Okay, well, there you go.
There's words of wisdom for
you. You heard it here first. Folks, thanks for watching. And as always, be smart, be patient, trade them small, trade them often. We'll see you.
$58.25. What's that? I looked at that Iron Fly.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on tastylive.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Hello, everybody. Well, tonight here we actually have a 5-day week on our hands, and it started off a lot redder. The ES was down like 50 points earlier today. Now it's unchanged, and the real blot on my own day is just oil, very strong, but generally speaking, pretty red day, and some very cool things going on chart-wise. I've got my charts loaded and ready to go. Let's jump right in and cut through them all. Here's the spider for its entire history. And you kind of know the shtick here. We had a very strong bull market in the late 90s. Top for the internet bubble, down a little bit. And then the housing bubble, top right here, down a little bit. And we haven't really had a bear market since. These were the honest to goodness tops. And since then, it's been multiples expansion, QE, bailout after bailout after bailout. And so we've gone from, we've basically gone up about 900%, based principally upon new debt. And now we're up here. And the midline for this channel is the key. So we zoom in, and we are just starting to crack that midline. But more important, check out this cute little pattern going on right here. I haven't seen a top this clean on the spider in a very long time. And we, on an intraday basis, have cracked below the midline. And this is really not a bad topping pattern. And the thing that could get it really going would be either the PPI tomorrow morning or the CPI Wednesday morning, each of which report an hour before the opening on those respective days. So the pattern's looking really clean. Of course, optimism abounds. People are exuberant. Universally, analysts have declared that 2025 will be another positive year. There's not a bear in sight, except for what's on your screen right now. So, yeah, very cool little top cooking right there. Over on the diamonds, and it's a mixed bag right now. Diamonds are up, teeny bit, but we have pierced and sealed up this election gap. Kind of a mess right here. This is nothing like the spider with respect to its clarity. And over in IWM land, it's sporting something kind of like the spider top as well, as you can see right here. We've been banging around doing jump rope with this line, this dashed blue line right here. But the clearest patterns I'm seeing are with the spider and oil's rise notwithstanding, energy stocks. Jumping overseas, EFA, this is also a very good looking reversal. The blue oval that I've drawn here is my approximation of a diamond pattern, and it's breaking beneath that nicely. We're down about 0.5% right now, and we broke below this wedge pattern weeks and weeks ago. So this is looking really good long term. And of course, there's between now and the end of the month, there are a couple of broad things happening. One, a week from today, we'll get new federal administration and all the promises therein. And more important than that, earnings. We're going to be flooded with earnings reports, which starts to ramp up later this week. with banks starting off, of course. So a lot of dynamism coming for the balance of January. Semiconductors continue to be interesting. NVIDIA had its lifetime peak just days ago. This was back on the 7th of January. We peaked at 153.13, approaching a $4 trillion market cap. And I believe NVIDIA all by itself, just this one stock is more valuable than almost every exchange on the planet, with the exception of obviously the United States, of which is a component. And I think there was one other, not sure what it was, but approaching $4 trillion for a single company is a pretty big deal. It's been pretty red since then, though. And we're trading now back where we were trading early in October of last year. And you can see how this has really broken down beneath that formerly strong uptrend. Therefore, SMH is down over 1%. Very sloppy. We had our nice cool top here that got wrecked a few days ago, and now we seem to be dancing with this thing. We're on the outside of it. Today's present price at this very moment is just on the outside of that former pattern. So it's, like I said, just kind of a big fat mess right now. I've only got a couple of semiconductor plays myself. I continue to be an AMD with a target. These are June puts. Target price way down here in the lower 90s. I've also got an XPI. What I'm not in, but is, as I guessed, it's slipping anew. It really is a very tricky one, is ARM Holdings. This is ARM, and this is a bit of a sloppy top tool. This is cleaner than SMH at least. And of course, what would make it very plain would be a failure beneath those lows that we saw a couple of weeks back. With all this going on, the cubes, the NASDAQ 100 ETF, are down a bit more than 0.5%. So like at this very moment, the ES is almost unchanged. It's down just a few points, whereas the NQ is down 121 points. So tech is weaker. Unlike the spider and unlike the diamonds, have not sealed that election year gap, the election day gap yet. There it is, right down like so. Working right down there slowly but surely. And I've got to emphasize again that this peak right here, back on the 6th, was just squeaky clean. I mean, that's just absolutely pristine tag of that broken trend line. And we've been pretty much down ever since. And I imagine that the next mover in this will be the inflation data, because my supposition is that inflation is just going to heat up. The data will slowly but surely reveal that, and people will slowly but surely realize that Powell bring no gifts. One item that my readers had to bring this to my attention as I kind of stopped looking at it, but finally taking a tumble, is Abercrombie & Fitch, which is one of the most volatile critters over the decades. It tends to have these broad sweeping tops that are followed by long bear markets. And this thing had just been exploding. We had gone in short order in autumn of 2022 from the mid-teens up to approaching $200. And it seems to be starting to slip pretty hard here, down today almost $30 a share. Once more, a very sloppy pattern, not something I'm trading or even really watching, but and retail, by the way, speaking of, that reports on, I believe, Thursday. So it's PPI Tuesday, CPI Wednesday, retail on Thursday. Well, what else is going on today? Oh, well, okay, I'm in this at least. Crocs, remember? CROX, the fabled luxury shoemaker Crocs. CROX is the symbol, CRC, S is the name, and we've got our third clean top here, kind of nicely spaced. This is a kind of beautiful symmetry here, and we have broken below this blue supporting trend line, and down nicely today, over 4%, almost $5 a share. It's pretty plain. The bloom is off the quantum rose. These continue to deteriorate. Just the Whitman sampler here. Here's D-Wave, QBTS down over a third. And this peaked at 11.41. We're down to $3 and change now. So whatever that is, 60, 70%. QSI, which I've picked on mercilessly because of the complete misinterpretation of what this company does. So this has gone from 5.77 to $1.90. Woo! And how's the volume doing? Well, it's down. The fever to buy it has abated yet. I guess people are trying to limp out of there with some fresh capital losses. And then just one more, Qubit, QUBT, down today alone about 28%. And here too, we peaked, back during quantum fever, around 27 and change. We're $6 now. So on the whole, 70% more or less drop. And I'm highly confident this isn't done. If you told me that this would be down at $1 or $2 later this year, I wouldn't be at all surprised. As far as precious metals go, no love there. Silver is down almost 2.5%. This has been frustrating, not because I had a long position in this, but because I wanted to get bearish on it, and I got spooked out because we pushed into this otherwise nice pattern. But my view here is that silver might be a really good buying opportunity if and when it can hammer its way down to around about the lows we saw last August, down here where this dashed line is. So let's see how that plays out. But in turn, the miners have been losing today. They, as with silver, as with gold, pushed deeply into their pattern and are reversing away. It's just a mess. I'm a neatnik. I don't want to mess around with patterns like this, but not a big surprise that these are drooping. As I said, the real blemish today was oil's continued strength. Biden, the amount of time left in his term could be measured in hours at this point. But one of his last acts was to do more sanctions against Russia, and that has created concern about the tightening of energy supplies. So oil continues to zip higher. And on USO, we are approaching the kinds of peaks we saw here and here. I just emphasizing not trading oil per se or USO, just the oil producers. And it's a mixed bag. So XOP, for example, on the one hand, has been extremely strong lately. Just almost solid green bars ever since it bottomed right here on the 20th of December. But longer term, the pattern's still building. And this is not what the base of a bull looks like. Maybe it's range bound, or maybe it is hammering out some kind of reversal. But this is not a base. I did earlier today, based on the strength, get back into BP, give it another shot. And interestingly, with oil up so strongly, BP is actually down. So that's a little encouraging. So we've seemed to have kind of topped out here around about 31.96. So I've got some June puts on that based upon this blob of overhead supply. Let's wrap up quick with just a couple of odds and ends. Bitcoin losing and beginning to tease its $90,000 level here a bit. If we can break below 90K, I think that'll really accelerate the selling because that's a psychologically important number. And that is an important base that's been in place for months now. And in turn, a lot of other kind of secondary or tertiary crypto, their breakouts have been slipping back into the pre-breakout zone as well. And naturally, MicroStrategy is feeling the heat a bit, down about 3%. Finally, a couple of, until recently, very strong stocks reversing away. Palantir down again. This peaked right along here on Christmas Eve at 84.80. And we're down at 64 now. So that's about 20% drop, I think, 25% thereabouts in a couple of weeks. And this is looking quite vulnerable, all the way down even perhaps to the lower 40s. And lastly, and I'm into this one, and a good day on this, CrowdStrike, mentioned this every day recently, not only down nicely today, but check this out. This little pattern here, very close to completion. We might just open below that, which would be a nice way to start Tuesday. All right. Well, always good to be with you. And good luck to all of us for the PPI tomorrow. I'm not sure if it will shake things up as much as the CPI normally does, but thanks for coming by, and I'll see you tomorrow. Bye-bye.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the the closing bell here, Tom. You know what? I'll tell you what I love about this business. You can think you know or have a plan on what's going to happen today. And I'm not just talking about on direction, but
you don't know Jack. You don't know
Jack.
Jack.
You don't know Jack. I mean, I thought it was going to be a little bit busier day. I for sure thought volatility would be higher, not lower by almost 3% after trading over $20 once again to 2020. We're 1865. I know the Nasdaq pared its losses by 50%, and I know even the S&Ps were actually green just a moment ago. But I never thought the Dow would be leading us by almost 1% up 300. It's really just when you least expect it. You never know what's going to happen. That's why you have to have positions on to take advantage of an event, whether you think that event is going to happen or not. Like, well, I'm always short premium, you're always short premium. Today I thought was going to be a struggle day. It ends up being a good day. You know what I mean? Like, it's just, you never know what's going to happen. Bonds 111.01 south enough. I'm going to kind of put a fork into this down move, Sadnov. Don't ask me why. Volatility keeps expanding in here. Bonds keep going lower. I think we might have had a little bit of a low here under 111. I know that's music to your ears. I have not been on your...
It's not music to my ears. You calling a bottom in bonds is not music to my ears.
I know
you
it's music
calling a bottom
to your
in bonds
ears.
is
I've
actually a
been in
reason for me to
Fuego.
go visit a doctor. Okay?
I've been in Fuego. I know.
Oh my God.
I know you've been waiting for me to do this for you, to
no.
get you out of the doghouse. I know it's music to your ears.
No.
There, I said it. Under 111, the bottom is in. Bitcoin, not really hanging in there, not really doing anything. 92,000 and change, although it did go under 90,000. It did go up to 96,000 last night. I guess almost 93 is mid-range. Maybe a little bit more action in there than I really thought. Oil had a big day to the upside again, almost 3%. Yeah, not near its highs. Go, up to you.
You took me down in crude oil today.
I took you down?
Yeah, you goaded me into putting a trade on this morning. Remember, you're like, hi, I'd be right. Time to put a position on, blah, blah, blah. I mean, it wasn't a disaster.
I said a ratio spread. I said a call ratio spread. You put
call ratio spread would have lost money today, no matter what you did. Because when we were doing the show this morning, it was up 80 cents. Now it's up 221.
Well, you stink. Gold down $35 and change, a little over 1.25% move. Silver down a full dollar, Sadnov. That's a 3.5% move. That's a big move. So go ahead, go.
It is a big move, but remember, on down moves in silver, you know what they do, don't you? They
volatility contraction. Yeah.
And today is no different. A little bit of an all ugly day in silver volatility. They murdered it. So even with silver falling out of bed, it was a good trading day for us.
Sadnov, I don't know when you're going to get this picture right, but nat gas, every time it trades over $4 in the after hour market, you know you can sell it. It's now down 6.5 cents. Go.
Actually, no. The month that we're in trading Febs, the Feb options, up 3 cents, but they killed
significantly higher. Yeah, right. Mm-hmm.
Yeah, they crushed premium in there today. So it's another one of those underlings. In fact, every single commodity that we're trading was a winner today, except for the euro, which is under 2.5, and bonds, which traded down, like you said, into the, I don't know what the low was, but like I saw 110.27 or something.
110.25 is the low for bonds. Yeah.
All I did in bonds today was buy some TLT. I did not trade anything else. At one point today, they were up about 7 ticks, and then they were down, 12 ticks or something, but all over the place. I think the story today, very different. Couple things. Tesla which opened down like about $11. I think it opened at 383. Never saw those lows again, and all day just kind of it worked its way back.
380, yeah, 383 it opened. 380 was the low, but yes, you're 100% correct.
It just worked its way back to unchanged, and that kind of put the market on a little bit more solid footing. There was also some stocks like Apple, which at one point was down $6. It's only down $3. MicroStrategies was down 20 some odd dollars on the opening. Now it's only down $5 or wherever it is. Yeah, $5 and change.
$5-6.
So there was a lot of stocks like that today, I thought. A lot of stocks like that were just very ugly on the opening, kind of came back and ended the day or close to it, not that ugly.
Sure.
But, it's also one of those days where you kind of, I would say like a year ago, if we had a move where we opened down 50 and then we went back to unchanged, we'd be up 50.
Yes.
Now we opened down 50, go back to unchanged. Instead of being up 50, we're unchanged. So there's more sellers out there hanging out, underneath the market. But it's exactly what I thought. Not that I thought they were going to rally back today, but what I said is early this week is going to be the weak part. But what you're going to see, and late in the week, I think it'll be a little more bullish for the markets. But what I think you're going to see is a huge amount of churn this week, because this is this is January leap expiration. There's going to be huge volume, lots of churn. I wouldn't be surprised to see more of this tape action all week long.
Yeah, if they had got the bonds going today, I think you would have seen something very different to the upside. But they can't get those things can't get out of their own way, and
they can't get out of their own way. But the bat did call the bottom in there now, so
you're right.
I hope I'm right too. Now I know you want me to say the same about the yen, Sadlov, and even though the yen is up a little bit today, I'm sorry, I cannot say that about the yen for you. Okay, so you're on your own there. I know it would be music to your ears if I said a bottom in the yen too. I can't.
Okay, I can handle that.
You're handling it. Actually, you're handling it quite well, which is pretty good. Costco, you mentioned some stocks today. Costco down 11. Costco traded down at 921, about $3 or $4 lower. Coin really hasn't gotten out of its own way, although it was $8 lower than it is right now. Still down $10. Meta down $9. Also, it is about $7 or $8 off of its lows too. So you are correct, Sadnov. There are a lot of stocks that the lows were made on the opening pretty much.
Yeah. So I think you're going to see again a lot more of this all week long. This is going to be what this week looks like. So don't fall in love with any of these moves one way or the other. Or and don't get your hopes up that any of this stuff is going to be sticky, because I don't see it. But I don't know. We'll see. Let's see if there's anything else that jumps off my screen. And I'm going to say, well, from a P&L standpoint today, biggest losers for me, surprisingly, was Moderna.
Yeah, I don't have an mRNA position. I mean, why is that? Why is it? I mean,
why is it? Just because you don't expect a $40 stock to go to $30. That's all. It's already down from 140. Right now.
Yeah.
So, I mean, other than that, bonds and the euro were my only losers. The winner side today, we got a lot of small winners because they killed premium.
They did kill premium. They actually killed premium a little bit in Tesla. It looks like they're bringing it back here a little bit. It was Ivy rank was 72. It's now 77. Nvidia was down.
I lost money in Tesla today, and I'm just short premium in there, and I didn't trade it bad. But the position I have on, they widened it out a little bit.
Yeah, I was up okay money in Tesla for a while today, and now they just took it all back. I'm basically unchanged in there.
Yeah,
gold was a nice move. I needed the gold move lower.
Yeah, I don't know.
Gold down $2. Well, GLD down $2.64.
So I'm heading into the rest of the week with one of my smaller positions that we've had on in quite some time. Very, very much a kind of neutral looking at the rest of the week. But
well, TSM, you've traded it before. That's one of the first earnings that you'll be coming out. It's on the 16th. Today's the 13th.
Well, today they whacked it.
They sure did. Down $7 and change, about 3.5% move, but you could see their earnings January 16th.
Yeah, it's a little bit of a Taiwan Semiconductor's got a little bit of there's a lot of Trump noise around that one. So you got to be depends what side of the fence you're on with respect to Taiwan. And the stock that carried the Dow today was UNH. I mean, I have one position on in there, and that thing was all over the place. But UNH was up $20 all day.
Yeah, it's up $20 right now. It's been staying steady there. It's had a $10 range from 33 to a little bit more, 33 to 47. But yes, UNH been good for the Dow. My Taiwanese sources just told me about 1.5 million Tesla options have traded, and about 3 million Nvidia options have traded. I know we have not mentioned Nvidia.
That's significantly lower than Friday, where it was almost 5 or 6 million Nvidia options and 3 or 4 million Tesla options. It's a fraction of the volume from Friday, which the volume was absolutely massive.
Nvidia traded under 130 to 129.5 stocks. It's had a 4-day slide from around let's just call it 154 or so on the highs down to about 130 on the lows.
Yeah. It's dropped almost 16-17%, which is like somebody said to me, I think I said this actually to Ilya or Chris last night, or whoever, it was like, in markets like this, you got to forget about things that don't trade. Like, you can't sit there and worry about the Aussie dollar or the British pound or stuff like that, which trades, 200 options a day when you've got NVIDIA trading, 6 million contracts a day and moving around, way more than that. Like, this is a stock picker's market. It's a stock trader's market. It's a market that loves to rotate day to day and all this other stuff. Forget about all this. That's why you have to be product indifferent. Forget about the stuff that doesn't trade. Forget it. It doesn't matter. Yep. Now you got me looking at my NVIDIA position here.
You're right. NVIDIA saw enough good memory out of you. 5.5 million options traded on Friday, just to go with the 3 million that you have so far with about 15 minutes to go in the day.
Yeah.
So significantly more. I'm just validating your memory. You're still sharp as can be. Are you taking that creatine or something? What are you doing, man? I noticed a lot of changes in you lately. I mean, you still say silly things, but
creatine? What the hell is creatine? I don't even know what creatine is.
Oh, you will soon when you start forgetting your name. We're going to start pumping that in you.
Are you taking creatine? I don't think so. Would my cardiologist have prescribed it for me?
I think he would be okay. I think he'd be okay with it.
If my cardiologist...
It's for your mind and body, Sosnoff.
Oh, I don't need... My mind is sharp. Listen, there's a lot of things... I know a lot of things about what's eventually going to take me down. It's not going to be my mind. I mean, my mind might have some struggles, but my body's going to go way before my mind.
Your body's going to go way before your mind, you just said?
Oh, my God, 100%.
Oh, I don't think you'll get any takers on the other side of that bet, Tom.
100%. 100%. I'm going to be one of those guys who goes, I'm going to be one of those people where they actually sit there and they go, his mind still works.
Just leave him there, though. He'll be fine. He can't hurt himself there. He'll be fine.
Right, exactly. His mind works fine.
No, he might get up and walk away. No, he can't. He'll be fine.
Exactly.
You're gonna go back to being a baby again. Like, we're just gonna be able to put you in a corner or leave you on the side on a rug or something like that. When we come back a couple hours later, you'll still be there.
Yeah. Yeah.
It's all right. Not a bad way to go, I guess.
Yep. It's just going to be me and my helper monkey. I haven't figured out what that's going to be, but I'll have a helper monkey. I'll be good. All right, well, what are we going to do here? I'm going to need... I need...
Do a little something in SPX. What are you going to do, Sadnov? Pick a direction. What are you going to do? Come on.
I don't love the... How much time do we have left?
12 minutes.
12 minutes. This is a tough SPX one because they took a lot of juice out of this today. You go SPX, end of day, 0 days. Let's take a look. Where are we right now? We're 58.22.
Well, the 15s are 85, 90 cents, and the 30s are $1.05.
Okay, what side would you do? I got to play the opposite.
I don't know if I do either side. So now that I look. 7-point move on the E-mini S&Ps? I don't know. You went with the putties. You went with the putties. Sold the putties.
I went with the putties, but I reluctantly went with the putties only because if you're going to, it's one of those, like, if you have no opinion, right? And it's a complete toss up and
take the 53.
What? Yeah, you're going 46, 54.
Yeah. Are you just doing this because Bat sold those puts at $2.15 on Friday and made $2 on them and stuff like that? Is that why you did this?
Listen,
you got 10 cents right now, Sadov. If I was you, I'd take it and run like a thief in the night.
I'll make this easy for you. I've never made a trade because you did it, and that record will stand.
That record will stand the test of time.
15 puts.
Yeah, you're good. The puts are 50 cents now, Sadnov. We just upticked. Even the S&Ps upticked $4. You made 50% profit in no time. Oh my God, you made 70% profit in no time.
There you go. In 30 seconds. We made 70 cents. Covered them at 30.
It wasn't 30 seconds. I mean, it was 55 seconds.
Okay, 55 seconds.
I'm looking at the confirm.
That's one of the reasons I love doing the shows, because like you can have a little fun like that.
Yeah, you get to do you get to do what the bat suggests, and you don't have to think on your own anymore. I get it. I would do the same thing too if I was you. Hey, I still didn't get my $20 though. I will say that.
I know it's on its way. It's a little slow today. We got the internet issues.
Internet issues. Wow.
Working on it. What's this little rally here going into the close? I thought they might. That's why I sold the puts. I thought they might goose them a little bit, but nothing like.
Even the S&P's up 5. I when they were down 50 this morning and volatility was percolating, I don't think anybody had green on their card for the even the S&Ps. It'd be really surprising in the next 9 minutes if you get the Nasdaq to turn green. Because the Nasdaq's been the weakest of the group all day.
You're not going to get that. But if you have a couple of minutes left here, Bat, I mean, you could probably sell a few calls here and make some money, but I'm not going to flip the cards over. I had I keep my 6.
You need to finish strong, Sad. If you don't typically finish strong, whether it's at work or any other place,
I need to finish my 6.
In your life, you don't usually finish strong. Like, that's like, ooh, Sad's finished strong. Not something you usually hear.
That's depends. Yeah, that's probably true.
Okay, I think I know. No rebuttal.
Well, I mean, it's all just speculation and hearsay.
It's all smoke and mirrors anyway. Sure, I understand.
Anyway.
I understand. Even the S&P is traded 1.57. Even the S&P, decent sized day, not as busy as Friday, but good.
Yeah, decent
volume wise.
Yeah, I agree.
I think the most surprising thing is volatility contracting by 62 cents. Still relatively high at 18.5.
Give you that. I'll give you that. And I think there's going to be some stuff to do. Unfortunately, we just need a rally in the bonds. I mean, that's really where I'm at in my life right now. I can't believe after all these years of trading, I'm still hoping that the bonds do something. Like go up or go down.
I know. Well,
I don't know why they can't be two-sided like everything else. I would not have had up on the green on the S&Ps today, green on the Russell, and green on the Dow. I would not have picked that, but I have to say that we did not get caught by that.
Well, let's see what these three guys have to say. We got my friend Dylan, we got my friend Chris, and my friend Ilya. How are you, gentlemen?
Gentlemen, Tom,
welcome to the show.
And I spoke on first call yesterday about maybe they were going to try to correct him in the front half of the week, and it looks like they're starting to do that a little bit. It's a little bit tenuous, but maybe in front of CPI tomorrow we get another day of correction higher. I started to take some of my shorts off today a little bit, but I'm still pretty short.
Yeah, I don't really make much of this. I don't make much of this day, at all. It's just kind of a nice little choppy day. I think this rally was way stronger than I thought it would be today, which is, I thought they'd be down early the week and up late in the week, and so far down early and then up. So no late in the week. So we'll see.
Right.
Yeah, we'll see.
You had that underwater close on Friday too, ever so slightly. So thought maybe we'd get a little bit of a bounce to the market. Opened so low the way we did, it really looked bad. But I didn't think we would get this type of rally here today.
No, I don't think anybody did. Yeah.
My kind of thesis was that it was going to be down overnight because Asia would take their shot at following what Wall Street led them into on Friday. But that as you get into CPI, you wouldn't have a lot of desire for people to follow through until the numbers are out. So maybe tomorrow this follows through a little, but unless you do some real feats of strength here, it still looks like it's topping across a lot of these indexes.
Sudden volatility was percolating in some of these ETFs I mentioned this morning, like in SPY, where the IV rank got over 30. It's now back under 30 to 28 and change. You think that play is over? Did we miss it? Or can you still trade a little bit of the ETFs?
I think you still trade the ETFs. I think you should trade the ETFs plenty. I mean, with volatility where it is right now, I think you can easily trade the ETFs. But I mean, up 10 today. Ooh, was not thinking this. Was not seeing this. That's for sure. In the S&P.
Going to close on the highs.
Yeah, surprising. Surprising, and definitely not too bearish. That's for sure.
Yeah. Right.
All right. What do you think, Mr. Radigan? Oh, no sound.
Muted. All right, there we go. Can you hear me?
Okay, go ahead.
I think that most interesting to me is that the entire Trump rally basically seems to be. But there's a decent chance by the time the next president of the United States is sworn in a week from today, that the entire sort of post-election rally will be gone.
That's been the thought process from a bunch of us here at Tasty for quite some time. That after January 20th is when the market, I don't think the market's going down this week, but I think after January 20th, there's a pretty decent chance.
Mm-hmm.
Be careful what you wish for, they say. The devil is way better than the devil you don't.
And I think you're really seeing that evidence. And I think also people didn't understand. I mean, this is not any grand insight, but I just think that people did not appreciate the risk of having a hot economy. Like that persistent inflationary pressure as a pre-existing reality for the Mad King is not a perfect situation.
Yeah, but you don't have to deal with reality right now. And for some reason, what was weird today was that DJT, which we don't really trade, so I don't want to bring that up as because I don't have a position in there or anything like that. But it was the one stock all day that was up, like
it was up around $4. It's up $7 now, $7.50.
The whole afternoon it was up between $7 and $8, and which is a crazy, decent sized move for $35 stock, up almost 20% today. So that was the stock that kind of bucked the trend all day, and that goes to your Trump argument.
I looked at the options in there. They weren't really tradable. I mean, February was a little bit better than March. But even in February, when you take a look at some of these options, they're 40 cents wide. You go into March, where some people might be living with 67 days to go, and you're getting 70, 80 cents wide. So markets in there are a little bit too wide. And the spreads trade very cheap with the amount of skew that you have in there. So you got to be careful one way or the other.
And they don't trade between the markets, Tony. They're really hard to get fills.
Yeah, I could see that just from the amount of volume in there and the way the pricing is so wide. I agree with you.
Yeah.
But I would say it's sort of a moment because it's like I actually feel I'm sort of encouraged by that jobs number. You're encouraged by what could be some decent first quarter earnings, and then you're discouraged by the annihilation of Western Los Angeles and the arrival of the Mad King. And so it's a kind of a conflicted moment.
Oh, I don't think there's any doubt about that. But I'm not so sure. I don't know what the Los Angeles thing does to the. I don't know.
Maybe nothing, but it's psychologically. Well, certainly it taps on real estate and consumption.
In what way would you say, Dylan? Positive or negative?
Yeah, which way does
both? All the above. I think just distortions, because obviously all real estate goes up in California, which just in the short term. What nobody knows is the property and casualty time bomb and whether that's going to get loaded into somebody in the private markets or offset to the taxpayer. And you don't know whether the supply disruptions are. I mean, there's a whole, because you're going to see Vegas rents go up, San Diego rents are going to go up, Texas rents are going to go up, Palm Beach, South Florida, New York, Chicago. I mean, is that a really big deal? I don't know. But is it big enough to be a macroeconomic factor? For sure. For sure it is.
With some inflationary components to rents going up, to then the rebuild and all of that.
No, I think that's why between the jobs number.
Yeah.
The disaster in California, it just pins any president. It's not really unique to Trump. It pins the executive branch into a reality where things that they might want to do that could be inflationary, whether it's a stimulus or whether it's a tariff, there's less room for error because you got you have pre-existing inflation. So.
Well, I think it puts I don't really think Trump has a great understanding of market structure, and I think that the risk is that he comes in like a bull in a china shop trying to, wonder why he can't lower rates.
Yeah.
And
they're already low.
Yeah, but the 30-year mortgage is not. I mean, now with bonds at 111, you're not writing mortgages at
at 7 points when everybody wants 3.5.
Yeah, the 30 years up. I mean, yeah, you're right. The 10 years low, but that, it's weird.
Anyway,
you do an arm.
What it is, the point is,
you do an arm.
The risk is we all can see the risk. We'll all find out together. No one knows. But again, it's a challenging moment. Let's put it that way. I mean, from an investing standpoint, because I just would like to be short, nakedly short, balls short. But I don't.
Well, that hasn't worked.
Come on over to the dark side, sir.
No,
the water's
way
fine.
better today. Way better today, Dylan, than it was last night.
I don't know. I'm going to talk to Vecchio first. So he's going to talk.
You guys can't see through the muck. It's business as usual, my friends. Business as usual. Okay, you can unthink your thinking. It's business as usual. Trade what's in front of you. Okay. Bonds have been weak. They're going to stay weak. Although I did paint the low in there today for you people. Wanted a little bit of a rally in bonds. You'll get that in the coming days.
What does that mean? Who are you people?
You people. You disgusting friends. You
people. Us.
We're going to take a quick 90-second break and come back. Even the S&Ps close on their high, Sosnoff. That's a bullish sign. You don't get to see that every day. We'll be back in 90 seconds.
Yeah, you take
all that to Vecchio.
You get to see that about 300 days a year.
Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Stocks rebound, close at the highs. What does it mean? It is Monday, January 13th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan of CNBC Celebrity in Milan. Here to take you through the next hour as we wrap up this futures trading day. What was a day defined by markets being down overnight as Asian traders digested that hotter than expected U.S. jobs report on Friday, turned into a turnaround Monday S&P 500 closes up by about 0.2%. The Russell, which was down over 1%, finishes in the positive. The NASDAQ, which was again off by over 1% today, barely down by 1/4 of a point right now, or 1/4 of a percentage point right now, I should say. Bonds turn around a little bit here. Metals, however, get slugged. There is a reversal in the currency space for some of the major currencies versus the dollar, although the pound continues to get pounded. Oil breaks out to new highs, and the real 30-year yield hits its highest level since 2008. Are markets topping out? We're going to answer that all here in the next few minutes. If you're joining us on YouTube, come over to the platform, tastylive.com, see what we're about. If you're already on the platform or on Tasty Live, head over to YouTube, join the chat, tell us what you're trading today. Ilya, you and I spoke a few hours ago, and the reversal that we were watching over the course of the morning really did gather some pace here today. An S&P that was down near 58.10 is now back up at 58.74. It's a 1% swing and then some over the course of the session.
Yeah.
Same thing can be said for the NASDAQ and the Russell. Is this just a dead cat bounce as markets are in the process of rolling over?
I think we're going to find out really in the next 48 hours, because what this to me looks like is the market saying, right, what we cared about last week was the Fed and rates. And the message that we are sending out there is, when the data is hot, we're not going to look at it as, oh, good growth. We're going to look at it as, oh, no cuts or fewer cuts, rates higher. We saw that with ISM. We saw that with NFP. We saw that with the University of Michigan consumer confidence numbers. It was unmistakable each time. So clearly, this week, we have a focal point implied therein, and it's the CPI report, because that's the next real inflection point in this story. So are markets going to run away this way or that ahead of that? Probably not. They're going to look for that number to come out to give them a sense of conviction this way or that. But of course, there was already significant damage done last week. So my sense coming in to this week, I mentioned it on last call with Tom and Tony just now, and we discussed it with Tom and Victor on first call at the open yesterday, this idea that markets now have room to correct and digest higher a little bit to sort of get themselves a little bit more neutral before the event risk. And then whatever that event risk brings, that's the real move. And if you look at what the S&P is doing here, it's basically testing the underside of the support that it cracked on Friday. It hasn't come back in to undo that breakdown. It's pushing up against former support, become resistance. And so we'll see then how this develops. But at this point, this is still a market that's topping in my mind, but it's probably not going to make significant headway in that direction. It certainly didn't today, and it probably won't tomorrow in the way I sort of envision it.
Dylan, one thing that we talked about on the way up in this market was that when the market got a little bit too extended from its 1 month moving average, it was a cool off period. When you were more than 3% above that 1 month moving average going higher, the market tended to slow down thereafter. The same thing can be said on the reverse side. When we've been more than 3% below our 1 month moving average, it's been a turning point. We saw that here in December, on December 20th. We saw that here on January 2nd. We saw it again here at the lows this morning. We were more than 3% away from the 1 month. Why should bulls feel good about this? This seems like a market that's just stair-stepping lower right now. Why buy the dip?
Because the economy is stronger than you think. The super glide is more powerful than you imagine. Deregulatory glory is about to abound upon your head. There'll be expedited permitting. The world's largest ever construction and new infrastructure boom is about to get underway in Los Angeles over the next 5 years. And get on or get out of the way, my friend. Banks, real estate,
to believe that,
technology.
you have to believe that the markets want growth here. and last week's data would suggest they don't.
That is a noticeable change in how the market's digesting things. Ilya, Friday on Futures Power Hour, we called the episode "When Good News Isn't Good News." Right. I made the mistake, Dylan. One of my telltale strategies for the past few years, as long as you've known me. If there's stock weakness on a good jobs report, buy the dip. Almost every time, right? I did that on Friday. I had to get new tires for my car. I figured, I'll buy the market's selling off. I'm going to buy some calls, just get back to where we were prior to the data, pay for those new tires. And it didn't work out. So not only am I out on the money on the tires, I'm also out on the trade, which was a 0 DT, so there's no hope of recovery. But the point of it is that the market is not responding in the way that it used to. Ilya points out here, we had hot data last week and the market is selling off. Is this are you thinking that maybe there's a regime change?
Too soon to know.
Too soon to know if it's a regime change?
You're too soon to know. Because you don't know. I think there's going to be less and less activity. It's 1 week away. It's possible we get a full batshit crazy speech a week from today. I mean, if anything, it may be likely. I mean, this man does not operate in any normal domain of content. So who knows what you're going to get a week from today. But I think the market's going to sort of calm down and listen, because that I think will set the agenda for the next 100 days in terms of sentiment.
I'm curious as to what your bar is for crazy that would impact the markets, because last week we had a press conference talking about invading Panama and Greenland.
More of that.
More invading of Panama, more Greenland, more Greenland
Canada.
Wants to leave Denmark and would prefer to come over. Canada would prefer to become the 51st state.
I mean, I get the allure whenever I play Risk, and truth be told, I do play Risk on my phone. It's stupid. It's something I do to kill the time sometimes if I'm waiting for the train. You take Greenland, you take Central America, helps you get that extra army bonus for when you conquer all of North America. And it prevents the armies coming over from Europe. Granted, that's not what we're playing right now, so it comes in a different context.
I like Italy and Spain. If we're just going to take countries, let's take Southern Europe. It's nicer, better food, nicer weather.
You're like the Italian Riviera. Personally, what? If you want to exile me to Elba, that's fine. I'm happy to go.
I think we just, No, but I mean, I just think that the point is the number one Trump risk is inflation, and the inflation noose is tightening, not loosening, and still his two big headline policies, deportation and tariffs, are two giant inflationary forces. Lay onto that the jobs number, lay onto that the California situation, which is also inflationary, particularly when it comes to materials. We shall see.
Well, all of the Trump economic policy universe is inflationary. What the markets were balancing was, and we saw this in the FOMC minutes, Fed officials talked about this and cited business surveys that they were reading about this, that essentially the balance up and down for the economy was, okay, well, on the upside, the tariffs are like a tax, and the deportations are a disruption to labor markets. That's growth negative, but deregulation and tax cuts are growth positive. Okay, yes, in the sense of growth, those things may have some offsetting dynamics to them. But in terms of inflation, all of it's inflationary. Tax cuts are inflationary, deregulation is inflationary, and the tariffs are inflationary, and the deportations are inflationary. And let's be serious here. Absolutely nobody is taking territory from EU member states, and that's Greenland. That's property of Denmark, an EU member state. So that's just not going to happen. Maybe we'll build a base there and claim victory. That would be something that's not taking over of Greenland. But it's these things being inflationary and the market being spooked by inflation that to me seem like the things that matter. Because everything we've learned here in recent weeks is the market is afraid of inflation and of rates. And all of the Trump trade narrative, good for growth, bad for growth, is inflation and higher rates.
Today, it seems like it's a story of divergence between tech and everything else. Maybe it's because of rates and inflation fears, although the way that oil moved today, it certainly didn't help anyone's sense of things. We can take a look at the commodities momentarily. But there's also talk of another chips ban. One of the measures that the incoming Trump administration might take, something that the Biden administration has been exploring and won't implement prior to leaving office, is how to prevent China from exporting certain goods and importing certain chips through third-party intermediaries, like Vietnam, for example. And we've seen this and we've talked about this ever since the sanctions against Russia went in place. All these countries that really didn't have a significant role in global trade, like your Kyrgyzstans, for example, see that their imports from from Russia and their exports to the EU jumped by like 2,000% over the span of a year. And the same thing's happening with some of these chips that are being imported and exported out of countries like Thailand and Malaysia and Vietnam. And so what the Trump administration says that they're going to be doing is that instead of trying to just scalpel a tariff here, what they'll do is they'll apply the 25% across the board tariff to this particular good for anywhere in the world. That way, China can't get around this by saying, like, well, we're importing it through Vietnam. We're not importing it from the United States. That good would now have the extra tariff on it. There's no loophole covered. So those bans are circulating, through the media. We've heard the stories the past 2 or 3 sessions. SMH, though, opens lower, trades lower, hits the trend line from the August and December swing lows today and finds a bit of a bottom. Last week, it looked like we may be getting a little bit of a breakout there. It obviously reversed. What's the play here? I mean, should we be just saying like this range is going to continue? Ilya, we talk about the seasonality of this market, January, February, March being chop. Should this be on our watch list just to look for another vol spike and then slap on an iron condor and see it in 45 days?
I am more so looking directionally at the NASDAQ itself, into which obviously this is a major input. With something like this, with 35 IV, it's not really anything that looks terribly attractive. It's been stuck in this congestion now, basically going back to the beginning of October. There's plainly not a kind of responsiveness here to what's going on in the broader equities narrative. And frankly, the broader equities narrative looks more interesting at the moment. So last week, I had separate of this an XLY short. I took that off today and took that PNL. Because it looks like
interesting place to take profit here.
Yeah. So I looked at this and said, okay, we're getting into areas of former congestion. Let's not get cute. Let's stay with the big indexes. There are big narratives being decided here. There'll be time for sectoral differentiation, but what happens next here is unlikely to be something that is having to do with this or that sector, this or that company, this or that narrative. This is about the cost of money. And we saw that last week. To Dylan's point, it's also about capacity for fiscal chaos. And so as we look at this, I'm happier to be in broader indexes and not trying to figure out what this or that pocket of the market is going to be.
Why wouldn't we just sort of get into a set of trades that benefit from rising inflation fears?
Because I think those moves are here. I think they've been with us since September. The real
so you think there's nothing more to be had in
there is eventually, but maybe not immediately. So the big concern for me here is, I think we all agree the bonds look really extended on the downside. The dollar looks very extended on the upside, and we're down to one cut being baked in for the Fed for this year. The markets have come a long way. So the risk, the surprise risk now seems asymmetric in the other direction. Let's say you get a soft CPI number this week or a soft retail sales number, and the market goes, you know what? Yeah, okay, that there was a reflationary thing to do. We've done it. And now we're out of fresh news on this story for the rest of the week and into next week. Let's correct. So I wouldn't incrementally look to buy more reflation fear. In fact, I'm unwinding a little bit of it. So I took my Russell short off. I took XLY off. I'm just kind of backing up a little. I still have S&P short. I still have NASDAQ short. In fact, I rolled S&P forward to give myself some more time. But I think here it feels a little bit like, let's get to the other side of CPI and make sure the market doesn't get its catalyst to go the other way, because it seems like there's lots of itching for that to occur. Markets are just looking for a reason.
I mean, I could make a case that the dollar's more likely to go to parity now than it is to reverse at this point.
Dollar's going to parity versus the euro?
Yeah.
Yeah.
Why wouldn't it?
The question is when.
Exactly.
Well,
before it gets weaker. I think it's heading right now. I mean, this is where it's like focused on it.
I mean, the macro
if
story.
If the bonds bounce, that may be a hard sell.
I would love to sell 60 at 105 if bonds bounce from here, because the factors on the table: higher structural inflation because of the tariffs. That's the case, and the Fed's terminal rate's going to be higher, which the market is pricing in. And so how are currency markets adjusting? There's like a permanent yield advantage being baked into the dollar right now.
Yeah.
Because if you're going to have permanently higher structural inflation, that means the Fed will not be able to cut as deep as they want to in future cutting cycles, including this one. While you have a deindustrializing Germany, which is seeing some of its weakest manufacturing numbers since the global financial crisis, and no off-ramp for that. You have France, of course, which is France. Italy has been surprisingly strong under Meloni.
Italy's the leader. Italy is the global. Italy is both the political and economic leader of Europe, which actually should be taken as a red flag, because if everything has gotten so bad in England, France, and Germany, that the Italians are now the strongest economy in Europe with the most stable government, that is a compliment to the Italians. But
is
it, or is it really evidence of a total self-destruction by the Germans, the French, and the British, basically all at the same time? And the Italians
yields in Greece are lower than France, and Spain
Giorgia
was
Meloni's
the outperforming economy last
in the world
year, globally, in the G10.
The most pressing issue in Italy is whether or not people have cappuccinos before or after lunch. Like they're not exactly as serious people. As one of those people,
who moved to Italy? When did Italy become the global leader?
Shortly after Radigan.
Shortly after my arrival, I'll have you know.
Yeah.
And
anyway, unlike
the
Commanders winning the Sunday before the election indicates whether or not it's going to be a Republican or Democrat, there's actually a causal relationship between your arrival in Italy and Italy becoming the premier destination for global leadership.
I think it's apparent. I mean, that's sort of self-evident.
Self-evident.
But it does mean that the euro is getting weaker, and it means that you're happy to have dollars lying around more than you are euros.
Yeah, I mean, looking for a euro bottom has been easily the painful part of my start I mean, obviously I've been short stocks, that's worked, but looking for a euro bottom has not worked at all.
102 now? I mean, this thing's ready to go.
Well, we talk about the trajectory of U.S. spending. Did you guys see what Elon Musk said about the spending cuts that he promised that would come through via Doge? In case you missed it, this is not
enlighten us, sir.
Elon Musk
probably
says
won't
Doge
happen.
Probably won't be able to find the $2 trillion in spending.
Probably
cuts
won't happen. Sorry about that.
I mean, it's sorry for everyone, I guess, Dylan, right? Because we were promised $2 trillion in spending cuts, and we're not going to get them.
Not going to happen. I can't help it.
Maybe they find them over the course of a decade in some form or fashion. But this is the reality. I know I've seen the comments like, Chris, you're just a Musk hater. Chris, you just don't like Trump. You guys are all like just saw stuff. It's like, no, when you have a certain understanding of how these systems work, blue ribbon commissions don't have any statutory spending authority. And the money that they outlined that was being spent to waste, most of it was due to interest on the government debt. So if you're saying we're wasting $900 billion a year and $700 billion of it is due to interest on the government debt, and then 180 billion is because of money being sent to the wrong places for accounting issues. It doesn't really seem like we can just cut spending to get to that 2 trillion number. Either way, though,
I thought we were supposed to grow our way to the number through super growth.
Yeah, that's the trickle down economics, right? Where the rich piss on everyone else, right? And we think
that's that inflationary is inflationary of the 4 pillars of Magonomics here.
You won't do the mega growth?
Yeah, I mean, it's just empirically, it's BS, right? Trickle down economics.
I mean, you do the mega growth, right? You cut red tape, you cut taxes, you juice up the economy, and then the Fed jacks up rates on you because they have to keep inflation intact on a reasonable path, or else you get pitchforks and torches because inflation went up again.
But don't you think that's going to piss off the big man?
Well, the point about the spending cuts is that they're not
I don't think the big man wants pitchforks and torches.
And they're not going to have them because you're not going to get the big, massive spending cuts that Republican congressmen are going to have to go sell to their constituents a few weeks before the 2026 midterms. I mean, it was never going to happen. But the point is, are you thinking about the bond trade then? If you're not going to get spending cuts that are substantial, because Doge was never really anything besides a shiny toy for Musk and Vivek Ramaswamy, who, by the way, where's Vivek Ramaswamy, Ben?
They pulled him as soon as he started insulting White. When he went off on Whitey during the H-1B thing, once he gave his opinion of old Whitey, they asked him to stay. They got rid of him.
Well, no, that you're like being jocular about that, but literally, if people were watching the space in real time, Musk and Vivek were like, well, we have to hire foreign workers because American workers aren't skilled enough for the jobs that we need them for.
Because Whitey won't work.
And then the people say like, well, why don't you give us the education and tools to become those workers? And, Vivek and Elon are basically like, no, you guys are too stupid to learn how to do that stuff. So kind of alienating. He's been sidelined. But so Doge, understanding what it is, taking at face value, the spending cuts aren't coming. So that big deflationary impulse to the economy that could offset the tariffs, right? You raise tariffs, you lower spending elsewhere. The inflationary impulse is perhaps negated, even if it means growth is overall down. But even so, lower growth, that growth premium comes out along into the curve. You could have a lift in the bond market. We have to just reduce the probability of that from being like an outside, maybe Musk is able to get this done because he's going to bully everyone with his wallet and political donations, to probably 0% chance of being an impact this year. Off the board. So it's recession, right, or bust. The Fed right now has to see that inflation is dead, or we're going to get a recession to get the next rate cuts, because the Fed itself, with those minutes we saw last week, very much of the mindset that we are looking at, a lot of path uncertainty due to those tariffs, which today the 30-year real yield hits its highest level since the global financial crisis, in part because oil's been on an absolute tear here the past few sessions. Dylan, as our resident standing in front of the train guy when it comes to oil and who somehow does it so successfully, last week we were saying that this time feels different. It wasn't time to step in front of that train yet. So now that we're $5 higher and we're trading at the highest level since April, July, do you think it's a good time to short oil here, or still no?
I mean, the problem is I feel like I understand why you asked me, and I understand I had all that success, or some success, I should really say. But I feel like I was always just a geopolitical skeptic for World War III. And I feel like this oil move is more, I guess there's talk of the Russian pipeline being more restricted or something. I just feel like this move is not so explicitly Russian or Israeli like madness. So I have I'm inclined, just because it worked so well last year, to get in here and get some puts cooking, because how can you not? But I do feel like this move to me is a little bit less clear cut. In terms of being a setup for an automatic contraction.
Billy, is this just people realizing how important oil is because everyone's watching Landman with Billy Bob Thornton on Paramount Plus?
That would be a more plausible theory.
Then China actually rebounding and driving this.
Yeah, then China rebounding or the fundamentals of this market actually changing. Because the reality of the situation is the U.S. is awash in oil. The U.S. could be more awash in oil. Were drill, baby, drill interpreted loosely mean, for example, retooling U.S. refining capacity to refine more of our own grade. The only reason that we really still import any oil is because our refining infrastructure is tuned not to what we produce in some sense. You need refineries to refine a certain grade of crude, and we're used to not refining some of our own output. And so we export that and then import stuff that we can refine. So if you were to kind of put a big, broad lens on what increasing energy output would mean, which is what the current administration seems to want to do, it would be higher records in output, turning on more rigs, turning on more fracking infrastructure projects, which have actually been coming down. There's been more of them shut off even as output has increased because we've become more efficient. So you have space. You could increase output. You could retool things. We're awash in oil. We could become more awash in oil. The geopolitics have only become more stable because Iran is very much on the back foot with their entire network falling apart. Hamas apparently on the verge of a ceasefire with Israel, if you look at the recent headlines over the past 24 hours, having been basically bashed into the ground. Hezbollah essentially now off the field, and the collapse in Syria basically meaning that Iran can't supply weapons and various equipment and material to the proxies that it supports. So you have a situation where the geopolitics, at least in the Middle East, are more, not less stable. And so it's the kind of thing that seems to ultimately give way to weaker oil. I agree with Dylan. I think this melt up here is not about geopolitics. It's more about growth. What we've seen is hot U.S. economic data suggesting that there's more growth, there's more demand. But now you're getting to a place where that's probably running out of steam as an incremental story, just because the supply is so abundant.
Yeah, I mean, sometimes better be lucky than good. Narrow miss here for me, although the way I was going to structure the trade, it wouldn't have been painful. Last week we were discussing what it would be looking like on Wednesday if this was a potential topping candle. Not quite. You never got the close below the Tuesday one and hugging that 1 week moving average. At the time, we said if you wanted to be short, you do it through short MCL or long out of the money puts, but not shorting calls simply because volatility was so low. And given how volatility and oil tend to behave together, when there's a problem, vol spikes, price spikes, you get double tapped. So at least there's that, right? Not obviously a good idea to be short, but at least if people did do it, perhaps in a manner that was not as harmful as being short the calls themselves. I still think it's in that same place where it's harmful to be short the calls. That's what I'm rounding around to, right? If I wanted to be short oil here, if I wanted to do it, you could do it in a risk-defined manner, short the 80, 82 call spread. The vol isn't that high. It's a 38.2 IVR, and we've seen some much bigger vol spikes recently. The IVRs, last time we were around these price levels, you can see the IVR back at the start of August was up in the 70s. So if we can get something a little bit more, you could potentially try to do something here, or even step back and we go to a weekly time frame and we think about how we're really nearing the top side of a multi-year range. We had that explosion higher in 2022 around the Russian invasion of Ukraine. Of course, that doesn't really filter into the longer dated futures contracts. That was more about a short-term supply disruption, which is why the front months exploded into the $100+ barrel oil, and that doesn't really happen here. But either way, this is the psychological hurdle, right? There is a very big ceiling here in the CLG5 contract up around 79.80. So from my perspective, if we can get a little bit further expansion of volatility, if we can see some semblance of a turn, maybe on a lower term time frame, like a 4 hour, a break of this clearly very, very strong momentum, perhaps it's worth taking a stab. But right now it's standing in front of a train. And Dylan, you mentioned that your sense of this, your sensibility about this has been around these geopolitical issues when the market's pricing in World War III, which in our experience, it can only happen once, so you might as well fade it.
But I don't think that's what this is. This feels different.
Exactly.
To me.
It feels different this time, which is why I keep asking Ilya, is this about China? Because you don't get this kind of push higher in oil prices unless there's some real significant rethinking about supply-demand dynamics in the very short run. This is up from $60-something, $65, $67 a barrel in December to $78 here. That's not an immaterial move. That is something that's going to impact people's spending.
There is one way that this becomes about China without China manufacturing more growth, which they are very much struggling to do. And that's just in the arithmetic of a ceasefire between Russia and Ukraine. The Trump administration clearly has lots and lots of appetite to get that conflict wrapped up. If that happens early, and if that's what the markets are speculating on, then you get a situation where a lot of the off-market deep discount oil that China has been buying from Russia for the past, let's call it 3 years almost now, that comes to market. That stops existing in a gray zone, or at least potentially. And
that's actually one of the explanations that I've read over the weekend, that because of how the U.S. has been enforcing sanctions over the past month, China and India have not been able to go through and buy Russian supplies. And so the reason why you're starting to see higher oil prices is that there's now legitimate Chinese and Indian demand making its way back to the market, which, sorry to interrupt you there. I want to point out something that we've discussed previously here. End of sanctions being bad for India's stock markets.
Yeah.
Bad for, right? We talked about this in November.
Yes.
India's ETF just hit its lowest level since March 2024 in today's session.
Exactly. So
there's a story here that you can fit together.
Absolutely. So obviously you have in India and in China some of the leading consumers of crude, and in the case of China, the largest consumer of imported crude. So when you look at that and you say, okay, for 3 years, you couldn't see their demand in global numbers, and they were buying at deep discount because beggars can't be choosers, and Russia had to sell something to someone lest they fold and say, okay, well, we've lost this war. We just don't have the money to pay. And so because they needed that, we've had those huge buyers basically not really reflected accurately, or at least reflected in a diminished way, because, of course, markets will speculate to what that impact is, and asset prices will reflect that speculation, even if they can't see the buying and selling directly, because it's all happening bilaterally in yuan and under shadow of data not being published on exactly what any of it actually is. But nevertheless, you bring these huge buyers back to market in earnest, and their demand starts looking the way that it would look were they just buying on the open market, you're probably going to see some level of melt up reflected in crude just to show that occurring. And maybe that's what's already occurring in anticipation of the inauguration, and the idea that, all this talk about ending the war quickly. In that Mar-a-Lago press conference that you mentioned, Chris, Trump was talking about he wants to meet with Putin, and they've already talked about it, and they're looking to do it early into the term. Maybe there's a grand bargain behind the curtain here somewhere. It's probably not going to be a good one for Ukraine, but what it might be is just a mechanical upshift in where supply and demand meet for oil.
Interesting though that India was because Dubai, you would think maybe. I wonder if all of the sanctions bypass, like all of the sort of bypass. India is the biggest beneficiary of the war. The second biggest beneficiary of the war is Dubai. And then after that, you have Caracas, Venezuela, and Bangkok, and Istanbul.
But India is doing well because Russia's sending oil, India's refining it, selling it back to Europe at markup, which Europe used to pay for like at the third of a cost.
That's right.
UAE, and thinking about back to where we were in November having this discussion right after the election, if the war ends, do you think all those Russians, those businesses, those oligarchs, those criminals that keep their money stashed in Europe that's currently frozen, do you think they're going to keep their money in those European banks? Or are they going to move their
India
money?
loses, Dubai wins, Istanbul probably also wins. On capital flight, on Russian capital fleeing Europe, but
UAE
not going back to Russia. Dubai's a gangbusters.
Oh, yeah. And this has been a working thesis for the past 2 months, right? But Turkey, after the fall of Syria, I don't think Putin and Erdogan are going to be on great terms because it seems like Erdogan.
No, but the Moscow-Istanbul flights are the best flights it's like New York, Miami, and Istanbul's set up to just run money out of there. I mean, I know Dubai's better. Dubai is better, but Istanbul's closer.
And that convenience matters a lot. But we have, UAE, it's going just like the Russell chart. We talk about that longer term Russell chart, Ilya, and we've mentioned that longer term bottoming process that was going on here in 2022 and 23 that we finally broke out of in 24. That chart feels the same for UAE, where it's just breaking out right now. In any event, you can fit together the pieces of the macro story here. There's an expectation the war is going to end. The tariffs are coming, right? We're going to have higher structural inflation. Europe's probably in trouble to a certain degree. Even our European equity markets here, if we think about this broad macro story, they're up a little bit today, but not until they gap open lower. So they're open. They're up from where they open, but not exactly on the full close. This just looks like a bear flag after a pretty big decline down here. I don't know. It feels toppy in these markets right now, but this is a hell of a turnaround today. Ilya, being more than 3% away from the 1 month moving average, it got a little bit long in the tooth to sell off. Tomorrow, thinking ahead now, if this is an area where the market bounces, what are we looking to later this week that we should be thinking about as a catalyst to avoid or place trades on the other side of? Because I feel like the calendar starting Wednesday has some pretty important data for the U.S.
Absolutely. I don't think you trust the veracity of any bounce here unless it survives Wednesday. And that's really key. I think the bogey here, if you look at the March contract for ES, looks like it's about 5,900, maybe all the way up to 6,000, but really 5,900, which is the bottom on the sort of mid-December range. So that's about as deep as that kind of former area of support become resistance gets, give or take. So 59, 15, 59, 20, something like this, maybe even 59, 30. That seems like a kind of line in the sand. I would not be surprised in the slightest if we come and test those levels over the course of the next day and then get stuck right around there as we go into CPI. I think the risk is asymmetric in the sense that if CPI is hot, you probably get more stock weakness. You probably get more of a upswell in rates, but you've already so departed what the Fed is forecasting on baseline expectations that it seems like if CPI were to surprise soft, that would be a more reactive thing than if it surprised hot. And so we're going to have to see. If there is no surprise and we have to basically punt this thing forward, the next inflection point is the retail sales report on Thursday. And these things come back to back. Tomorrow, by the way, the producer price index is getting published. Unless that's a wild surprise, people probably will wait for CPI to really make up their mind. But there's a quick succession of numbers here. Tomorrow, Wednesday, Thursday, that are going to be very relevant. And I can see stocks bouncing into Wednesday and then being back on their lows by week's end, unless that CPI number is softer than expected. And if it is, then you can get some real topside reactivity.
Dylan, on Wednesday, the market is pricing in over the next 2 days that we could potentially see a swing all up towards 59.90 or perhaps as low as 57.70. This is a pretty wide range. The last few CPI reports were talking about, the potential for like 45, 50 points priced in 2 days out. So the fact that we're at 75 here does mean the market is expecting something to come of this. Ilya, if our technical threshold that we talked about on Futures Power Hours still valid, at least from the bullish perspective, it would really mean that you want to see some action above the 1 month moving average from here. Now, if the expected move through Wednesday, right, like we'll call it 59.90 is where the expected move is. The 1 month moving average closes today at 59.91. So it's entirely possible, as I'm thinking about how this week's going to unfold, it's entirely possible the next day or two we get a rally back up towards a place where you say, oh, wow, bears are in trouble. We're nearly 200 points off the lows. And yet technically, the conditions still aren't met for bulls to feel comfortable yet. We could get back to the 1 month moving average. We could just trade within the daily range that's expected through CPI. And we actually aren't out of the woods still. We're still very much in the confines of, is this a triangle? Is this a head and shoulders pattern? Is it continuation or is it topping? And right now, I think you have to say it favors topping. I don't think that's difficult to imagine, right? Tweeted that last week. We've been talking about it. Looks toppish. Is it worth deploying capital again? Not putting any new trades on. I have legacy old out of the money calls on. So if they expire worthless, so be it. Here, though, it doesn't feel like there's much to do about anything. Tomorrow is PPI. There's a treasury auction calendar for this week that is barren in terms of market moving things. There are a few bills to go out, but no notes, no bonds that we care of. The earnings calendar begins to pick up over the next few days. We're going to turn our attention to what our friends over at which one are you in? Here? No. Here. We're going to turn our attention to what our friends in the NASDAQ have to say. Tomorrow's earnings, nothing really important. $1.8 billion high market cap. It's really Wednesday when we kick things off. We're going to get the banks coming out this week. We're going to get some of the semiconductor companies, TSMC, reports on Thursday. Dylan, can the banks be the catalyst this week to help pep everyone's spirits? From all indications, the banks have been printing money in recent quarters.
I think the answer is yes. I actually think the answer is yes. I think that a stronger economy, I think the rate situation, and I think the Trump administration is all good for banks, actually. And I think that's why Jamie Dimon was out blathering onto Leslie Stahl on 60 Minutes.
Doesn't it say a lot that banks, sorry to interrupt you, but every other sector has retraced the entire Trump bump after the election? Not banks. Banks are holding the gains. They're still the leader. That resiliency means something. Should it not?
I totally know. I have the same exact thought process, which is that Trump will be good for the banks, even though the bankers and Trump are oil and water in New York culturally, because no one condescended and looked down upon Donald Trump more than the elite bankers of Manhattan over 50 years. But I think in this administration they're actually going to be quite well aligned, because I think Trump wants a strong financial sector above all else.
Well, and if you think about the whole thing being inflationary, right? The Trump trade being fundamentally inflationary and the market's being afraid of that, whose margins are getting padded if rates stay higher because things are inflationary? The banks. So the banks actually do okay in a higher rates environment. They get to make more money. They get to make a bigger spread. It's everybody else that ends up getting hurt.
Yeah, Dylan, you mentioned like the oil and water thing. I think people who are from the New York area have worked around here. Trump's an outer borough guy, and inner borough bankers look down upon outer borough people. So there is that.
Maybe they do, maybe they don't, but
they definitely do.
They definitely look down on Donald Trump, wherever he may be from.
But the banks have been the people who have been a little bit cozier to Trump before all these other executives started lining up and putting money into the till. The banking sector the financial sector has provided the Trump administration a good deal of, the constituents. The Treasury Secretary, Commerce Department, Lutnick and Bessent, not respectively, in opposite order. But you got to figure if you're stocking your cabinet with Wall Street guys and people from the banking sector, they're probably going to be, helpful to the banking sector. So 47.66 here on XLF. It's a 72.5 IVR. And this is a pretty liquid ETF. Dylan, if there was a place to look to sell some put spreads here this week, I think this would be it. Obviously, if we're going to do selling put spreads, I prefer to give us a little bit more time so we have some intrinsic value. But going 39 days out and looking, say, short put vert here, just under current prices, 61%, 62% probability of profit. Not the sexiest risk to reward, of course, but the turn is maybe happening right now. And you have this whole slate of earnings this week. We're given everything that we've heard from all these companies. If it's a JP Morgan, if it's a Wells Fargo, if it's a BlackRock, the economy's doing well. Delinquencies are still at a level that's manageable and not impairing their balance sheets or hurting their revenues. Banks should definitely be on play this week. It's not really a futures market, which we talk about, Ilya, but nevertheless, if the banking system is healthy and growing, that is early type of innings bull market activity that you'd like to see. Before we close out this session, Dylan, you were mentioning the wildfires earlier. Is this a black swan event for the market? You're talking about $175 to $250 billion worth of damage so far. There's another round of strong winds expected to come through the LA County area over the next few days. Tonight, they're looking at wind gusts up to 75, 80 miles per hour in some places. So to suggest that this is over yet, while many of these fires are 10, 15, 20% contained, we're not out of the woods by any stretch of the imagination. Is this the type of thing that could become the trigger where these utility companies, if they go under, and property and casualty insurance companies, they go under, it puts a strain on the banking system? The Fed's forced to intervene. The federal government's forced to intervene. What are you thinking about with the wildfires and the impact on the economy?
I think I would have a hard time getting where you just went just because of the too big to fail and the money printer. Like there is never going to be a risk to the financial system ever again, other than inflation and a collapse of the currency at some abstract future point. But like, I'm more thinking along the lines of materials inflation, the more linear. One, I think that there will be a restructuring in property casualty. Two, you would think there'd be a repricing of California real estate as a general thing, which could have, some of the, I don't know who if the Golden West, who the big sort of debt financier is to California housing, but you could see in a case where a significant increase in property and casualty insurance prices in California, which is obviously going to happen, can result in a reduction of the price per square foot for California real estate. So there's definitely something there, and there's definitely something on the material side, lumber prices. I mean, obviously they got to rebuild an entire, 1/3 of a meaningful percentage of that city, but not just the Palisades, but Altadena. I mean, it's ongoing. It is a remarkable. The destruction is incomprehensible. The scope is so much of it. It's just something else.
Yeah, I just flashed a few tickers across the screen for people to keep an eye on, because if you're looking for any semblance of what's going on in these markets and whether or not the risk persists, right? If you don't trust weather.com and you don't believe the news reports, I think the financial markets are telling you what you need to be listening to. 4 companies: PG&E Corporation, PCG, Sempra Energy, SRE, Edison International, EIX, Next Era Energy, NEE. PCG provides gas and electric to about 2/3 of California, but Northern California. EIX operates Southern California Edison, which is why its share prices are down 12% today, and it's been harmed arguably more than the others. Next Era is a Florida company, but that has operations in California. And then Sempra is more about energy infrastructure than anything else, rather than being the provider of the electricity. These companies are still under a great deal of stress. And so I would just caution that people who are looking at this situation in the way that they look at any other spike in vol, you have to place this in more of like a Boeing UNH type of basket or approach, rather than being the simple, well, IVR is at 100, so I'm going to just sell some puts. There's clearly some fundamental binary event risk here that's making its way through the market, and trying to time it out while it's an ongoing event, difficult, if not impossible. I know people want to try to be cold and calculating and dispassionate about it all, but this is still running its course. So,
but are you suggesting that these stock prices are a reflection of the fact that it's an ongoing dynamic crisis? Or are you just suggesting that that it's a meaningful and material crisis? Meaning specifically these charts, both.
Like PCG, why on earth would PCG be down this much? They have nothing to do with this. Of course, it's just related risk. If power lines are swaying and bumping into each other and knocking bits of molten metal onto the ground in Southern California, who's to say that it can't happen in Northern California, given what we've seen in recent years?
Sure.
Right?
I mean, the fire hurricane is like a thing that now happens. Apparently, we saw it in Maui.
Well, Northern California is a little bit of
It should be different. You would think so.
I mean, listen, I've spent a lot of time in the, anyway, we don't, the point is the fire hurricane.
As a resident of Northern California, I can tell you that obviously we've had fires, and those fires have been significant, but they've been somewhat different. I would say that the closest version of what's going on in LA right now to what's happened in Northern California was the Santa Rosa fires.
Was that the Paradise fire? Was that Paradise?
I think that's Campfire.
Campfire was further north. The issue in Santa Rosa was that it was an urban fire, as opposed.
Right, I see.
As opposed to
for me, the notable characteristic is the 100-mile-an-hour wind fire.
Right, and so there's been a lot of writing now over the weekend saying, take a look at these pictures from LA and notice that you have structures burning and foliage standing next to it not burning. This is not about wildfires. This is not about the trees catching fire. This is an urban fire. And in California, most fires have been not that, although easily the scariest looking one was back in, if memory serves, 2021, the Santa Rosa fire, which basically wiped a city off the map.
Yeah, I was up in Kenmare a few years ago, and then the year after we traveled through Napa, a fire came and wiped out the bed and breakfast that we stayed at.
Yeah, so they've rebuilt, thankfully, quite a lot of that. But
I know, but there's a bigger. I just think there's a bigger issue. Like this is different. This is different than all those other fires for all the reasons that are obvious. But I think that the biggest market risk is that finally a fire will force a repricing of property and casualty insurance permanently higher and blow apart the California regulatory infrastructure that was trying to cap that. So the California regulators were trying to cap property and casualty insurance as a way to protect California real estate values. Understandable motivations. Obviously, that property and casualty insurance cap will not sustain. And as a result, real estate's going to get repriced.
It needs to be repriced. It needs to be.
But remember, no matter what you think it is, because you're like, oh, I'd never
deal.
live in the fire. When you reduce the housing inventory, housing costs go up. It doesn't matter. Full stop. Like New Orleans after Katrina was a war zone, but the housing that was left in New Orleans was more expensive after Katrina than it was before. And it's going to be the same thing in California.
And as Ilya can attest to, people are going to have to make their way through the California Coastal Commission, which is just a lovely bureaucratic institution. But we'll have to cover that.
Or this
so many things to say about the Coastal
listen here. This. I mean, I'll leave you with this. I know overtime's out of time. That's fine. Donald Trump in his speech next Monday is going to announce Trumpland as the new real estate development for all of Western Los Angeles, built in the vision of Donald Trump himself. You heard it here first.
Well, Dylan said it best. Overtime is out of time. We'll be back tomorrow. Same time, same place. 4 p.m. Eastern, 3 Central, always after last call. So for Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. Good luck trading tomorrow. We'll see you there, though. After a brief break, Tasty Live's coming back at night. Ilya Spivak's here to take you with macro money. See you there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, four large, 4K, $4,000. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Markets take a little bit of a breather on Monday after last week's brutal bloodletting. Are they going to find their way to yet another bounce, or are we looking at something that is more painful yet to come? That's the question we're going to wrestle with here today on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we are going to do here is take a look at what happened last week, just briefly to anchor ourselves in the backdrop, and then consider what comes next. And shock of shocks, it's all about inflation and what it means for interest rates. Some big data coming across the wires this week, not only out of the U.S., but also elsewhere. So let's take a look at first what last week was all about. We can see here stocks having a nasty one. S&P down 2.1%, NASDAQ down 2.3%. Surging interest rates across the curve, and the curve steepening actually as the long end outperforms. The 10-year up 3.5%, the 2-year rate up 2.3%. So higher interest rates all around, but the front end having a smaller move than the back end, and so the curve growing steeper. Crude oil seemingly of its own mind, still up 3.5% after the prior week's 4.8% rise. Of course, it's a little stronger again here today. Unlike gold, which managed, despite rising yields, which typically amounts to kryptonite for gold since it yields nothing, still managing a little bit of an upturn last week, up 2.3%, but it is now very much giving away a lot of those gains just at the start of the week. The dollar stronger against the euro, stronger against the yen. But interestingly, the yen actually holds up much better once we get to the end of the week last week. It's down on the week on the whole, but the overall story is much more supportive as that risk aversion bites on Friday. Bitcoin certainly looking like an amplified version of that risk aversion, which basically gives it double the loss of the S&P. And the weakness here is very easily traceable to two pieces of economic data, which ultimately tell us the Fed is not going to cut rates as much as markets might have hoped. We get in the middle of the week the ISM services report that covers the lion's share of what drives growth for the U.S. economy, and those numbers are white hot. The rebound in overall activity sharper than expected, but the real standout is the jump in the prices component. That, of course, is where inflation lives in the U.S. at this point. It's all locked up in the service sector, as we'll see momentarily. And that ISM services report gives us a story that suggests that service sector inflation isn't going very far except to keep pushing higher. Because what we end up with there is the strongest price growth reading since February of 2023. And so the markets look at that and say, okay, well, this is not exactly an environment in which the Fed can cut rates. We then, on Friday, after a brief break midweek for the market holiday linked to Jimmy Carter's funeral, former U.S. President Jimmy Carter, of course, we then get the U.S. jobs report. And there we end up with stronger results, 256,000 jobs added against expectations for 160. So we beat by almost 100,000 jobs. The unemployment rate unexpectedly comes down from 4.2 to 4.1%. And then at the same time, we get a solid number set for consumer confidence from the University of Michigan. Interesting bit there. Again, inflation expectations. The 1-year forward inflation forecast from consumers polled for that survey up to 3.3%, the highest since May of last year, unexpectedly, from just 2.8%. So inflation expectations surging all around, that diluting how much the Fed could possibly be seen to cut this year. And of course, against that backdrop, yields rise. What's interesting here is that whereas at the tail end of last year, we were getting interest rates rising, and indeed, we've seen this story develop since mid-September. We talked about this at length. Here's the bottom in interest rate expectations, or as it were, the most dovish setting, the most number of rate cuts being expected over this year and next. That's mid-September when the Fed makes its move to actually begin cutting rates. We can see they shortly after this bottom start their easing cycle. And as they do, and the economy appears to be hotter than expected, the markets say, okay, well, you're cutting into an economy that doesn't so much need stimulus. What you're going to end up with is reflation, and you're going to end up having to do fewer cuts in 2025 and 2026. So we see this tally diminish. And of course, now we're looking at just 46 basis points in all. One cut now baked in for this year, another one all but expected for next year. And here, by the way, is last week's pop in these expectations. So from here to here, and that's the influence of that hot economic data. So the market's now looking at all of this. They've, of course, been doing this process for a while, but last week it got more juice. And whereas stocks were moving to record highs, at least, let's say, September, October, November, as this process was occurring, last week, the first full week of 2025, we very clearly saw not that. So it seems like yields have gotten to a level of pain where now higher economic data doesn't necessarily mean good news, because now the markets aren't looking at that and saying, oh, goody, the economy is growing faster. Now they're looking at it and saying, oh, no, rates will be higher, and we don't need the cost of money higher this year. So this is where we find ourselves. And if we look at how these rate cuts are expected to work themselves out here, we can see the median rate 4.38 now. And if we follow along to what would look like a rate cut from this level, essentially the underside here is 4.25. 4.38 is a median that exists between the current setting of Fed policy, 4.25 to 4.5. And if we subtract from it one rate cut, that gives us 4.13. So we end up with one cut somewhere in the early second half of the year. So July, September, somewhere. And that's what we have for the year. Notice the terminal rate now north of 4%. Whereas in September, when the Fed started the easing cycle, that would be here. Of course, we saw this adjustment that matches up with this adjustment here. We were looking sub 3. That's the backdrop. Now, what of this week? Well, we're going to get the relevant of relevant data here, needless to say, by way of the CPI report. This will be December's numbers. And as we were saying earlier, we can see that all of inflation, for the most part, now lives in core services. That's services minus energy and food. We can see goods inflation still slightly negative here. Energy inflation, likewise negative. They're actually deflationary forces here, and food inflation is basically a negligible contributor at this point. If we look at what this actually amounts to in practical terms here, of the 2.7% headline inflation recorded in November, 2.64 percentage points was services. Energy was a negative 21 basis point influence. Goods was a negative 12 basis point influence. Food a positive 30 basis point influence. So it really is all about services here. And needless to say, what we've learned last week is that were these numbers to be hotter, the markets now seem to think this is bad news, because that would mean that the Fed is pressured even further to dilute rate cut expectations. And so with that hot ISM number conveniently out last week, we take a look at how service sector inflation dynamics have played so far. And we can see that that service sector prices component, that's this right here. Here's that surge to the highest level since February of 2023. You can see that right here. And you can see that both the headline measures of inflation in the U.S., CPI and the PCE index, lagged about 2 months to this ISM prices component, lines up quite well. And so what that ISM prices component seems to anticipate then is we are now biased higher on prices, and CPI is about 2 months behind. And so the next step is at least somewhat tipped to be pointing upward. And so this narrow reflation that we've started to see here, probably not over, taking this at face value. Moreover, the direction of U.S. economic data relative to forecasts seems to have shifted after undergoing something of a correction. From mid-November, we can see the data started to cool relative to forecasts, looking at this index from Citigroup that measures relative performance. But now, with last week's NFP numbers, with last week's ISM numbers, we've once again seemingly started to reaccelerate and tellingly moved through the 20-day moving average on this. Now, as we've explained before, we're not doing technical analysis on an economic index. What we're doing is looking at a monthly average, and there's about 20 days in a month of this data, 5 working days a week, 4 weeks, give or take. And economic data tends to be released on a monthly cycle, most of it. Some of it is quarterly, some of it is weekly, but most important economic data is released monthly. And so when you go through the monthly average here, you get the sense that there's been enough data released for the monthly cycle to tell analysts your models are wrong, you need to update them. And if you see this kind of thing, that might very well inspire that model revision. We've seen that when you move through that moving average, be it here or here or here or here or here or there, you tend to see points of follow through. Not always. Sometimes you get false starts, but you do get a sense that perhaps now U.S. economic data is once again entering a cycle where it's going to be outperforming relative to expectations. Along with the ISM foreshadowing here, that may set the stage for hotter CPI. And of course, were that to happen, we probably get more of an upswell in yields, and that probably doesn't sit well with stock markets if last week is any indication. It's the same story when we get to U.S. retail sales data. That's due on Thursday. Expectation is for a 0.5% rise, and that would be a slight down step from the 0.7% in the prior month. But again, the risk here is, at least for stock markets, that the numbers come out hotter. That further emboldens hawkish speculative forces in rates markets and ultimately hurts stocks. Shifting focus across the Atlantic, the UK gives us the other big narrative for this week. They are also reporting inflation data. Here we're looking to remain unchanged at the headline, 2.6%, which is a three-month high for a second consecutive month, but the core reading just a touch lower, from 3.5 down to 3.4%. It's a bit of a different story here, though, in the sense that where U.S. economic data seems to have marked a little bit of an upturn relative to expectations, in the U.K., you're still very much underwater. This is the U.K. Surprise Index, and you can see here's the zero line where forecasts and realized results are in agreement, and we're well below that here, deeply into negative territory, suggesting that the surprise risk here is tilted to the downside. Now, because the U.S. and the Fed are such heavy weights in setting global interest rates, we can see that just as the situation in the U.S. corrected to a higher rate structure, so too the situation in the U.K. shifted. You can see again from about the middle of September, where we had the most dovish outlook, 173 basis points in cuts, we've now shifted to about 50, and that's over the course of this year and next, although you can see for next year, the forecast currently calls for essentially no action. All of that 50 basis points here almost is being baked out for 2025. But as we can see here, the turn is very much in line with this turn that you see on the U.S. side. And it's because the Fed is the steward of the U.S. dollar, and according to the Bank of International Settlements, close to 80% plus of global monetary transactions are settled in dollars. So much so that even when, let's say, two countries want to transact bilaterally, it is actually cheaper to transact from one currency into the dollar and from the dollar into the third currency, because the dollar is so liquid that the transaction costs are lower. So overwhelmingly, the dollar settles global monetary transaction volumes, let's put it that way, and is the premier vehicle for getting economic activity settled. So when you get a rise in the cost of borrowing dollars, as is implied by this shift in the Fed outlook, you likewise get knock-on effects everywhere else. In the UK, this has come alongside with their own sort of upswing in inflation over recent months. But of course, that has clashed with an economy that seems to be cooling. The recent PMI data suggesting that growth in the UK is coming down. And indeed, we'll see what the monthly GDP indicator gives us this go-round. It is on the menu for this week, and it is expected to show us, at least in relative terms, what we might expect downwind from the more important quarterly numbers. The expectation here that we are going to end up with a 3-month GDP growth average at 0.1%, but in month-on-month
terms at least, that we are going to return to growth, that output is going to expand for November at 0.2%. That's after 2 months of 0.1% declines in September and October. So maybe a slight bit of positive news. But given the way this is set up now and the shift that's occurred in the rate structure, as we can see, this looks almost identical to what we see from the U.S. Here's the structure in the U.S. September's curve already by November, by early November, giving us a much more hawkish reading as the markets interpret the Fed to be too dovish for the economy. And something very similar, of course, happening in the UK. Here we've gone from 3.4 as the terminal rate for the year to now 4.25. So if we take a look at what the 50 basis points that are implied here would look like, we go from 4.75 first here to about 4.5. So we get one cut somewhere in the first half. We can see it's loosely being baked in by March here. And then the next one to 4.25 gets stretched all the way out until the end of the year. And maybe you arrive there almost about 3 basis points shy. Indeed, it's exactly 3 because, as you can see here, this is 47 and not 50. So the risk here becomes if the CPI data, and indeed to some extent the GDP data, comes in softer than expected in line with this, then you have some rethinking to do on just how much easing the Bank of England might be doing. And this tally might push out further. Now, where this becomes interesting is, of course, for the British pound. It's a question of how much lower does it go, and does this surprise significantly to push it lower still? Because, of course, the pound has been absolutely trashed in recent weeks. It's come down very, very sharply, and just over the past 24 hours, touched the lowest level since late October 2023. It's also sitting on significant lows from right around then. The October 2023 congestion range was a big area of bottoming for the pound after a very significant sell-off from July of that year. Since then, the pound rallied all the way through September of 2024, basically a year's worth of gains, until this rethink on U.S. rates that we've just looked at and that we're currently looking at in indirect form in UK futures started to really drive the dollar up right alongside yields. So if we're going to see some sort of a response here, some sort of restructuring of the outlook to a more dovish setting, the really interesting thing here would be whether the pound signals that this has already been anticipated and rallies despite the reshuffle. In other words, if this curve starts to move lower here and the pound doesn't fall further, there could be a very compelling bottom starting to take shape there. And that is Macro Money for today. As ever, we are here every Monday through Thursday, right after overtime, show that I co-host with Dylan Ranigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays. On with Victor Jones for The Price of Truth on Tuesdays. That's tomorrow. On with Victor and Tom for First Call Sundays. Writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're checking us out on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20. Now, when you're on air, you're like looking at this. You need some help. Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job, here we go. Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, it's Monday, of course. Katie McGarrigle. What is it? Zadie
McGarrigus.
McGarrigus.
Yeah. Party up. DMX. RIP.
Yeah, we're bringing the noise to start this one. It's not really the DMX song, though. It's just a whistle. It's like this annoying whistle. We need
It's good.
a longer intro.
Yeah.
Give me like a minute and a half to get warmed up a little bit.
A minute and a half.
A little bit.
We'll see the chat start to drop off. Speaking of, what up, chat?
Yes, you saved us there. What up, chat? Go over to YouTube, stream it over there. No shade on Tasty Trade. There's just no live chat. You don't have to participate, but come on.
I know. Well, we've gotten, when we first started to stream on YouTube, I had the profound joy of moderating a lot of it. And back in the day, the bots were coming in way too hot.
Okay.
Way too many gross and wrong things to say. We've since cleaned it up. So, yeah. And we're seeing a lot of new people joining us in the new year. So, welcome if you're new. Welcome if you're old.
Yeah.
Happy to have ya.
Big Deal Donuts, Grumpy Mike, Jason Tatum, Night Moves.
Yeah.
Gapper.
I'll also give a shout out, and I don't know if he watches this show, but I got a homie that goes to the same gym as me, and he's always in there grinding, doing the workouts. So shout out to Desmond if you're watching.
Oh yeah. Speaking of the gym, I can barely see this. Lone Sophos. Is that like just a picture of a six-pack there? What we got going on in the chat?
Oh yeah,
Is it like a locker room shot?
Yeah,
I like that.
It's like a little bit of a thirst trap.
I'm all for that here on the Tasty Crypto Show.
You're pro thirst trap.
Yeah, we're pro thirst trap here. Absolutely.
All right.
Katie, what do you want to know today? We've got everybody over here. Type something crazy in the chat. Say hi to Katie. What do you want to know?
Man, that is a great question that I am completely panicking on.
Go anywhere. We're asking people whether they're pro gun lobby, what they're wearing for Halloween, their feelings on you name it. What do you want to know?
Well, based on the conversation I was having with you and some of the other boys, are you pro bills
Oh, okay.
or anti?
Yeah, there are some haters out there.
I know.
Calling Josh Allen overrated.
I think that by default in this office, even, obviously the Bears did what they did. So I have to now, support the Bills, but give us a shout. You're pro Bills or not?
Yeah, my wife is a Ravens fan. She's from the area originally. They're looking pretty good.
Okay.
Not going to lie. Ravens looking pretty good,
You
obviously.
guys going to have like a massive banger of a party?
No, we might have a fight.
Oh, okay. We're gonna have to squat up.
Yeah, no plans yet. If I have a party, though, I'll let you know. You're
Thank
100%.
You. We're within shuffling distance of each other. Not to dox us, but
Yeah, that's right. We live in the same general vicinity
yeah,
of this big city.
of this major metropolitan area.
Well, Katie,
You want to know anything? Is there anything you want to throw in the chat?
yeah, I guess let's stick with the football theme. Who do we have winning the Super Bowl out of all the teams left? Let's see where
Who's
everybody's
left?
at.
Who's left now?
There's a lot of teams left. AFC, Houston, Kansas City, Buffalo, Baltimore. We've got a game tonight. Who plays tonight? Chargers and Vikings.
Okay. I mean, honestly, I'm just going to keep going with the Bills.
Okay.
You guys have been hurt in the past, and I think that this whole office, or at least, the portion of the office that is from the Buffalo area, will absolutely lose their minds if it happens, and I would love to see that for you because we can't have it. So I want to see
Not yet,
joy.
It's not this year.
Not this
It's always
year.
next year.
There's always next year, yeah. But I want to see you shine.
Well, I
So I'm going
appreciate
Bills.
that. Yeah. It's nice of you. We got some Ravens fans, Lions, Vikings, everybody everywhere. And yes, we do need a thirst trap token. I'd like that. Katie, let's jump into the show though. We could go anywhere. We've titled this one DeFi and Liquidity Pools. When we were doing Where Do I Start, we hit on DeFi, that concept, and I think that we demoed liquidity pools or talked about it briefly at the end of this series. We can continue there, jump into it right away. We can talk about price action in the market, big bounce here into the end of, the traditional trading hours when you look at the equity market. Bitcoin back up to 94,000. We can talk bag battles.
So many places to go.
Where do you want to go first?
Okay, let's start with just a quick recap of where we are, because to your point, and to Shelly saying earlier, who's the winner of the bag battles this week anyways, things were looking all right-ish last week, and then they kind of rolled over. So talk me through what you're thinking and what is happening.
In terms of your specific token and bag battles,
mostly
or
just
the
in
broader
terms of
market?
the asset class as a whole.
Absolutely. No, I'm just kidding with you. I think you made a
In terms of Harry Potter, Obama, Sonic 10.
fantastic choice, obviously. Yeah, let's take a look at what's going on here. So we've had a bit of bearish momentum. I mean, if you look at kind of how we ended the year, it was on a little bit of a weak note. The first couple of weeks here into January, that's continued. If we look at right where we were, and I talked to the guys on OTCL, Mike and Nick, about this earlier today, pretty much unchanged week over week. That was true up until an hour ago. Mm-hmm. So a little bit of a bounce here. But yeah, we've been chopping sideways, consolidating, if you will, between that, let's call it 90 to 110,000 range.
Yep.
Not much has changed on the volatility front. You can see still structurally bullish. I think the trend is still bullish in there. You can see that when you look at weekly or monthly momentum, 3-month price trend, Bitcoin up 43%. But over the last month, it's been a weak start, a soft start to the year. Interestingly, we've seen this before during the first year of a halving cycle, which is what we're in right now. That start to the new year, start to January, has seen some weakness, and then it's exploded thereafter. Yeah. I don't know. We'll see if that happens again this time.
Yeah.
But if you're worried about some of the volatility, I think this is just a short-lived period when you look at the equity market as well. We'll talk about correlations here in a second, or we can jump over to them really quickly, actually.
Yeah.
Strong positive correlation, very strong inverse correlation with the VIX. I think, again, if we get out of this period of volatility, let's see what happens. There could be some catalyst post-inauguration, executive orders related to crypto, related to SAB 121. Clearly, we have a new team coming in when you think about a new SEC commissioner. So there's a lot that could possibly act as a tailwind here. But again, a little bit of a weak start to the year. That said, really range-bound trading here. If we look at implied vol, not much has changed. Here are your volatility ranks. So on a 3-month basis, kind of middle of the range, Same thing when you look at the 6-month and 1 month period or 1 year period, excuse me. Expected move for Bitcoin about 8,000, ETH 300. You've been on the show many times now, so this is pretty much where we've been for the last couple of months. Trading ranges, and again, the view here has been sell a little bit at the top of the range, buy a little bit back, recognize that the broader trend is bullish still. I try to stay on the right side of that. Doesn't mean that there can't be contrarian trades at times. If you're trading this from the short side, your opportunity to cover was at the bottom of the range earlier today. And then you've got, a bit of a bounce here. I think rinse and repeat. This has provided a lot of trading activity and opportunities on, both sides of that range. We've just been hanging out near the low end of the range recently.
Okay.
But again, nothing's changed. Here's your expected moves, $300 or so for ETH, about 8,000 for Bitcoin, Solana $20, and you can see the range for Doge as well.
Yeah, so we've definitely since last week seen a little bit of an expansion, obviously, in that range for Bitcoin in particular. But I love looking at it this way. Like I've said before, it just makes it so much more digestible to me as somebody that's still pretty new to the space to understand what I'm walking into, so to speak, when I power up my apps and platforms.
Yeah, I think it's helpful to put some context around the price action. These ranges are dynamic. We know that the spot price changes. The implied volatility is going to change as well. But it's a good guide, I think. Tougher when we look at Solana, Doge, and others because we don't have an implied volatility. So all we can go off of is that backward-looking realized vol. But if you understand the characteristics of what you're trading, it does make it a little bit slightly easier, I suppose.
Sure. All right. Well, good to know. And yeah, like you said, I'm very curious to see what happens as we go into next week. I might be looking to nibble on a little bit more, actually, now that I'm saying that. So we'll see.
Yeah.
Next week's going to be a big one.
I think so, too. I'm bullish as of right now. I have no signals or indicators that would make me feel any differently. Clearly things can change and, we can change our minds. But yeah, again, sideways consolidation after just that absolute ramp. I think the high in there is 108,000. We breached 90 today. We traded down to 89, very quickly bid back up. So you're still within that 90 to call it 110 range. I think you trade there for now. I do think you see higher prices, but there will be a point in time where you want to sell. Is it 3 months from now, 6 months from now? We have to monitor the market. But this isn't something, in my opinion, where you just hold the entire position and only add to it and just pray that it's exactly. Maybe 2035, a decade from now, I don't know, $500,000 per Bitcoin, $1 million per Bitcoin. People love to dream, right? The reality, though, is if you see a further extension of this rally, you probably want to take some profits. It's not going to go up forever. There are pretty clear cycles here. I think it's still relatively early in the grand scheme of things. I do think that we'll see somewhat of an alt rally or kind of rotation into alts. ETH's just been destroyed versus Bitcoin if you look at that ratio. But again, post-halving, I still think we're still, early to mid cycle. So I'm less worried about some of the, the pullback or the correction that we've seen off of all-time highs.
Got it. Love it.
Yeah.
Thought-provoking, head-scratching.
So what are you in? We've gone through where do I start? You're familiar with crypto. Do you have any existing positions?
I have a little bit of Bitcoin, a little bit of ETH, a little bit of Bonk.
Okay.
A little bit of Solana.
I like that. Bonk, kind of a levered Solana play. It's like a Doge on Solana.
Yeah. And then, of course, we've got the bag battles. So I am looking to and eager to hear thoughts around expanding my horizons. Like you said, there is a lot I still want to understand about liquidity pools because that was such a thought-provoking thing for me when I was first learning about it with you a couple of weeks ago. And I think I get the general idea and the benefit of being a liquidity provider, right? But as I've said to you on and off the show, the repetition piece is what's really going to allow me to kind of stick to this. But I'm kind of in the big names other than a couple of fun ones with you and the boys.
Okay. I think you're in the right place then. Personally, my portfolio is probably 80, 90% Bitcoin, ETH, Solana. More so today on those pullbacks, I'll add to the Solana position, I'll add to the ETH position, and some other alts. Have a pretty big Bitcoin position relative to the portfolio in terms of just the weighting.
Right.
So I'm not adding as much there. What I'll probably look for is when do I want to rotate out of that Bitcoin position and then into something else that could see better relative performance.
For sure.
If you believe that Bitcoin is a 2x, so just arbitrarily throw it out there, a 2x at these levels, where are the opportunities potentially for that 5x, for that 10x? And again, just throwing out arbitrary numbers or returns, but I think that's the way that you should look at this as we get a little bit later in the cycle.
Sure, yeah.
We'll look to Bitcoin market cap dominance to roll over there as one indicator. It's currently higher on the week by, almost 3%. Yeah. So
I feel like it's almost one of those things and this has been the narrative for however many years now, right? But you've got your mainstay investments in big tech names. But as soon as something else comes on the scene that could be really breakthrough, maybe you peel off a little bit of your Apple or whatever, or Amazon or Google position, and you put it into something that's maybe a little bit more, has the propensity for more upside, I guess I would say, in a shorter time frame.
I think so. Yeah, I think you want to look for that rotation. That said, in my opinion, in my experience, the best trade here has really just been to hold throughout some of the volatility, add on those dips, and stick to what you know in those bigger, more liquid, larger market cap tokens. And it doesn't mean that Bitcoin or ETH or Solana are going to be the only three, but that's worked really well versus trying to chase some of these memes. As you've seen, they can go up 200%, 400%, whatever in a day or a week, and then they can go down 70% just as quickly. And so you can get chopped up there. And when you chase that FOMO sometimes, it's really not a very productive strategy versus just long and strong throughout the cycle. But again, there will be times where I think, even looking at those three, I want to be overweight Solana versus Bitcoin. And you can look at the ratio or the price chart, and when you see that Solana priced in Bitcoin is outperforming, or ETH priced in Bitcoin is really starting to outperform, we get some signals there, that again would be another box that you check where, okay, maybe we sell a little bit of Bitcoin here, we buy a little bit of ETH, we buy a little bit of Solana, that sort of thing.
Okay, makes sense.
So all that said, Katie, let's jump into our discussion on DeFi on liquidity pools. Let me first ask you, do you have a crypto wallet, a self-custody wallet?
I do.
You do?
On Tasty Crypto.
Beautiful. Okay.
And I have a couple of other apps, of course, as you and I have started to rub elbows a little bit more on the marketing of crypto in the Tasty ecosystem. But yes, I use the Tasty Crypto app.
Beautiful. That is step one. I've got a slide here that we can pop up. This is what the Tasty Crypto wallet looks like if everyone is not familiar with this. You don't have to use the Tasty Crypto wallet. Tasty Crypto wallet is just a front end for the wallet address that you control on the Bitcoin blockchain, Ethereum, layer 2, such as Base. We've got Optimism and Arbitrum that we just launched on. We just released an update to the app. Nice. I believe it was on Friday last week. And we're also on Solana. You'll need this to be able to connect to decentralized exchanges, to provide liquidity, to trade, to really be in control of your crypto on-chain. This is referred to as a self-custody wallet or a non-custodial wallet versus when you're trading in your Tasty Trade account or your Coinbase account or wherever you trade crypto, that is a custodial exchange. You're not in control or you're not the owner of your crypto necessarily. And that sounds like a weird way to say it, but you don't actually have control of your private key, if that makes sense. Yeah. It's safe, it's in the bank, but you don't have the password or the code, the combination, I suppose is the word I'm looking for, to the safe. Whereas you take it out of the bank, you put it in your safe at your house, you have the combination.
Your shoebox.
Yeah. So kind of a weird analogy, but this is something where through this application, you can do a bit more with your crypto when you're in control of it.
For sure.
Versus trading it on an exchange. And there's nothing at all wrong with trading on an exchange. It's extremely convenient. It's what I do with most of my crypto. It's just that today, given kind of a lack of regulations in the space, at least in the US, most of these platforms, tastytrade included, just aren't able to give you the same kind of flexibility or present the same potential opportunities as you have when you go directly on-chain and do it yourself through a self-custody wallet. So we've built an application to allow you to do that, even though it isn't necessarily with your tastytrade account.
Got it. And I mean, as you're kind of showing here, it's pretty simple, right? Like you just create a new wallet, you can figure out how you want to back it up, and then you just kind of move on.
Exactly. So you need the wallet, and then once you have the wallet, you need some crypto in the wallet. We'll help people with how to do that, but I think most people can figure it out. You can transfer from tastytrade, you can transfer from other exchanges, you buy the crypto, you move it to your wallet address. Very easy to do that. Once you're in control of it through your self-custody wallet, you can go and do really whatever you want with it on chain. You want to send it to somebody, you want to connect to a centralized exchange, you want to stake it, the world is your oyster.
Got it.
The blockchain is your oyster, I
Can
suppose.
we pause there really quickly? Because like this is where, you know, if you can do it between wallets or between different apps, like I know that there is an element to fees, right? Like that comes with transferring of your crypto holdings. Is there a is there a gimme or a gotcha that you kind of need to like think about as you're doing that? Or is it just like everybody's relatively comparable in terms of the fee that they charge for transferring? Or
here's how I would think about this. It's actually related to the blockchain that you're using or the network that you're using. So we're on Ethereum, but are we on Ethereum layer 1, the base chain, I suppose, or are we on another layer 2, a scaling solution, something like Polygon, Optimism, Arbitrum, Base through Coinbase? That's going to determine the fees that you pay.
And is layer 2 presumably more expensive?
Much, much cheaper.
Oh.
So these layer 2 networks, this is how I would think about it, I suppose. Bundle all the transactions together and then use the layer 1 as a settlement or security layer. So instead of all of these transactions settling on ETH separately and all paying a separate gas fee, you can bundle them all together and then pay one gas fee. So it's going to be much, much cheaper to transact on a layer 2 than it is on the layer 1 today, at least. So there could be some upgrades coming that change that, but that's how it stands today. So it's not so much like the provider or the wallet. When you think about what the wallet software is, it's just a front-end client. It's almost like an email application on your phone, where you could have Apple Mail, Gmail, Outlook, whatever, all connected to the same email address. Same thing here. You could have a bunch of different wallet applications. You could have Tasty Crypto, Coinbase Wallet, MetaMask. You can import the same seed phrase into all three of them, control the same address or the crypto on chain. It just depends on which interface you want to use. Maybe you like Tasty Crypto because it is the Tasty brand and it has different features you like. Or maybe you like MetaMask. Whatever it might be, your crypto is all on chain and you're controlling it with this front end. It doesn't really matter what front end you use. They all do the same thing.
Got it. Okay.
So there's no fee charged by the application there. It's all on the blockchain. And then it's what blockchain network am I using?
Okay, that makes sense.
Today, when I provide liquidity, I'm primarily providing liquidity on Uniswap, which we've talked about before, but on the Base network.
Right.
And it's much, much cheaper.
App-ish.
No, not even
Or
so.
layer.
That's the other thing to understand. Completely detached from any application.
Okay.
So Coinbase as an exchange has used some software, I suppose, is the way that I would think about the Optimism stack, open source, and they've built their own Ethereum scaling solution, their own blockchain.
Okay.
So it's
But
from
you don't
Coinbase, the
need to
company,
have the
but you don't
Coinbase-
need, no, not at all. It's like, I guess, interacting with Solana or participating on another network. This network just was conceived by Coinbase.
Got it. Okay, that
But
makes
it
sense.
does a lot of the same things that all the other ones do. It's just much, much cheaper. So that's where I've been providing liquidity. But on the show, we've done this on Polygon. You can do it on Arbitrum, Optimism. Because it's Coinbase and they have such a large user base, they've been able to onboard more people through this mechanism. And that's where there's a lot of activity and volume. And so therefore, that's why I want to provide liquidity on that chain.
Yeah.
But that could change. All of a sudden there's a new use case over here. You have more users. So maybe you provide liquidity on optimism. Today, I'm primarily on base.
Okay. And I think I asked you this previously, but when you are providing that liquidity, there's no minimum time to provide that liquidity, correct?
There's not. Yeah.
But obviously you're rewarded for the longer that you're involved.
Yes.
Rewarded, I say with air quotes. But
so let's talk about what happens then when you're providing liquidity. And if we throw up the browser here, we can take a look at Uniswap. I know we've talked about Uniswap on some of the prior Where Do I Start shows. We've discussed how you can use Uniswap to swap tokens. It's a decentralized exchange. But on the other side of that, we've talked about where that liquidity comes from, and that liquidity comes from liquidity providers. So if there's liquidity in what's called a pool, you can swap one token for another. If there's no liquidity, well, you can't do that. So we've discussed that a little bit, but on the LP side or the pool side of it, where you provide liquidity, you're going in and, let me just connect our wallet here very quickly. So if you're on the Uniswap platform, and you're using the Tasty Crypto wallet, you can do this within the mobile app. It's actually a lot easier to do that, but because we have the browser up, I'll just do it this way. What I'm gonna do is now open up the Tasty Crypto app here, and we're gonna connect the Uniswap application to the wallet here. We're gonna establish that connection. So if I just go in here and I paste that code that I just copied from Uniswap, now we're connected. So now we can create a pool. And in order to do that, you have to click on pool, and then you have to click on new position. And now it's reading what I have on chain because I've established that connection. It really doesn't have anything to do with whether I use the Tasty Crypto browser extension or what app I'm using at this point. I've established the connection. So the Uniswap application here can read where I have various balances. Let's say that we want to do this on ETH, and I'm just showing you how this looks. Or excuse me, we want to do this with ETH, but we want to do this on the base network. So we have to have both, in this case, if we want to provide liquidity for Ethereum in a USDC pair, we have to have both.
Right.
But the point of all of this is that as you go through and you set this up, you can select the range that you want to provide liquidity within. So you asked, I think, to some degree, can you do this into perpetuity? The longer that you do this and the longer that the underlying price stays within the range where you're providing liquidity, you're going to generate more in fees. You're going to yield more off of your initial capital versus if I just did this for a couple of days.
Got it.
That said, it needs to stay within the trading range. Yeah, it's kind of like a strangle, if you will.
Okay, yes, this is all coming back to me now. It's been a long couple of weeks, my friend.
I hear you there. What's happening here? Well, you're providing liquidity to facilitate the exchange of one token for another. Why would you do that? Well, you receive a portion of the fee that's charged by this protocol, that's charged by this application.
Some fraction of a basis point or something along.
Yes. If I come in here and I want to use Uniswap to trade ETH for USDC, I want to sell my Ethereum for US dollar stablecoin. And I want to do that on the base network or the Ethereum network or any of these other ETH layer 2s. I am going to pay a small fee. It's on the notional value of the transaction. And in most cases, we'll say it's going to be about 5 basis points.
Sure.
Well, that 5 basis points goes to the liquidity providers. So instead of it going to an exchange, like the CME or the CBOE or something, the New York Stock Exchange, or instead of it going to a brokerage firm like Tasty Trade, this goes to those people, the individuals or the institutions, whoever it is, that are providing liquidity. So if you were providing liquidity that helped to facilitate the exchange of these tokens and that fee was charged, you're going to receive a portion of that fee.
Got it.
And that's how you generate revenue or you generate yield by providing liquidity on a decentralized exchange.
Okay, that makes sense. I think of like when you go to Coinstar, dump all your coins in that damn bucket, and then they take a little bit off the top to give it back to you in cash. It's similar. It's not quite the same, but in the sense of you are exchanging, one tangible thing for another tangible thing, but you're not getting your exact full money's worth, right? Like that's kind of.
Well, in this case, I would think of it a little bit differently. It's almost like there's this large marketplace.
Okay.
And everyone is basically selling the same good, if that makes sense.
Yeah.
But you can show up to this marketplace with those goods. Let's say it's 2 different color t-shirts. One's a white t-shirt, one's a black t-shirt. Those are the only 2 things that you can buy at the marketplace. But as you know, anybody can come in and set up a stand at the marketplace. When you set up a stand, you only have so many black t-shirts and so many white t-shirts. If everyone is buying a white t-shirt, in this case, they have to exchange a black t-shirt for it, you're not going to have any more white t-shirts left. If everyone is buying Ethereum and you start with a limited amount of Ethereum and a limited amount of US dollars, you end up selling out of all your Ethereum. You're collecting a fee each time someone buys some Ethereum.
Okay, yeah.
But you're ending up with only dollars at the end of it. So it's more like, you're a market maker in that sense, but it's more like a strangle where
Got it.
You don't have a defined fee that you're collecting when you sell premium, but you want it to stay within this range. And as long as it does, it'll work out for you and you generate those fees. But what you're giving up is really the opportunity cost.
Sure.
So let's say that the alternative is just to hold ETH and you're bullish on ETH. Well, if you're selling some of your ETH as it's going up, you're not going to have all that ETH that you would own at the ultimate price it lands at if it does continue to go higher. Similar to a covered call in that sense, where you're limiting your upside.
Sure. Okay.
It's just in this case, versus selling a call option and receiving premium, you have this constant market making activity that's happening automatically that's utilizing your capital that you've staked or you've deposited with this exchange. And every time that your capital is used, you get a little bit of the fee.
Okay.
If you want to pull your capital out at any point in time, you can do that. In some cases, you might pull your capital out. You'll have more than you started with plus your fees. If the prices go down, you might have less, but it could be offset by some of the fees.
Right. Okay. Makes sense.
Yeah, I know there's a lot there, and we kind of ran out of time in terms of showing how to set this all up, but it's a little bit into the concept of providing liquidity. One of the things that you can do with your crypto here through the wallet. We'll talk about this in more detail. And I think at some point, Katie, we'll get you set up where you'll be trading your own pool, or more so just creating your own pool and kind of watching the fees come in.
Yeah, we'll kick off the next one. We're going to be off for the market holiday next week. And I believe you're joining the show with Shelly on Wednesday. But
yes,
we'll get back in here soon, and we'll kick that off at like the top of the 4:30. It's not really the hour, the next show.
Absolutely. Awesome. Well, let's do that. It's been good chatting with you. Thanks for coming on the show.
Thank you as always. And thank you, chat.
Thank you. Yeah. We will be back on Wednesday, like Katie mentioned, with Shelly. So stay tuned. And then, I guess we'll see Katie back here again in a couple weeks. But thank you again. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace. Go Bills.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Beat the opening bell. Get trade ideas and market insights before the open.
From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
don't say it. No,
fingers through your hair.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funica. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up.
Right?
I was waiting for somebody to say something. And if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now it's been sitting out for hours.
Now I gotta talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer. And then maybe
pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott.
Checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Yeah, it is Tuesday, January 14th, a little bit after 5 p.m. or so, they tell me. You know what that means? It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, the show where we explore the incentives that govern our world, not just the prices on our screen. Shout out to everybody. What's going on? All of you watching on tastylive.com. Shout out to all of you watching directly on Tasty Trade desktop and mobile applications. If you don't already have both of them, I suggest the first part of your new year, new me plan is to go out and get both of them. However, if you're watching either of those three platforms or destinations, you might want to hop on over to the YouTube channel so you can participate in this cool little chat that's going to show up here. I think maybe we timed it well, maybe we didn't. But speaking of that YouTube chat, shout out to everybody in that YouTube chat. Shout out to you, Brian, Jason, Cato. I see so many others. Lone, Grumpy Mike, Victoria. I miss the bad trader stream, says Lone. I'm with you. I can't get enough of everything, Bad Trader. But shout out to everybody out there. I am streaming to you live and in direct effect through a VPN, by the way, because of interesting Indonesian security. I'm streaming to you from Bali, Indonesia. So I don't know if any of you happen to be near or around here. Hit me up on Twitter at Victor Jones, at Victor Jones, the Owen Jones, the zero, because I like to be difficult. I guess we should get started. By the way, if you're in the chat, just start pounding random ass characters. For whatever reason, Google doesn't really care what you say. As long as you start pounding your face into the keyboard, it will prioritize this stream and we'll get more people in here and we'll save the world one stream view at a time. My babies, we leaned into a potential reversal, not even a reversal. We faded that Santa Claus rally. I say I assume you guys are thinking like me. But that, you guys are much smarter than that. The point is, into the tail end of December, we haven't talked that much. Into the tail end of December, we were sort of fading that Santa Claus rally. And early in December, we took some pain, but surprise, surprise, the narrative was a bit overdone. And people now are starting to price some of the things that we've been talking about over the last, 3-4 weeks. It's always brutal. It's always brutal to have, the market makes you you think you know something? Okay, maybe you're right, but I'm going to test your intestinal fortitude. Let's see how much you believe. Let's see how much conviction you have in your ideas, Mr. Jones or Mr. Brian Watson or Mr. Cato, Mr. Lone Sofa. Let's see how much conviction you have in your position or in your risk management, in your logic. And we got put to the test early in December, but I think over the last couple of weeks, some of the things we were looking for, you could say hoping for, started to materialize. The question is, how far? How far do we start to see some correction? Is this all we get? Is this going to be all we get, or is this going to get a little bit uglier going forward? Are we going to see sideways slop and chop? We're going to see a downwards market to more than a 10% correction. I don't know the answer to that, but I suppose each day we're going to come here, we're going to explore that together and look for the best possible risk and reward bets. And I shouldn't promise that from my perspective, and I'm not sure sure how good my perspective is. The point, my babies, S&P 500 at 58.92, a little bit of a pause in the ugliness that we saw over the last couple of weeks, but that's not so strange either. Over the last couple of weeks, we've had 2, 3, 4-day rippers and into weakness, and we've continued to see lower lows and lower highs. Into what was that? It's not yesterday, Friday's session, basically coming in I should say the open, coming in and tagging that 5,800. Pretty scary little day. I'm not going to say who it was, but a certain individual on mainstream financial television just was kind of a little bit of a scaredy cat this morning. That's how you know they were going to rally. But I think when you look at VIX and volatility, I'll talk about the NASDAQ, the Dow, and the Russell here. The interesting thing about the Dow, you've got a price-weighted average, which means it's going to move in its own total weird, funky way. But you also have a lower beta index of names, more blue chip stocks. So if volatility does hit, it has this weird sort of way of collecting assets as people downshift into lower beta or lower volatility assets. So you got a bit of outperformance in the Dow versus the other majors today. More on that in a bit. And we'll talk about the Russell here. But the point is, I want to start with the VIX, the volatility index at 19 and change, because I'm of two minds in the volatility index right now. I always hate those guys, on one hand and on the other. But I suppose I got to be honest. I do. Most of us, I think that way, though, right? The world is a distribution curve with probable outcomes within it. You've got a left tail with left tail outcomes with left tail probabilities, and we've got right tails with right tail outcomes with right tail probabilities. And what we're trying to do is try to understand those probabilities along with the pricing of those probabilities and guess whether or not we think those probabilities are accurate from our point of view or opinion. That's all we're doing. We're handicapping the world as we see it, which is sort of fun. I don't know. If you're a degenerate junkie like me, it's fun, I should say. Here's my point, that at 19, you have, on one hand, an elevated VIX relative to where we've gone. Elevated option pricing relative to where we've been just a couple of weeks ago. Mid and early December, as we take a look here, we were in the 13 handle. I think we were even tagged the 12 handle at one point. We were in the 13 handle. And to me, I could not wrap my mind around how that makes sense. On one hand, the market there's a lot of risk in the market, but that same risk we've been managing and we've known about for a very long period of time. And it seems like the market had sort of taken that risk and said, okay, we've processed this risk. We're going to discount gold by this amount, or silver by this amount, or bonds by this amount, equities by this amount. And at some point, maybe there's no real need to see option implied volatility high if you've sort of distributed that risk out to individual instruments, I suppose. But still, 13, given the risks that we're looking at in the world, with the new administration taking over, with the new possible trade volatility and the sort of the unknown positions of the new administration, to me, I thought, yeah, I get the tax cuts, but what about everything else? And it seems like over the last month, the market has priced in higher volatility. There's been a reach for protection. So on one hand, you could say, all right, the market is not as exposed as it was 1 month ago when volatility was as low as 13. The market's not as exposed. Participants have bought protection to some extent. Now, here's the problem, is that we've had if you remember, you've been rocking with me for a while. I've had a few years ago, I had a conversation with Jem Carsano. We talked about, quote unquote, the danger zone. I talked about the area slightly above the historical average for the volatility index. So the long-term historical average is something like 17 or 18. My question is, what do you do with like 18 to 22? What do you do with slightly elevated volatility? Look, if you give me a 40 VIX, I know what to do. You slam on that thing and you hope for the best. And you keep your position size respectable. But, you give me a 40, 50, 60 VIX, something crazy like that, I know what to do. I think most of you know what to do in that situation. There could be some pain. But I think we all understand volatility and mean reversion and the odds that we'd be getting in that type of scenario. But what do you do with just slightly above historical average in the 18 to 22? And his answer was fascinating to me, and I continue to talk about it every time we get in this range. His point was, when you start to get in 18 to 22, the market is telling you that there are risks there. Not only has there been a reach for protection, but there's a reason for the reach for protection. And what he said is, when you get into 18 to 22, you have to be careful about selling. Now, he didn't say not sell, but you have to be careful about selling because your highest probability of the vol spikes come from that range. So like if you're at a 13 VIX, maybe it's much less likely you're going to get the spike in vol to the 25 to 30, something like this, to the upper 20s. But once you get to 18 to 22, it's much more likely you're going to get that sort of expression of volatility. And so I've never forgot that from that conversation. We went through the data that supported his point of view on that. And it made a lot of sense to me, just anecdotally from my own trading experience. You tell me what you guys think. Feel free to start typing in the chat. But so every time we get in this 18 to 22 zone, I'm a bit careful not to just say, oh, we're finally above long-term historical averages. Let me go slam, get short Vega. I'm a bit more targeted than that. So that's the two minds. The two minds are just a month ago we're at a 13 VIX and now we're at 19. So relative to our short-term pathway, we're slightly elevated. But if you were to look in the past, what happens when you get into 19? Do you see a lot of turning and stopping on a dime, or do you see more instances of getting to 19 and spiking up towards the mid-20s or even higher? I think you see just in the last year or so the instances of us going much higher. So I think it's something to note. Now, the flip side is this morning, vol got super extended at 22.5. And so that might have been the opportunity for the market to slam us back down to 19, right? And so we did see massive vol selling here today after, some freak out. So who knows? Maybe today was that sort of max pain moment for the market, maybe in the short term. And I sort of would be looking. It's weird to say this. I personally am looking for things to add in this market. And that's the way I roll. That's the way I rock, right? Like when everybody's super excited, which they were a month ago, and there were no risk on the horizon and everything was great. You got to buy upside calls. You got to get long. That just doesn't make sense to me. And there were fewer and fewer people saying the opposite. So I wasn't as bold up, but I was looking for opportunities. Those opportunities were energy. Here's my themes. My themes were energy for the simple fact that a lot of those stocks had been beaten up. They had gotten cheap from a price perspective. I'm going to put away valuation for a second. From a price perspective, they had gotten beaten up, especially the higher beta names. So in each one of these classes, so we've got sectors, industries, and then within those classes, you sort of have what are called style factors. So a style factor would be high vol or high beta stocks, low beta stocks, high dividend paying stocks, growth stocks, small caps, mid caps. All those things are sort of style factor preferences, and you have all of those things can be within a sector or in an industry. So what I like to look for, depending on the scenario that we're in, cheap, what I think are cheap sectors, and then with a decent beta on them. Not super high, but with a decent beta. So in energy stocks, why was I looking at energy? Well, it's because energy is only 3% of the S&P 500. To me, that makes absolutely no sense in a world that is hyper concerned about energy for right or wrong reasons. And in a world where if the AI hype train is true, if digital currency hype train is true, if electric vehicle hype train is true, and I can go on and on about these new emerging industries that are going to be completely energy, much more energy dependent, then I just think 3% of the S&P doesn't make sense. It just doesn't make sense to me. I'm probably getting value over a long enough period of time. That's what I think. And if not, if the market, if investors don't want to buy up energy or utilities, meaning nuclear companies, then my sort of backup plan is I'm pretty sure, I want to say pretty sure, my bet is that the technology companies will buy them up themselves. as strange as that may sound, but vertical integration, especially for nuclear, is probably likely. And we saw some of those things, not vertical integration, but partnerships between big technology companies and big energy companies, CEG being one, which took a bit of a hit today after a absolute rip on Friday. But anyways, main theme number one was energy at the back end of the year, and it's done really, really well the last couple of weeks. I don't think we bottom ticked this by any stretch of the imagination. I think we're maybe a week, maybe 4 or 5 days late, but it's done pretty well. And energy, crude oil's ripping higher, which at mid 60s, something like this, given the geopolitical setup of the world, not surprising. Didn't call it, just not surprising. But I just think you got cheap energy at the same time you had cheap WTI. Which way could they both go? Could WTI be $30 next year? I don't know. Maybe. Things are pretty bad if that happens. Could it be 80? Yes. And that puts a real dent in what's going on with inflation. More on that later. So the other point was XLE was one. The other was XLV. And I'm not saying XLE specifically, but XLE and constituents, and looking for things with decent beta, not too high, but decent beta. And then XLV, which was the healthcare stocks. So the position was, the idea was that a lot of these healthcare stocks have been beaten up around the election time. Why is that? It's an anticipation that once Trump gets in, he's going to put RFK Jr. in a position of power that would potentially have negative impacts for future revenue for a lot of these healthcare companies. And that gets discounted in advance. So that happened in advance of the election, and then it happened in advance of the Secretary of HHS appointment and confirmation. And then, a couple of the things happening in healthcare insurance companies aren't necessarily helping either. The point was a lot of these things got super cheap. Pfizer got super cheap. I would say cheap on a price point of view relative to recent history. Okay. If we go out far enough, these things are not, super cheap. And I'm not talking valuation. I'm just talking short-term price here. Let's go. So Pfizer, Eli Lilly, and then Moderna as well. And the point was, if the market wants to rip higher, we want to find higher prices, that there's a potential that just market beta alone will carry healthcare higher. And if we want to find lower prices, well, those big money managers who can't put their clients' money in cash and just sit there, they've got to find instruments to buy. And in those types of correlations to one, stocks go down market, they look for low beta assets and they look for defensive sectors. Healthcare happens to be a defensive sector. And so you tend to get people that go try to find these types of names in periods of weakness. So we're probably getting some decent value here. But what's cheap can get cheaper, and Moderna is one of those scenarios. Today went from $40-something all the way down to $35.15 was the closing print, but an extended is trading even lower at $34.90, down nearly 17% today on really, really bad forward guidance. I bring this up effectively just to say, because I know everyone has different trading styles, but I don't look for the high flyers and try to ride the momentum to the upside. I try to buy some of the dogs and wait. Have some of these companies committed crimes against humanity? I don't know. You be the judge. You be the judge and jury on that one. All I'm looking for is cheap assets that may provide value in the short term for a little bit of a gain. Let me pause for a second, just see what you guys are talking about here in the chat. LFG. I know nothing. Thanks, Mr. Market. I couldn't agree with you more. Sleepy. It's the end of the world as we know it. And I feel fine. All right. Thanks for going on this again. No problem, Victoria. This is the January effect for Euro USD. Interesting point. Interesting open this evening. Yeah, they're taking them up a little bit here. And Vol's not doing much though. So I don't know how much a stock I'd put into this because Vol, /VX isn't really doing much. So equities are rallying here on the new open. Am I long only, says Anatable. No, I'm not. I'm definitely not. So what I've basically been doing as I've been long, when I say long, it means overweight. So I've been overweight materials. I'm overweight energy. I'm overweight utilities, but specifically in nuclear. And those are the nuclear thing is a very long-term position for me. I'm overweight China. And that's from a while ago, before that kind of crazy 50% pop in a lot of those assets. Yeah, so those are areas I'm long. And then where am I short? I run tactical shorts using futures over the top of the portfolio. So I'll go like short NASDAQ against my long basket of stocks. And that long basket will be overweight materials, energy, all the things that will sort of be likely inflation catalysts. And then I'll be short tech because higher inflation will mean higher interest rates, which will likely mean you need to take down your future projected income for a lot of these growth monsters. And I think those things suffer the most. And then for whatever reason, even though if you listen to anybody, if you listen to this show, I thought we'd see higher interest rates in the long end on the cut. We got it. And I thought we'd see a 5% 10-year sooner than later. It looks like we're headed there. I just can't. There's some part of me that just cannot resist. You get 9 heads in a row. What's the gambler's fallacy? You bet. What is it? 9 heads in a row. You bet tails. Just because that's what I'm looking at here. I'm looking at bonds going, I got 9 heads in a row, meaning every day goes down. It doesn't take much. It's like, I don't want to use that as a reference, but I was gonna say if you've got a dried forest and you get some sort of spark, things can go up for obvious reasons. I don't want to use that reference right now, but I'm just, you get where I'm coming from. The point is, it doesn't take much because if everybody sees bonds going down, we're all thinking the same thing. This is going to rally sometime, but where, from where, and from when? From where and when? And I think that's probably the mood of a lot of people right now. Where is the value to be had? We might be close. Is it here in the 10-year? Is it somewhere at 4.77%? Is it at 5? Is it going to be at 5.25? I think many market participants, in particular traders, are probably going to be looking at where that is. And what that means is as soon as you see some side of strength, you're likely going to see some sort of snapback rally, even if it's not sustained. I've been referring to that. I don't know what the technical term. I'm sure there's a technical term. I've just been referring to it as a trader's rally. We sort of got one here, right? We got our 3-4 point rally from 116 to 120. And I thought we'd get more two-way action on our way to 5%. We just haven't. So I'm getting caught in trying to trade the counter trend. Sometimes you just trade the trend. What is the trend? I think bonds and interest rates I think bonds are going to keep falling, and we're going to work our way towards 5%. I think that's where we ultimately end up. Maybe not bonds, but notes. I think notes get to 5%, which means I think bonds are going to be at 5 or above. But I also thought, for no real reason really, but I also thought like as you get closer to 5%, the trigger finger gets close. People want to pull the trigger, and we get more two-way action. We just haven't seen it, man. Bonds continue to move in a single direction. We hit 110 in 25, 30 seconds earlier today. 110 handle. That's wild. Look at the chat. VW says buying TLT with both hands the moment the 30-year hits 5%. Exactly, man. Favorite nuclear stocks. I really dig your thesis. I'll go into that in just a second. Anatable says I bought TLT today. Rezo says we're not that far away. I know, but I think I broke this down. This was probably in November, headed into the December FOMC. And what I said is at 4.6%, okay, they put an FOMC in front of everybody, and they said 2% growth, 2.5% inflation. They said 2.6% inflation, which would put you just back of the napkin. That puts you at 4.6% yield. And at the time, we were like 4.55. We were right there. So if you believe growth is true, and if you believe inflation is true, what could happen? So growth could be understated. So let's put growth at 2.5%, and let's put inflation at 2.5%. You're at 5%. Let's say growth is overestimated. That puts growth, let's say 1.5%, inflation 2.5%. That puts your yields at 4%. But in that world, would inflation be 2.5%? Probably not. But if it was, we're probably looking at a stagflationary world. So in that case, likely inflation is overstated as well. So you're at 1.5% plus 2 is 3.5%. So when I think about the risk and reward at 4.6%, I think, okay, maybe my risk in getting long bond position here is 40 basis points to the upside. And worst case scenario, if growth gets to or stays at 3% and inflation is 2.5%, you're looking at 5.5% yield. Possible. Maybe. But I don't know. That's a wild world. How does a combative president with sort of aggressive trade policy, how does that lead to a world of 3% domestic growth? Doesn't the world have to be getting along, and don't we have to be engaging in free trade to see ourselves hit in a new administration with tariffs and sort of bilateral and new multilateral trade agreements? I don't know. I just don't see that outcome. So it's possible we get to 5.5% yields. To me, somewhere around 5% plus or minus 25 basis points probably seems right to me. Now, the risk is we get there and we don't go anywhere. To me, that's the bigger risk. Do I think we go to 5.5% 10-year in 2025? No. Do I think we could go to 5.25 and just sit there, which means a long bond position doesn't really pay? Yeah, I think that's the bigger risk probably. So anyways, the trend move is to continue to move lower and head towards 5%, in my personal opinion. The counter trend move is playing the bounce. And you just have to decide what to do with that, in my personal opinion. I like the traders bounce to the upside here. And if we can get it now at 4.75, and let's say yields drop to 4.6, 4.5, then I would love the opportunity to reload a short. Because I don't love shorting the whole. Can you imagine getting short here after we've already dropped from 127 to 110, and now you want to establish a short? To me, the risk and reward of that, it doesn't make a ton of sense. It might pay, but it doesn't mean it's the most interesting bet on the board. So anyways, that's sort of, my mind is in many different places. If you can imagine, I'm long materials, I'm long miners, I'm long energy. All those things are sort of inflation, will benefit with the idea of additional inflation or additional increases in raw materials. I'm short. I'll run tactical shorts over the portfolio on the NASDAQ, and then I'm tactically long bonds. And that long bond is not paid off at all, really. But you win some, you lose some. That's the way it goes. Hope that answered the question. Let's see here. Evening Vic. How are you positioning for the upside in bonds outside of buying TLT outright? What's the option play strategy you'll use to express the reversal in bonds? It's just out of the money upside call spreads. So bond vol is typically pretty low. Not always the case right now, but bond volatility is typically pretty low. And it's pretty simple. I'll go 30 to 45 days out and I'll buy upside, like 30 deltas, 40 to 30 delta calls and sell something against it just to keep the risk minimal, to keep the capital outlay minimal, depending on the price. Sometimes we'll just buy the upside if it's super cheap. So yeah, nothing super fancy. Nothing really fancy. And so some of the bets over the last two cycles haven't paid. So that's the point. Like those things don't pay, but I keep those bets relatively small so that if they do pay, because they're futures options and because they're leveraged, I'm gonna see a nice return on some of those things. But if they lose, it was risk defined, and I can, it's not gonna do anything to the portfolio. Can't we sell covered calls on TLT? I think so. That's probably an interesting way to go about it. I just have always had some issue with the commodities related or commodities linked. I know it's a commodity, but I'll bring it back. A commodity linked ETFs, starting with like USO, starting with USO and then GLD. And TLT is kind of in there as well, which is there's some drag built into these ETFs. And I don't love that. With TLT, I think it's less of an issue, if I'm not mistaken. It's been a while since I looked at it. I think it was less of an issue, and I think selling covered calls is interesting. But here's the problem. I think once you get that move, it's probably going to happen quick. That rush to collateral, if that's what the spark, I don't think so. The way that we're selling off slowly, if a bond rally comes, I don't think it comes as slowly as we just got the sell off. I think it's the opposite of the VIX in a way. The VIX spikes higher, drifts lower. I think this drifts lower, spikes higher, because likely your most likely scenario is a run for collateral. Some growth scare, some event that spooks the marketplace a little bit. That's what we got back. What was that? August 5th or something like that, with a reverse yen carry trade. Something like this. You don't know what that spark is, but it could be out there. And the problem with the TLT of, short call on TLT is if you get the spike, you get the run in bonds. Now you're short the call. And you got to figure out what to do with that short call that's losing money against your long TLT. So that's the drawdown. But that's what we do here, right? Like you're just trying to think about all the potential scenarios that could play themselves out and put yourself in a position that could do well. But there's no perfect scenario. It's just matching up what you think could happen with what actually does happen and trying to be as close to that as possible. All right, let's keep cruising here. Great questions. See, yeah, Rezo says it as well. Of course not. There will be a dog pile on bonds to get long when it breaks. Exactly. That's exactly right. So you can go long TLT and sell calls against it. And that helps to pay that drag. That helps to minimize the costs where you're in it. But it's just when it runs, then what? Now you're trying to manage a short call that went in the money and you were right, but you got super limited on your upside. Like that's a potential outcome. All right, let's get off the subject of, let me do this real quick. Let's talk about the calendar this week, and then I'll get off bonds, because the calendar this week is going to be, it has some decent catalysts here for fixed income. PPI, of course, on Tuesday. And then, my friends, we are going to get on Wednesday. We always get the mortgage applications. I've been watching those. As I know you guys know, we were waiting for a while for this break in home construction. We finally got it. ITB, just disgusting chart. XHB, disgusting chart. Yeah, I don't know. Some parts of me, it's sort of, I don't know how people don't look at this and get spooked out a little bit. But I don't want to be Chicken Little here. CPI on Wednesday, my babies, 0.3% month over month is the consensus expectation. 2.9% year over year, which is would be an acceleration year over year from the previous report. 3.3% would be constant. Last month was a reacceleration of 0.3, and then core expected to decelerate a bit month over month from 0.3% to 0.2%. Gonna need it. If that accelerates, who knows? Who knows? Gosh, I wish we could get bonds to turn around. 3.3% year over year core expectation as well. The consensus range is super tight. Basically, there's no range. Is this right? 2.9%, 2.9%. They're super confident. Let's go to Cleveland Fed. Cleveland Fed. All right. Their inflation nowcast, to me, yeah, forward inflation expectations, 2.3%. Yeah, this stuff really isn't moving, but it's all staying above 2%. Forward expectations all between 2 and 2.5%. It's not going below. So if you're expecting inflation to get back down to Fed target anytime soon, you might want to grab a Snickers, my friend. We might be here for a while. The tough thing about rate of change is people get used to it. That's a sad thing, you know. That's a sad thing a little bit, that like 2.5% feels good when you're comparing it to 9%. But it's still not good as a society. It's still leaving people behind at a much faster pace, you know? I guess the weird way that I think about it sometimes is you have to increase your productivity or your efficiency or your skills in order to earn at least 2.5% more from the marketplace. At an annual clip. And I think, you know, or in cases where we had sick inflation, 9% annually, which really wasn't 9%. It was probably something like 20%. You had to increase your skills. If you were a labor participant, you had to increase your skills, your productivity, or your efficiency by 20% on an annual basis just to stay even. You know, if you were an asset owner, that's not necessarily the case. Your assets could have done the work for you. But I think we understand that there's like 60% of the people out there where that isn't necessarily the case. So you're in an environment where you have to increase your wage return from the market 20% just to stay where you're at. And selling out to like 2.5%, 3% is still difficult for a lot of people. You still have to do it. We still have to find a way. But to me, it just means we leave people behind at a faster rate. Those people that are unable to increase efficiency, increase productivity, or increase the skill set by 3% annually, or they just run into a hardship. We leave those people behind at a higher clip. But we forget because 2.5% doesn't sound like 9%. So all those crazy hair on fire inflation stories don't run anymore. But it's not like it isn't a problem. All right, sorry for the aside. I can go into dark spaces sometimes, people. Anyways, Thursday is retail sales, with the housing market index and a few other items. And then Friday, housing starts and permits. So it's some decent housing numbers. Baker Hughes rig count on Friday, which will probably start to become a thing that people are going to watch. A couple of Fed squawkers, but not many. Neil Kashkari, Austin Goolsbee speaking on Wednesday. But a decent catalyst for economic data. PPI, CPI, retail sales in 1 week. It's a pretty decent week, plus some mortgage numbers. And then on the earnings front, Wednesday, we've got JP Morgan, Wells Fargo, Goldman Sachs, BlackRock, Citigroup, and the BNY, Bank of New York Mellon. All kicking off earnings season on Wednesday. Thursday, United Health Group. That'll be an interesting call to tune into. Morgan Stanley and a handful of others here. U.S. Bank, PNC. And then Friday, Schlumberger. So there's two interesting oil and gas names. Kinder Morgan, KMI, and then Schlumberger later in the week. But then Texas Instruments, Charles Schwab, Regions Financial, Huntington Bank. So there's some a lot of the banks will be reporting this week. I think Texas Instruments and Schlumberger are going to be interesting outside of finance to probably pay attention to as well. TLT has yield. You get paid to wait. That's true. Raises are currently 2 to 4% a year, says Rezo. So here's I always say this. You're not wrong. You're totally not wrong, Rezo. And all I wish to do is sort of put something out there into the world, because I hear this done all the time. And I used to say things like this too. And then I sat down one day or 1 week or a month or something, when you just go through the econometrics, you go through the details of the numbers, you stop talking about the numbers and go, do I actually understand this number? Do I actually understand the construction of this number? So like with inflation at the very beginning of this whole cycle, before inflation was ripping, maybe we're at 3-4%, something like this. I think maybe it was before that. It was like, do I understand the construction of this number? And the truth was I didn't. And once I went into the number, I would listen to people talk about the number, and I realized they didn't. They were talking about it as a concept, but they didn't know when that number got spit out, how did you get it? And so wage is real, right? It's an average, sort of this median number, but it is real. If you have a wage of X and it goes to 1.02 X, that's real. That's observed data. Inflation's a model. It's not real, and it's also different for everyone. So my issue with when we compare wages to inflation, and we say wages are running 2 to 4% increase per year, and that is more than the inflation number, which is 2.5%. I go, yeah, but the inflation number is bullshit. It's a model. It's our best guess at modeling a very complicated reality into a single number that then we can use for the purposes of financial modeling and financial assets. But it's bullshit. Like, do you think when we had that 9.1% inflation print, do you think that's what inflation was? Do you think it was 9.1%? Or do you think it was closer to 20% for most people? The truth is, it was probably closer to 20%. It was probably closer to 15 to 20% for most people. So my thing is, there are reasons the inflation number, CPI, is constructed the way that it was constructed. And it's been changed over time. And there are reasons. There's incentive structures that why our society and our marketplaces and our government chooses to take those changes in certain directions. And I don't think it's trying to find a more accurate or true reflection of inflation. I don't think that's the incentive structure. Call me crazy, call me a tinfoil hat type of guy, or call me a cynic. All of those things could be true. But I think my only issue, Rezo, with that argument is that one of those things is real observed data, not a survey, real. And then one of those things is some of it's real, some of it's a survey, and then it's all put together in this weird sort of concoction to model out a number that was specifically designed after the Boston Commission to minimize or lower inflation, which then would minimize the government's payouts while increasing tax receipts, and found $1 trillion in the budget when there was a Congress that sort of refused to negotiate or find room in the budget or cut. So this is the way that they did it. And we never changed it back, even though we know that that was the case. So that's, I don't know, I see the world, inflation's a fake number to me. So then when people compare one to the other, I'm like, you're comparing apples to oranges. And it's hard for me to think about those two things as a real talking point that I'll take honestly. And maybe I'm wrong. So if I'm wrong, you guys explain it to me. Hit me up at Victor Jones, the Owen Jones _0 on Twitter. I'm super active there. But you can explain to me why I'm wrong. And I'm looking to be proven wrong, by the way. Because if I am wrong, it's gonna disinform or misinform a lot of my other opinions. When I look around, raises seem to lag inflation. So we are trying. Yeah, I agree with that 100%. Raises do seem to lag inflation. And they would lag inflation less if the labor supply didn't have 15 million more people in it. You know what I mean? And that's not an anti-immigration statement. It's just a supply and demand curve. So it's just, isn't it interesting at the same time that we increased our money supply by 40%, and we had these massive government spending programs, these massive monetary stimulus programs. Isn't it also interesting we just happened to forget about the border for a few years? That's not a Democrat or Republican thing, people. If you don't do that, wages, you're gonna have a problem. And not only did we, even with all that happening, how many strikes did you get? You know, the Postal Service strike, the dock worker strike, the writer's strike. Even with increasing your labor supply, you still got tons of strike, and you only have 6% of the workforce in labor unions, and all you heard about was striking workers. Imagine if the labor force was like it was in the 80s, when you had 20% of the workforce in unions. I don't know where I went. Sorry. I gave you some of my deepest, darkest thoughts for a second. That this is all conspiracy. That it's not Joe Biden who opened up the border. It's like, it's a cause and effect thing. Like, okay, we did this. If we don't do this, then this is going to happen. And because I have money and power and I own a corporation and I don't want my margins to do X, which will then cause a stock market crash. And because we have so much put into people's 401ks and the boomers are getting ready to retire, you can't have that. So what do we got to do? Well, you got to save the margins. You got to increase the labor supply pool by a lot. I don't know. Maybe I'm crazy. Welcome to the 70s. You want to know what's crazy, Rezo? Okay, I'm going to hit you with one more like quasi-conspiracy theory, and then I'm going to get on to real stuff. I went into I bought my wife some jewelry for Christmas, and I was going into like these jewelry stores, those nice jewelry stores. I don't want to be in the doghouse. So I was going to those nice jewelry stores, and I was asking about the designs. Can't believe I'm that guy, But I'm asking about the designs, and they were telling. What I realized is every one of these jewelers, these storied, legendary, jewelers have been around for a long time. They reintroduced their designs from the 70s. These bracelets and watches, they were bringing all their designs back from the 70s and 80s. And I was like, oh, that's interesting. But I'm weird. I see stuff that's probably not there. Like, that's strange. If I start seeing people wearing bell bottoms, bro, I'm like, we live in a simulation. If one of you throws on a pair of platform shoes with some goldfishes in it and some white bell bottom pants and a polyester suit, bro, that we live in a simulation. And I'm guessing one of you sitting there right now at your computer going, how did he know? Oh my gosh. All right. I'm going to keep going. Sorry. Somebody's asking about nuclear. All right. Let's talk about sectors for the day. So sectors for the day. Utilities got hit. Technology, obviously weak on the day. Materials and energy. What do you know? Materials, energy, and healthcare. Bing, bing, bing. Winner, winner, chicken dinner. The big winners of the day. Materials up 2.24%, energy up 2.2%, healthcare up 1.3%. And that's with Moderna getting murdered today. Real estate also up 1.23%, which I think is interesting. Grumpy Mike says, is my webcam on? You know why? This is like a stream of dad jokes for people who appreciate dad jokes, and maybe like a little like a lime. If conspiracy theories were a lime, we just kind of squeeze the lime into the stream. That's what this is. Dad jokes with a squeeze of conspiracy theory lime juice, or lemons, not limes. So here's kind of what I like. As CCJ gets cheaper, I'm not sure if it's cheap enough, but on 50% retracement for $36 up to $62. Let's see here. We're getting close. 36 to 62, excuse me. We're now back down to 48. Down near 0.9%. So somebody asked earlier in the stream, what are the instruments to play the nuclear theme? This was my biggest one. CCJ. The second and smaller one is SMR. This is a really, really high beta name. So this thing swings like crazy. I make this joke all the time. It might not even be a real company. It is, but it's super high beta. So this one it's a smaller position, but the returns on it are magnified. Returns are both positive and negative, by the way. All those two things are that theme, and you could probably go, what's the other one? I'm forgetting. I'm forgetting them, but the uranium miners ETF is another one. Can't think about the other one offhand. And then Albemarle, which is also another one of my babies, had a really, really good day today, up 5%. So this is lithium, though. They're one of the biggest lithium producers. So this one had a nice day. So my point is, within the nuclear space, those things are starting to get cheap. I haven't picked up any just yet, but I do think that those are the ones on my shopping list. So as those get cheaper, those are the ones that I want to start picking up as they get cheaper. And then outside of nuclear, we talked about. No, I think that was the one. You guys wanted me to speak about what I was in the nuclear space. But then there's also this little guy. So then outside of this little guy, or outside of the nuclear theme, the only real AI play that I've had real material money behind has been Palantir. And I'd made this joke on the first call on each Sunday of the last couple of weeks that I was on talking to Pete and Tom. And Tom, to his credit, had said at any time this thing will peel off 20%. This thing is massively overvalued. I don't know if he said overvalued. It's too expensive, right? That means price. So too expensive, and he wouldn't be surprised if this thing's going to cut off 20%. Same thing with Pete. They didn't want to be long. And I suppose I'm long from like $13 or something like this. So to me, it's very different, right? I wouldn't get net long either as a first long at 85, but long at 13 feels a little bit different. And so my point of view is, well, if it does peel off 20 to 25%, to me, I'd probably love to pick up more. I know the forward valuations on this thing is super stupid. It's not a great value as it once was at like $5-6, something like this, especially at 13. And I don't say a lot of people, I see many people that I respect in the space talk about filling this gap. So that gap between 40 and 45, I think there are a lot of eyes on whether or not we can get down there and fill that gap. So I guess the way that I think is that would be $45, give or take. $40 if you're being conservative. So let's go $40 for the conservative people out there. 40 to 65, that's $25, right? So take half of it. At half of it, maybe 50, 52. That's the area where I probably, if we get down there, I buy a little stock and I probably sell some out of the money puts. Here I probably wouldn't be buyer stock. Maybe I'm buying upside call spreads to have super limited upside in case it never gets down to my price targets. At 50, I buy stock and I probably sell some out of the money puts. And not too big either. And then, it doesn't have to be this binary thing of how do we catch the bottom, or do you think it's time, or, I don't know. But I think it's just how do we create a plan around legging into instruments you like or getting exposure to instruments you like. So the problem is vols here is a bit expensive to do, to buy upside call spreads. But that will pay off in our favor when we are selling puts if we do get down to 50. Vol, 60, mid-60s to mid-70s around their earnings coming up February 3rd. Oh, this has got to be a play. We've definitely got to do something on this one. See, my favorite thing is when a stock discounts into earnings. I've done this before and it's hurt me. But for whatever reason, psychologically, I really like when a stock is discounted into its earning event, because that means to me at some level it's been de-risked. And to me, it changes the probabilities. I don't want to say that. I don't think it changes the probabilities. To me, it changes the way I think about the probabilities. That's a better way of saying that. So let's see. What can we do here? Yeah. A buck out for those 46s. Doesn't look that bad to me. Right? If you like it, I don't know. A buck for those 46s doesn't seem that bad. $1.70 for the 50s. Maybe both of them together. I kind of like this one. This one I might be shooting this one off tomorrow. Because I wouldn't, if it fills the gap, okay. I'll take it. I'll take a little pound here at 50 or at 46. How about you? And if not, we just take a little premium in on it. These scaredy cats, it was down 3% here today, and all these scaredy cats are scared of that gap fill. They want to pay us $1 if it happens, and we get to establish a position right at the gap fill when everyone else is puking and panicking. I'll probably take that. Any takers? I'm in. Let's see what they're saying. Vince. Oh, Victor. Vic, why not sell 45 strike puts now? Then if it hits, sell more. I agree. That's a great idea. By the way, Max, I saw your comment and then went and looked at the 45. So all credit, if anyone likes that idea, it's coming from you. Because when I saw the sell the 45 strike puts, I went straight to the option chain to go price them. I like the idea, my friend. And you know what's funny? Working on the opposite side of the brokerage business is I know when you look at the option chain what you're going to pick. You're going to go for the 46s. Why? Because everybody goes for the dollar option. I don't know why it is. I don't know what it is about that psychologically, but everybody picks the dollar. It's like anything less, maybe you assume is anything less than $100 seems like you're not making enough. Anything more, you're increasing your delta and your risk. And so people pick the dollar. I think it's fascinating. All right, let's keep going. Bitcoin at 94.3. Not surprising this one rolled, but I thought we would get much higher. You know, to peak out at 108 and then roll over. I didn't think that. I thought we would get to 115, and I'd said that many times on the stream. So we're getting weaker much sooner than I thought. Yields, but I guess here's the counter to that. Yields are going higher much quicker than I thought as well. So I guess I should keep that in mind. I didn't think we'd go straight to 5%. I thought we'd have two-way action, and in that world, Bitcoin maybe it had a chance to get to 115. Yields are going straight to the moon right now. And you got to factor that into the long beta non-yielding assets like Bitcoin. I don't love a trading entry into Bitcoin here. But as a trading entry, I would probably like some of the proxies. I don't know. I still don't know if I can pull. I still don't know if I can pull the trigger on Coinbase. Going into earnings, a good quarter. What's their forward guidance? Probably good. A new administration. All that's been priced. What are they giving us? Whoa. They're giving us some money to sell these 180s. That doesn't look half bad. See, a lot of these things have pretty decent implied volatility here. Giving us a couple bucks to sell the 180 puts. I don't hate that. What say you, chat? Yeah, man, I was that chicken puking today. Reload. Vince K. I'm with you, man. Yeah, I think it's the hardest thing is just sizing the positions, you know? Sizing the positions and then doing some stress testing on your largest position. That's what not that I'm some great trader or whatever, I'm just sharing some war stories so that if there are newer people out there and if this can help, then use it. If not, or if there's a more wily veteran out there that can give better advice, feel free. But what I do is on my positions page, I sort by my capital requirement. So basically my largest positions I want at the top. And then I just stress test 5-10% higher or lower. How do you feel? And then based on in a smarter way would probably be to say 1 standard deviation, 2 standard deviation move. How do you feel? But you know, whatever. I'm just giving you something easy to think about. 10% up or down on that capital requirement. How do you feel? Do you want to go lay under your desk in a fetal position, or are you going outside? It doesn't matter. And if you're closer to the former, well, then how could you use options to turn that risk, the risk of that position, into something where you could go outside? And so sometimes for me, that's why I talk about turning my long stock positions into collars, because it's all around turning my largest positions into things where I could go outside. And if sometimes I don't like the pricing of the collar, I don't like the strike availability, or I just don't want to turn it into basically a synthetic vertical, then I just decrease the position size. But hopefully you have a process where you can sort of stress test yourselves before you get into the situation, because that's a lot harder to make a game theory optimal decision, right? Like, it's harder to make the optimal choice when you're already in the stressful position, when you're already feeling the feeling of fear, and then and trying, it's just, you can do it. Lots of traders have been put in that situation before and are still able to maybe add to a position, or whatever. I should say it like this: manage risk appropriately in those scenarios. But it's harder when you're in the scenario than it is to plan it out, game it out ahead of time. All right, real quick, let's talk about crude oil. Crude oil at 77.20. I told you I'm the world's worst crude oil trader. I do not have a position on a crude oil. I'm just long energy names. Same with natural gas. I wish I was a better natty gas trader. And I guess the only way to get good is to start somewhere. But this thing whips around so crazy. Every Sunday night, this thing is up, 4, 5, 6, 7%. I think it was up 7% yesterday. Got murdered today. So yeah, the whole energy complex is moving higher. There's a lot of geopolitical reasons behind that. Sort of gamesmanship happening between the current administration and the future administration. But I suppose without going into the narrative, the whole point here is, to me, a lot of these energy stocks, or XLE, that they have been working. If I was a betting person in the super short term, I don't know that I'd take a new long here on XLE at 90. I still think it's cheap. I just think from like a tactical entry point, maybe I'd give it a few bucks, give it a breather, let oil sit somewhere. I probably wouldn't put a new long in here, but I still think XLE. I would still be adding. I'm still adding to positions here in energy. Where was I? Oh, gold and silver. Gold on a nasty little move today. Nasty little 50-point move to the downside today. Silver was ugly too. $1.26. Both of these things were pretty ugly. It seems like this silver trade, man, they're making it hard to be long. Super hard to be long in silver. If they bring gold, again, I'm going to give you my price targets. 2,600, we've seen some buying here, and we've seen the reports of the CCP effectively increasing their gold purchases anytime gold gets down to 2,600, and it's put a bit of a floor in that market. I'll be interested to see if we can break that. I would love to get new longs in at 25. And for that reason, I haven't been going long crude oil itself, but I have been going long crude oil. I haven't been going long gold, but I have been going long gold miners like Newmont Mining. Same thing with copper. I think the narrative on copper and China is bad right now, very bad. So I like going long a little bit of FCX. But here's the thing. If in order to go long new positions here, you sort of have to believe this is a correction. And I think we have to open up our mind to the possibility that the market pulled forward a lot of forward returns over the last couple of years. How many 20% years did we just have? We just had 2 20% years in a row. And since the pandemic, the returns on equities has been insane. And at some point, you have to ask the question, all right, unless we're going to go back to this same playbook, which is to spray down global markets with liquidity, have we not already pulled forward a lot of those returns, those future returns, into the present value of equity prices? And if that's true, the world where you get something that looks more like the average, right? What's the long-term average on equities? 8, 9%? It used to be 7 when I was in school, but because we've just gone to the banana world, it's now closer to 10%. But in a world where we expect something closer to normal, what is a 2%, 4%, 6%? What does that year feel like relative to 2 20% yields? It's going to feel like a down market. And my point is, even if I'm choosing value, in a world of low or muted returns or even negative returns, all of this stuff could get cheaper. So choosing value is no like special secret in order to make money. Yes, am I buying low? Sure. But if beta, which is like all market returns, if market returns go down or are muted, well, that doesn't necessarily guarantee me any upside, because an equities return is beta plus alpha, right? Beta is market return. Alpha is the stock's return either above or below the beta of the market. And that's the return of an equity. So I would like to theoretically see decent beta in order even to make a value play. All right. I think we're last 12 years maybe. Yeah, Grumpy Mike. Sleepy says this is not normal. Yes, there have been times when it goes down, but when it goes up, it rips. Oh, you're talking about GC. Me like GC was good for the straddle that I have on a GC. Yeah, I don't want to short gold. I haven't. There were some times earlier where I sort of liked the gold short. I don't like it right now. I think if it breaks 2,600, it could get a little ugly to the downside. But in those cases, I'd rather be a buyer than a seller. I think the world has to settle down for some geopolitical risk premium. And I also think people have to start having more confidence in government spending. They have to want to go back to buying bonds as a safety asset and not necessarily hard money assets. Are we close to that? I don't know. Are we closer to a world of using soft power and not necessarily heavy-handed economic sanctions, weaponizing the dollar? I don't know. And if we're not closer to that world of fiscal responsibility, soft power, open trade, trust in government and government responsibility from a fiscal standpoint, and monetary policy and central bankers, if we're not closer to that world, give me the catalyst for why investors want less gold and not more. I don't see that. For that reason, I want to be really careful about shorting gold. I would rather buy the miners when they get cheap and buy gold when they get super cheap. That's my story, and I'm sticking to it, everybody. From Bali, Indonesia, I want to thank you for sticking around and listening to the ramblings of a quasi-conspiracy theorist madman trying to get healed out here with the fam. I'm just kidding. We needed a vacation, so we took one. If you want to hit me up on Twitter, you're more than welcome to, though I'm less active out here because I deleted a lot of the social media apps off my phone. Be a little bit more present with the fam for the next couple of days. But at Victor Jones, the O in Jones is a 0 because I like to be difficult. Good luck out there, everybody. Again, my key themes for the year. Nuclear, even though I don't know that it's a great setup this year for nuclear, I think I'm probably going to get cheaper entries more so than get paid for the longs. I like energy. I think likely this is a year where I get paid for the longs, and I like healthcare, and I'm hoping that's like an emotional hedge. If you watch this show, sometimes I buy stuff that I hope doesn't happen, because if it happens, it means my happiness index in life is going down. And the only reason I bought this thing is to have a financial offset. So my happiness goes down, but the financial offset is there. Palantir is one of those companies. The more powerful and prominent Palantir becomes, my happiness index is probably going down. And so the financial offset is required. By the way, I'll leave you in this. I've never felt less surveilled than in Indonesia. You know what I mean? There's no facial recognition or thumbprint entries anywhere. No shot spotters like in Chicago. And some part of me is like, how many places in the world feel like that still?